एवरीवन, गुड मॉर्निंग, गुड आफ्टरनून, गुड इवनिंग टू ऑल ऑफ यू। आज है 1 अप्रैल 2025। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं फ्रॉम क्रूड ऑयल। लुक एट द क्रूड ऑयल को अगर देखोगे फिलहाल के लिए कल काफ़ी ज़्यादा बुलिश हो गया था। रेजिस्टेंस एरिया पे था एक, वापस सेल थोड़ा बहुत प्लान कर सकते हैं। थोड़ा रिस्की रहेगा सेलिंग, बट और कुछ यहाँ पर भी प्लान है नहीं। नेक्स्ट रेजिस्टेंस फिर 6200, बाकी सपोर्ट काफ़ी नीचे है, थोड़ा वेट करना पड़ेगा। नेचुरल गैस कल अच्छा था, रेजिस्टेंस एरिया से एक सेलिंग आई थी, टारगेट हो गया था। फिर यहाँ पर एक बाइंग का ट्रेड लगाया था, वहाँ से थोड़ी बहुत बाइंग हुई थी, हल्का सा गैप अप ओपन हुआ है। देखते हैं कितना पुल बैक आता है। नेक्स्ट सपोर्ट हमारे पास डाउन साइड पे रहेगा 336 के अराउंड। बाकी बैंक निफ्टी निफ्टी को देखोगे, थोड़ा सा गैप डाउन ओपन हुआ था फ्यूचर, बट शार्प रिकवरी आई है उसके बाद। अच्छा मोमेंटम है, लेट्स सी थोड़ा कंटिन्यू करता है अगर बैंक निफ्टी। वैसे तो ओवरऑल देखोगे तो फ्लैट दिखेगा वो। पॉइंट वाइज 40 पॉइंट ही पॉजिटिव है, बट गैप डाउन के बाद अच्छा रिकवर कर चुका है फ्यूचर। मॉर्निंग पे देखोगे तो सीधा गैप डाउन ओपन हुआ था अप्रॉक्सीमेटली 175 160 पॉइंट के अराउंड, बट वहां से रिकवरी करी। नीचे एक सपोर्ट था 51,600 के अराउंड, 15 मिनट टाइम फ्रेम पे आया, विक बनाई एंड 51,600 से सीधा मार्केट 300 पॉइंट का जंप लगा के 51,900 को टच कर गया। देखते हैं ऊपर एक रेजिस्टेंस से थोड़ा कंसोलिडेशन करता है तो ब्रेकआउट अच्छा होगा। नहीं करा कंसोलिडेशन, रिजेक्शन मिल गया डायरेक्टली, तो फिर थोड़ा साइडवेज जा सकता है बैंक निफ्टी। बाकी डेटा की बात करें तो अभी लंदन सेशन ओपन है, 12:30 न्यूयॉर्क सेशन ओपन हो जाएगा, लंदन सेशन ओपन हो जाएगा, मुंबई सेशन ओपन है 5:30 न्यूयॉर्क सेशन। 7:15 और 7:30 पे डेटा रहेगा, गोल्ड और सिल्वर को इम्पैक्ट करने वाला है मार्केट। ठीक है, बाकी एक बार निफ्टी को भी देख लेते हैं। बैंक निफ्टी था अच्छा लेवल पे, तो बाइंग आ गई है। लेट्स सी निफ्टी भी क्या थोड़ा बहुत रिकवर करता है। बाकी कल जे ओपेक और जेएमसी की मीटिंग भी है और रेसिप्रोकल टैरिफ भी लग सकते हैं, तो कल भी इंपॉर्टेंट डे रहेगा, ध्यान रखना। फॉरेक्स में भी वैसे नेचुरल गैस साइडवेज ही चल रहा है मोमेंटम काफ़ी देर से। बाकी गोल्ड को देखोगे तो कल एक सपोर्ट बताया था 3110-11 वाला, सपोर्ट लिया, उसके बाद मार्केट रुका ही नहीं वहां से। कल से देखोगे वो और बुलिस हो गया, ऑलमोस्ट 35 पॉइंट और ऊपर चला गया, सुपर बुलिस। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। नेचुरल गैस के लेवल कल के ही हैं, ठीक है, चेंज कुछ भी नहीं हुआ है। जॉब ओपनिंग का डेटा बड़ा इंपॉर्टेंट है, ध्यान रखना है, तो इम्पैक्ट करेगा मार्केट को बैडली जिस भी डायरेक्शन पे आता है। अगर अच्छा डेटा आ गया तो फिर तो बहुत ही बढ़िया हो जाएगा। इक्विटी मार्केट के लिए नहीं आया तो और शार्प डिक्लाइन हो सकता है। क्रूड ऑयल बुलिस ही है, कंप्लीटली बुलिस बना हुआ है कल से। कल एक दो रेजिस्टेंस और थे मार्केट के पास, यहाँ पर था एक रेजिस्टेंस, ओपन इक्वल टू लो बना दी थी कैंडल। उसके बाद यहाँ पर एक रेजिस्टेंस था, वहाँ पर भी ओपन इक्वल टू लो कैंडल बना दी थी। रेजिस्टेंस पे बार बार जाके ओपन इक्वल टू लो कैंडल बनाया जा रहा है। चाहते नहीं सेलिंग सेलर्स सेल करना, बट पुल बैक भी नहीं आ रहा है उतना कुछ।
News when you want it with Bloomberg News Now. I'm Doug Krisner. We begin with the latest on U.S. tariffs. The White House says President Trump will officially unveil country-based tariffs on Wednesday at a Rose Garden event. Today, the president touted what he sees as the efficacy of his tariff threats. He said there will be at least $5 trillion of total investment in the U.S. soon. Here is Trump speaking earlier with reporters in the Oval Office.
Apple's at $500 billion, as I said. But they always used to spend that money in China. Now they're spending it here. That means they're going to build. Now, they don't have any tariffs. Remember, there are no tariffs if you do your product here, if you build whatever it is in the USA.
That is President Trump speaking earlier from the Oval Office. Earlier, Press Secretary Caroline Leavitt said the president is also committed to implementing sectoral duties. However, she did say they will not be the focus of the April 2nd event, and she deferred to President Trump about the timing of those levies. And Leavitt declined to provide details when asked about the rate of those reciprocal tariffs and which countries would be hit. We move next to the Fed and the head of the Richmond Fed, Tom Barkin, who was saying today the central bank would need more confidence that inflation will move down before lowering interest rates again. And like many others, Barkin is voicing concern over the knock-on effect that those new tariffs may have. Here is Barkin speaking earlier to CNBC.
Consumers are exhausted and frustrated and tired of paying high prices. Think of it as a cage match between a very strong, immovable force and an irresistible object. And I'm going to be very interested how this plays out. I'm not as convinced that people are going to be passed the tariffs on. I'm also not as convinced that there's not going to be inflation.
That is Tom Barkin, head of the Richmond Fed, speaking earlier to CNBC. Now, Fed policymakers have coalesced around a cautious approach to adjusting interest rates for the time being, given those questions surrounding the impact of Trump's trade agenda and whether tariffs will keep inflation above the Fed's 2% target. Now, the trade war has revived fears that the economy could stall. Most economists are not expecting the U.S. will fall into an actual recession next year. Still, they do see the chance that an economic contraction has increased. Ira Jersey is senior U.S. rate strategist for Bloomberg Intelligence.
Look at derivatives on the consumer price index. Those spiked to almost 20 basis points this morning because now there's this thinking that, hey, these tariffs really are going to go into effect. Goods prices really are going to jump pretty significantly. So, we are pricing for, both higher inflation, not 1970 style inflation, right? But 3.5% inflation versus growth being somewhat slower.
That is Bloomberg's Ira Jersey there. Now, we know that consumer confidence has deteriorated in recent months, and some economists are warning that sour mood could foretell of a pullback in consumer spending, which, of course, is the economy's main growth engine. SpaceX has sent a 4-person team of civilian astronauts into orbit. Dubbed From-2, this mission will be the first human spaceflight to fly over the Earth's poles. Keith Cowing is editor at NASA Watch.
When you're going this time of year, Antarctica is dark. There's no sunshine, whereas the polar regions are just getting lit, so they're you have 24-hour day light, or almost, actually. And so you're going to get some extremely different lighting angles than you've ever seen.
That is Keith Cowing of NASA Watch. Now, since launching its first 2-person crew of astronauts into space in 2020, SpaceX has conducted 13 human spaceflight missions. Those include 9 crewed missions for NASA and 4 commercial missions. SpaceX is slated to launch its next commercial flight as soon as August 26th. That's when a mission called Polaris Dawn is slated to perform the first ever private spacewalk. In the NCAA Women's Elite Eight, Texas has beaten TCU 58-47. And that is News When You Want It with Bloomberg News Now. I'm Doug Krisner, and this is Bloomberg.
They're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind.
These tariffs are the focus of today's Big Take. Senior writer for economics, Sean Donlan, joins us now for more on this. So, Sean, we have been expecting this reciprocal tariffs. We're getting some details, but not exactly what they might look like. What do we know at this point?
Look, we still don't know the details, right? We know they're coming. We know that in the next 48 hours we're going to know more. The White House today saying the president would announce these tariffs on Wednesday in a Rose Garden press conference, which tells you that he's going to put a lot of pomp and circumstance into this announcement. But we really don't know the details. At this point, he has said in the last few days that these tariffs will apply to all countries. As you heard just there, he said that they will be relatively kind, and the key point there is relatively. He's talking about what the U.S. perceives on the other side of the equation, the trade barriers that his aides have calculated as they try to put together these reciprocal tariffs. So we may get something that comes below that level, but we're still setting up for what in trade terms and in tariff terms and in terms of the economic consequences is likely to be a pretty monumental event on Wednesday.
Yeah, a monumental event that perhaps we haven't seen in decades. Perhaps the 1930s tariffs could be comparable. What have we learned since then?
Look, I think what we are looking at in terms of size and scope, and my colleagues at Bloomberg Economics have done some fantastic work calculating the potential impact, is that the tariffs that Donald Trump is contemplating now appear likely to be bigger than the 1930 Smoot-Hawley tariffs, which came at the time of the Great Depression, helped prolong the Great Depression, set off global trade wars, and a couple of years of economic misery around the world. And look, if that's what we're going to get this time around, there's going to be economic consequences. The U.S. is in a different position than it was in 1929 and 1930 when the Great Depression had already started here. Relatively, the U.S. economy today is in pretty good shape, although we've had a lot of fears about a slowdown, about a recession being prompted by these tariffs. So perhaps it can weather this shock better. But look, we are looking at potentially a historic shock in these tariffs, and that is just based on the numbers and the calculations, the sorts of calculations that we know folks in the administration are doing now.
This is what President Trump had to say when asked about allies potentially really banding against the U.S. and cooperating amongst themselves. Take a listen.
Are you concerned that this move, the tariffs this week, could push some of the United States' closest allies to work with China?
No, I'm not worried about it. I'm not worried about it. Yeah.
Mr. President, I'm going to ask you
I think
about
they have a
something.
chance of doing better, actually, with the tariffs. It can actually help them in a certain way. And I think a lot of them will drop their tariffs because, they've been unfairly tariffing the United States for years.
I mean, the geopolitical backdrop was very different in the 1930s, right? Have we learned anything about what the rest of the world does if the U.S. continues this very protectionist policy?
Well, look, we're likely to see probably a very similar pattern to what we saw in 1930 when other countries retaliated against the United States, imposed their own tariffs. We had boycotts of American cars in Italy and Argentina and Brazil. We are already seeing the same behavior. In Canada, they're taking American whiskey off the shelves. In Europe, they've been working on a whole list of new tariffs to put in place. We know other economies are doing the same. So we're not going to see a peace in our time as a result of these tariffs. I think what we're likely to see is retaliation. Let's see how far it goes. Let's see whether you get multiple rounds of escalation and tariffs, and that would do incredible economic damage. Or let's see whether, as President Trump has signaled a number of times, he can cut some deals with some big economies that leads them to lower their tariffs. And that would be the best case scenario here. But even on the way to that, you are likely to have turmoil, both in markets, in terms of the economy, and an extension of the uncertainty that we've heard so many traders and CEOs complaining about in recent months.
The Asia-Middle East corridor is booming and it's expected to go to about 1.7 trillion by 2035 from a goods perspective. And there's multiple opportunities for investors across tech, renewables, infrastructure and services.
Southeast Asia, it's a growing economy and lots of tech companies like Grab is at the heart of it.
Megawatts of power to function. Our brains run on just 20 watts. That's the difference between a couple of LED light bulbs and thousands of homes. Our brains are also powerful, with about 86 billion neurons that form over 100 trillion connections to each other. And with cells, the distinction between hardware and software isn't quite as well distinct. They're dynamic and intertwined. The cell's actual structure can change and mutate too.
Because of the way that computer chips are organized, they have limited logic functions. They tend to want to do things one thing after another. That's what they're good at. That's what they were designed to do. Human brain doesn't work that way. The human brain is kind of a lattice structure of interconnections where information flows in sort of different ways and different points. So the limitations of bio is that we're just at the very beginning of it.
DishBrain was our first prototype. We were essentially trying to ask the question, can you interact with a bunch of brain cells in a dish and get them to do anything useful at all?
Brett and his team started by growing a layer of 800,000 neurons on top of a silicon chip. That's about the size of a small bumblebee's brain. And since neurons in our brain naturally communicate using electrical impulses, the researchers could both send and receive impulses between the neurons and a computer hooked up to a silicon chip. To translate the Pong game into something this clump of neurons could sense and control, the chip is divided into 3 sections. There's one larger sensory section, which sends electrical impulses to the neurons to represent aspects of the game, like where the ball is. There's also 2 motor sections. If neurons send impulses in this one, the paddle moves up. If neurons send impulses in the other, the paddle moves down. The chip acts as a communicator between the neurons and the game, but it still doesn't mean that these neurons would want to play the game.
Why would a bunch of cells in a dish actually change their activity in any particular way? There's no Pong playing gene that exists in brain cells to make them want to play the game Pong.
So the researchers tried to give the neurons incentive. Every time the brain cells missed the ball with the paddle, the researchers stimulated them with chaotic and unpredictable bouts of electricity. On the other hand, when the neurons successfully hit the ball, they received predictable stimuli from the researchers. Within minutes, the neurons started hitting the Pong ball more consistently. Why did it work? One possible explanation is a theory called the free energy principle. It suggests that almost all things in nature, even as small as the dish brain, are constantly trying to perceive and understand their world and minimize surprise.
If you can't predict what's going on in the world, if you can't say, if I reach for a glass of water, I'll successfully pick the water up, it's very hard to survive.
DishBrain was a proof of concept for this larger idea of biocomputing, also called organic computing, biological hardware, and perhaps most vividly, wetware. DishBrain made a splash, so big in fact that another team of scientists tried the same experiment using hydrogel, a non-living, soft, flexible substance similar to Jell-O. The hydrogel also learned to play Pong. So the question became, what can neurons do that other substrates can't? How much computing abilities can they provide? And frankly, can they make any money now?
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That, coupled with our own legacy for having been around for over 160 years. That's what sets us apart, a focus on your story, our legacy.
Weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg.
Context changes everything.
Vevey. It's a small city, it's peaceful. It's quite nice to do fundamental research here.
Meet Fred Jordan. Fred's the CEO and founder of Final Spark, a biotech company nestled in the quaint Swiss town of Vevey. Final Spark is a deep tech startup with a team of just under 10 people. Deep tech startups don't focus on end-user services. Instead, they aim to solve complex problems by harnessing scientific discoveries. Like Cortical Labs, Final Spark is also a biocomputing company.
We have a way to have neurons connect together to create a small ball, and that is called a brain organoid.
Final Spark relies on their own funds of just over $1.5 million. Cortical Labs, in comparison, raised around $10 million in 2023 from folks like In-Q-Tel and Horizon Ventures. Final Spark says they have not accepted outside investment. They've used their own money towards research and development and made 16 brain organoids available for a subscription fee on a cloud computing network called the Neuro Platform.
You can come and you will look at real-time information streamed 24/7 from our neurons here in Switzerland. This picture here shows a close-up version of what's inside the incubator. The important part for us is this activity. Each of these small graphs here represents the voltage for 1 second of one electrode. Now people who are using the neural platform are able to also send some stimulation to some of these electrodes, to which sometimes they will answer.
Researchers from all over the world can log on to the Neuro Platform to observe, study, try different things. Some in the field of robotics, others use the organoids as teaching tools in alternative computing university classes.
Initially, we built this only for us. And then one university came, and then 9, and then 34, and now we have 200 people who want to access remotely to our brain organoids. This is totally new. There is no background at all. So there are more questions than facts about this way of investing. So I think this is the biggest challenge. Investors are always cautious fundamentally about deep tech. And it's even not only deep tech, it's a new deep tech. If you talk about quantum computing, for instance, it's deep tech, but it's an old deep tech. In the future, we'll have to live in a world where there will be some parts in computing which are living, and others which are just artificial.
It's all well and good for research purposes, but a future where biology and hardware become one isn't easy. Cells need to be fed, kept at comfortable 37 degrees Celsius, their waste cleaned. After a while, they die.
You have to look at the environmental physics. A computer chip now is drawing multiple hundreds of watts. That throws off so much heat that you have to have these cooling systems in place, and that's a tremendous problem for the computer industry. But imagine trying to bring in biological materials into that environment if you're going to make a hybrid type technology. It's just not possible. You literally are going to start cooking the biological material. Any number of engineering problems exist that will need to be solved if we are to bring in this medium.
All this is hard to scale. Investors who take this leap now aren't looking to turn a quick profit. This is Cortical Labs' first commercial product, the CL1 unit. It's a processor with human brain cells in it. CL1s come with either neurons on a chip, organoids, or a type of neural material Cortical Labs calls bioengineered intelligence. This box acts like a body for the cells, feeding them, disposing of their waste, filtrating and pumping fluid around to keep them alive. The company's success hinges on whether or not they sell their CL1 units. Each one goes for around $35,000, and they're expected to launch in March 2025.
Scaling is always a challenge, just logistically. It's one thing to build a prototype in the lab. It's another to have hundreds of them rolling off a production line and have them be reliable and stable.
I'm not the Pope. I can fail. Perhaps my imagination, my fantasy is not big enough, but I would not invest into these companies from my side.
This is Thomas Hartung. He focuses on toxicology, think poisons, in an effort to improve public health.
Thomas, how much time do you spend in here?
Honestly, I come here when I look for my wife or some of the other people in our team.
He spends a large amount of his time thinking about how we can use biocomputing and these brain organoids now.
Our group was not the first to produce brain organoids. We used to call them mini brains at the time, but we were the first to standardize this. And we were very proud that when we showed this at one of these big science journalist events, the AAAS, we got on the front page of the Financial Times. I'm a crazy professor. I can't do what I want. I'm trying to replace animal testing.
Animal studies aren't always great at predicting how toxins or poisons affect humans. And although human brain organoids today deliver pretty modest computing tricks, their promise in the field of biomedicine is already remarkable.
The potential for just basic neurobiology is enormous. It could be a very good strategy to accelerate drug development. It is a lengthy process to do an animal experiment, not only a costly one. The value of being 1 day earlier to the market for a pharmaceutical company is about $1 million.
In case you missed it on Balance of Power.
The statute governing the FTC says commissioners can only be removed for cause. Was there any indication that you were fired for cause?
No, there was no claim of cause, and the statute actually specifically says cause means neglect, malfeasance, or inefficiency, and there was no claim of any of those.
So as we talk about some of those other examples, keeping in mind we are having this discussion with you on the day we got a Fed rate decision, is this directly applicable to what is supposed to be an independent central bank? Is that one way in which market participants should be looking at this?
Yes, that's exactly right, and market participants should be scared. To be clear, there's no legal difference between Jerome Powell and me. In fact, he and I were both originally appointed by President Trump, and if the president can illegally remove me, he can legally remove Jerome Powell. People should be very worried about that.
Don't miss Balance of Power, live every weekday.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
We first started to work with brain organoids probably around 2015, 2016. The aim of the lab is to understand Parkinson's disease, and we were pretty unsatisfied with available animal models as well as more simple cell culture models.
The connection between the biocomputing and the disease modeling is actually quite interesting because one of the features or characteristics that we see in neurodegenerative diseases is dementia. So people start to forget things. The concept that we would like to explore
The Middle East region, home to the world's largest sovereign wealth funds, managing $3.5 trillion in assets, $4 trillion economy, young, digital-first population, driving future growth.
Great opportunities for investors in the Global South, Africa, the Middle East, as well as other developing countries.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Trepidation across global markets ahead of a big U.S. announcement on tariffs. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Bonnie Quinn, and we're kicking you off to the closing bell on this final trading day of the quarter, March 31st. And indeed, we have gone green. Can you believe it? We started off the day with a lot of fear in the market, that VIX almost at 25. We're now higher for many S&P 500 stocks. The Nasdaq, though, taking a little bit longer to go green. Of course, the Nasdaq also lower on the year, down almost 9% on the year before today. We have the 10-year yield at 4.24, so down another just a little tiny piece. And then spot gold has been trading at intraday records for most of the day, Romaine, which will tell you how much risk aversion is out there.
Yeah, it's kind of interesting. That last line on your screen really kind of reflects the sentiment in this market. A market still squarely focused on the economic outlook and Trump's so-called Trade Liberation Day. Now, we're still about 48 hours away from those announcements that will be about reciprocal tariffs on our trading partners. But the angst is already fueling that flight into safe haven assets today. Treasuries rallying, as Vani said, gold rising to a record, and the yen, a classic safe haven there, swelling to its strongest in about 10 days. And we should point out, being the last day of the month and of the quarter, it is a skittish end to the quarter, the first quarter of the year, a complete turnaround from how the market actually started 2025, with a 5% rally on the S&P over 7 weeks to a record high. Since that record high, sentiment has soured, and so too have stocks. The S&P course correcting, down more than 9% from that high. High-flying chip stocks plunging almost 30% from its highs, which were set back in July. The Mag 7 down more than 20% from its December highs, in Bitcoin, which surged above $100,000 in January, now down 21% since. All this leading Goldman strategist David Kostin, who cut his year-end target for the S&P to 6,200 on March 11. He cut it again today, just 3 weeks later, this time to 5,700. He joins Ed Yardeni as well as Venu Krishna over at Barclays, among the strategists warning of weakening economic growth that could curb equity gains. And Mike Wilson at Morgan Stanley warns that for any investor seeking an end to the chaos and a start to clarity on that Liberation Day, April 2nd won't necessarily be the clearing event you would hope for. Take a listen.
I would say, defensively positioned, high quality. That's been our core portfolio. Now, we've made some trading calls lately that would have gone against that. Some of those worked, some of those didn't work. But I think at this point, you want to be up the quality curve. You want to be in businesses that can kind of mitigate some of these concerns. You have pricing power. You have the ability to kind of move production around. You can take inventory on to kind of buffer this for 60 or 90 days, which we've seen all of those mitigation strategies, something we wrote about in our note today. So those are the kind of companies we want to own in this period of time. I do believe there will be a clearing event at some point this year, but we're not there yet.
And that was Mike Wilson over at Morgan Stanley on Bloomberg Television this morning in Bloomberg Surveillance. As we march closer to the closing bells, let's bring in Stephanie Aliaga, global market strategist over at JP Morgan Asset Management. All right, Stephanie, so how do you, if at all, start to factor in whatever April 2nd and Liberation Day will actually bring?
I think right now is a time for caution. We are looking at the likelihood of a prolonged multi-front trade war that might only be closer to the beginning than the end on April 2nd. Mm-hmm. And I think it is a really important time for investors to consider whether they have a portfolio that is positioned to perform in various different climates. It's like walking outside in the spring of this season right now. You don't know if you're looking at a 70-degree day, a 40-degree day, rain or snow, But I think,
and we got 3 of those.
We got a lot of those this weekend. So. Exactly.
But what is that? What is that sort of all-weather, if you will, to borrow a phrase from Dahlia, that all-weather portfolio look like? Because in the past, it was big tech and the big cap names, and you knew that they would power through. But we've seen them really take it on the chin, primarily because of valuation. Where do you go right now?
So I think what's really hurting tech right now is just the fact that for investors looking to de-risk portfolios, that's the source of risk in their portfolios, is given how much of equity outperformance we've had in those names. We've seen this rotation towards other areas of the market, similar to what Mike said, that are better positioned, perhaps in the midst of this trade war: energy, materials, utilities, financials, perhaps. And I think those make sense. But now you also want to think about how you're diversifying outside of just your equity allocation. So fixed income increasingly makes sense. We're more bullish on increasing duration exposure, but also adding a little bit more of the rest of the roles in your portfolio, particularly given the fact that valuations there are just coming off of their cheapest levels in 25 years. So you just have a bit more favorable risk reward there.
Although we have run a little bit in some places like China, for example. How do you know if this isn't all temporary, though? I mean, Romain was talking about Ed Yardeni earlier, upping now his stagflation scenario probability to 65% from 55%, and the recession scenario to 35%. I mean, isn't it all probabilities? You can't sort of forecast anything except via probability.
The near term is very uncertain, to your point. And I think where markets are having a lot of difficulty is figuring out how do you price in a tariff reality. And there is going to be hits likely to various companies across sectors in the U.S. markets. There's also likely going to be hits internationally, which maybe aren't being appreciated right now. I think really it's fundamentals versus pricing. And that's what's really helping international right now. The fact that positioning there was historically low, and so we've seen that move so far. And now the question going forward is really going to be how bad is the trade news, how how long-lasting the impacts are, and then ultimately, on a company by company, on a micro level, who is best, positioned to weather it.
There have been several themes in the market. The primary one, obviously, the AI theme, right? Yeah. How much does the theme itself go away off the back of tariffs? I mean, in a sense, Nvidia trading at 105 is now, cheaply valued compared to last week or the week before. But is it really, if the macro backdrop is also very much changing?
So I think one thing that we're seeing there is really the positioning. We're seeing investors shift away from the Mag 7 to help de-risk and move portfolios and build greater balance. There's also a lot of uncertainty in the AI theme itself. I mean, we've just been seeing over the last few weeks, if we didn't have all these tariffs to talk about, we'd be talking about the model upgrades that we've been getting, and just how quickly the AI theme is advancing makes it very difficult for analysts to make expectations around how many chips you're going to need. What is the kind of investment that you're going to need? What are the services that you're going to demand from AI? And so we're in this period of digestion, and I think NVIDIA is in the middle of that. For us, we have to take a medium to long-term perspective on this, and we remain quite convinced that there is a lot of value and a lot of need for AI investment here, and there's really only a few players there that are well-positioned to capitalize on that. But we're also seeing a pretty rapid diffusion of some of that value, too, as the focus shifts to the application layer.
And I'm curious, I mean, as we start, hopefully, to see more companies come to market. We had CoreWeave last week, and I know that wasn't exactly a rousing success, but that seemed more idiosyncratic. As you start to see some of these AI companies and AI-adjacent companies, in theory, come to market, do you think they're going to be embraced by investors? Is there still appetite for that type of trade?
I think right now it's very difficult, just given how jittery markets are right now for all sorts of reasons. You have the uncertainty, particularly on the trade front, on the policy front. You don't know what kind of growth outlook that you're looking at. So that makes it very difficult to kind of see the rebound in IPO activity and M&A activity that we were expecting to see this year. Now, maybe if we get to the back half of this year and we see some of these worries settle down, we see those recession probabilities stabilize or even move lower, and we eventually get those pro-growth policies from the administration, maybe you can see some of that come to market. And there is a lot of kind of pent-up anticipation for that resurgence. But I also wouldn't necessarily be holding my breath.
I am curious as to how much dry powder is really out there. I mean, we've talked a lot about money market funds, still at a record, surprisingly, for some reason. But when you're sort of talking with your team and more importantly, talking about what your clients and where their head is at, are they sitting on a lot of cash right now, or are they actually really invested in this market?
So there is, I think, some cash that's been on the sidelines, particularly benefiting from higher coupons that you're getting in cash or various sleeves of the fixed income market. I think for some investors that have felt that they had missed out on some of this rally in tech, they're finding it might be a good opportunity to get back in and get exposure to these long-term secular growth names. But most investors, I think predominantly, have just been owning the market and have been quite invested in that case. And so now looking at allocations, they're already looking at pretty sizable overweights to the leading tech names that have dominated. And now we just want to think about making sure we safeguard some of that investment performance that have.
All right, Stephanie, I have to leave it there. One of the best in the business, Stephanie Aliaga, global market strategist at JP Morgan Asset Management, kicking us off to the close here on this Monday afternoon. A focus here on the industries potentially affected by Washington policies, and that includes Norwegian Cruise Lines. Jefferies actually feeling bullish on the stock, initiating coverage today. We're going to explain why in just a little bit later.
And speaking of economic uncertainty, we'll discuss how all of this is affecting CEO sentiment with Richard Edelman, Chief Executive Officer at Edelman.
And a continuation of that conversation, about the auto industry. No industry in the crosshairs more than that. We're going to talk to the head of one of the biggest Ford dealers in the country. All that and more coming up in a bit. This is The Close on Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
Shares of Coinbase set for their worst quarterly slide since the collapse of FTX as growing concerns about the U.S. economy weigh on digital assets. Nearly every other major crypto-linked stock has plunged alongside Coinbase. With us now with context on what's next for crypto is Mike McGlone, Senior Commodity Strategist with Bloomberg Intelligence. Hi, Mike. So, obviously, if we take Bitcoin, we have seen a decline, right? But we're still well up year over year. So why have the associated stocks taken such a hit?
Well, one thing to remember about Bitcoin, it was born in 2009 and there was one. Now Bitcoin has millions of dependents, and you pointed that out. The Bloomberg Galaxy Crypto Index has started turning lower. The 200-day moving average is heading lower. It's peaked at a lower high last year, and it's heading downward. I think that's the problem. We have massive excess of supply, speculation, hubris, and it's just a normal bull market that's going downward. Now, the key thing is Bitcoin's outperforming, but it's doing unfortunately, what people thought it might not do. They thought it was going to outperform the stock market. We've had a 10% correction in the S&P 500, and Bitcoin's had about a 30% correction. That's not good if you're buying it to get diversification away from the stock market. But what's been going up is gold, and that to me might be a more enduring trend.
Well, I am curious, though, on the crypto story, Mike. I mean, a big part of the reason why we saw that rally, we saw crypto above that 100,000 mark on Bitcoin, was because of the potential for administration policies that would be friendlier. Now, there's no indication that the policies now are unfriendlier than what we had in the previous administration, but there hasn't really been anything new other than that executive order that Trump signed to study a crypto reserve.
So what I think has happened, Romaine, is they've unleashed the sorcerer's apprentice, and we've created so many excess supply of cryptos. Now there's like 12 million of them listed on CoinMarketCap.com. But what's happening is, yes, the technology is wonderful. They're pointing out how tokenization is awesome, tokenization of all assets. And the number one traded crypto is the dollar. As we tokenize more and get access to the dollar on a global basis where you can trade it on your phone for nothing, why do you need highly speculative tokens like XRP that's supposed to give you access to the dollar? So I think that's what's happening. Also, we're pointing out is we've reached such a high plateau of speculation and leverage that it's just going downward. And I just don't know where it stops. But I think that 100,000 level in Bitcoin rang the bell like the NASDAQ composite at 5,000 did almost 25 years ago. It's a question what stops. And I think the key thing people are learning in cryptos is they'll be okay as long as the stock market goes up. And people like Anna Wong and Gina Martin Adams say it's more likely to go down.
I'm still curious, though, Mike, about the custodians and the exchanges and so on, and why they're suffering so much, given that there is still plenty of volatility, right? Not just in Bitcoin, but in the other tokens and the stable coins and so on that you mentioned earlier, but particularly in Bitcoin. There's plenty of trading of it still, even more perhaps than a year ago, given that now we have at least one of the uncertainties out of the way, and that's that the administration is not going to sell confiscated Bitcoin.
Yes, well, the key thing is bull markets are great, and people who provide the shovels in bull markets for trading are always do much better than bear markets. So the market's turned over. Look at Ethereum. Ethereum's dropped from 4,000 high. It's hitting 1,800 now. It looks like it's still heading lower. And that's the number two Bitcoin. It might be flipped pretty soon by Tether. Tether is the most widely traded crypto, but in terms of market cap, it's less. So what I think the market's showing you, and that's telling you, is we've flipped to a bear market. And there's always less trading in bear market versus enthusiasm of bull markets. And also a key thing to remember is Coinbase is just one, and commissions are just high. What's the administration opening up to do? There's going to be many more exchanges going public. Interest or commissions are going to go down, and that's a lesson I learned in the trading pitch of Chicago. We used to trade $12 a round turn in futures, and now it's maybe 12 cents.
Hey, Mike, one final question here, just to kind of put a bow on all this. I mean, you mentioned gold a little bit earlier, which is acting as that safe haven as it traditionally has. Are you actually surprised by that? Surprised that we saw such a move higher in gold over the last few weeks in the face of all the turmoil in Washington, but not necessarily that move higher in crypto, which was also supposed to be, as a lot of people would say, digital gold?
I wouldn't be surprised, Romaine, if cryptos and Bitcoin went up in this environment and gold went down. So to me, it's happening in the way it should, as we have a little bit of normalization in risk assets, i.e. the stock market is just at, debt to market cap to GDP is the highest in 100 years, turning lower. And I think the key thing that's happening is that enthusiasm we saw last year is you're supposed to be selling when they're young, when they are, and now all that is turning towards gold ETFs. Gold ETF inflows are going straight up, and crypto ETF flows are heading downward.
Yeah, absolutely seeing that. Mike McGlone of Bloomberg Intelligence. Spot gold right now, 3,100 and change, up 1% on the day. That is a record high. Bitcoin, the proxy here, 83,000 and change, higher on the day, but well below those all-time highs. When we come back, we're going to focus on some of the individual stocks moving on this day, and that includes Norwegian Cruise Lines, a new analyst and new coverage. All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations. And we start off today with Alphabet. Mealy is actually cutting its price target down to 173 from 218, maintaining a hold rating. This is AI chatbots shake up traditional internet search business models. The analyst goes so far to say that Google could even become obsolete, and Alphabet could become this generation's Kodak. Shares, though, bucking the trend on the day, though we should point out, still on pace for their worst quarter since 2022. Next in line, Canada Goose, Barclays, downgrading the Parker retailer to underweight, trimming the price target to $8 from 10. The analyst says the move is due to increasing competition and the potential impact from what else? Tariffs. Those shares down 5% on the day. And finally, let's take a look at Goodyear. This is the tire company, and it got an upgrade today to buy. This over at Deutsche Bank. The price target at 13, with Deutsche Bank saying Goodyear should actually be the relative winner amid the trade war, at least for now, since tires aren't included in those tariffs plans. Those shares rallying hard on the day, up about 6% as we await for that announcement from the president on Liberation Day, April 2nd. Those are some of our top calls. Another stock that we're keeping an eye on is Norwegian Cruise Lines. A new buy rating over at Jefferies, new coverage over at Jefferies, we should say, with the buy rating and a $25 price target. The analyst there noting that he's bullish on the overall cruise sector due to compelling demand. We're happy to have the analyst behind that call right now, David Katz, Managing Director and Equity Research Analyst over at Jefferies. All right, so David, give me kind of the general consensus here as how demand holds up. I saw in your note you talk a lot about this idea of a trade down by the consumer, but that's a trade down that would benefit the cruise lines. How so?
Yeah, let's just step back for a minute, because what we've learned over many years of covering travel and leisure is that people go on vacation, right? And it's a question of how and where and via what mode. And I think our argument is, perhaps a trade down in price, because a cruise vacation is on average 25% less expensive than an equivalent land-based vacation, right? And trading up in value, because I think the cruise lines are doing a number of things that I hope we'll get a chance to talk about to enhance that value proposition. What's also helping this, and it's an important part of the call, is that the supply of new cruise ships entering the market is, still recovering post-COVID, and it's on a long-term 5-year cycle, and is actually going down over the next several years. And so when you compare that supply and demand dynamic, that's why it sits favorably compared with the rest of our coverage.
When you look at economic conditions overall, or at least try to wrap your head around that, and I'm sure you talk to your economists there at Jefferies here, are you factoring in a material slowdown in consumer spending overall, not necessarily just for cruise lines, but I'm saying overall in the economy?
We are, and we contemplate that, and we talk about that in our report, which I hope people will find comprehensive. When you look at cruise lines, Royal and Carnival, who were publicly traded through many cycles, right, and many events, what you discover is that notwithstanding COVID, even through the great financial crisis, their occupancy levels were at 100% or better, and their EBITDA per passenger was actually positive through all of the different events and cycles that we've lived through. And so, again, on a comparative basis with the rest of our coverage, these are positioned quite well.
So, David, you said they're doing some novel things that you wanted to talk about. What are they, and how are they making those things cost effective?
Yeah. The game changer in the cruise business, not just for Norwegian, but for all of them, is private island ownership. And each of the companies is offering their own private islands that become a day as part of the itinerary, and customers are eating them up. I think Royal talked about their 2025 passenger flow. 40% of them are booking itineraries that include their private islands. And so, this is the new trend. I know other cruise lines that are private and outside our coverage are doing the same thing. And so it has changed the cruise value proposition. And what's great for the cruise lines is that they retain 100% of the economics from those private islands rather than dispatching customers in various places to spend their money elsewhere. And so it's a win-win for the cruise lines. And that's the biggest change in the industry.
Is there any concern at all about the Trump administration and what it might do in terms of policy? There was a threat back a while that, a ship needed to be based in the United States, or perhaps a ship needs to be built in the United States in the future.
Yeah, there is definitely debate and discussion about the tax code and the tax status of cruise lines. And that is a function of where they're based, where they trade, and that will be actively debated. And, there's no escaping the fact that, they pay very low tax rates. And whether that will change is anybody's guess. Look, we spend our days trying to figure out what's the worst case scenario, what's the best case scenario. And those brackets are wider than they've been, for many years. And I think within that, the tax discussion is a part of it. But, when we put it all in the pot, the positives far outweigh the negatives, and that's why we came out the way we did.
David, thank you so much. Pleasure speaking with you today. That is David Katz over at Jefferies. Well, we are going to be speaking next about CEO sentiment, Romain, and it's a very important thing. Giordani also mentioning sentiment not just among consumers in the UVish survey, but CEOs as well.
And it's interesting, too, because these tariffs and other things or at least the announcements are coming kind of right before the start of the next earnings season, which kind of puts a lot of these CEOs in a bind because they're going to be asked a lot about this by the analyst community, by investors. The question is, what type of response are they going to have?
And in boardrooms, they've gamed out so many scenarios. If you were a CEO, that's what you'd need to be doing for your shareholders and your other stakeholders. Yeah. Well, we'll have that discussion on how impending tariffs are affecting CEOs and sentiment with Richard Edelman next. He's a CEO at Edelman. This is The Close on Bloomberg.
.30 p.m. here in New York. This is the countdown to the close. I'm Romain Bostic.
And I'm Bonnie Quinn. And of course, tomorrow is April 1st, Romain, but it may not be that full of jokes.
Yeah, we're here on March 31st. I mean, last day of the month, obviously, but more important, last day of the quarter. And it's amazing just how much sentiment in the market flipped, right? We talk about those record highs we were setting in January and into February on some of the major indices. And now most of those major indices are down 5, 6, 7% for the NASDAQ and for the S&P. We're basically talking about correction territory here. This is something that I'm not sure is going to reverse anytime soon. Maybe April 2nd. Liberation Day becomes a clearing event, maybe it doesn't.
Well, you have to ask why would that be any different to any other day? At least there should be discussions and negotiations. And maybe at some point we'll get, but the deterioration, as you say, has been rapid, and it's been pretty deadly for this market. There have been a couple of efforts to bounce. Last Monday we had this huge bounce. There was a Friday, but I remember there was a huge enthusiasm, and indices were up 2%, but they've been few and far between this quarter.
Yeah, absolutely. And we should point out to our viewers here, we're less than 2 weeks away from the start of the new earnings season. So a lot of the CEOs, CFOs, and other C-suite executives are really going to have to explain to their audience, whether it's the customers, whether it's the analyst community, or their investors, exactly what their long-term plan is in the face of huge structural changes in our economy and maybe even the global economy itself. Tariffs are having an immense impact right now on CEO and business leader sentiment across the country. We've seen that in some of the survey data. And one person who knows more about that than anyone is Richard Edelman. He's the Chief Executive Officer over at Edelman. I'm pleased to say he's with us here in studio, too. Great to have you.
I'm glad to be here.
What is the mood right now, particularly amongst U.S. CEOs and U.S. executives who are sitting around watching what's happening in Washington, maybe not just fearful of what's happening, but at the speed of which it's happening?
I think CEOs still believe this is a pro-business administration. They are hoping that things settle down, that there is clarity to policy, and that, in fact, it will be smart to invest in plants and equipment, that it will be smart over time to make sure that America is a growth market. But they're also deeply interested in the trade relations between our big partners. And I was just back from a 2-week trip to Asia on Monday, and I saw a bunch of chief executives in Korea and Japan, and they all are investing in America, but also nervous about tariffs.
There's been a lot of talk about a certain level of paralysis when it comes to business spending, business planning, and maybe is a better way to put it here. Overseas, are you seeing that? I know some of these executives have either made overtures to invest in the United States if they didn't already have something here, or even increase that here. Are they willing to articulate that publicly yet, or is it still wait and see?
No, I think that they are definitely committed. Hyundai announced the $20 billion plant in Georgia, opened it last week for EVs, and that's a massive commitment. And I think others are following suit from Japan, Korea, et cetera. But I do think the key question is, do CEOs stand up and speak up on behalf of their companies and their interests in this period? And I think they should, because silence is interpreted either as going along or not objecting to policy. And if you've got an interest in trade, you've got to absolutely make your case in Washington.
There does seem to be a little bit of a capitulation on that, though. We don't see too many U.S. companies, at least, standing up and saying this is not good for our business, this is not good for our shareholders nor our stakeholders. Are you saying that we might start seeing some of that at some point?
I absolutely think that's so, because the interest of the United States-based companies is to have trade relations. And whether it's Canada, Mexico, Europe, or Asia, we've got to have an interconnected economy. And the global supply chains depend on it.
Well, to that point, how do CEOs and board members talk to each other and to the public and to their shareholders in this scenario before they get to the point where they're like, enough is enough? How do they protect their stock price, the value of their company?
I think that they have to talk first to their employees, explain. Then they have to go to the board. But more specifically, I think they have to group themselves as automakers or food manufacturers so that they represent a constituency, not just selfish interests.
What about the message, I guess, to consumers or just the average everyday American? This is a sensitive topic, but we've seen Tesla dealerships set on fire. Yep. We had the murder of a top healthcare executive a few weeks ago here. You guys do this sort of trust barometer, which kind of measures, how people feel about the government, how they feel about executive leadership. And I know in the past, certainly over the last couple of years, that trust barometer has actually shown an increasing level of trust in corporate America, at least relative to the government. Has that been eroded?
Here's what's changed.
Yeah.
We have a huge rise in this feeling of grievance, and nearly 2/3 of people across 28 countries feel aggrieved. And they feel discriminated against, and they also feel a lack of hope for the future. So what I think business CEOs should be talking about is well-paid jobs, reskill people so that they don't feel a sense of loss to AI, and also that they are part of their communities, that they want to talk to the workers, they want to listen. CEOs should be out and around. I give great kudos to the new CEO of Starbucks. He's getting out and around, Brian Nickel.
Are the CEOs prepared for this? I mean, the current crop. I mean, Nickel is, obviously one of the more premier CEOs, at least based on a popular opinion. But are the CEOs that you see in place now, do you think they're prepared for this environment?
I think that they are getting prepared. They have to meet the moment. Mm-hmm. And CEOs have got to earn the trust of their constituents, again, by action. And the action is really on reskilling for AI, making sure that prices of products are affordable, mm-hmm. and again, that they deliver on good jobs, well paid. Mm-hmm.
It's questionable if we'll ever get past the tariff issue, right? We might be dealing with questions on uncertainty and changing tariffs for the next 3 to 4 years. I mean, especially if they're negotiating tactics, they'll be changing constantly. But what about manufacturing jobs? Are we going to see manufacturing jobs being created in the United States?
I think President Trump has a very specific goal of restoring manufacturing to the U.S. And you start to see that this is actually happening. The Japanese and Korean investments in plants in the South. I do see some aspect of insourcing by companies that want narrower and shorter supply chains. So manufacturing will come back. The question is it a 1 year or a 4 year proposition? Because it does take time to train, build, and get it going.
Well, in the meantime, we're seeing the consumer soften, but only slightly, right? And we're definitely seeing the consumer a little bit more worried about jobs in the future, a little bit more worried about inflation. Are CEOs concerned about U.S. consumer buying power in the next 6 months?
I think CEOs are nervous because they start to see trading down to private labels. They start to see longer buying spans, but for a tube of toothpaste or whatever. And these are just first signs, particularly in the bottom quartile of population, which I think is a sign of stress. And also credit card debt is increasing. Yeah. So, it's a K-shaped kind of economy.
Richard, you've been doing this for a long time. Are there parallels at all, historical parallels, or have we sort of reached this Rubicon where it's just uncharted territory? I'm talking about in terms of sentiment, whether it's at the executive level all the way down to the consumer level.
I think we're in a different place because fundamental economic propositions that have been accepted for the last 25 years are being overturned. I mean, you'll remember that this whole idea of the end of history was proposed really when the Berlin Wall fell, and it was the triumph of capitalism and all this, and it hasn't exactly played out that way. And a lot of manufacturing jobs have moved outside of the U.S., and so people have said, I'm unhappy. I want to see a future. When only 30% of Americans believe they'll be better off in the next generation, that's hopeless. And it's worse in Europe. It's worse in France and Germany. So we've got to restore hope by showing people that, in fact, they can have good jobs and that they can make their families better off.
Yeah, and particularly in a country that's always been a beacon for opportunity and advancement. Richard, I have to leave it there. Really great conversation. Richard Edelman is the Chief Executive Officer over at Edelman as we continue to count you down to those closing bells. Just about 20 minutes to go. A closer look at some of the big movers on the day and a huge drop today. And a lot of the vaccine companies, including Moderna, this after a top regular at
Shares of Moderna and other biotech stocks are sliding in the wake of Peter Marks, a top regulator at the U.S. Food and Drug Administration, stepping down. In his resignation letter, Marks alluded to friction with HHS Secretary RFK Jr., a longtime vaccine critic, over the safety and transparency of vaccines. Joining us now to discuss is Max Neeson of Bloomberg Intelligence. Max, have we heard anything from the CEOs of some of these tech companies like Moderna, Biotech, and so on, those that manufacture vaccines?
Not much in the way of explicit statements from these companies, and I think that's been a fairly consistent thread, not necessarily surprising given, I guess we'll call it the administration's reaction to dissent, so to speak. But from various organizations affiliated with the industry, lobbying, generally disappointed with this. Another sign of moving the agency away from sort of bedrock scientific principles, which is, of course, of concern for these companies and for public health in general.
So just give us a sense here. I mean, who are the people coming in? Is there a replacement for him? Who's the head of FDA now? I know some of these roles are still unfilled, but is this the concern that the people coming in somehow don't, how should I put this delicately, maybe don't have the same scientific rigor as the people going out?
Yeah, I think that's exactly it.
Yeah.
So there is a new head of the FDA, reported today, actually, that he was signed in last week, which was not previously known, and was aware of and consented to this decision. So two-part, that the replacements won't be, don't have the institutional knowledge, the same sort of attachment to science or sort of common perception of how it should be conducted, losing, just a continuity, and then specifically Marx has been very well regarded by industry, emphasizing flexibility in regulatory frameworks. And then generally just losing people at the FDA means timelines slip, things are slower, there's less room to do sort of innovative work to bring new medicines to market. So a lot of tricky things.
So if you're a Stefan Bancel at Moderna or Albert Bourla at Pfizer or any of the other CEOs, do you start ramping down your vaccine production?
Yeah, it's a really tricky question because Mark's leaving, I think, is it's hard to ignore, let's say. Just for a company like Moderna, which both has novel vaccines, novel rare disease drugs, another focus of Marx's. So things that require sort of complex new endpoints. So how do you measure if this drug even works? That's a thing of real regulatory complexity. And if all of FDA staff are sort of occupied with just trying to get meet their timelines for drug approvals, there's less room to figure out how to bring those sort of new medicines to market. So we may see a point where people do start to speak out a little bit more.
Talk about disruption and difficulty with your strategic planning. Max, thank you so much. That's Max Neeson of Bloomberg Intelligence, and Moderna down about 7.5% right now. Well, coming up, we're going to take you to the closing bell with Kim Forrest, founder and chief investment officer at Biotech.
10 minutes until we get to the closing bells. Romaine Bostick alongside Bonnie Quinn on a day that, well, looked like it was going to be a lot worse, Bonnie. The S&P opened lower by about 1% on the day. The NASDAQ was down 1.5%. Look at that. It's green on the screen. Yeah.
What is this end of quarter optimism, or is this April Fool's early, you think?
Yeah, it could be a little bit of a rebalancing as well. Remember, this was an awful month, and it's actually going to turn out to be an awful quarter despite the green on your screen. Remember, you had a NASDAQ down 8% on a month-to-date basis. The S&P down 5-6%. Even the Dow was down about 4% or so. So maybe you are seeing some of those losses turn into either maybe dip buying, or maybe it is some sort of rebalancing here on the final day of the month.
Yeah, and a little bit of window dressing as well, I'm sure, Romaine. But as you said, we are up 0.7% on the S&P 500. That doesn't really help the quarter. It's still down almost 5%. The NASDAQ 100 is up 0.1% as we head towards the close. We have the 10-year yield there at 421.86, so just a little bit further lower as we saw more buying today in treasuries. It was really a risk-averse day in spite of what you see on the screen. And then gold, constant records today, and we're basically at another record now, 122.81.
Yeah, the dollar relatively unchanged on the day, as is crypto. Bitcoin still camped out at that 83,000 level here, well below that all-time high that we hit just a few weeks ago. Kim Forrest joins us right now to help us count down to these closing bells. She's the founder and chief investment officer over at Boca Capital Partners. And Kim, this is one of those days where I think going to have a lot of people scratching their heads. We've seen this tug of war in the market, these huge sell-offs. The dip buyers come in. It's hard to understand what the psychology is, whether they're finding value or whether it's just kind of a repositioning of the ships. But a lot of people are still worried about what happens on April 2nd, and more importantly, what happens well after April 2nd when we start to see the actual ripple effects from many tariffs implemented. Are you worried?
No, not really. I'm never someone that gets upset about the short term. And these tariffs, I believe, are going to trouble markets for the short term, but markets adjust really quickly. The way I like to think about my markets is people showing what their ideas are, but they do it with money by buying and selling things, right? And we have just come out of an election season where pretty much the polar opposite of candidate replaced the incumbent candidate. So the markets have been processing this for the last, 4.5 months. And here we are at another pivotal point with tariffs perhaps coming in. And we still don't have a good feel for what these are going to do in the very short run. But I'm always looking 3 to 5 years out, not for the next 15 days.
Yeah. I am curious as to what's even drove the sell-off, because even before we got the rebound on this day, there were a lot of names in the green and a lot of names that are very exposed to economic conditions, like a Visa, like a Home Depot, like a Johnson & Johnson, Apple. But then what you saw down were a lot of those big tech names, the Nvidias, the Amazons, Microsofts, and Teslas. And it raises the question that some people have posited on this program, that the sell-off that we've seen over the past few weeks was less about tariffs in the economy and more about just an overvaluation in that AI trade and the ancillary trade that went along with it.
I completely agree with that. Like 100%. If I could agree more, I would, but I can't. But, if we're looking last year at this time, even though NVIDIA had doubled or quadrupled or whatever kind of crazy multiple from the year before in 2023 to 2024, it still had a good ways to go. And people were just kind of waking up to the fact that AI was a real thing and maybe it could be productivity enhancing and all of that good stuff. Right? But NVIDIA pretty much ruled the roost until September when the Magnificent Six took over, and started, because the 7 is NVIDIA, right? So the rest of the Magnificent 7 kind of picked up the way forward. But here's the bad news. It was all kind of on, the investors had a short-term visibility, and when that didn't play out, and when it looked like it was going to be a much longer slog to make AI really meaningful, I think they've bailed. And I think that is what we're seeing over the last couple of months and why NASDAQ has continued to suffer in spite of, a lot of the other companies kind of rebounding and even being higher than they were last year at this time.
So, Kim, what do you do? I mean, if this is not the clearing event that perhaps markets were hoping for, do you take a step back and just wait for the clearing event, or just wait to see if this volatility continues?
I think we can assume that volatility will continue, but how much and when, we don't know, right? We never, ever know the future. And I know that everybody that comes on here, and including me, I will tell you what the future brings, but we know it with very little certainty, other than the sun's going to rise tomorrow. That's about it. So that being said, I really like to be fully invested, or as fully invested as I can be. And because good things happen to companies. Just because tariffs are going in doesn't mean that maybe a merger is announced or a discovery. You don't know. So you try to pick really good companies.
Take an example. I've been looking at NVIDIA all day and just curious about it. It's trading at 108 now. It was down to 105, a little below it actually earlier. Is that more fair of a valuation for a company like NVIDIA, or do you have to now take the wider stock market and economic backdrop into account when you're deciding what is fair value for a company like that?
Well, I think the whole AI thing is a special trade because the companies who are most invested in it, which are, part of the Magnificent Seven, they actually don't have to look at what's going to happen this year. They have enough money in the bank to fund this. Seriously, Microsoft, even Apple, Google, Meta, they don't need, an upswing in activity in their marketing or in their company to continue funding it. So I think it's a pretty good bet that that's going to play out. And I think investors have to look at each case and see, does this company's spending depend on the livelihood of its ongoing business? And in this case, the answer is no.
All right, Kim. I was hoping to leave things on a high note, but we have to leave it there. We're out of time here. Kim, always a great conversation. Kim Forrest.
Thank
She's
you.
the founder and chief investment officer over at Boca Capital Partners here on this March 31st, last day of the month, last day of the quarter, as we take stock here of a market still trying to suss out exactly what some of these policies out of Washington will mean. Policies, of course, Bonnie, that have kind of sucked the air out of the room on a lot of levels. But this is crunch time. April 2nd, Liberation Day, and then just a few days after that, the start of earnings season.
Exactly. We have to wait for responses from other countries and what they're going to say, and what they're going to try and negotiate. But yeah, I mean, and the problem is, you want to pick the bottom, don't you? Most money managers would, or at least they would want to try. And when you see those days where we see 2% plus gains, it's heartbreaking if you're not in.
Yeah, hard to believe that anybody actually picked what would have happened over these last 3 months here. Maybe the next 3 months are different. As we continue to count you down to the close, our global simulcast starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Bonnie Quinn today as we take you through that closing bell with a global simulcast that starts right now. Carol Masser and Tim Stenovic join us from the radio booth. Scarlett Fu and Alex Seal are off today. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube on a really topsy-turvy day to end what has been a wild quarter. We look like, Carol, this is going to be an awful day here. Markets are down 1-2% here across the board. But as we get to the closing bells, almost all of the major indices in the green.
Yeah, I'm kind of shocked, right? What a different day from where we started at 9:30 this morning to where we are today, to see all of these major averages in the green. And I'm looking at a VIX that's barely higher, just below 22, despite, I feel like, the swings we continue to see in the trade from day to day.
Yeah, unclear to me exactly what happened midday when you started seeing quite a bit of buying here. Was it the fact that investors were coming in and buying the dip? Does it have to do with the end of the quarter here? Unclear to me exactly what the prompt was for this. However, I will say the S&P 500 was down as much as 1.7% in today's trade. It's up about 0.6% now.
Yeah, I mean, quarter end, a little bit of window dressing perhaps, but don't forget we also have non-farm payrolls at the end of the week to get to, and there might be a lot more volatility to come. And Carol, to your point, that VIX at 22, it was much, much higher than that just after the opening bell this morning.
Yeah, absolutely. Here right now, we're looking at an S&P with the majority of the stocks in the green, about 380 stocks roughly moving higher on the day. And that includes some big names like an Apple, Visa, Walmart, Berkshire Hathaway, AbbVie, some of the other big cap tech names sitting this one out. But it doesn't matter. This is enough to pull the S&P 500 off of the abyss for the day, which was down more than 1.5%. It's going to end the day higher by about 0.5%. We should point out, despite that here on a monthly basis, the S&P down 6% and down 5% for the quarter. The Dow Jones Industrial Average up more than 400 points here on the day, though, like the other indices, is going to finish the month and the quarter lower, down about 1% here over 3 months. The NASDAQ Composite down 24 points, or about 0.1% here on the day. The NASDAQ 100 unchanged, but both of those indices lower by more than 8 to 10%, depending on which one you pick. And let's take a look at the Russell. It's sitting this one out here on the day. It did claw itself off of the lows of the day, but still finishing down 0.6% on the day. And for the quarter, Carol Masser, it is down 10%.
Wow, that's a big move to the downside. S&P 500, if you looked at it earlier today, the split in terms of winners and losers, very different. So here we are at the close. And guys, we've got 390 names in the S&P 500 gaining ground today, 109 to the downside, and Vonnie 4 unchanged.
Yeah, and if you look into the map, Carol, it's so fascinating. It's basically a green pie today, right? Most sectors, with the exception of consumer discretionary, higher, and that was down by just 0.2%. But if you look from the top, it is those defensive type of sectors that did best. So consumer staples, financials, energy, materials.
All right, let me get to some of the individual gainers. I probably could have changed my list, but this is what I came up with about midday today. All right, Newsmax, how to do it, an IPO. I mean, at its highs, this stock, up 735%. I don't even know how you explain this one. We had opening 40% above their IPO. $10 a piece was the IPO. Stock closing at just under 80.
What's the explanation for this? Because this actually isn't how you do an IPO, because technically that's 735%, or at least 734% of it should have actually gone to Newsmax and not to secondary investors.
Anything left on the table? Should we even ask? I mean,
I don't know. Who were their bankers? Because I would like to to talk to them.
I don't know. We need to talk to him. I mean, Tim and I have been talking about this too. Like, how do you make sense? A lot of volatility in trading. We did see it halt at one point. I kind of can't wait until their first earnings so that we get a peek a little bit more into the business there. All right, moving along. AIG, guys, this was up about just shy of 4%. Held an investor day today. Shares rallying after the insurer authorized the repurchase of as much as $7.5 billion of its common stock. It also made some talk about planning to allocate more to private assets, looking to grow its net investment income. All of this coming in their investor day. But nonetheless, this was easily an outperformer today. Here's another one. Corcept Therapeutics up 109%. It's a $10.5 billion market cap pharma company. Shares surging as much as 114% at its high today. Heavy volume. Drug developer said a late-stage trial of its experimental combination therapy for ovarian cancer met its main goal. So investors moving big time into this one.
Can I just add an honorable mention, which was Warner, since we're talking about the media, Warner Brothers Discovery actually rallied about 3.5% on the day. There was an interesting report, Carol Masser, that a lot of cord cutters, those people have canceled their subscriptions, having second thoughts now because the price of streaming services have gone up.
Hallelujah.
Hallelujah. Absolutely. Well, for our benefit, thank God.
Something's got to give, right? Yeah.
Come back.
Thank you for that.
You're welcome.
I'll take it.
And on a high note, let's go to a down note with Tim sentiment.
Let's talk about the Mag 7 Total Return Index. Initially, this entire index was down more than 3% on the day today, down 3.6%. It ended up, with the buying closing down only 0.4%. It does, of course, include the Mag 7 stocks. At 1.6 of the 7 were lower. 4 of the 7 fell today, still weighing on the indices: Tesla, Nvidia, Amazon, and Microsoft. Moving on to Moderna, shares falling by close to 9% today. We did see vaccine and biotech stocks fall after Peter Marks left the FDA. He's a top regulator, casting uncertainty about the future of vaccines and cutting-edge gene therapies. In his resignation letter, Marks said he'd been willing to work with Robert F. Kennedy Jr. to, quote, address the secretary's concerns regarding vaccine safety and transparency. But he continued saying it became clear that truth and transparency are not desired by the secretary, but rather he wishes subservient confirmation of his misinformation and lies. Interestingly enough, later in the session, we saw Cantor Fitzgerald analysts come out with a note on biotech analysts saying that the Trump administration should reevaluate HHS RFK Jr.'s role after this vaccine official stepped down.
Let me just point out, I was looking at the decliners on the day, Tim. At least if you go into the small cap space, it's all biotechs. It's the top 20, 25 decliners were in the biotech space.
Yeah, no shortage of decliners to choose from today. Pretty remarkable moves when it comes to the biotech space. Finally, a little M&A news today. Rocket Companies down 7.37%. This after the company said it is acquiring Mr. Cooper Group in an all-stock deal valued at $9.4 billion. This will create a mortgage behemoth that handles 1 in every 6 mortgages in the U.S. Shares down by about 7.4% today.
Yeah, absolutely. Well, let's take a look at what yields did on the day, because that was just as wild of a ride as what we saw in the equity space here. You look at that 2-year yield, and I'm going to point that out. 2 basis points lower on the day. But here's the thing. At one point, it was down 8 basis points on the day. At one point, it was up a basis point on the day. And we saw similar moves on the 10-year, on the 30-year, on the 5-year as well. So a lot of volatility, even though the end result of it all was relatively unchanged across the board. But it just gets to that sense here that investors are really having a hard time figuring out what the direction is for this market, whether it's in the equity space or in fixed income.
Yeah, it's kind of like, where do I go? Where do I go? Hey, listen, I just want to get back to you because you asked, Romaine, and I like to answer your questions. Newsmax's offering led by Digital Offering LLC. I don't even know who that is.
Okay, well, we're going to find out who they are and why they left us 700 and something percent on the table.
Now the ball is in your court.
I just want to point out real quick, too, because on Treasury, sorry to keep going back and forth here, because I was looking at you actually made money on a total return basis, not only on Treasuries, but even if you were invested in just total global fixed income. So, basically investment grade bonds as well as Treasury bonds. And this was like the widest outperformance we've seen in the fixed income space relative to the equity space since at least 2022. So significant to see that the relative safety of fixed income actually worked to the advantage of a lot of these investors this quarter.
Yeah, interesting. And to see how much then investors have really pulled back on equities and looking for something else, right?
Have you been invited to Jeff Bezos' wedding?
maybe.
I was told the invitation is in the mail still.
Yeah.
So maybe that's
who told
why.
you that, Tim?
They're not doing an Evite this year.
They're doing it in Venice.
They're doing a real invitation.
I can't understand how they're going to only invite 200 people. Do you know how difficult it is to invite only 200 people to an event?
Well, if you have Jeff Bezos' security, I'm sure they can make sure to keep out the unwashed masses. But Venice was kind of upset about this. They were like, the Venetians, they were like, how are we going to handle this influx of all these, rich folks and their super yachts and super cars and taking over?
Did you say the Venetian in Las Vegas, Romaine? No?
No.
Can I just say
this is
it's actually the real.
Okay.
The real
I'm just checking.
Venetians.
Okay.
It sounds like Mr. and Mrs. or soon to be Mr. and Mrs. Bezos have screened out some guests.
Screened out.
Well, it's apparently.
Is he going to invite like the president? Because wasn't he at the inauguration?
I saw that.
That's
definitely. Ivanka is on the list according to People magazine and the Kushners.
I did see in an earlier report that the president has been invited.
Yeah.
What do you get Jeff Bezos and his wife?
Anything they want, apparently.
Yeah.
I don't know.
Candle? A pillow for, a space.
Does he need like an ironing board? Or,
down comfort.
Does he have like a registry with just like pots and pans and,
I don't know, but they were definitely in the Dolce & Gabbana store on Sunday, which was not what I was doing. They were shopping for wedding dresses.
Are you spying on them?
No, I keep up with the old TMZs of the world.
You're stalking them? No. All right, that's a wrap. Across platform. On radio, TV, YouTube, Bloomberg Originals. Monday is almost over. All right, guys, we will see you again, same time, same place tomorrow.
Our coverage continues here on Bloomberg Television.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Vonnie Quinn.
And I'm Romaine Bostic. Vonnie, the word of the day, at least early in this session, was really sell-off. By the end of the day, the word of the day was, volatility. A market that was down more than 1% on the day. For some of the indices, more than 2%. But as we got closer to those bells, you did see the dip buyers come back in, bidding up the major indices, and most of them did finish in the green. An S&P 500 that was down about 1.7% on the day, finished higher by about 0.6%. Similar moves for the NASDAQ as well as the Dow. We should point out, though, for the month and for the quarter, this was bad. Going back to at least 2022 for some of the major indices, we haven't seen anything like this. We're talking about 5, 6, 7% drops on the major indices. For the consumer discretionary space on that level, we saw a 9% drop this month, 13% on the quarter, as a lot of people sold off those discretionary stocks in the face of concerns about tariffs and, of course, about consumer spending. Similar story for the automotive sector, which continues on the back foot. It's not just the automakers themselves people are concerned about, but the parts makers. That parts ecosystem very much intertwined with the global trade system, a global trade system that, at least for right now, appears to be upended. And then the flight to safety. We saw that in treasuries. We also saw it in gold, Vonnie, 31.24 and change. That's a record high for spot gold.
Well, and the last few minutes of trade, as you say, Romaine, we did see many investors gobble up some stocks, but throughout the day we saw this massive retail trade into Newsmax, newly IPO'd. So this is a tale of two IPOs, as you can see right here. Newsmax opening at 10, went straight to, it was IPO'd at 10, opened at 14, and then it just continued to go higher and higher, had a little pause in the day, and then finished off the day up about $10 from its previous price. Several volatility holds throughout the day, and, buyer beware. This is very much a very, very, very precarious place to be right now, but if you're a retail trader and you did well today, say, I guess, congratulations. CoreWeave IPO investors didn't have the best day either. Now, it might be a consolation that the whole market was down, but that stock, even though it finished at its IPO price on Friday, was down more than 10% at one point today, finished down 7.3%. And Tesla, just picked that as one of the examples of a Mag 7 stock that really didn't do well today either. Tesla, you might have thought, would be a little bit immune to auto tariffs, given that it's more made in the United States than some of the other automakers' vehicles. But no, Tesla also getting a bit of the brunt of the selling today, Romain.
All right, and we talk about that volatility that we saw in the market, in equities as well as in the fixed income space ahead of Trump's so-called Liberation Day on April 2nd, Wednesday, which has spurred a bit of an exodus earlier in the session from risk assets in favor of safe havens. That was the story today. In fact, it was the story really for the last month or so. Treasuries outperforming U.S. equities this quarter for the first time in 5 years. Colin Martin joins us right now, fixed income strategist at the Schwab Center for Financial Research, to talk a little bit more about that trade. And I was going through the numbers here, Colin. I mean, whether it's treasuries, whether it's the broader fixed income space involving corporates here, we saw significant outperformance relative to equity, something we haven't seen in quite a long time. I'm wondering, is this kind of a one-off? People run to safety now, and if we get some clarity on some of these issues that rattle them, do they pile back into equities, or is this the start of a longer-term trend?
Well, I think you hit the nail on the head, Romain, with the uncertain aspect there. And if something gets dialed back a little bit, what does that mean for the markets? And that's how we're approaching the bond market right now in terms of our guidance to our clients. And we're really refraining from taking a really targeted approach to duration in terms of being too long or too short, because there is so much uncertainty. And if we were to get some news from the administration that maybe the tariffs aren't as aggressive as we expect, or the longevity isn't as long as we expect, then we can see risk assets perform pretty well. We can see Treasury yields start to rise again, because even though we've seen some soft economic data lately, mainly due to the uncertainty around tariffs, the hard data is okay. We ended last year on a relatively strong note. We haven't seen the soft data work its way into the hard data yet. So yeah, if we see that roll back a little bit, we could see yields move a little bit higher from here, and maybe risk markets perform well again. But it's really too tough to tell right now, because we get these on again, off again policies from the administration. And with all that uncertainty, it's tough to make a really bold call in terms of one direction or the other.
Absolutely. And maybe that's why you're seeing people flock to some of these areas. What about tips? Because it seemed like for a while there was a lot of talk about the inflation trade, the idea that if tariffs do prove inflationary, do you sort of pile back into tips and other sort of instruments that would protect you from an uptick in inflation? Did you see a lot of activity there?
We have seen a lot more interested in tips, because a lot of investors are looking for that inflation protection. What we always like to highlight with tips is that they can serve as long-term inflation, but they aren't necessarily a hedge. Now, last quarter, they did pretty well, and last month specifically. So far in March, they've been one of the best performing fixed income asset classes. But their prices can still move in the secondary market. That caught a lot of investors off guard back in 2022 and 2023. So if we see inflation stay sticky and maybe those growth concerns subside and yields start to rise, we'd still likely see tips prices fall along with them. So that's something that investors need to consider. But we still think tips are really attractive right now. For one, their yields are real yields. They're already inflation adjusted. You can get yields around 1.5% or so, depending on the specific maturity. And that means you can lock in a positive rate of return above the inflation rate if you hold those tips to maturity. So we think that's really attractive. And they can also make a lot of sense if we are actually in this slow or low growth economic environment and high inflation. A lot of people are throwing out the stagflation term. I want to stop a little bit, because growth isn't that low yet and it's not declining. And when we look at the inflation numbers, we're still around 3%. So nothing like the 70s that a lot of people are worried about. But if we do get that slow growth, high inflation period, then I think tips can make a lot of sense, because they're relatively safe, backed by the full faith and credit of the U.S. government, and they have that inflation protection component. So they can make a lot of sense, but they can come with volatility, because, of course, they are bonds and their prices can move in the secondary market.
Well, Colin, if we do get some kind of reprieve on tariffs, if they're not quite as bad as the Armageddon scenario that's being painted by the administration right now, or if they're going to take months to get implemented, or if they're implemented slowly over time, do we see a massive repricing once again in treasuries?
I think we could, but I don't know about a massive repricing. If we look at the range of outcomes for the 10-year Treasury yield, if we do get some sort of reprieve, I think we could see the 10-year Treasury yield get back to the 4.5%, maybe 4.75% area that we saw earlier this year. I think the 10-year Treasury peaked around 4.8% or so. If we look at what the actual upside is, it's probably not much higher than 5%, based on everything we're looking at right now. Now, on the flip side, if we do get, tariffs implemented for multiple countries at higher rates than expected and for a long period of time, then I think those growth concerns could, allow the Fed to cut more than expected and pull the 10-year Treasury yield maybe down to that sub 4% or 3.75% area. So we have this wide range, probably 100 basis points or so. But if we do get that reprieve, we probably would see an increase from here, maybe to that 4.5% area or so. And that's why we're stopping short of suggesting investors really take a long duration approach right now because of the potential downside.
Well, we may know soon enough, or we may not. Colin, thank you so much. That's Colin Martin, fixed income strategist at the Schwab Center for Financial Research.
We are getting some earnings, Bonnie. This involving PVH, the company behind Calvin Klein, Tommy Hilfiger as well.
Okay, guys, crude oil भी sideways, natural gas भी sideways. But crude oil अभी भी रेजिस्टेंस पे है. वैसे इस रेजिस्टेंस पे मार्केट मल्टीपल टाइम रेजिस्टेंस ले चुका है. ऊपर भी एक रेजिस्टेंस, अगर वहां चला जाता है तो बेटर है. यहाँ से ट्राई कर रहे हैं थोड़ा क्वांटिटी कम रखना. ये पहली बार नहीं आ रहा है इस लेवल पे. दिस इज द 5th टाइम प्राइस हिटिंग दिस लेवल. बाकी साइडवेज ही है. सेलिंग आनी है तो थोड़ा फास्ट आनी चाहिए. ज़्यादा देर अगर ऐसे ही रुका तो फिर ब्रेकआउट क्या चला जाएगा, स्पेशली 12:30 के बाद, विच इज़ नॉट गुड. बाकी नेचुरल गैस भी बिल्कुल ही मोमेंटम में नहीं है. कुछ भी नहीं हो रहा है इसमें भी. थोड़ा सा ऊपर आ जाता तो इसमें एक सेलिंग का प्लान कर देते वापस. लाइक भी करते रहो गाइस. बैंक निफ्टी देखोगे मॉर्निंग पे मोमेंटम आया था पॉजिटिव साइड, रेजिस्टेंस हिट किया, सेल ऑफ में चला गया. अभी थोड़ा सा फिर से एक सपोर्ट एरिया पर है. देखते हैं रुकता है या फिर नहीं रुकता है, या फिर ये सपोर्ट ही ब्रेक कर देता है 15 मिनट टाइम फ्रेम पे. फ्यूचर की मैं बात कर रहा हूँ. अगर ये 51,070 के नीचे क्लोज हुआ तो ब्रेक डाउन हो जाएगा. उससे ऊपर एक सपोर्ट है. कंसोलिडेशन करे तो बेटर है. थोड़ा पुल बैक देके वापस 51,750 से वापस रिजेक्शन. बाकी अच्छा खासा गिर गया है 1% से ऊपर. ट्वेल्व 30 ध्यान रखना, थोड़ा सा वॉलेटिलिटी रहेगी. 11:30 हो गया. लेट्स सी कुछ मोमेंटम कब करता है क्रूड, या फिर आज जाता है साइडवेज. थोड़ा सा रह गया, यहाँ पर भी एक सेलिंग का प्लान है. थोड़ा इस एरिया के आसपास अगर मिल जाता है तो इसमें भी कर देते वापस सेल.
Markets never sleep, and neither does All right, it's shaping up to be an ugly end to a very ugly quarter. 30 minutes until the official start of trading. I'm Katie Greifeld.
And I'm Shonali Bassick. Matt Miller is off today, and Bloomberg Open Interest starts right now.
All right, coming up, there's a sinking feeling in markets as the world waits for Trump's tariffs to be unleashed on Wednesday, and a critical jobs report looms on Friday. That comes as a roller coaster quarter for investors finally comes to an end. The S&P 500 is on track for its worst quarterly performance since 2022. And strategists don't really see things improving all that much this year. Goldman cut its S&P 500 target again, while RBC warns of a bear market below 5,500. All of that and more coming up. If you take a look at where we trade on futures, though, you can see that we're down overall on the S&P 500, off by about 1%. A lot of that pain is coming from big tech, and you can see that in Tesla right now. Elon Musk says that his role with Doge is costing him as at his main job as CEO of Tesla, citing political backlash. Shares are down 34% year to date through Friday's close. Musk has personally lost at least $100 billion, Chanel, and you can see shares down another 5% this morning.
Katie, I'm going to give you a little sampling of the pain in some other sectors here. You're looking at Nvidia now down not as much as you saw earlier in the market, in the pre-market, but it is still down 3.3%. Of course, these are all going to be sectors impacted by tariffs. The chip industry is known for its global supply chain. U.S. automakers could see a buying boom for consumers looking to get ahead of tariffs, but of course, the higher prices. GM still down about 2%. Diageo down more than 1%. Foreign alcohol costs could rise by $20 per bottle, according to just one estimate. Of course, there are many more. Now, White House Senior Counsel for Trade and Manufacturing, Peter Navarro, was on Fox News speaking about Trump tariffs and the impact it will have on America. Take a listen.
Let's work through the economics of this. First of all, we're going to raise about $100 billion with the auto tariffs alone. The other tariffs are going to raise about $600 billion a year, about $6 trillion over a 10-year period. And we're going to have tax cuts. It's the biggest tax cut in American history.
All right, we're going to work through the economics with Mike McKee in just a minute, but let's get a little bit more detail on the tariffs. We'll do that with Bloomberg's Laura Davison joining us from Washington. So, Laura, as we count down to Liberation Day, April 2nd, it feels like this could unleash more questions than answers, than clarity that investors have been looking for. I mean, you consider the fact that there's still questions over exemptions, even though Donald Trump said that there wouldn't be any, and of course, what retaliation might look like.
Yes, the White House itself is still figuring out exactly what this plan could look like in its most full form. What the White House says they're doing is looking at all the tariff rates each country charges, as well as all these what they call non-tariff barriers, things like value-added taxes, digital service taxes, and doing some complicated math to figure out what all those tariff rates are. There's some concern within the White House that this is just too complicated of a plan to get done over the next couple days, so that it may be a more scaled-down version, though Trump has said, look, we want to go as maximalist as possible. This will hit all countries. Exactly what this looks like, whether it's tariffs that will go into effect midweek this week or maybe a plan to delay those out over the next couple weeks, that is all still in the mix and has not yet been nailed down at this point.
Certainly a lot of uncertainty. What are Trump's own advisors expected to be telling him, Laura?
So you've got a sort of a range of voices from within the White House. You have people like Peter Navarro who are saying, look, this is going to raise a ton of money. And you kind of see that this is the White House is sort of looking at, okay, how much money can we get for this to pay for things like tax cuts? You have folks like Jamieson Greer, who's the U.S. trade representative. He's been arguing for a more orderly approach for, having some of these exemptions, doing a little bit, getting the feedback from the business community. It appears right now Peter Navarro's camp is winning over Jamieson Greer's, but there's a lot that can happen over the next 48 hours at the White House.
And beyond. Bloomberg's Laura Davison over in Washington. We thank you for your analysis. And don't forget, even after Liberation Day, this week is also the March jobs report on Friday. So Bloomberg Economics now predicts that the U.S. added 200,000 jobs in March and that the unemployment rate ticked higher. Michael McKee, Bloomberg's chief international economics and policy correspondent, joins us for a preview, including how to think about the Doge cuts.
Well, all of this is going to be questionable in the sense that most of the data we get this week is supposed to give us an idea about what's going to happen going forward in the economy. But none of it is going to do that given what is happening on Wednesday. Bloomberg Economics is not only looking at what happened with the jobs report, but they're looking at the tariffs. And because, as Laura said, there's no idea what these are going to be, the Bloomberg Economics folks are taking a worst-case tariff scenario that we could see tariffs go as high as 35%, and over 4 years, GDP would be 4% lower than otherwise. PCE core rate would be 2.5% higher. If they only did half of that, you'd get 14% tariff rates, cutting GDP by 2% and raising the core by 1.2%. All of that bad for the economy. But basically where we are is what Neil Shearing says from Capital Economics. He says the only certainty about Liberation Day is that everyone loses when tariffs rise. Despite what certain administration officials are saying. So that brings us to the payrolls report on Friday. And Bloomberg Economics is much more, shall we say, optimistic than the consensus so far from economists surveyed by Bloomberg. We get 138,000 from the group. Now, this may change as we get ADP and ISM numbers through the week. Unemployment unchanged and average hourly earnings unchanged. So there's kind of a consensus that we didn't see a big move except hiring got a little bit slower, but I don't think anybody's got a lot of confidence in that because it doesn't really matter after today. It's really what the impact is going to be in terms of the tariffs.
And you're right. I mean, the Friday's job report does feel very far away. When you consider what's coming in the middle of the week, we don't have much time with you, but I need to ask you about stagflation. That seems to be one of the buzzwords of the moment. Goldman Sachs has a great basket of stocks that should perform well under a stagflation scenario. Investors just bidding it up. Should we be talking about stagflation, Mike McKee?
Well, it depends on how you're talking about it. Stagflation is slowing growth and rising inflation. And the problem is the Fed can't do much about that because if they cut rates to help growth, it helps boost inflation. If they raise rates to cut inflation, it helps slow growth. So the question is, how bad would that be? This is nothing like the 1970s, though, when inflation was 10, 12% and growth was down around zero. So it's probably not the same way to think about it as we did before, but it is still a problem for the economy.
Still a problem, and it's an evolving term. Mike McKee, we'll be seeing you a lot this week. Looking forward to it. That is Bloomberg's Michael McKee. And let's keep the conversation going on markets because Wall Street strategists continue to see cracks.
6150 से सेल करेंगे यार ये लेवल देखो ऐसे मल्टीपल टाइम टेस्ट हो गया है ये पहली बार नहीं आ रहा है इस लेवल पे दिस इज द फिफ्थ टाइम 3 बार पहले आ चुका है 4 टाइम ये 5th टाइम है और नीचे भी कोई बहुत बड़ा टारगेट नहीं है थोड़ा सा ये है यहाँ सपोर्ट मिल जाएगा तो इस रेंज को अगर थोड़ा सा ब्रेकआउट या ब्रेकडाउन होने दोगे तो बेटर रहेगा लेवल थोड़े बड़े हो जाएंगे बाकी इट इज़ अ रिस्की रेंज यहाँ पर अगर बाई सेल कुछ भी करते हो तो बाकी यस अभी भी है रेजिस्टेंस ब्रेकआउट हुआ नहीं है तो बाकी ऊपर वाला रेजिस्टेंस है ये भी 2-3 बार टेस्ट हो चुका है बट सॉरी एक बार टेस्ट हो चुका है तो ये थोड़ा फिर भी ठीक है नीचे सपोर्ट आपका ये आपका अच्छा है एंड फिर नेक्स्ट सपोर्ट वो नीचे रहेगा आपका 6025-30 वाला वो और अच्छा है फिलहाल के लिए रेंज बाउंड मार्केट है अवॉइड करो बेटर रहेगा रेंज को ब्रेकआउट या ब्रेकडाउन होने दो यहाँ सेलिंग थोड़ा ज़्यादा बेटर है यहाँ बाइंग जहाँ बेटर है सेलिंग थोड़ी सी रिस्की है इसलिए लिखा हुआ है MTTL मल्टीपल टाइम टेस्टेड लेवल इसका मतलब ये नहीं कि वहाँ से सेलिंग आ नहीं सकती बट इतने बार टेस्ट हो गया है तो देयर आर वेरी हाई चांसेस की कहीं ना कहीं रेंज के मार्केट आइदर साइड निकलने की कोशिश करेगा तो अगर यहाँ से प्लान कर रहे हो क्वांटिटी कम रख लेना बाकी नेचुरल गैस में यहाँ से सेल प्लान कर सकते हैं ऊपर से यहाँ से सेलिंग प्लान कर सकते हैं नीचे सपोर्ट है 333 के आसपास वहाँ से बाइंग प्लान कर सकते हैं ऊपर भी एक रेजिस्टेंस है वैसे तो वो टेस्ट हो गया 2-3 बार तो थोड़ी क्वांटिटी वहाँ कम रखेंगे बाकी नीचे वाला कल वाला सपोर्ट है वहाँ से सपोर्ट ऑलरेडी ले चुका है फिर से आता है तो फिर से ट्राई कर लेंगे कैंडल का ध्यान रखना बाइंग करते वक्त ओपन इक्वल टू हाई ना बने और सेल करते वक्त ओपन इक्वल टू लो ना बने बाकी 12:30 होने वाला है न्यूयॉर्क सेशन के बाद शायद थोड़ा मूव बड़ा हो जाए प्राइस के लिए
So far have been growth negative.
Where do investors get in if you don't know the low?
Well, that's a difficult question, right? I would say like two things here. Like, first of all, the first thing is like it will take a long time before we actually see the tariffs and all the government cuts coming into the numbers, both macro and in corporate earnings. So that's probably one thing that investors will look after like quite a lot, like how are the next quarters are going to play out and what is the guidance from companies providing us. And the second one is like kind of the broader positioning theme. Let's not forget that the first wave of the correction that we have seen now was mostly driven by the so-called systematic investors. That's your trend followers, hedge funds in part, volatility controlled, risk parity funds. So they have pushed down the market a lot. But we have not seen like a massive amount of selling from your classic fund manager or even from retail. On the contrary, they were even rather constructive, I would say. So that's another thing that you usually want to see when you want to determine a bottom is like this washout in sentiment, this total capitulation of like risk taking from everybody. And then, like everybody has the plate so clean swiped that they can take on fresh risk, and that we haven't seen. So these are the two things, like the data will take a long time, and then the positioning is the other one that you want to monitor before you decide if you want to go back in.
Yeah, someone's going to have to step in to catch this knife. JP, it's great to speak with you with a tour of the soggy sentiment in these markets. That is Bloomberg's JP Barnett. And with that, let's take a look at these futures right now because, boy, it is just a wipeout, or at least shaping up to be with just about 20 minutes to go until the open. You take a look at the S&P 500, down 0.9% to end the quarter right now. A lot of that pain, as I mentioned, was coming from big tech. That has been the story of the quarter. It's the story of today's action as well. The NASDAQ 100 down a little bit more, and the Russell 2000 also not escaping right now. The Russell 2000 off by about 1.2%. Let's take a look under the hood, though, because we're keeping an eye on vaccine stocks after a top regulator at the FDA stepped down, specifically Peter Marks. He was the regulator who oversaw vaccine and biological drug approvals, stepped down, citing friction with RFK Jr., your new Health and Human Services Secretary. And the sell side, this is negative for vaccine makers, and you can certainly see that in the pre-market action, Shanali.
And, even amid this uncertainty, I'm surprised to say it's a Merger Monday. We're seeing a deal. Rocket companies buying Mr. Cooper for more than $9 billion to create a mortgage giant that handles 1 in every 6 mortgages in the United States. Rocket is down more than 5%. It is its second deal announced in a matter of weeks. Mr. Cooper, though, soaring more than 23, almost 24% pre-market. Fascinating deal in the mortgage market.
Yeah, absolutely. And as you mentioned, I mean, we're talking about a 2-time buyer with Rocket just coming out and buying Redfin a couple of weeks ago. So clearly some big ambitions, and they're willing to spend up to make that reality.
Got the data, got the loans.
There you go. All right. Coming up, Elon Musk says his Doge roll is costing him big time at Tesla. We'll take a look at the biggest drag on the Magnificent Seven next. This is Open Interest.
And now to high interest, a look at what's making headlines around the world. Moderna, along with other vaccine makers, plunging today after the resignation of Peter Marks, a top regulator at the FDA. Marks had long overseen approvals of vaccines and other biological drugs, and in his resignation letter, he cited friction with the views of HHS Secretary Robert F. Kennedy Jr., of course, a longtime vaccine skeptic. Now, Nicey, Texas is officially open for business, and Trump Media and Technology will become the first stock to list on the exchange. It will trade under the ticker DJT, and the stock's primary listing will remain on NASDAQ. And Elon Musk said Friday that his XAI artificial intelligence startup has acquired the X platform, which he also controls, at a valuation of $33 billion. The deal gives the new combined entity called XAI Holdings a value of more than $100 billion, not including debt. And for Musk, the deal streamlines his businesses and solidifies the relationship between the two companies, which he said, Katie, was coming.
There you go. There's plenty of M&A in this market if you know where to look. But let's stick with Elon Musk and let's take a closer look at Tesla. Musk acknowledged over the weekend that his job at Doge is costing him when it comes to running Tesla. The stock continues a dismal year. It's down nearly 35% over the first 3 months of 2025, down another 5% or so this morning. Here with more, I'm pleased to say we have Bloomberg Technology co-host Caroline Hyde. Caroline, what can happen at this point? What can Musk do? Because you've heard plenty of folks from the sell side say that the brand damage is already done.
And meanwhile, he's saying, well, the shares are quite cheap. Maybe you want to be buying them.
Why not?
He's talking up his stock. This was, of course, actually at a political event. The irony here is that the reason perhaps many feel that there's a drag on the stock is because of his political motivations and movements in the last few months, whether it be in Europe, where we've seen sales plunge across Germany, France, and the EU more broadly. We've also seen sales down over in China. And then here in the United States, he's at a Wisconsin event, all regarding, well, the next people to be put in from a court perspective there. He's handing out $1 million checks. And once again, is that damaging brand? Because many feel that this is in some ways politically affiliated. Now, overall, we are seeing the stock actually outperform other automakers since the tariff news has come in, many feeling that EVs are less susceptible to some of the tariffs that will come, and ultimately that he's able to source much more locally. But it's not undoing what you say is more than 30% sell-off. And then we've got the reports of the fires that happened in Italy, in Rome. Now, we're not knowing whether it is indeed arson or not, but it could well be. And again, that particularly puts pressure on the stock.
I feel like we talk about this a lot, but worth bringing up again. Do investors have confidence in the bench underneath Elon Musk at Tesla? Because if the worry is that he's distracted at minimum, or if his political affiliations are creating havoc on the brand, then who steps up?
It's always key man risk with Tesla and Elon Musk. And actually, that's why there's the anxiety building once more, whether he'll actually get the money he's been promised. Now, remember, they're once again trying to fight to be able to get his enormous pay package to him. Time and time again, the shareholders have voted for him to be accessing those billions and billions. But time and time again, a Delaware judge has overruled it. But their key man risk is significant when it comes to Tesla. They're worried about, him stepping away. But it is hinted that, of course, by May, he's going to be coming back to the fold. And ultimately, he's run plenty of other businesses, theoretically been distracted for years at Tesla, and yet alone the company continues to thrive with further models. So there is the question of whether or not it's just about getting the new models online, the Model Y being upgraded, and the production being more streamlined.
Speaking of things that might be distracting Elon Musk from his job at Tesla, just quickly here, let's talk about what we saw on Friday. XAI buying X. I am so excited to read Matt Levine's take in Money Stuff. But yes. What do we know so far? Because I really was not expecting this one.
I think many felt unsurprised by the fact that they are intertwined anyway, X and XAI. Many are wondering what really is the motivation here, ultimately, apart from pumping up the overall valuation of XAI, which seems that Elon's kind of made up himself. He's got one banker across X and XAI, and that's Morgan Stanley.
That's all you need.
He hasn't done another fundraise, so why is it suddenly worth 80 billion rather than 50 billion, as we previously saw? The 33 billion on X is notable because, of course, that's the amount that he basically took it private for back in 2022. That's nice for all the shareholders. They have a growth story once again. Instead of worrying about advertising, they're part of a generative AI play. The question is, what happens to Linda Yaccarino? Does she lead the business unit as it on goes? And will we start to see a pushback on other areas, other companies accessing underlying data from X, which currently is being used for XAI and Grok?
Yeah, and is it an Elon Musk thing, or can there be more M&A in social media networks? We'll keep an eye on it all. Caroline Hyde, we're looking forward to Bloomberg Technology today. Of course, that is Caroline Hyde of Bloomberg Technology at 11 a.m. after this show. Now, coming up, under 12 minutes until the market opens, and we're joined by Raymond James CIO, Larry Adam. He remains optimistic around U.S. stocks. We're going to talk to him about why. This is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
Well, Goldman Sachs is cutting its 2025 S&P 500 target again. David Kossin and his team now see the index at 5,700 points at the end of this year. He says, quote, if the growth outlook and investor confidence deteriorate even further, valuations could decline much more than we forecast. Let's break it down now with Raymond James Chief Investment Officer Larry Adam. He has an S&P target of 63.75. Larry, you've stood by that target even as your colleagues continue to slash theirs. Talk us through the conviction here.
Well, I think one of the main reasons for it is that when we came into the year, we talked about one of the biggest risks was that there was uber optimism. You saw record amount of people being really positive on the equity market. People were leapfrogging each other, taking the target on the S&P 500 to north of 7,000. And now I think we're on the other spectrum. And people are getting, in my opinion, probably a little too pessimistic on this market. And I think that's a good opportunity to step in, at least start to build positions here in the equity market.
But it seems like a long way to climb back given the negativity we've seen this month. You know, Katie's been pointing out it's been the first quarter of decline since 2022, a very tough year. What brings us back?
Well, first of all, when we want to talk about bearish sentiment, we've had bearish sentiment above 50 now for 5 weeks in a row. That's only happened 2 other times dating back to 1990. In the preceding 12 months, historically, the market has bounced back. And I just think you have to look at what's been priced into the market. And I think that this market is starting to price in some of the worst case scenarios when it comes to tariffs and the economy.
All right, Larry, I am pleased to say that you're sticking with us to walk us through a very, very rocky open, at least if you take a look at futures. That is Larry Adams. Let's take a closer look at these futures right now. As we mentioned, you take a look at the decline right now in the pre-market, currently off by about 1% or so, as you can see, getting close to session lows in at least the pre-market. And once again, it's big tech that is leading this sell-off, Shonali. The NASDAQ 100 off by about 1.4%. The Russell 2000 off by a similar amount, but the Magnificent Seven really have not shown up in any meaningful way so far in 2025.
Yeah, they've been a real dog this year, to say the least. And, you know, the places that people were going to hide to start the year, or at least to broaden out, have also not worked out. Your small caps, for example. People have looked abroad, but now even Mike Wilson saying maybe that trade is stretched. So certainly a lot of concern under the surface that there is a difficulty in finding where to go. You see it in treasuries, but where else?
Yeah, one place,
Gold.
as you mentioned. I mean, treasuries have worked, and we haven't seen that actually play out since 2020. To have a 3-month period where bonds rise and stocks fall, at least in the 60-40 portfolio, you're a little bit cushioned. We'll bring you through the opening bell action next. This is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
All right, we are moments away from the start of trading on what's shaping up to be a very, very ugly quarter end. Those losses deepening pre-market. Welcome back to Bloomberg's Open Interest. I'm Katie Greifeld. A lot of red on this screen to my right. As you can see, the S&P 500 down about 1%. Big tech leading the plunge lower. All told, this quarter is shaping up to be the worst quarter on a quarterly basis since 2022. Remember, 2022 was a year where the S&P 500 fell by 19%. It was a very, very ugly one. And so far, there isn't too much to cheer about because few sectors really have been spared in what we've seen so far. I mean, energy is outperforming, but you think about the tariffs that could come this week. Keep a close eye on your automakers, on your chip manufacturers, your drug makers, alcohol distributors, shipping stocks. It all goes on. In any case, you can see right now as cash trading begins, the S&P 500 holding on and building on those pre-market losses. Let's take a check on shares of NVIDIA as well. It's vowed to plow billions of dollars into its U.S. operations. It's down about 3.7% right now. Not exactly helping to lift the stock, but few catalysts have, Shonali.
Yeah, and I'm looking at a stock here that was supposed to be gaining from the likes of tariffs. It has a lot of onshore operations. Not winning today, Katie. Tesla is down more than 5% at the market open. CEO Elon Musk has been saying that his work at Doge is now costing him at Tesla. Remember, he's personally lost $100 billion from Tesla's own stock slide. We're going to stick with the broader market now. We're going to bring in Raymond James Chief Investment Officer Larry Adams back with us. You have a more optimistic view than what is being reflected in the market today. We left off a little bit with you talking about where things would start to turn around. My question now is what sectors lead that turnaround?
Well, the three sectors we continue to like are technology, the one that you're talking about that's really had a tough go of it here the first quarter. We like industrials, and we also like healthcare. And the main reason we like those three sectors is because that's the three sectors that have the best earnings growth for this year. And with valuations, at least entering this year, being a little bit more elevated, you need to have earnings growth. And I do think that particularly in technology, as we go through this year, you're going to continue to see them have the power in growth that people have come to expect from them. We're looking for those large cap, mega cap tech stocks to have earnings growth of about 20% this year. That far outpaces the broader market, and I think they'll be rewarded for that type of earnings growth.
It's interesting, Larry, again, to hear you sticking by these calls. I mean, is there any threshold at which you would say, okay, maybe it's time to trim this allocation a little bit. Maybe it's time to think about how we actually build this portfolio. I hear your logic and it makes sense, but at what point would it just be too much?
Well, first of all, we already have taken a lot of this into consideration. I mean, if you look at our positioning, we brought back the beta in our portfolios this year. We're focusing pretty much on large cap equities and mid cap equities, less inclined to be in the higher beta sections like small cap equities, emerging market equities. So we've already taken into account a lot of this volatility. Now, what would make me more nervous about the markets is really looking at what these tariffs actually mean going sector by sector. And we have our analysts go through each and every sector. And sometimes I think you got to remember that the economy isn't necessarily the equity market. And I'll just give you a quick point. If you look at those auto-related tariffs, keep in mind that auto-related stocks in the S&P 500 account for 2.1% of the market cap and only 1.4% of the earnings. So it's not as big as what people think. And by the way, one company, Tesla, represents 1.6% of that approximately 2%, allocation. So I think you have to dig down and look at what is actually going to be the impact on each respective industry and sector. And that's really what we have to continue to do as these tariffs are announced.
To the extent that the economy does matter a bit here to certain sectors, consumer, for example, where a lot of investors are worried that the consumer might drag things down a bit here. They're afraid of inflation. They're afraid of the cost of their car eventually going up on the heels of these tariffs. Where does that make a difference? You have different strategists, say Goldman Sachs, ratcheting up their recession odds here. Does that make a dent?
Well, if we were going into a recession, clearly that would be a big negative for this market. But right now, I will agree that when you look at some of the soft data, sentiment indicators, you are seeing some softness. However, I will tell you that has not necessarily been the best indicator of where the economy is going. And I'll just point out to one particular factor. If you look at the consumer confidence expectations component, historically, you'll hear economists say that when that falls below 80, that's recessionary. And it is true, the last 4 recessions, it was around 80. However, it's reached that level over the last 30 years 15 times. So it's not necessarily a guarantee when it gets to that level that you see a recession. We tend to focus more on what we call high-frequency data points, and I still think the consumer's in pretty good shape. When I look at withholding taxes, they're up 8% year over year. What does that tell me? It tells me that there's either more people working or they have more money to spend. But the bigger story is that the biggest part of the U.S. economy, the consumer, has more money to spend. When you look at jobless claims, that's high frequency. That continues to be at historically low levels. And then when we look at our activity metrics, when you look at TSA, that's pretty much flat versus where it was last year, but it's had a big bounce back since January and February. People are still going out to eat. They're still going to hotels. Right. When you look at credit card momentum, that continues to move higher. So I'm not seeing the weakness that a lot of people are talking about with this consumer getting to a recessionary conditions.
Yeah, safe to say, Larry, you're taking the other side of a lot of the doom and gloom that we've been hearing on this program and elsewhere on Bloomberg. But I want to talk about how you're thinking about bonds right now. Bonds obviously caught a big bid in the first quarter. According to a Bloomberg story, through Friday, Treasuries have outperformed stocks this quarter. We haven't seen bonds rise and stocks fall in a 3-month period since 2020, which certainly tells you something. You're not calling for a recession here, but where do bonds fit into your portfolio?
I actually like bonds. In fact, we call them, you've heard of Mr. Irrelevant. We think bonds are very relevant now for portfolios. And the reason for that is that bonds are doing what bonds do best. They're providing income. And if you look at corporate yields right now, they're at the highest level that we've seen in a decade. So you are getting income from your bond portfolio. And to your point, they are serving as a ballast to the equity volatility that we're seeing in the market. And that's historically been the case. And I think that's going to continue going forward. Now, the big risk out there that everyone wants to talk about is that once the debt ceiling gets accomplished, you're going to see huge issuance. And that's going to take yields higher to 6 or 7%. We are not in that camp. And the reason for that is that we still think demand remains healthy for bonds. And the main thing that we look at is something called the bid to cover ratio. And it continues to be at 2.5. So there's 2.5 times more demand for every bond auction that comes out. And the good news is that trend continues to move higher, not lower. So that's a sign of increasing, not waning appetite for bonds.
Larry, we thank you for joining us today. Refreshing to hear contrarian view in a market full of bears today. That is Raymond James, Chief Investment Officer, Larry Adam. Let's get a look at some of the other stocks moving this hour. We're going to bring in Bloomberg's Nora Melinda for that because, of course, let's start with these vaccine stocks.
Lots going on in the market today. I'm keeping an eye on vaccine makers, including Moderna. It's down more than 10% this morning. This is after Peter Marks, who has been a top regulator at the FDA. He abruptly resigned on Friday, and he's been one of the strongest advocates of vaccines and gene therapies. And in his resignation letter, he cited friction with RFK Jr., saying that and we know RFK Jr. is a longtime vaccine critic, and of course, the current Health and Human Services Secretary. He's saying that truth and transparency are not desired by the Secretary, and so we are seeing a lot of those vaccine makers tumbling on the news, Moderna and Vaxcyte as well. But in another space, when we look at M&A, I'm keeping an eye on Rocket Companies. It's an online mortgage provider, and it's buying Mr. Cooper. That is a mortgage finance company. We've got shares of Mr. Cooper up about 19%, but if you look at Rocket shares, they're down about 10%. And they did have an all-stock transaction. This was a $9.4 billion deal, a pretty straightforward transaction. And we know that Rocket earlier this month said that it would buy Redfin. So lots of deals going on here as we think about the housing market. But lastly, I'm also keeping an eye on CoreWeave. We know that this name has been very topical, but we had analysts who are disappointed by the heavily downsized IPO that we've all been discussing here on Wall Street. They raised about $1.5 billion. The company opened at $39 on Friday, which was about 2.5% below the $40 per share IPO price. And this is really waning enthusiasm as we think about AI stocks. So lots going on here.
Yeah, it's a really tough market for a tech IPO, so we'll continue to watch that one. Really important bellwether. That is Bloomberg's Nora Melinda with your latest stocks roundup as we watch the S&P 500 hit session lows. We briefly touched a 2025 low, so keep an eye on these benchmarks. Could see some wild trading at quarter end. Now, coming up, we'll have more on that shakeup at the FDA. That conversation up next. This is Open Interest. All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Wingstop getting upgraded to a buy over at Jefferies. The firm says that shares of the chicken wing chain are oversold. Next up, we have Barclays cutting Canada Goose to a sell, citing increasing competition and tariff headwinds. Shares down another 6.5% right now. And finally, U.S. Steel getting downgraded over at BMO Capital Markets. The analyst cites uncertainty over the Nippon Steel transaction. Have certainly heard that one before. Meanwhile, we're also keeping an eye on the vaccine makers slumping in the early trade. That's after news this morning that the head of the FDA's vaccines unit, Peter Marks, has resigned. Marks cited friction with Secretary Kennedy, who he was willing to work with. However, he wrote in his letter, it has become clear that truth and transparency are not desired by the Secretary, but rather he wishes subservient confirmation of his misinformation and lies. Let's unpack that news with Bloomberg's Rachel Kors Zhang, who joins us now. And Rachel, some really harsh words for the new HHS Secretary.
Indeed. You know, Peter Marks and HHS Secretary Robert F. Kennedy Jr., they know each other. They have a history. They had met about Kennedy's views on vaccines during the first Trump administration. And I think it's become clear that, you know, his views and the views of Peter Marks, who is kind of the top regulator of vaccines and cell and gene therapies at the FDA, were ultimately incompatible.
Rachel, what is the read-through for the vaccine makers? You're seeing, of course, the market start to react quite strongly. Should they be?
I think there's significant uncertainty, and uncertainty is bad for business. In drug development, it takes several years for these drugs to go through the studies that they need to. VC investors are nervous when there's uncertainty about who's going to be ultimately making the decision at the top. And Marks was certainly an advocate of approving innovative medications for disease areas where there were no other therapies available. And that earned him criticism from some people who thought he was too friendly to industry and too willing to take risks before drugs were really proven. So I think industry certainly worked well with Peter Marks, and I think they're just uncertain as to who could be his replacement in this new administration.
Rachel, we thank you for your time. That is Rachel Kors-Zhang. Now we're going to switch gears because America's largest loan servicer is being bought by the nation's largest lender. Rocket is buying Mr. Cooper in an all-stock deal valued at $9.4 billion. The deal is expected to close in the fourth quarter of the year. Here with more on the deal, Bloomberg's Liana Baker. It's interesting, we were talking just weeks ago about Rocket buying another company, Redfin. Now they're back at the table here with another deal. But this deal, I'm wondering, would it hit antitrust concern?
It's a good question, and it came up on the conference call. But as you know, Rocket doesn't compete with Mr. Cooper. This is entering sort of a new area for them. And if they do compete, it's in smaller pockets. You mentioned the Redfin deal. So Rocket is definitely making a bet that they could be a one-stop shop, that as a home buyer, you could find a house on Redfin, get a mortgage through Rocket, and then get that mortgage service through Mr. Cooper. So it really makes sense that they're trying to line these all up to be just a one-stop shop.
Yeah, and it's interesting. We were talking about it earlier before. Obviously willing to pay up to further those ambitions. Maybe it'll be an early test of the Trump administration's M&A sort of antitrust enforcement.
It's their largest deal to date. And remember, Rocket only went public in 2020. And an all-stock deal is an interesting use of their currency. So be curious what they buy next.
You know, real quickly here, Liana, were these the deals that you expected to see this year? There was a lot of concern about tariffs really putting a wrench in the M&A market, yet we are seeing some deals come through. They just might not have been the deals you expected.
So today is a merger Monday, and what's interesting is that last week we saw a home products deal, home building products. So a few companies seem to be making a bet that maybe the U.S. housing market will come back. And that deal I'm referring to is James Hardie buying Azek last week, so that was pretty large, too.
Right. Yeah, it's interesting. We were also talking about Elon Musk buying X again through XAI. I don't know if you quite count that, but I am curious. I mean, give us a lay of the land, because we had a great big take on the Bloomberg terminal last week about how M&A banker dreams have been dashed. You make the good point that we are seeing some deals come through, maybe not the deals that we necessarily expected to see, but they are happening. But put that into context for us relative to maybe some of the arguably sky-high expectations.
Well, we have seen some activity this year. You know, Johnson & Johnson got the year off to a hot start with a large deal. And you mentioned the CoreWeave IPO last week. That's an interesting one to watch because there's tech companies waiting in the wings to go public. And if they don't think there's a strong bid to go public, maybe they'll sell. We broke news on SoftBank buying Ampere, which was an IPO candidate. So I do think the tech M&A market is a place to look for some activity.
Well, to that end also, you know, you're looking at a NASDAQ 100 right now that's at the lowest levels since September. What does that say about tech valuations? Are potential buyers looking at this and saying, wait a minute, this could be a golden opportunity to buy companies that A, can't go public, and B, are probably a little cheaper?
There's definitely a lot of targets that bankers are thinking about and pitching, and we're just trying to break what happens next. We'll see what else is in that Elon Musk portfolio, all these private companies that he's also trying to amass together. So definitely a lot of things to watch this year.
All right. I'm sure it'll keep you a very busy woman. That is Liana Baker. She heads up our deals coverage over at Bloomberg News. Let's take a quick check on the S&P 500 right now. Breaking below 5,500. We are below that psychological level through our lows for 2025. The S&P 500 currently off by about 1.6%. We'll unpack the worst quarter for stocks since 2022 up next. This is Open Interest.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
All right, welcome back to Open Interest. Let's take a look at these markets on the final trading day of the quarter. It's ugly out there. The S&P 500 breaking below 5,500, as you can see, now down 1.5% at session lows right now. It's big tech that is leading losses, with the NASDAQ 100 down about 2.2% right now. You take a look at the individual names that are sort of leading us there. As I expected, it's all big tech. You have Apple, Microsoft in the red, as too is Alphabet. So shaping up to be a really ugly session. Maybe we'll get some window dressing as we get closer to 4 p.m., but at least for right now, it's brutal out there. Meanwhile, as I mentioned, the S&P 500 hit its lowest level this year. RBC's Lori Calvasina says that stocks risk sinking into a bear market if the S&P 500 breaks below its mid-March low of around 5,500. We're right there. So let's get straight to Bloomberg's Michael Miska to discuss the quarter that was. And Michael, it feels like we're hearing some more warnings about a potential bear market. We just entered correction territory, and now folks are worried about reaching that 20% drawdown level.
Yes, that's what's going on at the moment. You know that April 2nd was supposed to be like a clearing event. It's not anymore. People see more uncertainty ahead. There's been a lot of strategies cutting their targets for U.S. stocks. Now the risk is that those tariffs will become a really big risk for global growth that will hit U.S. economic growth. We've seen Yardeni cutting their targets as well today on economic growth for the U.S. So all this is just like pushing investors to be very cautious. There's a rise in hedging demand, and people are waiting for more capitulation before starting to buy the dip, really.
Speaking of buying the dip, we've been talking a lot about what this low could be in the market. You had Mike Wilson of Morgan Stanley on air with us with Surveillance just earlier this morning, speaking about how that 5,500 level would be the low, barring any universal tariffs that could break that. We broke through it anyways, right? You have JP Morgan calling 5,200. So if you don't hit 50, with 5,200 kind of hanging out there now, right, as that new benchmark, of course it was among the lowest we've seen, then how do people get comfortable until we hit something closer to that?
Yeah, it's very tricky. The problem that we have is we really don't know what's going to happen. So we have a lot of investors that think the positioning hasn't been washed out yet, and they're waiting for just like more drawdown there. What we've seen also in the recent period is you had a lot of cyclicals, whether it's in US or in Europe, that have been underperforming defensive stocks. The problem is those cyclicals, they're still pricing a very high ISM compared to the current levels. And if you have like global growth starting to roll over, that ISM is not going to climb. And once those stocks start to reprice a lower economic growth, you will have a very big impact on the S&P 500 and on European stocks as well.
Michael, you brought up Ed Yardeni. I want to talk about his call a little bit more. You mentioned he now sees a 45% chance for this current correction moving into a bear market. That's just one part of the call. The other part is that he also sees a 45% chance of a stagflation scenario. Goldman has a basket of stocks that would theoretically do well in such an environment. It's been on fire this year. As you can see, it's the white line there moving higher. What is the stagflation playbook? What does that look like for investors at this moment, Michael?
So what we're seeing is you see U.S. Treasury yields are starting to come down. That's also a sign that U.S. growth is kind of rolling over, or that actually expectations for U.S. growth are starting to get lower. So what you'll have is bond yields starting to come down. The Fed is going to have to step in, and you're going to have like a scenario where the growth is much lower than expected, while the inflation stays slightly, on the current level, and you have like an S&P 500 which is like not going to do great during the year, and those stocks that are keep going to perform.
Michael, we thank you so much for joining us today. That is Michael Musika of Bloomberg. Now let's take a look at what to expect this week, because there is a lot of data. Tomorrow we get the JOLT job openings and ISM manufacturing data, and estimates expect March manufacturing to slow down. Then President Trump will reveal his long-awaited tariffs on what he is calling Liberation Day. Then Thursday, jobless claims and ISM services data. And finally, Friday, it's Jobs Day, and we're going to get the March non-farm payrolls. So a lot of noise in the coming days. But coming up next in the next hour, Katerina Simonetti of Morgan Stanley Private Wealth, and joining us in the C-suite, the CEO of fragrance giant Interparfums, plus the founder of whiskey maker Koval. Stick with us. They're all going to be impacted by what is happening in the tariff story. We're going to talk to them about how they're navigating it all next. This is Open Interest.
All right, we are 30 minutes into a very ugly trading day. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Shanali Bassick. Matt Miller is off today. And coming up, stocks slide as the world waits for President Trump to unveil more tariffs on Wednesday. And a critical jobs report looms on Friday. And executives game out the impact of Trump's tariffs. We're going to speak with the CEO of fragrance giant Interparfums and the founder of whiskey maker Koval. Plus, Larry Fink says protectionism has returned with force. And part of BlackRock's purpose is now to unlock private markets. We're going to give you details of that ahead.
All right, all of that and more coming up. Let's take a quick check on these markets right now. We broke below 5,500, and clearly that triggered, it's been a long morning, triggered a stop of sorts when you take a look at the levels right now. The S&P 500 rebounding from its session lows was down as much as 1.5%, but coming back a little bit. A similar story if you take a look at big tech, down about 1.8%, which admittedly doesn't look great, but it's not as bad as just a couple of minutes ago. And meanwhile, that bid in the bond market lessening a little bit here. 10-year Treasury yields down about 4 basis points. Let's unpack all this action now with Katerina Simonetti. She is Morgan Stanley Private Wealth Advisor and Senior Portfolio Manager. Katerina, great to have you with us. I want to get the on-the-ground mood, the conversations that you're having with your clients, because we're hearing a lot of doom and gloom from the sell side, from investors. What do your conversations actually sound like right now?
Well, thank you. It's a great question, especially that considering that we're negative for the year as we're working our way through yet another market correction. And this seems to have been a pattern from the beginning of the year. There's so much news, there's so much headline risk out there that we see this series of corrections and rallies, which of course could be extremely unsettling for investors. But we can't forget that this is not just all about tariffs. We also are dealing with the fact that Fed is pausing the interest rate hikes, and there is DOGE and new immigration policy. And of course, the fact that the current administration does not seem to be as supportive of this market as many investors thought that would happen. And so this comes as a bit of a surprise. So what we're seeing right now is this combination of short-term positioning where we're advocating taking advantage of some of the buying opportunities, but also safe havens for the long run to make sure that, that investment portfolios can get through this volatile time.
I want to harp down on the point about rate cuts for a moment here, because you are seeing the Fed's funds futures pricing in more than 3 rate cuts now in through December. And you also have Goldman Sachs raising their odds of a recession. Are you concerned here about a meaningful weakening of the economy that would require those rate cuts?
Well, currently, we're not yet pricing in the recession, but sometimes this turns into somewhat of a self-fulfilling prophecy where stock market continues to decline at the levels that we're seeing, where these corrections like we are seeing today is something that is unsettling investors, and it makes them feel uncomfortable with being in the market. This negatively affects consumer confidence and eventually could lead to the recession. So while we're still of the mindset that majority of the growth for this year is going to come towards the second half of the year, this certainly is something that in our bearish scenario we're pricing in.
Well, Katerina, you made the interesting point that it's not just tariffs that this market is worried about. And I go back to Lori Calvasina's note from this morning from RBC, and she writes that any certainty on tariffs is unlikely to rewind the clock and take investors back to a time in which economic and national security weren't obviously intertwined. So who knows what we'll get on Wednesday? Really, it seems like it'll create more questions than answers. But even if we do get that clarity, I mean, it seems like it's too early to time the bottom necessarily.
Well, absolutely. And on one side, we are also dealing with the fact that the earnings have been revised to the negative in a broad sense, but not everywhere. There are certainly sectors that, despite of the tariffs, despite of the news, are doing well, and we're seeing positive earnings revisions and are positioned quite favorably. So on one side, there is a trade on these dips, right? Something like, the names that we'll like, the Magnificent Seven, where the earnings revisions have been actually improving. But in the long run, we absolutely are advocating positioning in quality and safety in sectors like financials and industrials, materials. Industrials, for example, are actually showing positive earnings revisions and is the sector that potentially one could say is not going to be affected by tariffs at all, as industrial development will continue regardless of what is happening on the tariff horizon. But also the software and consumer services, and I already mentioned financials that tend to do well in the higher interest rate environment. So there are safe havens out there with high quality dividend paying stocks, and that's exactly what we're advocating to our clients.
Now, where do you go to hide? You mentioned this in the stock market as well, but we've been talking about fixed income. A lot of people looking at the bond market to go. A lot of people looking at gold. Do you recommend that, given the bid that we've seen in both of those places so far?
Well, gold has been a traditional safe haven. One of the potential issues there is when we look at the performance of gold over the last couple of years that have been a significant run up, and in my personal view, it's a non-yielding asset class. So positioning in the portfolio of the gold could be on one side making investors feel really safe. On the other side, they're lacking income, which is something that they could pick up on the fixed income side. And we still have the benefit of being in the high interest rate environment. And sometimes we forget that it took us 20 years to get to where we are on the rates right now. So whether there is money in cash that is earning higher rates than we historically have seen, or in the diversified high-quality fixed income portfolio, investors do have ability right now to position the fixed income side of their portfolios in a way that they can enjoy higher rates for longer, even once Federal Reserve continues or resumes rate cuts. They're going to be receiving these higher yields in the investment-grade bonds specifically.
Yeah, it's interesting, Katerina. We were just speaking with Larry Adam about 30 minutes ago. He's a stock bull, no buts about it, but he also likes fixed income. So there's plenty of bullish cases for bonds right now. I want to go around the world, though, and I want to talk about Europe, because one of the amazing things that happened this past quarter was the stock 600. It outpaced the S&P 500 by nearly 17 percentage points this quarter in dollar terms. That would be a record outperformance. Katerina, how do you feel about Europe right now? Are you
The Nasdaq 100 has posted its worst quarter in nearly 3 years, down 8.3% in the first 3 months of 2025. Concerns of an AI bubble, combined with tariff uncertainty and fears of a US recession, saw investors pulling back from the tech-heavy index. Chipmaker Nvidia has seen its shares tumble 28% from a January peak, while Broadcom is down 33% from its record high in December. Other megacaps, Microsoft, Amazon, Alphabet and Meta have all fallen 20% or more from their own records. Here's JP Morgan Global Market Strategist Stephanie Aliaga.
So I think what's really hurting tech right now is just the fact that for investors looking to de-risk portfolios, like that's the source of risk in their portfolios, is given how much of equity outperformance we've had in those names. We've seen this rotation towards other areas of the market that are better positioned, perhaps in the midst of this trade war: energy, materials, utilities, financials, perhaps.
Stephanie Aliaga was speaking after 2 warnings last week about potential oversupply of data centres, including from the co-founder of Alibaba.
Well, it's also been a quarter to forget for the S&P 500. Despite eking out a small gain on Monday, the equity benchmark posted its worst period versus the rest of the world since 2009. Meanwhile, European defence stocks have helped to drive an historic quarter of outperformance for European equities. In dollar terms, the stock 600 had its best ever quarter versus the S&P 500. But Brad Bernstein at UBS Private Wealth Management says this could be the high watermark for Europe.
So we think the easy money's been made there on the back of, more stimulus and more defense spending because of our administration's position on NATO, as they made very clear. So we actually think if from this point and from these levels, the U.S. markets for the rest of the year look more attractive than the rest of the world.
However, Brad Bernstein's optimism on the US isn't shared by everyone. Yesterday, Goldman Sachs' David Kostin cut his S&P 500 end-of-the-year target to 5,700. That's versus his previous estimate of 6,200. The Wall Street benchmark closed at just over 5,600 yesterday.
Donald Trump will unveil a so-called reciprocal tariff plan tomorrow in the White House Rose Garden. White House Press Secretary Karoline Leavitt says the announcement will feature country-based levies and that the president is committed to implementing sectoral duties, but they would not be the focus. Speaking yesterday about his plans, Trump said his measures would be lenient in comparison to other countries.
They're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind.
President Trump's comments came as US automakers have been making last-minute efforts to lobby his administration for tariff exceptions. Bloomberg understands brands including Ford, General Motors and Stellantis are pushing the White House to exclude certain low-cost car components from planned levies. That's as New York Fed President John Williams told Yahoo Finance he sees a higher risk of inflation due to Trump's tariff plans.
Marine Le Pen has criticised a court ruling barring her from running for elected office for 5 years, ruling out a 2027 presidential run. The French far-right leader, who was convicted of embezzlement, claimed the decision was politically motivated in an interview with the French station TF1.
There are millions of French people who are outraged to an unimaginable point, seeing that in France, in the country of human rights, judges have put in place practices that one would think are reserved for authoritarian regimes.
Marine Le Pen, speaking there via a translator, she has been a top contender for the French presidency in recent polls. In addition to the 5-year electoral ban, she was sentenced to 2 years in prison with 2 more suspended. The judgment threatens to upset the delicate political balance that has allowed President Macron to pass a budget for 2025. The news could also hand full control of Le Pen's national rally to the party's 29-year-old president, Jordan Bardella.
People in Britain are facing more taxes, higher prices and mounting bills as April sees a host of cost of living increases. Calculations by Bloomberg show UK households have seen £600 added to their annual bills overnight as utility and phone bills rise. The latest British Retail Consortium data show that food prices climbed by 2.4% in the past year, the fastest pace in 9 months. Conservative MP Alex Burghardt says the government's tax rises are adding to the pain.
people's bills are going to go up. Council tax is going to go up, water bills are going up, train fares have gone up, and people are going to start losing their jobs and businesses are going to start shutting down because of the tax changes that the Chancellor has made. That is what is happening now. That is a clear and present danger to the British economy.
Burkhardt's party oversaw the first parliamentary term in modern history where living standards fell. But the perception of worsening hardship is dangerous for the Labour government after it ran on a pledge to reverse that trend.
Those are our top stories for you this morning. Looking at the markets, European stock futures, interesting, they're actually in the green this morning, despite the pain that we've seen in US markets. S&P 500 E-mini futures are down 0.3%, and the uncertainty that awaits. Trump is announcing reciprocal tariffs on Wednesday. The dollar is slightly firmer after suffering its worst start to the year since 2017. And the S&P 500 ended in the green yesterday, but actually you've seen those US markets underperform world equities. Gold was the standout asset, rising 19%, the best quarter since the 1980s, and another fresh record high for gold overnight. We also had some breaking data out for the UK, the nationwide house price survey for March. We see a rise of 3.9% year on year. The estimate had been for a 4.2% gain. We were unchanged month on month for UK home prices. So those are the markets this morning.
What caffeinated foodstuff is currently suffering a shortage? What company's new AI model is called QWQ-32B? Prada is in talks to buy which luxury fashion brand for $1.6 billion? Think you know the answers to these questions? If so, play Pointed at Bloomberg.com/pointed. It's the news quiz for risk takers.
Semiconductor demand is rapidly growing, but producing a chip takes up to 26 weeks. Manufacturers must deploy foolproof inspection solutions while matching quality with speed. Enter Omron's VTX series, an advanced system which significantly reduces inspection time while maintaining accuracy. The result? Greater yield improvement for the semiconductor industry.
Yeah. Growth, rolling over and earnings starting to be downgraded, then you'll see more downside in Europe.
Bloomberg's Michael Masico walking us through maybe what we're seeing in the markets ahead of tomorrow's Liberation Day announcement. As he said, a lot of this may depend on maybe what kind of retaliation we get from the European Union. We might have a little bit of insight here. We're getting comments, or did get comments, I should say, from Ursula von der Leyen. She is speaking, or had just spoken, over at Strasbourg at the European Parliament debate, saying that they are keeping their options open when it comes to retaliation, but have a strong plan to do so if necessary. They're also diversifying their trade with new partners and are looking at a need to remove the EU internal market barriers, tasking Stéphane Séjourné to find a proposal for that EU market story. So we're likely going to see a very quick reaction, a very swift reaction from the EU when we do get some insight from the White House, perhaps, of what the tariff picture does actually look like. Lots going on in the next 24, 48 hours. We're going to have you covered right here at Bloomberg. Stick with us. This is Bloomberg.
In case you missed it on Balance of Power.
The statute governing the FTC says commissioners can only be removed for cause. Was there any indication that you were fired for cause?
No, there was no claim of cause, and the statute actually specifically says cause means neglect, malfeasance, or inefficiency, and there was no claim of any of those.
So as we talk about some of those other examples, keeping in mind we are having this discussion with you on the day we got a Fed rate decision, is this directly applicable to what is supposed to be an independent central bank? Is that one way in which market participants should be looking at this?
Yes, that's exactly right, and market participants should be scared. To be clear, there's no legal difference between Jerome Powell and me. In fact, he and I were both originally appointed by President Trump, and if the president can illegally remove me, he can illegally remove Jerome Powell. People should be very worried about that.
Don't miss Balance of Power live every weekday.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
In case you missed it, on Bloomberg Open Interest.
Finding some sense in these crazy markets.
I hope they turn around, though. Because my 401k, I'm looking at my 401, my retirement, and I'm thinking, God, how many more decades do I have to work?
Your retirement account. I cannot say that enough. Set it and forget it.
You need to find a new target date.
I need to find maybe a new future. I'll be standing next to Paul Sweeney as a greeter at Walmart, in our 70s.
Don't miss Open Interest live weekdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
This is the opening trade. We're 30 minutes into today's session, seeing a complete rebound when it comes to European equities, perhaps catching up to the market message we got in yesterday's session over in the United States. But again, really paring back some of the losses we saw in the European session. Take a look at the outperformer this morning. It is the DAX, higher by about 0.9%. The underperformer, although still higher by about 0.5%, is the French index. This is, guys, very surprising to me because some of this kind of feels like a very knee-jerk reaction. It's buying, to some extent, the dip that was yesterday. Very broad losses yesterday, so a broad rebound today. Does that stick into the rest of the week? Do we see a little bit more nuance when it comes to which maybe countries outperform rather than which sectors outperform?
Yeah, we feel a little headless on the tariff story, don't we? And there's just so many questions. You know, what the news tomorrow night looks like, night European time. Of course, that's not where it ends. We were just talking in the break with Michael Masika about the fact that as soon as you get the news, you brace for more news on the on Trump tariffs, because that's the previous, that's where we've been. And also, where in these supply chains do these tariffs fall? We've spoken to lots of people who supply the car sector, for example, and they've all been really confident about how they're just going to pass this all on to their customers. But, you know, this has to be paid for somewhere along that supply chain. And in every industry, we're going to spend a long time trying to work out where it falls. Yeah, and you see the ripple effect coming off into the used car market, into the insurance market. There are secondary, tertiary effects that come through from this, which are really quite significant. And then it's the Fed, then it's the central banks that start being concerned about this as well. So the effects of this, I think, it's so hard to model. And as we were just discussing, the ambiguity around this story over the next few months and weeks. Incredible. Well, that's the key point, right? Do the numbers even matter? Which I know is a controversial thing to say, because what if the clarity is what matters, where the reaction function is as much more, to your point, easily modeled out. Then you know that if these are the numbers from the tariffs, then this is going to be the reaction function from Jay Powell. That is way easier to navigate than the push and pull. And it's that sense that you never get to the numbers, because there's always another number, isn't there? Yeah. You know, as we saw recently with some threats to put even bigger tariffs on Canada and the Europeans if they collaborate and coordinate. Right, let's try and get some perspective on this story. President Trump is set to unveil his so-called reciprocal tariffs at an event at the White House Rose Garden. That comes tomorrow, late European time. The announcement is expected to feature so-called country-based tariffs with, we're told, no exemptions. Speaking to reporters, Trump dismissed concerns that the levies could impact relations with Washington's allies.
Are you concerned that this move, the tariffs this week, could push some of the United States' closest allies to work with China?
No, I'm not worried about it. I'm not worried about it, yeah.
Mr. President, can I ask you about
I think they have a chance of doing better, actually, with the tariffs. It can actually help them in a certain way. And I think a lot of them will drop their tariffs because, you know, they've been unfairly tariffing the United States for years.
Let's bring in Bloomberg's Oliver Crook, who's, of course, tracking this story as we build to those announcements tomorrow night then, Ollie. I'm going to ask you that impossible question. What exactly are we expecting to be announced in the Rose Garden tomorrow?
I think I'll respond to that with another set of questions, because I think that sort of what we're trying to find out from the Trump administration, again, we were trying to, you know, there's what we know, 25% auto tariffs, there's this question of reciprocity on the tariffs, there's all these sort of questions that we need to basically clarify. But I think what will be very interesting to get from Donald Trump and get to the from the White House is this question of methodology, this question of calculation. How are they thinking about these tariffs? Is this going to be just a question of simple reciprocity, where you say, hey, listen, our trading partner has this rate, we're going to take the average across all of the goods, and then we're going to put up this rate? Or are they going to try to write other economic gripes that they have with different nations? And I think that that is at the center of the real concern for some of these European policymakers here, where they're talking about not just the tariffs, but maybe they also want to address the issues that they have with value-added tax. Maybe they also want to address issues they have with digital taxation, maybe with some issues of regulation. And if that is the case, and if you do get these tariffs that are calculated in some way off of some of those other concerns, the question is, even if you do get to an agreement, what will prevent the Trump administration from, you know, coming back a month, 2 months from saying, actually, you know what, we also think this is unfair, and we're going to take this into account into our calculations. So again, I think this is all sort of to play for here for these European policymakers who tried to get some negotiations going last week in D.C. The Trump administration apparently had basically no interest in any of those discussions going into this. And when we look at sort of what is at stake over the next couple of days, though we don't know what the sort of reciprocal figure is for the EU, we expect it to be somewhere in the double digits, between 10 and 25%, but we really don't know. These sort of industries that are most at risk for the Europeans is the pharmaceutical sector. That's about 23% of exports to the U.S., and the car industry, 10%. And we know that both of those industries are going to get hit very hard tomorrow.
The comments from von der Leyen this morning, she's speaking in Strasbourg. Crude was bringing us the comments a little bit earlier on. EU to keep diversifying its trade with new partners. What does that look like? Is that the longer-term plan, basically to pivot away from the United States? And we have a strong plan to retaliate if necessary. That's the short-term plan for the United States. How well thought out are both of these two objectives, do you think, Ollie? The short-term plan, maybe there's more effort and thought gone into that. But the longer-term plan to diversify away from the United States, is that something that can really be done?
I think that really it's a very, very long-term project. I mean, you talk to a number of policymakers and leaders, and you ask them about one of the kind of central questions, I think, in terms of the goods that they get from the United States, and that is in the defense sector. And the number of people that I've spoken to, what most of them say is basically there is no alternative. You basically just need to stick with the U.S. for those sorts of things. But at the same time, you start to hear from some of the more forthcoming policymakers and those who are speaking a little less guarded that basically if the United States is willing to exert points of leverage, basically in anything, including the sort of defense industry, you know, what about withholding orders? What about basically all of this military kit that needs to be software updates and maybe needs to be operated in part by members of the United States? If those things are at risk, if those things are on the table in terms of negotiations, then European policymakers need to think very seriously about sort of what place that occupies in their defense architecture and indeed in their sort of system going forward. And then you also hear from the Trump administration, I thought this was very telling last week, where he said basically if Canada and the Europeans begin to sort of get together and try to circumvent U.S. tariffs, that they're going to pay an even higher price. That means that the Trump administration is seriously considering that that is going to be one of their approaches. So I think that for the longer term, that is certainly going to be the playbook, though, again, it's going to be a question about how long it will take to actually effect that. In terms of the shorter term, Guy, I will say I think they're taking a much more cautious approach than they did originally with Trump. You see that they don't retaliate immediately with everything. They really want to get the thinking out, and they want to be sort of taking a measured approach. But again, at the end of the day, the Europeans do have a very large market, despite the fact that they run a large trade surplus, and they're going to intend to use it in any negotiation with Donald Trump.
Ollie Crook in Berlin, thank you very much indeed. Let's look at this from a UK perspective. Britain has been, of course, engaged in intensive negotiations to secure an exemption for UK goods from US tariffs. The Prime Minister, Keir Starmer, held, quote, a productive discussion with President Trump. That took place Sunday. Nevertheless, his government is bracing for some impact from what we are about to learn at 3 p.m. in the Rose Garden on Wednesday. Joining us now to discuss all of this is Crawford Falconer, the UK's Chief Trade Negotiation Advisor from 2017 to 2024. Good morning.
Morning.
Nice to see you. What should the UK be expecting, do you think?
Well, nobody ever seems to be able to be sure about what they're expecting, but it sounds like there's going to be an application of tariffs to the UK. Quite how they're going to apply is anybody's guess, but there'll be something, it sounds like, that's going to be applied forthwith.
What you've just said, a huge amount of uncertainty. You are a guy that knows how this process works, and you're sort of shrugging your shoulders, which I find quite astounding.
Well, yeah, that's because the process doesn't work the way it's worked for 25 years, and that's the whole point. But, you know, from what you read from the media, even as of this morning, the rumours about how it was going to apply are flying around, but it looks like there will be at least a fixed tariff that will apply, but whether it's differentiated by countries, nobody's really sure. The guesswork is that whatever the Trump administration considers to be the worst offenders will get higher tariffs, and the UK in that case would probably be down the order a bit. But as I say, it's anybody's guess. Nothing's been signalled very clearly. I mean, it might have been signalled to the PM in his call, but obviously if it was, you know, nobody's going to let on. And frankly, the way things work in Washington these days, you know, whoever might have said it to him, if it was the president, might change his mind. So, you know, there it goes. Sorry, I'd love to be able to give you certainty. And if I had that certainty, I wouldn't be telling you anyway. I'd be profiting from it myself. But no, I don't think so.
Well, uncertainty out of D.C., but what about the response from London? There's a big question here about what levers can be pulled from the UK, from the European Union, from other trade partners as well. What does the UK have to offer should it come down to it?
Well, look, it can... Look, it's got lots of options, but, you know, you can retaliate. Of course you can retaliate. I don't think at the macro level there's leverage for the UK to achieve some outcome from that right now. But you might want to do it just to prove that you can do it. You can also do it surgically, which affects certain parts of trade. But of course it imposes a cost on you. So I think you do that if you believe that you're not going to get anywhere fast with the administration. That would be my judgment. And at the moment, all the mood music is that, oh, okay, he's going to apply these tariffs, but there's going to be a genuine negotiation. If that's true, and the government believes that that's true, then, you know, you might well hold off any prospect of retaliation until you test that more seriously. Leverage-wise, I mean, there's certain commercial importance to the United Kingdom. You know, we're still a G7 economy, and there are economic interests in having a degree of stability with us in our trade, and US business will want that as well. He's not completely closed to that. Plus, you know, you could do a reasonably good deal with the United Kingdom that would be a model for others. And I think we're more disposed to doing that than some other countries. So if he wants to leverage other larger economies, he might well be able to say, look, and the Brits are doing this, and therefore this is the kind of model we want to follow. So you have those kinds of advantages. And the relationship with the US, beyond the trade and economic side of things, is rather unique. I mean, you don't want to over-exaggerate how unique that is, but there seems to be, you know, defense and strategic considerations that would be positive. You don't kind of commercialize them in a kind of dollarization way, but I mean, it certainly affects the readiness to deal with us.
You talk about the fact that a roadmap of 20, or the experience of last 25 years is not necessarily a roadmap of what to come. But historically, we have seen the UK get certain carve-outs when it comes to defense and other kind of realms. Is there a possibility of carve-outs, do you think, from this administration?
Well, I mean, it sounds like there's not going to be a carve-out from day one. I mean, they're going to apply something from day one, and the rumour seems to be they're going to apply something to everybody, whatever it is, anybody's guess exactly. So the question is, you'll have to negotiate your way out of it subsequently. Now, I wouldn't call something you negotiate thereafter as a carve-out. I think it would basically be a deal, which means that those tariffs, or the bulk of them, are removed. From the sounds of it, and you know, you have no way of really being sure, from the sounds of it, whatever that negotiation is will not be an old-fashioned goods trade negotiation, nor will it even be a reasonably up-to-date goods and services negotiation. It sounds like the Trump administration, leaving aside what the UK government might want, wants something that's more broad-ranging than that, and you've seen it in the media, so you know, it's probably true.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
Consumer put for the longest period of time. That's what has changed now. We see the consumer, and you guys have already talked about it this morning, all those companies coming out on their earnings, on their conference calls, talking about the concern that they're seeing, Lululemon being the latest example. I mean, I thought my kids alone would help support the numbers at Lululemon with their purchases, but apparently it is not enough. And the consumers are starting to pull back, and you get in that negative feedback loop. As the consumers start to pull back, revenues come down, margins start to get affected. What happens 9 months after margins get affected? Companies start laying off. And we've seen that with the Challenger layoffs in the last month. And so I think it's that consumer element that has changed that's giving us more concern, especially with potentially more tariffs coming.
How much is this companies kitchen sinking it, though? You mentioned Lululemon, and your kids would single-handedly cause this share to go up. But a lot of the kids are actually getting baggy stuff right now, and that was something they addressed, that actually the styles are moving past that sort of trademark legging spandex look. I'm just wondering, how do you parse through how significant the hit is and how big of a slowdown you have to price into market expectations?
Yeah, I mean, it's going to be different for every company. And the companies that have been out there talking about the slowdown have been along a wide range. It's not just apparel, right? We saw Best Buy as one of those. Yeah.
देखो क्रूड ऑयल 6030 तक आएगा नहीं आएगा डिपेंड करेगा इस लेवल पे ये लेवल होल्ड करता है नहीं. अगर ये लेवल होल्ड नहीं किया, क्योंकि ये तो रेंज है, ठीक है, मार्केट के पास ऊपर रेजिस्टेंस, नीचे सपोर्ट, यहाँ से कल भी सेलिंग आ गई थी, फिर सपोर्ट ले लिया, फिर रेजिस्टेंस आ गया, तो ये रेंज बना के बैठा हुआ है. अगर नीचे ब्रेक डाउन हो जाता है तो यस, नेक्स्ट सपोर्ट फिर 6020-30 के अराउंड ही है, वहाँ से बाइंग करना है. फिलहाल के जिन लोगों ने सेल किया, रेंज को देखो प्ले कर रहे हो, थोड़ा सा रेंज बाउंड मार्केट है अभी भी. ऊपर रेजिस्टेंस, नीचे सपोर्ट अभी भी कोई ब्रेक नहीं हुआ, ना ऊपर रेजिस्टेंस ब्रेक हो पा रहा है, नीचे सपोर्ट अभी ब्रेक नहीं हुआ है, तो थोड़ा ध्यान रखना, ठीक है. जो लोग सेलिंग में है थोड़ा प्रॉफिट बुक कर सकते हो या फिर एसएल कॉस्ट पे रख सकते हो. वी डोंट नो नीचे ब्रेक करेगा नहीं करेगा. बाकी यहाँ से वापस थोड़ा बहुत पुल बैक एक्सपेक्टेड है. कैंडल बस ओपन इक्वल टू हाई ना बने एग्जैक्ट लेवल पे. तो जिन लोगों ने सेल किया हुआ है दे कैन आइदर बुक द प्रॉफिट या फिर एसएल कॉस्ट पे रख लो. दो चीज़ होंगी, या तो ब्रेक करेगा तो बड़ा टारगेट मिल जाएगा, नहीं तो कॉस्ट टू कॉस्ट निकल जाना. बाकी यहाँ से एक थोड़ा सा बाइंग का देखेंगे. बाकी रेंज तो देखो रेंज ही है, तो जब तक कोई एक साइड ब्रेक नहीं करेगा कोई बड़ा टारगेट तो नहीं मिलने वाला. किसी ना किसी एक साइड पे एसएल जरूर जाएंगे, तभी कुछ बड़ा मूव हो सकता है. अदरवाइज ये रेंज के अंदर फंस गया, बहुत बुरा. लाइक भी करते रहो गाइस. बैंक निफ्टी भी साइडवेज हो गया नीचे सपोर्ट पे. डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. बाकी ध्यान रखना, इस रेंज में प्लान कर रहे हो दोनों ही चीज़ें, चाहे सेल कर रहे हो बाई कर रहे हो, क्वांटिटी कम ही रखना. किस साइड मूव करेगा नोबडी नोज. हो सकता है सपोर्ट लेके ऊपर ब्रेक कर दे, हो सकता है नीचे ही ब्रेक करने चला जाए. बाकी अगर कोई वेट कर रहा है रेंज के ब्रेक होने का तो वेट करो, या तो इस साइड निकल जाए इस साइड निकल जाए, तब वो फिर रेजिस्टेंस सपोर्ट ज़्यादा अच्छे हो जाएंगे ट्रेड करने के लिए. बाकी नेचुरल गैस में भी ये दो ही लेवल हैं फिलहाल के लिए, ऊपर सेल नीचे बाई कर सकते हो. कैंडल का ध्यान रखना.
Far in 2025 stateside. Let's think about the shots that's been fired at tech over the last week or so. Reports that Microsoft is pulling back on data center spending. Alibaba firing shots about overcapacity and bubbles, and then overnight a heavily downsized IPO from CoreWeave. How constrained is the AI trade at the moment?
Yeah, I mean, no one likes that word bubble, but there is a lot of questions now going into hearing all of the money, the CapEx spends that companies were going to do in regards to AI, seeing some of that pull back. You mentioned Microsoft as a perfect example of it. And what does that mean going forward? I think, look, tech, as we went into this correction, tech had already pulled back. They haven't become leadership during this correction period that we're in. So I don't think we should look to tech to be the leaders coming out of this correction. I think they're going to continue to struggle because of some of the headlines that you've mentioned. Maybe you start to look at some of the secondary companies that will benefit from productivity enhancements from AI, and not necessarily the tech names, the data warehouse components of it that people were really looking at. We've seen utility sector pull back a little bit as well because of the headlines that you're mentioning. So I think we continue to see some struggles in tech, and you're probably going to have to look at places like healthcare, maybe certain types of materials, financials. These are the sectors I think that will lead us coming out of the correction that we're in. That's where you should probably focus.
Can you walk us through how all of these prongs of sentiment hits have translated into your view shift over how you should allocate your assets? And I ask this at a time when gold is at record highs and people aren't sure whether to go into bonds or whether to go into healthcare.
Yeah, well, I mean, look, you know, you're talking to the bond girl here, so I would always recommend having some bonds in your portfolio. But people want to hedge what they're seeing. And when there's concerns around growth, gold is the hedge that people go into. When that's not the concern, when growth is actually looking like it might pick up, then you see people go more into industrial metals or things like copper. Copper's actually down this morning after having a pretty good run. Gold continues to move higher. So you see there's that concern around growth. We look at sentiment, and it's always important to break sentiment down and say what's driving that number. Is it the more volatile component of sentiment that's the expectations part, or is it the present situation that's driving it that's usually more focused on jobs and fundamentals? We saw both elements come down in the last sentiment number. So there is maybe a little bit of support to that stagflation argument that people are talking about as we have concerns around the growth component, which supports gold, and still have concerns around inflation and how sticky that's going to be. Obviously, we have PCE later today, but I think you have to look at sentiment and say this feeds into the story of a pullback, of the consumer pulling back, of growth concerns, of GDP concerns, at least in the first half of this year.
Since you're a bond girl, can you really say that bonds are going to have the same kind of buffering effect that they have traditionally at a time where inflation expectations are actually rising?
Yeah, I don't think you're going to go into fixed income right now and say, oh, wow, spreads are going to tighten. I'm going to get, you know, a lot of a price return coming out of that part of the market. I don't think that's what you're going into fixed income for right now. I think you're going into fixed income to lock in some steady cash flow components in your portfolio. Some people may like to do that with dividend payers in the equity market, but that's a little more volatile. If you can lock in some steady cash flow on the short end and the long end of the Treasury curve, it gives you a little bit more buffer in your portfolio, as we think we're going to continue to see volatility at least for the next 6 months in the equity side of the market.
Hey, Victoria, appreciate your take on things going into the weekend. Victoria Fernandez of Crossmark, going into a big weekend next week, April 2nd, just around the corner. Lisa mentioned the bond market yield to lower this morning by just 2 basis points, still north of 430. With an update on stories elsewhere this morning with your Bloomberg brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Canadian Prime Minister Mark Carney says his country will fight back against President Trump's trade war. He declined to outline specifics, but did say his government will respond based on what the U.S. does on Wednesday when Trump plans to announce his so-called reciprocal tariffs. Carney said he expects to speak with Trump in the next day or two. Meanwhile, Bloomberg has learned that the U.S. is pushing to control all major future infrastructure and mineral investments in Ukraine. A draft document grants the U.S. first claim on profits transferred into a special reconstruction investment fund. It also requires Kyiv to pay for all U.S. military and economic support since the start of the war. And Elon Musk says he plans to slash $1 trillion in government spending by the end of May. Musk told Fox News he doesn't think the savings will affect critical government services. The Doge website so far lists about $22 billion in contract savings, while claiming $130 billion in unspecified cost reductions. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara later on this hour. Up next on the program, the Doge Agenda.
Our goal is to reduce the waste and fraud by $4 billion a day, every day, 7 days a week. And so far, we are succeeding. America will be solvent. The critical programs that people depend upon will work. And it's going to be a fantastic future.
We'll talk about that fantastic future in just a moment. We'll catch up with Brian Gardner of Stifel on the other side from New York City this morning. Good morning.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Two-day losing streak coming into Friday. Equity futures at the moment just a little bit softer, but off session lows. We're down by 0.1% on the S&P. On the Nasdaq 100, softer, negative, down by 0.2%. Under surveillance this morning, the Doge agenda.
Our goal is to reduce the deficit by $1 trillion. So every day that passes, our goal is to reduce the waste and fraud by $4 billion a day, every day, 7 days a week. And so far, we are succeeding. When we do make mistakes, we correct them quickly, and we move on. America is going to be in much better shape. America will be solvent. The critical programs that people depend upon will work, and it's going to be a fantastic future.
So here's the latest this morning. Elon Musk aiming to cut 15% of government spending by the end of May, amounting to $1 trillion. Musk's Doge team claiming about $130 billion in savings so far, downplaying government layoffs and saying no critical programs will be affected by cuts. Bloomberg's Tyler Kendall joins us now for more from the White House. Now, Tyler, critical programs in the eye of the beholder, I guess, and that's important. What are the views on what's happening with Doge and whether we can, quote, get those critical programs to be dependable for the people of America?
Yeah, good morning, John. Well, it's a pretty ambitious timeline as well as those top line figures that you're talking about. The bulk of government spending is really focused on those mandatory programs such as Medicare and Social Security. Elon Musk trying to reassure the American public that the money that they get in their pockets isn't going to change, but it's hard to see how the figures he is talking about he's going to reach those by just focusing on alleged waste, fraud and abuse. So big questions there about the actual implementation of what he is going after here. We have to think about the broader government spending conversation, particularly as Congress looks at some of these programs to try to get through their fiscal agenda and that reconciliation package through both chambers. Now, we mentioned the figures, the timeline here, also considered to be pretty ambitious. The end of May, Elon Musk is a special government employee. That means he's only supposed to be on the job for 130 days out of the year. 130 days from the inauguration would bring us to May 30th. That's not to say, though, that he's not going to still be involved or the effort's not going to continue, although Doge is supposed to sunset by July, so another date for your radar. But this really has been billed to us as a whole of government approach. We see Elon Musk, for example, sitting in on those cabinet meetings to get updates from department heads. Of course, John, this all goes into the heightened concerns, too, among federal workers. So spending on one end, but also job cuts on the other. Elon Musk saying that up to this point, quote, almost no one has been fired. We should point out that just yesterday, HHS announced that it was cutting 10,000 jobs. And it's important context to keep in mind. Only about 20% of federal workers are here in the nation's capital. This is going to have some broad-ranging impacts across the country.
Tyler, you mentioned reconciliation. How do the Doge efforts square what they're trying to get done in Congress?
Right. Well, Amory, it's pretty interesting to see how they're both kind of working in tandem here, perhaps, but Congress wants a bigger role. There is reporting that just yesterday, key Senate Republicans met with some top White House officials, including NEC Director Kevin Hassett and the OMB Chair Russ Vought about what's known as a rescission package. This would essentially let Congress codify some of these spending cuts by allowing them to vote to pull back some money that might have been allocated but not appropriated yet. So that's one line that's going here. It remains to be seen if the White House is willing to give Congress that part of this discussion. And then the other end, of course, are the spending cuts. We know yesterday our Bloomberg News reporting that the Senate package is looking at lower minimum spending cuts in order to kind of quell some of the concerns among Republicans about what it could mean for the future of Medicaid. But again, Anne-Marie, bringing up big questions. If there are less spending cuts perhaps on that program, what does that mean for those fiscal hawks that need to see larger spending cuts to make up for some potential impacts to the deficit and raising the debt ceiling?
Hey, Tyler, thank you. More from Tyler later on the programme in the next hour. To extend the conversation, Brian Gardner of Stifel. Brian, just to pick up on some of this, can Washington agree on which programmes are critical?
No. I mean, the short answer is no. I mean, the critical is in the eye of the beholder. There are There are definitely members up on Capitol Hill that are going to see most programs as absolutely critical. That it's a jurisdictional turf fight battle. So it gets into the question that you had earlier on the savings of Doge. How big is it? How transparent is it? And how much waste, fraud, and abuse is it? Well, waste, fraud, and abuse is in the eye of the beholder. So critical programs, the same thing, kind of in the eye of the beholder.
When it comes to critical programs, could Republicans meet their goal of cutting $880 billion under the committee of the Commerce Committee in the House without touching Medicare?
The math doesn't work. I mean, if you go through a list of options that various groups can put out, the House Budget Committee had a document out. The Congressional Budget Office has given options over the years. And you look at the jurisdiction that Energy and Commerce has, well, it really is Medicaid. There are not enough programs under its jurisdiction to get to 880. The math just doesn't work. So if you give that committee that target, at the end of the day, it gets to Medicaid. And we can debate what the value is of Medicaid. Not so much what the value of Medicaid is. Excuse me, that's a poor way to phrase it. But how to make it more efficient, how to get savings out of the program. But 880 is going beyond just waste, fraud, and abuse. That's getting more towards the bone of the actual program, not just the fat around it.
So where do you see Senate Republicans coming up on this issue, given the fact that they're in the midst of writing their bill right now for the budget, and potentially we could see a vote next week?
Yeah, I think they're trying to have it both ways. We're kind of signaling that there may be some flexibility on one side of Capitol Hill, less flexibility on the other side of Capitol Hill. Create a budget resolution that it's somewhat illusory and kicking the major questions down the road to the actual reconciliation bill, at which point members will be jammed to vote for or against the bill that you're going to claim, the leadership is going to claim if you block it, you're blocking the Trump agenda. So I think they're trying to come up with an artful way of splitting the baby in half, to give some deference to the House, to recognize that the big issues in the Senate need a different approach. But there are two camps, right? You have the budget hawks who want much deeper cuts, Mike Lee, Ted Cruz, and a few others, Rick Scott of Florida. And then Josh Hawley, who, I think most people would view as a conservative, but is, in the populist conservative camp and is expressing a lot of concern over the level of cuts in Medicaid. And so there's going to be an interesting debate next week on the Senate floor. And we'll see if the vote actually happens. I think John Thune is at a point where he's just trying to force senators to decide in order to get to an actual vote. It would not surprise me to see that vote punted.
Brian, how much are Republican Congress members counting on revenues from tariffs and really helping give them an easier time in getting something passed?
I think there's such a lack of transparency and specificity of what those numbers look like. So I think conceptually, Lisa, they're saying, we're going to have revenue coming in from tariffs. No one can really give a solid number of what those numbers look like. And within the reconciliation package, you're going to have some level of specificity in order to score it. Maybe there's some way to codify these numbers, and so they actually do get some budget savings, and then it's the art of actually writing legislation. But it's such a gray area, and there's so many claims being put out there, on the tens and hundreds of billions of dollars of revenue that are going to be brought in by tariffs. But, we also don't know what the timing of those revenues are. I think part of the revenue discussion is that the Trump administration is looking to really restructure the American economy. And they believe that there's going to be a massive inflow of capital into the United States and an economic boom that's going to result. Well, those revenues are going to be in the out years, and how that gets scored into a budget reconciliation bill is anybody's guess.
Hey, Brian, good luck to them. As you said, art, not science. Brian Gardner there of Stifel. I don't see how you come up with a number, especially the president said earlier this week that he's willing to negotiate with China, drop the tariffs to grease the wheels for a TikTok acquisition. So how do you come up with a number?
Taking it a step further, how do you come up with a number when the whole goal is to bring production back to the United States, which ostensibly
you don't want them paying the tariffs.
Remove the revenues that would come from some of the tariffs. So this is a very tricky thing, and it raises a question of how much of an offset it is to what the Republicans in the House are trying to do.
Got a lot to get through this morning, that's for sure. Equities right now just about unchanged. Lulu's down by 13% in the pre-market. We'll pick up on those consumer concerns a little bit later. In the next 30 minutes, we'll also be talking about a big downsizing of a big IPO. We'll talk about that in about 20 minutes' time. Up next on the programme, Winthin of Brown Brothers Harriman on his outlook for the dollar as tariffs drive huge uncertainty. From New York, this is Bloomberg.
The Langham is more than a hotel. It's a cultural landmark, a symbol of timeless style and luxury. It's not just about expanding, it's about thoughtful growth. Each location reflects our dedication to preserving heritage and creating something extraordinary. That coupled with our own legacy for having been around for over 160 years, that's what sets us apart. A focus on your story, our legacy.
Equity futures here slightly softer. We're down by 0.1%, going into the weekend on a 2-day losing streak, but poised for a second week of gains. We'll see if that holds. On the Nasdaq, we're down by 0.2% also. Let's get some morning movers for you. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. A really painful pre-market move when it comes to Lululemon, down nearly 13%. If this holds, it would be its worst day in about
trade and tariff cannot be taken lightly.
The administration is moving forward with fairly aggressive tariffs.
We have now the highest effective tariff rate since we've had since the 1940s.
What is the probability that beyond next week we're putting completely to rest the tariff issue? That probability is probably very, very low.
April 2nd is not the beginning of the end. It's the beginning, and there's a long way to go before the end.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday with another company ringing the alarm on the consumer. Lulu shares plunging after the company delivered a disappointing outlook for the year, voicing concerns about consumer spending. The CEO flagging, quote, a dynamic macro environment that's contributed to a cautious consumer, leading to a material impact to traffic across the industry. Add that to a growing list of concerns from consumer-facing companies. Concerns captured by weaker consumer confidence in the face of much higher trade tariffs. The White House seemingly aware of those concerns. The Journal reporting this morning, quote, when President Trump convened CEOs of some of the country's top automakers for a call, he issued a warning. They better not raise car prices because of tariffs. And guess what? Raising prices is exactly what people think they will do.
They have no other choice. If they eat it, it's a multi-billion-dollar hit to their bottom line. You could say, well, they should just make less money. But if they want to invest in factories, et cetera, and actually bring production back to the United States, it becomes very difficult to do so. I will just say the corporate speak for tariffs are hurting consumer sentiment is quite amazing. You indicated what it was, and that seems to be what we're going to hear. The macroeconomic environment that is dynamic is what's causing people to maybe pull back just a little bit. You're starting to hear CEOs directly address the elephant in the room.
They're talking about Trump without actually naming Trump, but they're talking about his policies and the impact the policies are going to have. And as we head towards April 2nd, Liberation Day, as the president likes to call it, there are a number of questions tariffs that remain to be seen, but already we're seeing play out in corporate America, most notably when it comes to these consumers. And clearly, I think that Wall Street Journal report shows that this administration actually understands that consumers may get that inflation spike, even if it's a one hit, because of the tariffs.
We've seen it several times through the week that this administration is increasingly sensitive to that story. This market is too. At 8:30 Eastern Time, another read on inflation. Then later on this morning, Lisa, another read on consumer sentiment.
Does the University of Michigan sentiment survey matter? At a certain point, you can make that debate into your rallying cry around whatever partisan group that you want. The more important thing to me is if you take a look at inflation expectations in the market, they are creeping higher. For the next 2 years, inflation expectations have risen to the highest level since March of 2023. Over the next 10 years, you're looking at an average market implied inflation rate of 2.4%. Not catastrophic, but it's not exactly the 2% the Fed's looking for. And if you take a look at what people are pricing in and what Fed officials are saying, there is a lot of skepticism, as we were talking yesterday, about just how transitory some of these inflationary headwinds really are going to be.
Gold this morning, all-time highs. Equities this morning, negative by 0.2% on the S&P. Coming up this hour, Victoria Fernandez across mark with stocks on a two-day losing streak. Brian Gardner of Stifel as the Doge team plans $1 trillion in cuts. And Angelo Zeno of CFRA as CoreWeave downsizes its IPO. We begin this hour with stocks steady ahead of fresh inflation data at 8:30 Eastern Time. Victoria Fernandez across mark writing, we have witnessed a definite shift from the animal spirits driving markets to a new all-time high just a few weeks ago to now an increased probability of recession becoming the topic of conversation. Victoria joins us now for more. Victoria, welcome back. A week away from Liberation Day, early next week, that's going to be the big focus for this market. It feels like you've changed your view on things. What's changed?
Well, I think it's actually kind of what you guys were talking about. It's that sentiment of the consumer. When we look over the past year, we kept saying there's so many red flags that tell us we should be in a pullback, we should be in a recession, but the consumer was always there. We talk about a Fed put or a Trump put, but really it was the consumer put for the longest period of time. That's what has changed now. We see the consumer, and you guys have already talked about it this morning, all those companies coming out on their earnings, on their conference calls, talking about the concern that they're seeing, Lululemon being the latest example. I mean, I thought my kids alone would help support the numbers at Lululemon with their purchases, but apparently it is not enough. And the consumers are starting to pull back, and you get in that negative feedback loop. As the consumers start to pull back, revenues come down, margins start to get affected. What happens 9 months after margins get affected? Companies start laying off. And we've seen that with the Challenger layoffs in the last month. And so I think it's that consumer element that has changed that's giving us more concern, especially with potentially more tariffs coming.
How much is this companies kitchen sinking it, though? You mentioned Lululemon, and your kids would single-handedly cause this share to go up. But a lot of the kids are actually getting baggy stuff right now. And that was something they addressed, that actually the styles are moving past that sort of trademark legging spandex look. I'm just wondering, how do you parse through how significant the hit is and how big of a slowdown you have to price into market expectations?
Yeah, I mean, it's going to be different for every company. And the companies that have been out there talking about the slowdown have been along a wide range. It's not just apparel, right? We saw Best Buy as one of those. Yes, there was Nike and Lululemon, but you see Walmart, which is a different cohort of a consumer. And I think part of the issue, Lisa, is that it's not just the low income and middle income consumer anymore. We've talked for the last year and a half on that high income consumer really supporting that economy and continuing to spend, even if they shifted their spending habits. They went maybe from a higher element kind of store, now shopping at Walmart. We saw Walmart gain a lot of share, but now they're talking about even the high-end income consumer pulling back. So I think you have to take that longer-term approach and say, as we go through this year and consumers start to pull back as they're worried about their jobs, and we see that in the quits rate coming down, we see it with hiring rates slowing, that's the element you have to look at to determine what does growth look like if that consumer engine is not there driving it.
Peter Cheer earlier told Bloomberg TV that the U.S. is trading trade flows for capital flows, and the rest of the world is going to outperform. Do you look to the rest of the world ahead of Liberation Day because you're really unsure about what is going to happen here in the United States?
Yeah, I think the rest of the world, we've heard from plenty of leaders around the globe talking about the concerns and already trying to make steps beforehand. We've seen it come out of India. We see it come out of some of the European countries where what can we do and before the idea of reciprocal tariffs come to lower that rate? What can we do to help our consumers? We saw inflation this morning out of Europe actually come in lower than expected and ECB rate cuts moving higher. So you have to look at it and see what are rates going to do between the two. What does it look like on exchange rates? International has done much better because of the concept of growth continuing, especially in Europe, with the steps that Germany is making in defense. But has some of that already run out? Is that already priced in to the European market? So I might wait for a little bit of a pullback on international before putting my toe in the water if I haven't already, and let that consolidate a little bit before going there.
Victoria, this is not the only headwind for markets. In fact, the dominant headwind has been the pain trade, and the pain trade's been tech so far in 2025, stateside. Let's think about the shots that's been fired at tech over the last week or so. Reports that Microsoft is pulling back on data center spending. Alibaba firing shots about overcapacity and bubbles, and then overnight, a heavily downsized IPO from CoreWeave. How constrained is the AI trade at the moment?
Yeah, I mean, no one likes that word bubble, but there is a lot of questions now going into hearing all of the money, the CapEx spends that companies were going to do in regards to AI, seeing some of that pull back. You mentioned Microsoft as a perfect example of it. And what does that mean going forward? I think, look, tech, as we went into this correction, tech had already pulled back. They haven't become leadership during this correction period that we're in. So I don't think we should look to tech to be the leaders coming out of this correction. I think they're going to continue to struggle because of some of the headlines that you've mentioned. Maybe you start to look at some of the secondary companies that will benefit from productivity enhancements from AI, and not necessarily the tech names, the data warehouse components of it that people were really looking at. We've seen utility sector pull back a little bit as well because of the headlines that you're mentioning. So I think we continue to see some struggles in tech, and you're probably going to have to look at places like healthcare, maybe certain types of materials, financials. These are the sectors I think that will lead us coming out of the correction that we're in. That's where you should probably focus.
Can you walk us through how all of these prongs of sentiment hits have translated into your view shift over how you should allocate your assets? And I ask this at a time when gold is at record highs and people aren't sure whether to go into bonds or whether to go into healthcare.
Yeah, well, I mean, look, you're talking to the bond girl here, so I would always recommend having some bonds in your portfolio. But people want to hedge what they're seeing. And when there's concerns around growth, gold is the hedge that people go into. When that's not the concern, when growth is actually looking like it might pick up, then you see people go more into industrial metals or things like copper. Copper's actually down this morning after having a pretty good run. Gold continues to move higher. So you see there's that concern around growth. We look at sentiment, and it's always important to break sentiment down and say what's driving that number. Is it the more volatile component of sentiment that's the expectations part, or is it the present situation that's driving it, that's usually more focused on jobs and fundamentals? We saw both elements come down in the last sentiment number. So there is maybe a little bit of support to that stagflation argument that people are talking about, as we have concerns around the growth component, which supports gold, and still have concerns around inflation and how sticky that's going to be. Obviously, we have PCE later today, but I think you have to look at sentiment and say this feeds into the story of a pullback, of the consumer pulling back, of growth concerns, of GDP concerns, at least in the first half of this year.
Since you're a bond girl, can you really say that bonds are going to have the same kind of buffering effect that they have traditionally at a time where inflation expectations are actually rising?
Yeah, I don't think you're going to go into fixed income right now and say, oh, wow, spreads are going to tighten. I'm going to get, a lot of a price return coming out of that part of the market. I don't think that's what you're going into fixed income for right now. I think you're going into fixed income to lock in some steady cash flow components in your portfolio. Some people may like to do that with dividend payers in the equity market, but that's a little more volatile. If you can lock in some steady cash flow on the short end and the long end of the treasury Treasury curve, it gives you a little bit more buffer in your portfolio, as we think we're going to continue to see volatility at least for the next 6 months in the equity side of the market.
Hey, Victoria, appreciate your take on things going into the weekend. Victoria Fernandez of Crossmark, going into a big weekend next week, April 2nd, just around the corner. Lisa mentioned the bond market. Yield to lower this morning by just 2 basis points, still north of 430. With an update on stories elsewhere this morning with your Bloomberg brief, here's Yahara Hackers. Hey, Yahara.
Hi, John. Canadian Prime Minister Mark Carney says his country will fight back against President Trump's trade war. He declined to outline specifics, but did say his government will respond based on what the U.S. does on Wednesday when Trump plans to announce his so-called reciprocal tariffs. Carney said he expects to speak with Trump in the next day or two. Meanwhile, Bloomberg has learned that the U.S. is pushing to control all major future infrastructure and mineral investments in Ukraine. A draft document grants the U.S. first claim on profits transferred into a special reconstruction investment fund. It also requires Kyiv to pay for all U.S. military and economic support since the start of the war. And Elon Musk says he plans to slash $1 trillion in government spending by the end of May. Musk told Fox News he doesn't think the savings will affect critical government services. The Doge website so far lists about $22 billion in contract savings, while claiming $130 billion in unspecified cost reductions. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. More from Yahara later on this hour. Up next on the program, the Doge Agenda.
Our goal is to reduce the waste and fraud by $4 billion a day, every day, 7 days a week. And so far, we are succeeding. America will be solvent. The critical programs that people depend upon will work. And it's going to be a fantastic future.
We'll talk about that fantastic future in just a moment. We'll catch up with Brian Gardner of Stifel on the other side. From New York City this morning, good morning. 2-day losing streak coming into Friday. Equity futures at the moment just a little bit softer, but off session lows. We're down by 0.1% on the S&P. On the Nasdaq 100, softer, negative, down by 0.2%. Under surveillance this morning, the Doge Agenda.
Our goal is to reduce the deficit by $1 trillion. So every day that passes, our goal is to reduce the waste and fraud by $4 billion a day, every day, 7 days a week. And so far, we are succeeding. When we do make mistakes, we correct them quickly, and we move on. America is going to be in much better shape. America will be solvent. The critical programs that people depend upon will work, and it's going to be a fantastic future.
So here's the latest this morning. Elon Musk aiming to cut 15% of government spending by the end of May, amounting to $1 trillion. Musk's Doge team claiming about $130 billion in savings so far, downplaying government layoffs and saying no critical programs will be affected by cuts. Bloomberg's Tyler Kendall joins us now for more from the White House. Now, Tyler, critical programs in the eye of the beholder, I guess, and that's important. What are the views on what's happening with Doge and whether we can, quote, get those critical programs to be dependable for the people of America?
Yeah, good morning, John. Well, it's a pretty ambitious timeline, as well as those top line figures that you're talking about. The bulk of government spending is really focused on those mandatory programs such as Medicare and Social Security. Elon Musk trying to reassure the American public that the money that they get in their pockets isn't going to change, but it's hard to see how the figures he is talking about he's going to reach those by just focusing on alleged waste, fraud, and abuse. So big questions there about the actual implementation of what he is going after here. We have to think about the broader government spending conversation, particularly as Congress looks at some of these programs to try to get through their fiscal agenda and that reconciliation package through both chambers. Now, we mentioned the figures, the timeline here, also considered to be pretty ambitious. The end of May, Elon Musk is a special government employee. That means he's only supposed to be on the job for 130 days out of the year. 130 days from the inauguration would bring us to May 30th. That's not to say, though, that he's not going to still be involved, or the the effort's not going to continue, although Doge is supposed to sunset by July, so another date for your radar. But this really has been billed to us as a whole of government approach. We see Elon Musk, for example, sitting in on those cabinet meetings to get updates from department heads. Of course, John, this all goes into the heightened concerns, too, among federal workers. So spending on one end, but also job cuts on the other. Elon Musk saying that up to this point, quote, almost no one has been fired. We should point out that just yesterday, HHS announced that it was cutting 10,000 jobs. And it's important context to keep in mind. Only about 20% of federal workers are here in the nation's capital. This is going to have some broad-ranging impacts across the country.
Tyler, you mentioned reconciliation. How do the Doge efforts square what they're trying to get done in Congress?
Right. Well, Anne-Marie, it's pretty interesting to see how they're both kind of working in tandem here, perhaps, but Congress wants a bigger role. There is reporting that just yesterday, key Senate Republicans met with some top White House officials, including NEC Director Kevin Hassett and the OMB Chair Russ Vought about what's known as a rescission package. This would essentially let Congress codify some of these spending cuts by allowing them to vote to pull back some money that might have been allocated but not appropriated yet. So that's one line that's going here. It remains to be seen if the White House is willing to give Congress that part of this discussion. And then the other end, of course, are the spending cuts. We know yesterday our Bloomberg News reporting that the Senate package is looking at lower minimum spending cuts in order to kind of quell some of the concerns among Republicans about what it could mean for the future of Medicaid. But again, Anne-Marie, bringing up big questions. If there are less spending cuts perhaps on that program, what does that mean for those fiscal hawks that need to see larger spending cuts to make up for some potential impacts to the deficit and raising the debt ceiling?
Hey, Tyler, thank you. More from Tyler later on the programme in the next hour. To extend the conversation, Brian Gardner of Stifel. Brian, just to pick up on some of this, can Washington agree on which programmes are critical?
No, I mean the short answer is no. I mean, the critical is in the eye of the beholder. There are definitely members up on Capitol Hill that are going to see most programs as absolutely critical. That it's a jurisdictional turf fight battle. So it gets into the question that you had earlier on the savings of Doge. How big is it? How transparent is it? And how much waste, fraud, and abuse is it? Well, waste, fraud, and abuse is in the eye of the beholder. So critical programs, the same thing, kind of in the eye of the beholder.
When it comes to critical programs, could Republicans meet their goal of cutting $880 billion under the committee of the Commerce Committee in the House without touching Medicare?
The math doesn't work. I mean, if you go through a list of options that various groups can put out, the House Budget Committee had a document out. The Congressional Budget Office has given options over the years. And you look at the jurisdiction that Energy and Commerce has, well, it really is Medicaid. There are not enough programs under its jurisdiction to get to 880. The math just doesn't work. So if you give that committee that target, at the end of the day, it gets to Medicaid. And we can debate, what the value is of Medicaid. Not so much what the value of Medicaid is. Excuse me, that's a poor way to phrase it. But how to make it more efficient, how to get savings out of the program. But 880 is going beyond just waste, fraud, and abuse. That's getting more towards the bone of the actual program, not just the fat around it.
So where do you see Senate Republicans coming up on this issue, given the fact that they're in the midst of writing their bill right now for the budget, and potentially we could see a vote next week?
Yeah, I think they're trying to have it both ways. We're kind of signaling that there may be some flexibility on one side of Capitol Hill, less flexibility on the other side of Capitol Hill. Create a budget resolution that it's somewhat illusory and kicking the major questions down the road to the actual reconciliation bill, at which point members will be jammed to vote for or against the bill that you're going to claim, the leadership is going to claim if you block it, you're blocking the Trump agenda. So I think they're trying to come up with an artful way of splitting the baby in half, to give some deference to the House, to recognize that the big issues in the Senate need a different approach. But there are two camps, right? You have the budget hawks who want much deeper cuts, Mike Lee, Ted Cruz, and a few others, Rick Scott of Florida. And then Josh Hawley, who, I think most people would view as a conservative, but is, in the populist conservative camp and is expressing a lot of concern over those the level of cuts in Medicaid. And so there's going to be an interesting debate next week on the Senate floor. And we'll see if the vote actually happens. I think John Thune is at a point where he's just trying to force senators to decide in order to get to an actual vote. It would not surprise me to see that vote punted.
Brian, how much are Republican Congress members, counting on revenues from tariffs and really helping give them an easier time in getting something passed?
I think there's such a lack of transparency and specificity of what those numbers look like. So I think conceptually, Lisa, they're saying, we're going to have revenue coming in from tariffs. No one can really give a solid number of what those numbers look like. And within the reconciliation package, you're going to have some level of specificity in order to score it. Maybe there's some way to codify these numbers, and so they actually do get some budget savings, and then it's the art of actually writing legislation. But it's such a gray area, and there's so many claims being put out there, on the tens and hundreds of billions of dollars of revenue that are going to be brought in by tariffs. But we also don't know what the timing of those revenues are. I think part of the revenue discussion is that the Trump administration is looking to really restructure the American economy. And they believe that there's going to be a massive inflow of capital into the United States and an economic boom that's going to result. Well, those revenues are going to be in the out years, and how that gets scored into a budget reconciliation bill is anybody's guess.
Hey, Brian, good luck to them. As you said, art, not science. Brian Gardner there of Stifel. I don't see how you come up with a number, especially the president said earlier this week that he's willing to negotiate with China, drop the tariffs to grease the wheels for a TikTok acquisition. So how do you come up with a number?
Taking it a step further, how do you come up with a number when the whole goal is to bring production back to the United States, which ostensibly
you don't want them paying the tariffs.
Remove the revenues that would come from some of the tariffs. So this is a very tricky thing, and it raises a question of how much of an offset it is to what the Republicans in the House are trying to do.
Got a lot to get through this morning, that's for sure. Equities right now just about unchanged. Lulu's down by 13% in the pre-market. We'll pick up on those consumer concerns a little bit later. In the next 30 minutes, we'll also be talking about a big downsizing of a big IPO. We'll talk about that in about 20 minutes' time. Up next on the program, Winthin of Brown Brothers Harriman on his outlook for the dollar as tariffs drive huge uncertainty. From New York, this is Bloomberg. Equity futures here slightly softer. We're down by 0.1%, going into the weekend on a 2-day losing streak, but poised for a second week of gains. We'll see if that holds. On the Nasdaq, we're down by 0.2% also. Let's get some morning movers for you. Let's cross over to Danny Berger for more. Hey, Danny.
Hey, John. A really painful pre-market move when it comes to Lululemon, down nearly 13%. If this holds, it would be its worst day in about
trade and tariff cannot be taken lightly.
The administration is moving forward with fairly aggressive tariffs.
We have now the highest effective tariff rate since we've had since the 1940s.
What is the probability that beyond next week we're putting completely to rest the tariff issue? That probability is probably very, very low.
April 2nd is not the beginning of the end. It's the beginning. And there's a long way to go before the end.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend. Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday with another company ringing the alarm on the consumer. Lulu shares plunging after the company delivered a disappointing outlook for the year, voicing concerns about consumer spending. The CEO flagging, quote, a dynamic macro environment that's contributed to a cautious consumer, leading to a material impact to traffic across the industry. Add that to a growing list of concerns from consumer-facing companies. Concerns captured by weaker consumer confidence in the face of much higher trade tariffs. The White House seemingly aware of those concerns. The Journal reporting this morning, quote, when President Trump convened CEOs of some of the country's top automakers for a call, he issued a warning. they better not raise car prices because of tariffs. And guess what? Raising prices is exactly what people think they will do.
They have no other choice. If they eat it, it's a multi-billion-dollar hit to their bottom line. You could say, well, they should just make less money. But if they want to invest in factories, et cetera, and actually bring production back to the United States, it becomes very difficult to do so. I will just say the corporate speak for tariffs are hurting consumer sentiment is quite amazing. You indicated what it was, and that seems to be what we're going to hear. The macroeconomic environment that is dynamic is what's causing people to maybe pull back just a little bit. You're starting to hear CEOs directly address the elephant in the room.
They're talking about Trump without actually naming Trump, but they're talking about his policies and the impact the policies are going to have. And as we head towards April 2nd, Liberation Day, as the president likes to call it, there are a number of questions that remain to be seen, but already we're seeing play out in corporate America, most notably when it comes to these consumers. And clearly, I think that Wall Street Journal report shows that this administration actually understands that consumers may get that inflation spike, even if it's a one hit, because of the tariffs.
We've seen it several times through the week that this administration is increasingly sensitive to that story. This market is too. At 8:30 Eastern Time, another read on inflation. Then later on this morning, Lisa, another read on consumer sentiment.
Does the University of Michigan sentiment survey matter? At a certain point, you can make that debate into your rallying cry around whatever partisan group that you want. The more important thing to me is if you take a look at inflation expectations in the market, they are creeping higher. For the next 2 years, inflation expectations have risen to the highest level since March of 2023. Over the next 10 years, you're looking at an average market implied inflation rate of 2.4%. Not catastrophic, but it's not exactly the 2% the Fed's looking for. And if you take a look at what people are pricing in and what Fed officials are saying, there is a lot of skepticism, as we were talking yesterday, about just how transitory some of these inflationary headwinds really are going to be.
Gold this morning, all-time highs. Equities this morning, negative by 0.2% on the S&P. Coming up this hour, Victoria Fernandez across mark with stocks on a two-day losing streak. Brian Gardner of Stifel as the Doge team plans $1 trillion in cuts. And Angelo Zeno of CFRA as CoreWeave downsizes its IPO. We begin this hour with stocks steady ahead of fresh inflation data at 8:30 Eastern Time. Victoria Fernandez across mark writing, we have witnessed a definite shift from the animal spirits driving markets to a new all-time high just a few weeks ago to now an increased probability of recession becoming the topic of conversation. Victoria joins us now for more. Victoria, welcome back. A week away from Liberation Day, early next week, that's going to be the big focus for this market. It feels like you've changed your view on things. What's changed?
Well, I think it's actually kind of what you guys were talking about. It's that sentiment of the consumer. When we look over the past year, we kept saying there's so many red flags that tell us we should be in a pullback, we should be in a recession, but the consumer was always there. We talk about a Fed put or a Trump put, but really it was the consumer put for the longest period of time. That's what has changed now. We see the consumer, and you guys have already talked about it this morning, all those companies coming out on their earnings, on their conference calls, talking about the concern that they're seeing, Lululemon being the latest example. I mean, I thought my kids alone would help support the numbers at Lululemon with their purchases, but apparently it is not enough. And the consumers are starting to pull back, and you get in that negative feedback loop. As the consumers start to pull back, revenues come down, margins start to get affected. What happens 9 months after margins get affected? Companies start laying off. And we've seen that with the Challenger layoffs in the last month. And so I think it's that consumer element that has changed that's giving us more concern, especially with potentially more tariffs coming.
How much is this company's kitchen sinking it, though? You mentioned Lululemon, and your kids would single-handedly cause this share to go up. But a lot of the kids are actually getting baggy stuff right now. And that was something they addressed, that actually the styles are moving past that sort of trademark legging spandex look. I'm just wondering, how do you parse through how significant the hit is and how big of a slowdown you have to price into market expectations?
Yeah, I mean, it's going to be different for every company. And the companies that have been out there talking about the slowdown have been along a wide range. It's not just apparel, right? We saw Best Buy as one of those. Yes, there was Nike and Lululemon, but you see Walmart, which is a different cohort of a consumer. And I think part of the issue, Lisa, is that it's not just the low income and middle income consumer anymore. We've talked for the last year and a half on that high income consumer really supporting that economy and continuing to spend, even if they shifted their spending habits. They went maybe from a higher element kind of store now shopping at Walmart. We saw Walmart gain a lot of share, but now they're talking about even the high-end income consumer pulling back. So I think you have to take that longer-term approach and say, as we go through this year and consumers start to pull back as they're worried about their jobs, and we see that in the quits rate coming down, we see it with hiring rates slowing. That's the element you have to look at to determine what does growth look like if that consumer engine is not there driving it.
Peter Cheer earlier told Bloomberg TV that the U.S. is trading trade flows for capital flows, and the rest of the world is going to outperform. Do you look to the rest of the world ahead of Liberation Day because you're really unsure about what is going to happen here in the United States?
Yeah, I think the rest of the world, we've heard from plenty of leaders around the globe talking about the concerns and already trying to make steps beforehand. We've seen it come out of India. We see it come out of some of the European countries where what can we do and before the idea of reciprocal tariffs come to lower that rate? What can we do to help our consumers? We saw inflation this morning out of Europe actually come in lower than expected and ECB rate cuts moving higher. So you have to look at it and see what are rates going to do between the two. What does it look like on exchange rates? International has done much better because of the concept of growth continuing, especially in Europe, with the steps that Germany is making in defense. But has some of that already run out? Is that already priced in to the European market? So I might wait for a little bit of a pullback on international before putting my toe in the water if I haven't already, and let that consolidate a little bit before going there.
Victoria, this is not the only headwind for markets. In fact, the dominant headwind has been the pain trade, and the pain trade's been tech so far in 2025, stateside. Let's think about the shots that's been fired at tech over the last week or so. Reports that Microsoft is pulling back on data center spending. Alibaba firing shots about overcapacity and bubbles, and then overnight, a heavily downsized IPO from CoreWeave. How constrained is the AI trade at the moment?
Yeah, I mean, no one likes that word bubble, but there is a lot of questions now going into hearing all of the money, the CapEx spends that companies were going to do in regards to AI, seeing some of that pull back. You mentioned Microsoft as a perfect example of it. And what does that mean going forward? I think, look, tech, as we went into this correction, tech had already pulled back. They haven't become leadership during this correction period that we're in. So I don't think we should look to tech to be the leaders coming out of this correction. I think they're going to continue to struggle because of some of the headlines that you've mentioned. Maybe you start to look at some of the secondary companies that will benefit from productivity enhancements from AI, and not necessarily the tech names, the data warehouse components of it that people were really looking at. We've seen utility sector pull back a little bit as well because of the headlines that you're mentioning. So I think we continue to see some struggles in tech, and you're probably going to have to look at places like healthcare, maybe certain types of materials, financials. These are the sectors I think that will lead us coming out of the correction that we're in. That's where you should probably focus.
Can you walk us through how all of these prongs of sentiment hits have translated into your view shift over how you should allocate your assets? And I ask this at a time when gold is at record highs and people aren't sure whether to go into bonds or whether to go into healthcare.
Yeah, well, I mean,
look at the candle. Open equal to high again. ठीक है, सेलिंग में आया थोड़ा बहुत नीचे, थोड़ा बहुत सपोर्ट लेने की कोशिश कर रहा है पिछले 1 घंटे से. देखते हैं बायर्स होल्ड कर पाते हैं या ब्रेकडाउन होता है. ब्रेकडाउन होता है तो फिर नेक्स्ट सपोर्ट रहेगा यहाँ पर. कैंडल देखो, ओपन इक्वल टू हाई बनी है एग्जैक्टली. पिछले 2 कैंडल तो थोड़ा बहुत रुकी थी, उसके बाद थोड़ा बहुत मूवमेंट अपसाइड आया था. नाउ लुक एट दिस कैंडल, करंट 15 मिनट कैंडल एग्जैक्टली ओपन इक्वल टू हाई. क्यों बना रहे होंगे? चाह रहे हैं कि सपोर्ट ब्रेक हो जाए, क्योंकि फाइट है. जैसे यहाँ पर ओपन इक्वल टू लो बना के बैठ रहे थे, तो यहाँ पर चाह रहे थे ऊपर निकल जाए, नहीं निकल पाए, सेलर लेके आ गए नीचे. बायर ऊपर लेके जाने की कोशिश कर रहे हैं कि बायर को ना लेके जाने दिया जाए. क्या फाइट हो रही है बताओ? एक ना एक साइड तो बड़ा मूव जरूर आएगा. 12:30 भी हो चुका है. बैंक निफ्टी भी साइडवेज.
GDP concerns, at least in the first half of this year.
Since you're a bond girl, can you really say that bonds are going to have the same kind of buffering effect that they have traditionally at a time where inflation expectations are actually rising?
Yeah, I don't think you're going to go into fixed income right now and say, oh, wow, spreads are going to tighten. I'm going to get, a lot of a price return coming out of that part of the market. I don't think that's what you're going into fixed income for right now. I think you're going into fixed income to lock in some steady cash flow components in your portfolio. Some people may like to do that with dividend payers in the equity market, but that's a little more volatile. If you can lock in some steady cash flow on the short end and the long end of the Treasury curve, it gives you a little bit more buffer in your portfolio, as we think we're going to continue to see volatility at least for the next 6 months in the equity side of the market.
Hey, Victoria, appreciate your take on things going into the weekend. Victoria Fernandez at Crossmark. Going into a big weekend next week, April 2nd, just around the corner. Lisa mentioned the bond market. Yield to lower this morning by just 2 basis points, still north of 430. With an update on stories elsewhere this morning with your Bloomberg brief.
गाइस, क्रूड ऑयल में जिन लोगों ने बाई किया हुआ है एसएल चाहो तो कॉस्ट पे भी डाल दो. काफ़ी देर हो गई है, पता नहीं कहाँ मूव कर जाएगा. 12:30 के बाद भी कुछ खास मूव आया नहीं. अब सीधा 5:30 के बाद ही मूव आएगा. इंडियन मार्केट भी क्लोजिंग पे है, अभी आधा घंटा और रह गया. अब ये ऊपर ब्रेक करे या फिर नीचे ब्रेक करे तभी शायद थोड़ा बड़ा मूव होगा. तो जो लोग बाइंग में हैं, पुट योर एसएल ऑन कॉस्ट इन सिस्टम. ऊपर चला जाए अच्छी बात है, नहीं जाता है तो फिर कॉस्ट टू कॉस्ट निकल जाएंगे. बाकी क्रूड ऑयल भी आना शुरू कर गया ऊपर से. जिन लोगों ने अगर सेल किया, वैसे एग्जैक्ट लेवल पे आ नहीं पाया था. किसने किया होगा तो फिर भी उसको अच्छा प्रॉफिट थोड़ा बहुत दिखा रहा होगा. थोड़ा सा रह गया एक्चुअली. बाकी नीचे एक अच्छा सपोर्ट है हमारे पास 332 के अराउंड, वहाँ मिल जाए बेस्ट रहेगा बाइंग के लिए. सेलिंग के लिए ऊपर ये दोनों ही लेवल अच्छे हैं. सपोर्ट ये जो बीच में लगा रखा है वो कल वाला है, कल ले चुका है एक बार सपोर्ट, तो वापस थोड़ा ध्यान रखना. क्वांटिटी ज़्यादा मत रखना. नॉर्मली एक लेवल से एक ही बार बेटर रहेगा इस केस में. थोड़ी ब्रॉडर रेंज है बट है यहाँ पर भी.
News when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Stephen Carroll.
The Nasdaq 100 posted its worst quarter in nearly 3 years, down 8.3% in the first 3 months of 2025. Concerns of an AI bubble combined with tariff uncertainty and fears of a US recession saw investors pulling back from the tech-heavy index. Chipmaker Nvidia has seen its shares tumble 28% from a January peak, while Broadcom is down 33% from its record high in December. Other mega caps, Microsoft, Amazon, Alphabet and Meta have all fallen 20% or more from their own records. Here's JP Morgan global strategist Stephanie Alagaya.
So I think what's really hurting tech right now is just the fact that for investors looking to de-risk portfolios, like that's the source of risk in their portfolios, is given how much of equity outperformance we've had in those names. We've seen this rotation towards other areas of the market that are better positioned, perhaps in the midst of this trade war: energy, materials, utilities, financials, perhaps.
Stephanie Aliaga was speaking after 2 warnings last week about potential oversupply of data centres, including from the co-founder of Alibaba.
It's also been a quarter to forget for the S&P 500. Despite eking out a small gain on Monday, the equity benchmark posted its worst period versus the rest of the world since 2009. Meanwhile, European defence stocks have helped to drive a historic quarter of outperformance for European equities. In dollar terms, the Stock 600 had its best ever quarter versus the S&P 500. But Brad Bernstein at UBS Private Wealth Management says this could be the high water mark for Europe.
So we think the easy money's been made there on the back of, more stimulus and more defense spending because of our administration's position on NATO, as they've made very clear. So we actually think from this point and from these levels, the U.S. markets for the rest of the year look more attractive than the rest of the world.
However, Brad Bernstein's optimism on the US isn't shared by everyone. Yesterday, Goldman Sachs' David Costin cut his S&P end-of-year target to 5,700 versus his previous estimate of 6,200. The Wall Street benchmark closed yesterday at just over 5,600.
Donald Trump will unveil a so-called reciprocal tariff plan tomorrow in the White House Rose Garden. White House Press Secretary Caroline Leavitt says that the announcement will feature country-based levies and that the president is committed to implementing sectoral duties, but that they would not be the focus. Speaking yesterday about his plans, Trump said that the measures would be lenient in comparison to other countries.
They're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind.
President Trump's comments came as US automakers have been making last-minute efforts to lobby his administration for tariffs exceptions. Bloomberg understands brands including Ford, General Motors and Stellantis are all pushing the White House to exclude certain low-cost car components from planned levies. That's as New York Fed President John Williams told Yahoo Finance he sees a higher risk of inflation due to Trump's tariff plans.
Meanwhile, European Commission President Ursula von der Leyen says the EU did not start the ongoing trade confrontation with the US, but it's ready to retaliate if needed. Here's what she had to say in the European Parliament earlier this morning.
So many Europeans feel utterly disheartened by the announcement from the United States. Let me be clear. Europe did not start this confrontation. We think it is wrong. But my message to you today is that we have everything we need to protect our people and our prosperity.
Ursula von der Leyen speaking after Bloomberg reported last week that the European Union is identifying concessions it's willing to make to Donald Trump's administration in order to secure the partial removal of US tariffs.
Marine Le Pen has criticised a court ruling barring her from running for elected office for 5 years, ruling out a 2027 presidential run. The French far-right leader, who was convicted of embezzlement, claimed that the decision was politically motivated in an interview with the French station TF1.
There are millions of French people who are outraged to an unimaginable point, seeing that in France, in the country of human rights, judges have put in place practices that one would think are reserved for authoritarian regimes.
Marine Le Pen there speaking through a translator, who's been a top contender for the presidency in recent polls. In addition to the 5-year electoral ban, though, she was sentenced to 2 years in prison, with 2 more suspended. The judgment threatens to upset the delicate political balance that's allowed President Macron to pass budget for 2025. The news could also hand full control of the national rally to the party's 29-year-old president, Jordan Bardella, who says he would run for president if Le Pen asks him to.
UK banks are bracing for an estimated cost that could run up to £38 billion if a Supreme Court hearing goes against them. A ruling on motor finance has already hit many UK bank stocks and goes before Britain's top court today. James Wilcock has more.
It has the potential to be the UK's most expensive consumer scandal in a decade. Last year, a court had ruled banks that paid commissions to car dealers without consumer consent were unlawful. Now Lloyds, the UK's largest provider of car finance, has earmarked £1.15 billion so far for any potential payouts. Here's their CEO, Charlie Nunn, talking to us in February.
It has created uncertainty in investors. The core theme really is the Court of Appeal came out with a decision that was at odds with 30 years of regulation. And we always said that we really need clarity on this quickly, because it creates an investability problem, not just for UK financial services, but actually the UK more broadly.
Now it's up to Britain's top court to settle the matter. They hear arguments over the next 3 days. It's one of the most watched cases in years, with implications for any business that provides credit for people buying goods in the UK, as well as the international investors who back them. In London, James Woolcock, Bloomberg Radio.
And Goldman Sachs' $80 million retention bonuses for CEO David Solomon and President John Waldron have drawn another prominent critic. Institutional Shareholder Services is urging investors to reject the rewards, saying that they lack rigorous preset performance criteria. The comments echo those of Glass Lewis, who last week described the latest bonuses as excessive. Goldman's board has defended the incentives, however, citing fierce competition for talent and the need to retain the current leadership team.
Those are your top stories on the market. Stock 600 up 0.7%. The FTSE 100 is 0.7 higher as well. On Wall Street, S&P E-mini futures are down by 0.2. Nasdaq futures 0.2 lower as well. The 10-year Treasury yield down 3 basis points ahead of the ISM and Jolt data we get out later today. Yields are falling across Europe as well. The 10-year bund yield in Germany down by 5 basis points. The euro is this morning trading at 108.06 against the dollar, down 0.1%.
That's news when you want it with Bloomberg News Now. I'm Lizzie Burden.
And I'm Stephen Carroll, and this is Bloomberg.
What caffeinated foodstuff is currently...
Okay guys, natural gas target done. Crude oil target done. Book करना है कर लो. जैसे selling book किया था. Hold करना है तो SL cost पे रखे रहो. यहाँ से अगर breakout हुआ तो ये next target रहेगा. अगर नहीं होता है फिर से rejection मिल जाता है तो फिर वापस वेट करेंगे किसी साइड एक रेंज ब्रेक हो जाए. बाकी बुक करना चाहो तो कर भी सकते हो. लगभग 45 to 50 पॉइंट मिल चुके हैं फ्यूचर में. 2 ट्रेड ठीक है ठाक निकल गए. बाकी होल्ड करना है तो एटलीस्ट अगर 1-2 लॉट भी ट्रेड कर रहे हो, ज़्यादा क्वांटिटी में है, हाफ प्रॉफिट होकर के ट्रेल कर लेना. सिंगल लॉट वाले निकल जाओ ऐसा, लेकिन ट्रेल ही कॉस्ट पर ही रखना. अगर ऊपर ब्रेकआउट होता है तो ये फिर सेकंड टारगेट रहेगा, विच इज़ अप्रॉक्सीमेटली 100 पॉइंट. फिलहाल के लिए देखते हैं ब्रेक होता है या फिर नहीं. बाकी देखो ऊपर का लेवल मल्टीपल टाइम टेस्टेड है, कोई तो लेवल ऑफ ब्रेक जरूर होगा. लाइक भी करते रहो गाइस, लाइक, डोंट फॉरगेट टू लाइक द स्ट्रीम, सब्सक्राइब द चैनल। इंडियन मार्केट को देखोगे, बैंक निफ्टी क्लोज होते होते मॉर्निंग पे सेल ऑफ जो आया था उसके बाद सपोर्ट पर कंप्लीटली साइडवे चला गया, नीचे ब्रेक नहीं हुआ 51,050 के नीचे। कल देखना पड़ेगा क्या कल गैप अप होता है या फिर ये ब्रेक डाउन करता है। 51,050 के नीचे ब्रेक डाउन माना जाएगा 15 मिनट फ्यूचर में, बाकी तब तक सपोर्ट पर है। देखते हैं कल बाइंग आती है, गैप अप होता है या फिर नहीं, थोड़ा बहुत ऊपर। वैसे ऊपर जाए 51,700 750 वहाँ से सेलिंग वापस अच्छी हो सकती है, क्योंकि नेक्स्ट नीचे सपोर्ट तो काफ़ी दूर है, सीधा गैप फिल कर नहीं जाएगा प्राइस नहीं तो। अगर यहाँ होल्ड नहीं करता है 51,150 के नीचे तो 50,700 के लेवल के दर्शन हो जाएंगे इजीली। इवनिंग पर डेटा भी है, उसका भी ध्यान रखना, इम्पोर्टेंट डेटा है, स्पेशली जॉब ओपनिंग का 7:30 और मैन्युफैक्चरिंग पीएमआई का। ठीक है, थोड़ा बहुत रिजेक्शन ले रहा है क्रूड ऑयल हम इस पर्टिकुलर लेवल से। बुक कर लेना, ठीक है। इसमें अगर बुक करना चाह रहे हो, होल्ड जिन लोगों को करना है, एक से ज़्यादा लॉट अगर ट्रेड कर रहे हो तभी क्वांटिटी ट्रेल करना। गॉट इट। नेसेसरी रिस्क नहीं। ठीक है, बाकी बुक करने वाले कर भी सकते हैं बुक अपना पूरा प्रॉफिट। Took the resistance again from the same level. करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को, कम ऑन, डोंट फॉरगेट टू लाइक द स्ट्रीम। ये थोड़ा बहुत रिजेक्शन ले रहा था बट अब शायद ब्रेक करने की कोशिश करे. 330 होने वाला है. इंडियन मार्केट भी क्लोजिंग पर है. लेट्स सी कैंडल क्लोजिंग देता है या फिर नहीं. पर और रेजिस्टेंस अभी भी इंटैक्ट ही है. ऐसा नहीं है ब्रेक हो गया. ठीक है, अभी भी इंटैक्ट ही है. 6168. थोड़ा और ऊपर ही आ जाए तो मेरे अकॉर्डिंग बेटर ही रहेगा अभी. 6168 के ऊपर कहीं अगर कैंडल क्लोज हो जाती है तो बढ़िया रहेगा. नहीं तो अभी भी रेजिस्टेंस मानेंगे. देखते हैं रिजेक्शन फिर से लेता है या फिर नहीं. इंडियन मार्केट क्लोजिंग पर है. लाइक रुकने नहीं चाहिए गाइस. कम ऑन, लाइक भी करते रहो. नेचुरल गैस में भी आई होप अब थोड़ा वॉल्यूम जनरेट हो यहाँ से. बाकी थोड़ा सा अगर ऊपर चला जाता है तो नेक्स्ट रेजिस्टेंस से सेल करना बेटर रहेगा. 6190 6200 के अराउंड पहुंच जाए. थोड़ा सा रेंज तो ब्रेक होगी, अदरवाइज वेट ही करना है यहाँ पर तो. और कोई ऑप्शन भी नहीं दिख रहा है. 1 2 3 4 5 6. दिस इज 7th टाइम. ये 7वीं बार है प्राइस यहाँ पर आ रहा है. बताओ, पहली दूसरी बार भी नहीं, 7th टाइम. अभी तक ब्रेकआउट नहीं हो पा रहा है इसका. ठीक है, देखो अब यहाँ पर सेल करना रिस्की है. अब तो रेंज ब्रेक हो जाए तो बेटर ही है. वैसे ये दो ट्रेड रिस्की थे, अभी तक रेंज ही ब्रेक नहीं हो रही है. थोड़ा सा रेंज ब्रेक होके ऊपर आ जाए, बीच का लेवल रिमूव कर दें, फिर ये लेवल ठीक रहेगा. या फिर ये ब्रेक डाउन ही कर दे अब नीचे आके, और थोड़ा और नीचे आए. अदरवाइज इट इज़ रेंज बाउंड. फिर से सेल करोगे क्वांटिटी कम ही रखना, इतना ही कह सकता हूँ. क्योंकि वी डोंट नो ये कब ब्रेकआउट हो जाए. अब नॉर्मली इतने बार रुकना तो नहीं चाहिए प्राइस को. तो मेरे अकॉर्डिंग रेंज ब्रेक होगी उसके बाद ट्रेड करोगे, ज़्यादा बेटर रहेगा ट्रेड करने के लिए. और याद रखना, जैसा मैंने बताया, पहली बार नहीं आ रहा है लेवल पे. दिस इज़ द 7th टाइम प्राइस हिटिंग दिस लेवल. 7वीं बार. ऑप्शन मत ट्राई करना, करोगे तो मिनी ही ट्राई करना यहाँ पर, बेटर है ऊपर आ जाए तो। और याद रखना ऊपर SL 6168 के आसपास तक रखना पड़ेगा, ठीक है, क्योंकि वो पूरा एक जोन बना हुआ है। अगर देखो प्राइस यहाँ से नीचे आता भी है ना ऊपर से थोड़ा सा क्रूड ऑयल में, तो याद रखना ज़्यादा नीचे आने के चांसेस भी कम रहेंगे, क्योंकि नीचे एक और एफवीजी बना दिया उसने, दैट एक्ट लाइक एज अ सपोर्ट, ठीक है, वो सपोर्ट की तरह काम कर जाएगा। ये जो रिसेंट यहाँ पर एफईजी है दैट एक्ट लाइक अ सपोर्ट एरिया, तो सेलिंग थोड़ा सा उस वजह से उतने बड़े टारगेट के लिए जाएगी भी नहीं। फिर भी यहाँ पर अगर किसी को एक ट्राई करना ही है इन क्रूड ऑयल, थोड़ा सा रिस्क अभी और उठाना चाह रहे हो रेंज के अंदर ही, ब्रेक अभी नहीं चाह रहे हो ब्रेक हो, तो सिंपल है इसका जो हाई है दैट इज 6154। एंड ऊपर जो एसएल बनता है वो 10 पॉइंट के समथिंग अराउंड 6168 का जो मैं बता रहा हूँ उतना ही बनता है। तो अगर कोई रिस्क लेना चाह रहा है तो क्रूड ऑयल में ये एक सेलिंग का ट्रेड प्लान हो सकता है। वैसे जैसा मैंने बताया इसमें सेलिंग थोड़ी सी रिस्की रहेगी, अब रेंज ब्रेक होना चाहिए मेरे अकॉर्डिंग, बट अगर ट्राई करना चाह रहे हो तो ये एक छोटा सा एसएल के साथ ट्राई कर सकते हो। लगभग 10 पॉइंट का एसएल रखा है, थोड़ा सा और चाहो तो नीचे से भी ले सकते हो, लगभग 13 पॉइंट के एसएल के साथ। रिस्क रिवॉर्ड बस 1:2.5, वही मैंने थोड़ा एक्सटेंड कर रखा है। नीचे यहाँ पर एफईजी भी है ये। ओके ये एक प्लान अगर करना चाह रहे हो ये कर सकते हो। अगर एफईजी ब्रेक हुआ तब एक हायर चांस बनेंगे प्राइस के और ब्रेक होके नीचे जाने के। बाकी फिर नीचे आया तो नीचे एक सपोर्ट लगाया ही हुआ है क्रूड में, दैट इज ऑल्सो अ गुड एरिया फॉर बाइंग। 6000 इस रेंज पे और अच्छा सपोर्ट मिल जाएगा प्राइस को, दैट इज गुड लेवल फॉर बाइंग अगेन। बाकी क्रूड में ध्यान रखना ये मल्टीपल टाइम टेस्टेड लेवल है अभी भी। नेचुरल गैस बाय ऑन सपोर्ट। नेचुरल गैस को देखोगे 15 मिनट टाइम फ्रेम पर जिस लेवल पे अभी ये पहुंचने वाला है, या फिर कह सकते हो कल का जो लो बना है, कल वहां से एक बार प्राइस ऑलरेडी सपोर्ट ले चुका है। ध्यान से अगर ऑब्जर्व करोगे, अगर फिर से यहाँ पर बाइंग का प्लान रखा हुआ है या बाइंग करने की सोच रहे हो, तो जो एसएल बनता है आपका, अगर यहाँ से बाइंग करते हैं, क्योंकि एक बार कल बाइंग आई है, सेकेंड टाइम आएगा यहाँ पर, इतना वीक भी नहीं होगा, ऑब्वियसली है। बट यहाँ पर अगर बाई करना है तो थोड़ा सा 345 के अराउंड, 345 345 पॉइंट समथिंग, मतलब 345 की रेंज में बाई करना। ठीक है, 345 के अराउंड बाई करना, 343 से 345 के बीच में। ठीक है, इसको चाहो तो थोड़ा सा मॉडिफाई भी कर सकते हो, बिकॉज कंफ्यूजन हो जाएगा नहीं तो। बाकी बिल्कुल बाय कर सकते हैं यहाँ से। ठीक है, यहाँ से बाय कर सकते हैं बिल्कुल नेचुरल गैस में। थ्री 43 से 344 के बीच में कहीं पर भी ट्राई कर सकते हो, ऐसा यही रहेगा, लेकिन ध्यान रखना। बाकी फिर प्राइस वापस से पुल बैक देता है, अगर ऐसा भी हो सकता है कि प्राइस पुल बैक दे अपर लेवल से। हाँ, फिर डे हाई भी एक अच्छा रेजिस्टेंस है, वहाँ पर अगर मिलता है तो वहाँ एग्जैक्टली जाना थोड़ा मुश्किल लग रहा है अभी। बट यार जिस तरह से वॉल्यूम डाउन है, कोशिश कर सकते हैं नेचुरल गैस भी। ठीक है, वापस डे हाई पर वहाँ वापस सेल कर सकते हैं बिल्कुल। मॉर्निंग पे एग्जैक्टली आया नहीं तो वहाँ पर वापस वैसे भी कर सकते थे सेल। लाइक में रुकना नहीं है गाइस, जिन लोगों ने लाइक अभी तक नहीं किया है कर सकते हैं फटाफट से। 30 people are watching, only 15 लाइक्स। आधे लोग तो लाइक ही नहीं करते। वो तो स्ट्रीम देख रहे हो, लाइक भी कर दो। नहीं वही है रेजिस्टेंस अभी फिलहाल के लिए नेचुरल गैस में। ये नीचे सपोर्ट यहाँ पर है, यहाँ मिल जाए पहली बार। मॉर्निंग पे था रेजिस्टेंस पर ही, थोड़ा सा रह गया टच करते करते, नहीं तो सेल कर देते। जिन्होंने किया ट्रेल कर सकते हैं, करना चाह रहे हैं तो। बाकी फिर इसके नीचे आप नेक्स्ट सपोर्ट देखोगे, अगर प्राइस को होल्ड नहीं कर पाता इन एनी केस, तो फिर नीचे हम 334 के अराउंड देखेंगे नेक्स्ट लेवल। ठीक है, सपोर्ट पास पास में है, बिल्कुल है नेचुरल गैस में। चाहो तो कंबाइन भी कर सकते हो, नहीं तो वैसे भी ठीक है। बाकी क्रूड ऑयल का ध्यान रखना, ठीक है। ये रेंज ब्रेक करने के काफ़ी करीब है। एक सेलिंग का ट्रेड लगाया जरूर है, बट एज आई मेंशन अर्लियर, ये 7th टाइम इस लेवल पे आया। ऐसा नहीं कि पहली दूसरी तीसरी बार आ रहा है। दिस टाइम क्रूड ऑयल हिटिंग दिस रेजिस्टेंस 7th टाइम, 7वीं बार हिट कर रहा है। सो देयर इज़ अ वेरी हाई चांसेस कि ब्रेकआउट वैसे लॉजिकली हो जाना चाहिए, तो थोड़ा सा रिस्की साइड पे है सेलिंग। तो थोड़ा क्वांटिटी का ध्यान रखना अगर ले रहे हैं तो सेलिंग में। नहीं तो जैसा मैंने बताया, किसी एक साइड की रेंज निकल जाने तो, या तो ऊपर का या फिर नीचे का। ये रेंज अभी फिलहाल के लिए स्मॉल सी रेंज चल रही है, दोनों साइड फाइट है। किसी एक साइड पर रेंज जब निकल जाएगी तो फिर थोड़ा सा एक अच्छा लेवल हमें मिल जाएगा ट्रेड करने के लिए, विच इज़ मोर बेनिफिशियल एज कम्पेयर टू ट्रेडिंग द स्मॉल रेंज। ठीक है, बाकी सेलिंग में कोई बहुत बड़ा टारगेट भी नहीं है अभी। इन क्रूड ऑयल छोटा सा ही टारगेट है, पुल बैक अगर आ जाता है थोड़ा सा। बाकी छोटा सा ऐसा अगर ट्राई कर रहे हो, नहीं कर रहे हो तो अवॉइड। नेक्स्ट रेजिस्टेंस इसके बिल्कुल पास में ही है, वहाँ से भी ट्राई किया सकता है। उस केस में फिर ये रेंज हम हटा देंगे ऊपर वाली। 6168 के ऊपर अगर कैंडल क्लोज हो जाती है।
I'm extremely excited about the opportunities thrown up by the redefining of supply chains in a multipolar economy.
Hong Kong, particularly innovation and technology, and I love areas such as AI, robotics, green tech, as well as biotech.
You're talking about Putin. I don't think he's going to go back in this world. I've known him for a long time. We've always gotten along well. He considers Zelensky not credible. He's supposed to be making a deal with him, whether you like him or you don't like him. So I wasn't happy with that. But I think he's going to be good. And I certainly wouldn't want to put secondary tariffs on Russia, but if they were put on, it would not be very good for them.
President Trump there speaking to reporters about Russian President Vladimir Putin and his threat of secondary tariffs on buyers of Russian oil. For more, let's bring in Bloomberg senior editor Derek Wallbank. And Derek, it's been a remarkable sort of couple of conversations that we've heard from President Trump, namely in that NBC interview where I think we've had sort of some of the most fiery language yet that we've heard from the president against Russia.
Yeah, I think that's right, Heidi. And look, Donald Trump has been very clear that he wants a deal made between Ukraine and Russia, and he wants a deal for peace, and he wants the fighting to stop now. Now, he's taken a certain amount of flack, particularly from the left, particularly from Europe, particularly from some voices in Ukraine, about how close he has come to Russia in pursuit of this goal. But make no mistake, there is a line there somewhere at which point Russia has to stop a lot of what it was doing, or what has been doing somewhat relentlessly. Now, if you take some of those arguments from those sides and extend them through, what happens in a certain amount of time, only Donald Trump knows how much time, but in a certain amount of time if Russia doesn't actually go forward. And that's one of the things that Trump is starting to lay down a marker on, to suggest that he won't be able to continue unceasingly with allowing Russia to sort of go on and continue without actually coming to a point that it stops aggressions. At the same point, he also mentioned a little bit later in that conversation with reporters aboard Air Force One that he needs to make sure that Zelensky isn't coming out of the mineral resources deal that Trump very much wants to get on there. Had some harsh statements there too if Zelensky were to pull out of that. So it's very much a fluid situation. Trump is saying something like, I'd like to not have to put more sanctions on Russia, but he's very much trying to make clear that he is willing to do so if he doesn't think that Russia at some point in the future, if he comes to the belief that Russia is not playing straight on.
It's interesting he talked about oil sanctions, because this idea of also secondary sanctions related to Venezuela that we heard last week, could it sort of a new popular, economic statecraft tactic or strategy that we're starting to see emerge?
Yeah, this is a tactic that I think everyone needs to sort of wake up to and understand how it works. The idea of secondary sanctions, as the Trump administration has put them out, is to have a sort of tariff-like response that kind of works like sanctions. You could have a tariff response that basically says, we're going to put this amount on top of anything else that exists as a sort of penalty for not doing whatever else may be there, right? So it's additional to anything else that may. Trump is talking about, he's talked about it with Venezuela. He's talking about it in some other contexts as well. This is a tactic that people do need to be aware of and do need to be pricing in terms of the threats. It's not a replacement, but it is additive. And I think that additive is something that bears particular mention.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
Caroline Leavitt has confirmed that it is Wednesday at an event in the Rose Garden.
where President Trump will be announcing reciprocal tariffs. She's actually speaking to the press at the White House right now and is giving us a little bit more detail as to what exactly Wednesday will entail. While not specifically rates or countries, she does say the goal of Wednesday is to announce tariffs country by country, not sectoral tariffs, which she says the president remains committed to, but she said she'll let him be talking about that later.
Well, that answers some of the questions we were asking in our program today. Will they show up with a list of countries? Will there be a massive map behind the president while he's rolling this out, maybe a pointer? Because it's going to take some time.
Yep.
We're talking about potentially hundreds of different levies based on what countries are tariffing the United States. We'll offer specifics, she says in the announcement. 64 degrees and cloudy, producer James says, for Wednesday in Washington, D.C. So class will be outside for Liberation Day.
Yeah, in the Rose Garden, Liberation Day, of course, what the president is talking about. But one of our remaining questions is, does that mean Wednesday is the actual day of implementation or the day after, as is the case, we understand, with the collection of auto tariffs? Or is this just an announcement in advance of the collection happening at some point later
Nothing but questions. It's a new week. It's a day that ends in Y.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The sell-off deepens. Global stocks slump for a fourth day ahead of more tariffs this week. Goldman Sachs economists now see more Fed and ECB rate cuts this year. President Trump says he plans to start his reciprocal tariff push with, quote, all countries, tamping down speculation that he could limit the scope of levies set to be unveiled on Wednesday. Plus, Trump threatens secondary tariffs on buyers of Russian oil if Vladimir Putin refuses a ceasefire with Ukraine. He tells NBC News that he's very angry with his Russian counterpart. Good morning, happy Monday. The repricing around the tariff risk then continuing. The tariff story set to dominate the pricing action this week with quote-unquote Liberation Day set for April the 2nd, of course. European futures, after the losses of last week, pointing lower by 0.8%. The idea then, as Mark Cranfield from our MLive team suggesting that you could decouple on European versus US stocks, well, that story has been put to bed at least for now, as he flags in the blog. FTSE 100 futures here in the UK pointing to losses of 0.5%. S&P futures stateside after losses of around 2% on the close on Friday on weaker economic data in terms of consumer sentiment stateside, but also higher prices as well, flagging these stagflation risks now for the world's largest economy. Pointing lower by 0.6%, looking to build on the losses of last week. Nasdaq 100 futures also lower by 225 points. Let's split the board and have a look. Cross asset then has been continued move then into treasuries. That portfolio 60-40 is back in play as a bit of a hedge. Treasuries are there 420 right now. You were at 430 last week on the benchmark 10-year. So yields have been moving lower. Again, on the data story and the tariff risk. 420 right now on the benchmark, yields down close to 5 basis points in today's session. The yen as well in focus for us. A move of 0.5%, 149 right now. Strength coming through for the Japanese currency. That is weighing on the Nikkei, and that index is seeing some bloodletting in the session today. Brent at $73 a barrel, currently down 0.3%. The risks there being elevated around the Trump threats on Putin and Russia. It's the first time really that we've heard the president articulating a negative view towards his Russian counterpart. The gold, fresh record highs right now for the yellow metal, above 3,100 now per troy ounce, up 0.8% in the session today, up more than 18% year to date. So the pain being felt in Asia, and the Nikkei is front and centre in that story. For more, let's bring in Bloomberg MLive strategist Mark Cranfield, who I was quoting before. Mark, what are you seeing across the Asian session? The pain trade is there.
Yeah, it's pretty ugly. And what's making it even more stark is the fact that it's the end of the month, it's the end of the quarter. And it's a day, typically, when equities in Asia, you would expect some kind of a bid for them. There would at least be some of this so-called window dressing, portfolios being shifted around at the end of the period. None of that is happening today. It is just outright selling from all quarters. So any of these themes, as you were saying about European stocks may have to wait. It's a similar story for China. the China tech story has been building pace since the DeepSeek revelations a couple of months ago. People are getting more confident. They see more stimulus coming in China as well. And yet those stocks are getting hit today as well. There is really nowhere to hide at all. People are just shedding risk. They want to get to the sidelines. Even the normal places where you would think the US dollar might have a bit of a haven bid by now. Not the case. Not only is dollar yen lower, we see the dollar mostly weaker against most G10 currencies. Gold seems that the only thing that people seem to agree on as a proper hedge is gold. That is the one place where people seem to agree on that. US Treasuries, the curve is also shifting around, that yields are lower, but there's certainly a risk here that we actually go back to the inversion that we had back at the end of the pandemic period, because people are talking about stagflation. The Fed, if it comes, they may be a bit slow to recognize it. That's not going to be good for the long end of the Treasury market as well. It's a very confused picture. And when you get a situation like that and people expecting more bad news to come in the next couple of days, they just want to play defense. So wherever it is, people are just shedding risk. There's nowhere to go.
OK, M-Line strategist Mark Cranfield, thank you very much indeed on the significant de-risking, of course, that we are seeing across the equity markets, with some upside coming through, as he mentioned, on gold and treasuries. But for how long is the question. Now, Trump's tariff threats have hit risk sentiment, as we've, of course, been discussing, and has been illustrated by Mark Cranfield. Let's get more in terms of the broader market reaction. Bloomberg's Valerie Teitel with the analysis. Val, what are you seeing?
Tom, the interesting thing this morning is just how close the S&P 500 futures are getting to taking out the year-to-date lows, which we hit back on March 13th. We're now then less than 1% away in S&P E-minis from those lows. Risk is definitely on a back foot as we head into a busy week of tariff announcements. I'll echo what Mark Cranfield has been saying, is it's just de-risking across the board. Let's flip on and check cross-asset, because I do want to note there are some things that are standing out to me as being quite odd. Yes, we're seeing risk off when it comes to S&P futures. We're seeing a bid into the Treasury market. That's pretty clear. What's not clear is why the U.S. dollar isn't rallying off the back of this. This is now the second session in a row where we have a weaker dollar in the face of an equity market sell-off, which is not common. Instead, we're seeing this bid into gold. Gold hitting another record high, up nearly 1% on the session just a few minutes ago. 3,100 is where we trade there on gold. But I do want to talk about the Treasury market again, Tom. We're seeing a bid into the belly. That's the 5 to 7 year sector. We've heard from Morgan Stanley over the weekend. They're positioning their clients to be outright long in the belly ahead of this week. We also heard from Goldman Sachs, who is upping their calls for Fed cuts this year on a weaker U.S. economy, and the Fed having to cut into that. They are now positioning for 3 cuts from the Fed instead of 2 for the remainder of this year. But it is very interesting to see that now we're seeing this correlation back in vogue with equities lower and bond yields lower. That's something we haven't seen, Tom, happen in tandem on a quarterly basis since March 2020. So, hey, we're back to the traditional risk-off move when at least comes to the stock and bond correlation. OK, Valerie Teitel on the bid for the belly, not referencing my weekend gluttony, but the Treasury market moves. Val, thank you very much indeed. Now, President Trump, he is dominating the news flow once again, saying he plans to impose so-called reciprocal tariffs on all countries on Wednesday, tamping down speculation that some nations could be spared.
You'd start with all countries, so let's see what happens. There are many countries. I haven't heard a rumor about 15 countries, 10 or 15.
So you're starting with all countries?
Well, essentially, all of the countries that we're talking about. We wouldn't be talking about all countries. That's not a cutoff.
OK, the President, of course, speaking on Air Force One to reporters. Let's bring in Bloomberg's global trade editor, Brendan Murray, joining us from Copenhagen. President Trump talking about he doesn't remember or doesn't have recollection of 10 to 15 countries being targeted. I seem to remember it was him who brought that up. You can correct me if I'm wrong. Where do we stand on the latest as we build up to April the 2nd then, Brendan?
Yeah, so this is just the latest in a series of mixed messages that we're getting from the administration about how broadly these tariffs are going to hit American trading partners. It was Treasury Secretary Scott Bessent who described the quote unquote dirty 15 countries. Those would be the 15 countries, the largest U.S. trading partners that account for about 80% of all U.S. imports. So the president saying the reciprocal tariffs are going to hit all countries, kind of harks back to the universal tariff idea. So it's just kind of muddying the waters here as and we're only 2-3 days away from the announcement. So it would beg to you would think we need some clarification from the White House about what he's talking about, all countries, and this goes against the messaging we heard from the White House last week that it was going to be a narrower list. We weren't going to be that, the U.S. wasn't going to be that tough on some countries. So a lot of I think this reflects the internal debate basically that's going on inside the White House about how hard or not to go with these tariffs.
OK, and it sounds like that debate then is arguably still fluid as we head up to April the 2nd. Can we make the case that we have more clarity in terms of the rationale, though, Brendan, when it comes to the auto tariffs that, of course, were signed off on last week? We've been hearing from the president on the underpinnings of that policy measure.
Yeah, they've been pretty clear on, relatively speaking, on the auto tariffs. They want cars built in America with American parts, and that it goes against a few decades of the auto industry setting its supply chains across North America and to Europe and Asia. So global supply chains for the auto industry are global, and the administration is saying we want all that made in America, and Americans will buy cars that are made in America. So in some ways, he's kind of tearing up the free trade agreements that the U.S. has with Canada and Mexico and saying, we want all that work to come home. His advisor, Peter Navarro, was out hitting the airwaves over the past few days saying this would create hundreds of thousands of jobs. But, if you look at the past decade or two of American manufacturing, we're talking about 5 million jobs that have disappeared. So a couple 100,000 wouldn't seem to make a huge dent in restoring, American manufacturing to the golden age that they think they can return it to.
OK, Bloomberg's Brendan Murray, who leads our global trade coverage with the latest. Brendan, thank you very much indeed for that update. President Trump, meanwhile, also threatening, quote, secondary tariffs on buyers of Russian oil if Vladimir Putin refuses a ceasefire with Ukraine. But Trump has told reporters on Air Force One that he still trusts the Russian leader.
You're talking about Putin. I don't think he's going to go back in his word. I've known him for a long time. We've always gotten along well. He considers Zelensky not credible. He's supposed to be making a deal with him, whether you like him or you don't like him. So I wasn't happy with that. But I think he's going to be good. And I certainly wouldn't want to put secondary tariffs on Russia. But if they were put on, it would not be very good for them.
OK, this comes after Trump told NBC in an interview that he's, quote, very angry with Putin. Let's bring in Bloomberg's EMEA News Director, Ros Matheson, for the context around this story. What stood out to you in these comments from President Trump, both to NBC and on Air Force One?
Well, as you were saying, first of all, he said he was very angry with Vladimir Putin, and later on he said, no, I trust him, I know him, he's going to do a deal on Ukraine. But what's interesting is a little bit of frustration seeping out into the public domain with the Russian president. You can see in those comments either way. I mean, Donald Trump's not one to shy away from criticising the Ukrainian leader himself, which he's done so repeatedly. But what this seems to be is anything that anyone might say or do that might slow down the process to get a ceasefire in Ukraine or to frustrate it or to interfere with it, he's against, he's concerned about, because he's on a timeline here. I mean, he's been promising before he was elected, after he was elected, he's going to get a very quick ceasefire in Ukraine. So he's on the clock here. I mean, he's been talking about Easter to get this done. And what we're seeing so far is we've got a sort of kind of ceasefire on energy and a sort of kind of ceasefire in the Black Sea, which is just the resumption of the Black Sea grain deal that was already there. So he's not showing a lot of progress so far. And really the tough stuff about what to do with the war on the ground is yet to be even discussed in detail. So this message seems to be, Vladimir Putin, I want you to get this deal, but please don't say anything that might slow this down.
OK, on the sort of kind of progress that's being made in Russia, arguably the US president and the US more generally is paying a price for how President Trump has handled these negotiations, specifically with Volodymyr Zelensky of Ukraine, in terms of feeding into, at least in some areas and some quarters, anti-American sentiment in Europe. And we've started to see the impacts of that. How is that story evolving?
Well, that's right. So it's been a message maybe from Donald Trump, but also from his Vice President, J.D. Vance, very much on European soil some months ago at the Munich Security Conference, laying into Europe, and a consistent message that we've seen also in the signal snafu of late, some of the comments that were perhaps being made off the cuff by officials to each other. Again, Europe is not pulling its weight. Europe's not doing what it needs to, blaming Europe heavily for a lot of things. And so that messaging in Europe is that the US relationship is changing and quickly, and no longer that true transatlantic relationship based on, frankly, trust, but now based on a whole lot of different parameters that are moving very fast. And that's in the economic space, obviously, with tariffs, but also in the security space when it comes to NATO, to mutual defence, to all the concepts around mutual defence. And that's seeping into the public consciousness. And you can see that in some surveys cropping up, and the level of trust in the US is falling. The US as a reliable partner is falling. And you see little movements sprouting up to boycott US products. I mean, they're fairly small for now, but it does show again that, this is having an impact on the public consciousness as well.
OK, Ross Madsen, thank you very much indeed with the update on that front as well. Bloomberg's News EMEA Director, of course. Here's what else to be thinking about, though, through this week, with tariffs, of course, dominating on April the 2nd, on Wednesday. Before we get there, Tuesday, Euro area CPI. So the inflation story around Europe. We've had some data that's come through from France and Germany suggesting that the inflation story is starting to ease closer to that 2% target for the ECB. Those services remain something of a challenge. On Wednesday, it is, of course, tariff day, or quote-unquote liberation day, as President Trump frames it. And on Friday, on the job story, with increasing focus on the labour market of the US, it is the payrolls data, non-farm payrolls out on Friday. That is a big one if you want to get clarity in terms of how the labour market is holding up, with consumer sentiment souring, of course, in the US and prices picking up. Coming up, a $69 billion boost for 4 of China's largest state banks. Why is this injection happening now? And what could the significance be for the world's second largest economy? That's coming up. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Good morning, happy Monday. Some breaking news for you on the deal front, this time focused on Sweden, where a consortium comprising EQT AB, that is, of course, the Swedish investment firm, and First Craft have offered to buy the Swedish financial services firm Fortnox in a deal valued at 44.5 billion Swedish krona. That's about $4.5 billion US dollars. Fortnox is down year to date, that stock, but watch it at the open on the back of this deal. The offering equates to a 38% premium compared to its closing price on Friday. So some deal making in the Swedish financial services space. To China now, where factory activity continued to expand in March ahead of expected US tariffs, of course, that could further strain trade ties. Already 20% tariffs has been added, of course, to exports of Chinese goods into the US market. For more, let's bring in Bloomberg's China economy and government editor Alan Wong with the details. Alan, what does the data tell us then?
The PMI data we got today shows us that in March, China's manufacturing performed better than expected. In fact, growth was at its fastest in about a year. But that picture is only partial because we often see seasonal uptick in March, and the overall picture might be a bit more mixed.
This is happening at the same time, of course, Alan, that we're getting this liquidity injection into 4 main Chinese state lenders. And it's something that Bloomberg has reported on. It's a significant recapitalization. Why is that happening when, at least on most metrics, the capital buffers of these banks seem to be pretty sound? What is the government's rationale for injecting liquidity into these four main lenders?
Yeah, those banks might have a lot of money, in the bank, but they actually have a very tight net interest margin, and their profit pressures are very high. So we knew that China would inject liquidity into those banks since as far back as in September. But it's still good to see that they actually carry it out, because by supporting those banks, they're supporting lending at a time when the economy faces serious headwinds. We know that the Liberation Day is coming, with Trump threatening more tariffs on lots of more countries, including China. So if there are more external resistance, China has to rely on its banks to provide more liquidity into the market. But because of the pressures on profit margins, banks have been limited in how much more lending they could give out.
Alan, thank you. Bloomberg's Alan Wan with the latest in terms of the recapitalisation story of China's lenders, at least four of the largest state-run banks, and of course the latest data suggesting that there is a little bit of improvement, at least around the edges, for this Chinese economy. But for how long? Ahead of those tariffs, of course. Now, some of the stories making the news this Monday. Iran has told President Trump it won't engage in direct negotiations with the US. President Masoud Pezeshkian said Iran's supreme leader responded to Trump's letter earlier this month on possible talks over its nuclear program. He said Iran's response did not rule out indirect communication with the US. In 2018, Trump withdrew the US from an international accord that imposed restrictions on Iran's nuclear enrichment activities in return for sanctions relief. Rescuers in Myanmar are working frantically to find survivors 3 days after the country's biggest earthquake in a century. The military government says around 1,700 people were killed in Friday's massive quake centred near Mandalay, with thousands more injured. A rebel group, the People's Defence Force, says it has declared a ceasefire in quake-hit areas to allow aid to reach victims. Coming up, switching focus, BYD promises a revolution with electric vehicles that can be fully charged in record time. We're going to look at whether this will be enough to convert the remaining EV skeptics. That's coming up. This is Bloomberg.
We're standing next to Desert Rock. It's one of the most unique places. The view, the quietness. Let's go! If you're adventurous or someone who just enjoys a picnic, Red Sea is the destination. Regenerative tourism helps you connect with your values.
I love this area. In the past, the people coexisting with the nation. When the visitors go home, I want them to remember the smile of the people.
Welcome back to Bloomberg Daybreak Europe. Now, earlier this month, Chinese automaker BYD announced it will sell an electric vehicle that can recharge in 5 minutes. Yes, 5 minutes, almost as fast as it takes, of course, to refuel a regular car, if not sometimes faster. But will this be enough, is the question, to convince those EV skeptics to go electric? And, of course, there are still many skeptics across different markets around the world. Bloomberg NEF EV charging analyst Madeleine Brolly joins me now for the details. Madeleine, you have the insights into this industry. How significant is this BYD claim, then, of a 5-minute charge for the industry?
Yes, so BYD have announced that their newest EV platform is going to be capable of charging at up to 1 megawatt of power, which is really an unprecedented jump forward for the passenger vehicle market. That higher peak power is one of the elements facilitating these charging times that are comparable to petrol refueling. And if we compare it to what else is on the market, that's more than 4 times the peak power that a Tesla Model Y can pull. Wow. And in China, even premium trims on something like the Xiaomi SU7, which has been touted for its fast charging capabilities, have a peak power of around 500 kilowatts. So BYD really has crushed its competition on this peak power point. But to charge at that speed, you need to be connected to a charger capable of delivering 1 megawatt of power. And that doesn't exist in the public network at present. So BYD have announced in China they're going to build 4,000 of their megawatt flash charging stations. The first of those are going to be ready as soon as next month, which really highlights the pace at which they're moving with this technology. But that isn't going to touch the sides of China's 3.6 million public chargers that it's already installed and can't necessarily deliver this power. Probably also worth flagging, you need to be plugging in a very low state of charge to pull that megawatt of power and achieve these really super fast charging speeds. And drivers probably won't feel comfortable with that initially, at least. Okay. So there is going to be a discrepancy between what BYD have announced these vehicles are capable of and the reality of what drivers see on the road.
Just briefly, what does it mean for competition with Tesla and GM then?
So this is a step change for EVs. And certainly this technology is much faster than anything else on the market. But in China, EVs are competing on more than just price, more than just charging speed. So price is a big differentiator in China. Drivers are thinking about autonomous features, and this technology isn't going to be available in Europe and the US initially. So automakers do have some breathing room while this filters through. But it certainly raises the question as to what that next generation of EV charging technology looks like.
Okay.
Toyota working on solid state, that role in the future is now brought into question.
Madeline, thank you very much indeed. Bloomberg NEF analyst Madeline Brolly. Plenty more coming up with a focus on the equity rout around tariffs. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The sell-off deepens. Global stocks slump for a fourth day ahead of more tariffs this week. Goldman Sachs economists now see more Fed and ECB rate cuts this year. President Trump says he plans to start his reciprocal tariff push with, quote, all countries, tamping down speculation that he could limit the scope of levies set to be unveiled on Wednesday. Plus, Trump threatens secondary tariffs on buyers of Russian oil if Vladimir Putin refuses a ceasefire with Ukraine. He tells NBC News that he is very angry with his Russian counterpart. Checking the markets then, futures pointing to a challenged equity session once again for these markets. Heavy de-risking that is rippling through the stock markets globally. European markets ended with a week of losses, as did their US counterparts. European futures now pointing low by a full 1 percentage point. Here in the UK, the FTSE 100 pointing low by 54 points, down 0.6%. S&P futures looking at losses of around 0.6 as well, having closed the session on Friday down around 2%. Nasdaq 100 futures off by 218 points. Where to hide then? Let's flip the board and have a look, because treasuries are getting a bid. But for how long does that story continue if inflation is a factor in the US economy? Stagflation risks rising with consumer sentiment soft on Friday and prices higher. So stagflation risks in the US once again coming into focus. Today, though, the US 10-year is bid again at 4.20, yields down 5 basis points. The Japanese yen is rallying up 0.5. That's pressuring Japanese equities. The Nikkei being hammered in the session today. Brent trading at $73 a barrel, down 0.3% in oil, and gold at fresh record highs. The 15th record of the year, up more than 18% year to date in the session today, gaining 0.9% for the yellow metal at $3,111 per troy ounce. Let's get more details and context then on the equity story with the tariff risk front and centre. Equity investors, of course, around the world bracing for the impact of President Trump's so-called reciprocal tariffs on Wednesday. Tim Craighead from Bloomberg Intelligence joins me now with a breakdown. Tim, just take a step back then and walk through the impact, the size and scale of the tariffs that we've seen put in place so far and how the equity markets have been adjusting to that reality.
Yeah, so a couple of things come to mind with this, Tom. Number one, you have to look at Maeva Cousin's work from Bloomberg Economics. It's amazing from the standpoint of putting things into perspective. If we were to see a bump in tariffs, a jump in tariffs, the way that they've been proposed, we're back to where we were in the 1940s. Wow. Think Smoot-Hawley, think other crazy things that we used to think were never to repeat. The key to equities is, as you already have alluded, what's the impact on growth and how does it play through in terms of price and inflation? And, our work suggests that the worst hit of all of this, for all practical purposes, is the U.S., if you were to put all of this through, you're talking upwards of, a 4% hit to GDP in the U.S. You're talking a 2.5% increase in price. Now, we're playing this game with President Trump from the standpoint of what is said versus then what is implemented versus what is then pulled back. We know that that's a meandering road. And the markets right now are, focusing in on what is the risk at hand for Wednesday.
And there are the broad-based tariff threats, and then there are the sector-by-sector specifics. And we do have some specifics now when it comes to the auto sector, with the announcement of 25% last week, and we saw the market reaction to that. What is the Bloomberg intelligence team's current analysis of the impacts of those auto tariffs?
So it's roughly 1.5 million units that are sold from Europe into the U.S. If you look across the major European automakers, that affects something on the order of 8 billion euros in EBITDA. There's a lot at play. Does it shift production to the U.S.? Yes, in some instances, we think it certainly will, but that takes time, and it's roughly 3,500 euros a car to do that from the standpoint of increased pressure. It's an immediate EBITDA impact because you can't pass all this through. You have to eat some of it. Ones at most risk, Porsche, Mercedes, VW, are all at play here.
OK, so those are the firms, those are the European companies at most risk when it comes to the auto sector. What are the sectors that are most vulnerable? Yeah,
think industrials. It's interesting. We've got a big European industrial base. Good news is with the likes of Siemens, Schneider, Atlas Copco, they've shifted production into much more of a localized approach following the supply chain disruptions from COVID. So they've got a big North American base. It's more localized machinery companies, think SKF or Sandvik, that have got more local production that is then exported. Metals, we've seen copper jump through the roof. There's other implications going through the metals market. Agriculture is a big factor, in particular towards U.S. farmers, because so much of what is exported from the U.S. could get curtailed. Good for Brazilian farmers. So there are a variety of different industrial implications. Yeah. I would give a unambiguous plug here to the tariff deep dive report that's up on the Bloomberg terminal at BI Deep. Yeah, worth a read.
Okay, I like that. I like that plug, and it's a reminder of what you get in terms of the extra intel if you subscribe. Tim, thank you very much indeed. Tim Craighead with a breakdown, of course, from Bloomberg Intelligence of the impact so far and the potential additional impact to come through on a sector-by-sector and company-by-company basis as well as a result of these Trump tariffs. Now, UK Prime Minister switching focus briefly, still on the question of the economy, of course, and the broader impact. The Prime Minister here in the UK has held what's been described as productive discussions about an economic prosperity deal on a call with President Trump. It comes ahead of a crunch week, of course, in which the UK government is hoping to carve out exemptions from looming US tariffs. The two leaders also agreed on the need to keep up collective pressure on Russian leader Vladimir Putin. Now, with one trading session left in the quarter, US bank stocks are on track to end their worst 3 months since the 2023 regional banking crisis. It's a different picture for their European counterparts, though, who are ending their best quarter since 2020. So the divergence is there. Here to talk about this transatlantic divergence is Bloomberg's Charlie Wells. Charlie, explain what has driven the split between Europe and the US, something we don't often get to talk about. European banks outperforming their US counterparts.
It's really striking, and we really need to start with Europe because the picture here, as an analyst told us, is just different than it's really been in the past 20 years. You've got M&A activity in the air. You've got very healthy earnings from the previous quarter. We'll see what happens in the quarter ahead. You've got buybacks, but you also have this huge German fiscal event. So you've got a lot of this spending, which is not only boosting banks like Deutsche Bank, but it's also got this issue of helping loan growth, right? So even though the ECB, of course, has been lowering rates, there's this sense that with all of the spending, you could get a little bit more inflation. So that could be healthy for loans. Look at the U.S. side, though. You've got a totally different environment. You have this sort of roller coaster, if you look at that screen there, where you saw share prices kind of shoot up after Trump's election. And then once we get into this part of the year where we've got this tariff uncertainty, you really see those stocks start to careen downward. And that really has a lot to do with uncertainty.
Could the earnings season that kicks off early next month, could that be a check on this narrative?
You know, I think what we've seen with earnings estimates, at least, is that analysts really are not fundamentally changing significantly what they're seeing with some of these estimates, but you've got that share price. And I think one of the issues, too, that we have just seen is less M&A activity. We're finally seeing it kind of just barely exceed where it was at this point last year, but does that continue? Do they give us this outlook of a healthy pipeline?
Okay, Charlie Wells, on the banking stocks, thank you very much. Indeed, divergence between Europe and the US to the upside, of course, for European lenders. We'll see to what extent that theme continues with the earnings story, of course, that Charlie will be across for us as well next month. Now to the politics of France, where the French far-right leader, Marine Le Pen, will find out today whether she will be banned from running for president in 2027 as judges rule on an embezzlement case. Prosecutors are seeking an immediate ban and a 5-year electoral ban for Le Pen, who has denied any wrongdoing. Let's bring in Bloomberg's Caroline Connor in Paris. Caroline, what do we expect then from judges today? That decision coming, in about 20 minutes' time?
It's actually coming about 9 UK time, and we have several scenarios for Marine Le Pen. She, of course, could be acquitted. She could get a suspended sentence, not applicable immediately. She could also get a fine and some jail term that she could potentially serve with an electronic bracelet. But, of course, the worst for her is if the judges order a ban from running for office for the next 5 years, effective immediately. In that case, she would be prevented from running for the next presidential elections in 2027. This is what was requested by the prosecutors back in November 2024 after her trial, as you can see on these pictures. At the time, Le Pen accused the prosecutors of a witch hunt, of interfering with the democratic process. Even the Interior Minister at the time, Gérald Darmanin, said that Le Pen should be fought at the ballot box, not in court. Marine Le Pen is accused, along with 9 former European members of parliament, of embezzling as much as 4.5 million euros of EU funds.
वो रेजिस्टेंस नहीं है, वो रिजेक्शन ही है, ठीक है? That is still rejection. That is not a retest. Like करते रहो guys, don't forget to like the stream. क्रूड ऑयल में बाइंग एट द ब्लू लाइन, वहाँ पर एफईजी है एक्चुअली, इसलिए बनाया वो, देजा एफईजी हियर, इसलिए लगाया हुआ है। बाकी यस ट्राई करेंगे कि यहाँ पर भी बाइंग वापस से, क्योंकि ऊपर का रेजिस्टेंस ब्रेक हो चुका है, तो अब हमारे काम का नहीं है। एक FEG है, ध्यान रखना, that is only FEG. ऊपर का रेजिस्टेंस बाकी ब्रेक हो चुका है, उसको आप कंसिडर नहीं करेंगे. करते रहो गाइस, कम ऑन, 100 लाइक्स का टारगेट रखते हैं. 4:30 हो गया है, 5:30 एक घंटा और है न्यूयॉर्क सेशन की ओपनिंग पे, उसके बाद थोड़ा मोमेंटम और कंटिन्यू होगा.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Karen Moscow.
Karen, we begin with a tariff announcement now just 1 day away. For weeks, President Trump has touted April 2nd as a liberation day for the country. Now, White House Press Secretary Caroline Leavitt says the president will usher it in with an event at the White House Rose Garden tomorrow afternoon.
The president will be announcing a tariff plan that will roll back the unfair trade practices that have been ripping off our country for decades. He's doing this in the best interest of the American worker.
White House spokeswoman Caroline Leavitt says the tariffs will be country-based, and while President Trump is also committed to imposing sector-based duties, those will not be part of tomorrow's event. Leavitt also is not saying how high the tariffs will be or which countries will be hit, but she does say there will not be exemptions at this time. Treasury Secretary Scott Bessent told Fox News the tariff announcement will be held tomorrow at 3 p.m. Wall Street time. We will have complete coverage on Bloomberg Radio and Television and on the Bloomberg Podcasts page on YouTube.
Well, Nathan, while the world awaits the extent of the White House tariffs, reaction is pouring in around the world. European Commission President Ursula von der Leyen spoke earlier this morning in France.
So many Europeans feel utterly disheartened by the announcement from the United States. Let me be clear. Europe did not start this confrontation. We think it is wrong. But my message to you today is that we have everything we need to protect our people and our prosperity.
European Commission President Ursula von der Leyen says the EU is considering a range of retaliatory options, including using its anti-coercion instrument to restrict trade and services and intellectual property rights.
Karen, President Trump is dialing back criticism of Vladimir Putin. That's after he told NBC News over the weekend he might impose secondary tariffs on Russian oil if Putin slow walks a ceasefire deal with Ukraine.
I want to make sure that he follows through, and I think he will. I don't want to go secondary tariffs on his oil, but I think, it's something I would do if I thought he wasn't doing the job.
In Oval Office remarks heard here on Bloomberg, the president accused Ukrainian President Volodymyr Zelensky of trying to change the terms of a minerals deal with the U.S.
I haven't spoken to them yet, but through you I heard that they're now saying, well, I'll only do that deal if we get into NATO or something to that effect.
President Trump says NATO membership was never discussed and Russia would never accept it. Ukraine's proposed changes to the deal do discuss its efforts to join the European Union, as well as a request for more U.S. investment in the country.
Well, Nathan, back here in the U.S., a couple of key elections today. Voters in Wisconsin will decide the balance in the state Supreme Court. Bloomberg's Amy Morris has more from Washington.
There's a lot riding on this race. It can help determine control of the state's high court. That could impact rulings on abortion rights, congressional maps, and shake up control of Congress. It's officially a nonpartisan contest, but the Brennan Center for Justice reports about $81 million from both Republicans and Democrats have been poured into this race, including from Elon Musk, who gave more than $20 million to the contest to back conservative Brad Schimmel. He also gave $1 million checks to two voters, a move Democrats challenged as illegally buying votes. Amy Morris, Bloomberg Radio.
All right, Amy, thank you. And along with that race in Wisconsin, two special elections are being held in Florida today to fill House seats left open by Republicans Matt Gaetz and Mike Waltz. Republican Jimmy Patronis and Democrat Gay Vallimont are running to replace Gaetz in the 1st Congressional District. Patronis received President Trump's endorsement in a crowded 10-candidate primary. Vallimont is a gun control activist who lost to Gaetz in November. In Mike Waltz's 6th District, Republican State Senator Randy Fine is running against Democratic school teacher Josh Weil. Now, President Trump won both these districts in 2024 with about 2/3 of the vote.
Well, Nathan, we turn to a Bloomberg exclusive now. Sources say the U.S. CHIPS Act is in limbo this morning. We get the very latest with Bloomberg's John Tucker. John, good morning.
And good morning, Karen. Sources tell us Commerce Secretary Howard Lutnick could withhold already promised CHIPS Act grants. He wants companies to follow the example of Taiwan Semiconductor Manufacturing, which recently announced it will invest another $100 billion in U.S. plants. At the same time, Lutnick has expressed interest in expanding a separate 25% tax credit, although that would require an act of Congress. President Trump, who's called on Congress to repeal the law, signed an executive order yesterday focused in part on what he says is negotiating much better CHIPS Act deals than the previous administration. In New York, I'm John Tucker, Bloomberg Radio.
John, thanks. Let's turn to markets. Now, futures are mixed as we kick off the second quarter. Wasn't a good start to the year for investors. The NASDAQ 100 plunged 8.3% for its worst quarter in nearly 3 years. Brian Belsky is chief investment strategist at BMO Capital Markets.
We don't know exactly when this is going to stop or change, and it all could change to the positive as well. What we know is the markets have corrected more than 10%, so we are in correction zone. That's what we know. We also know that this is the fastest correction that we've seen in multiple decades, if not ever, especially since 1990. But at the end of the day, I do believe that America has the best companies in the world, and this is the time where you want to start a shopping list because we're seeing some quite exacerbated moves to the downside.
BMO Capital Markets' Brian Belsky, and taking a look at some of those moves on an individual stock basis. Chipmaker NVIDIA saw its shares tumble 28% from a January peak. Broadcom's down 33% from a record in December. Microsoft, Amazon, Alphabet, and Meta Platforms all fell 20% or more from their own records.
Time now for the Bloomberg Sports Update, and we bring in John Stashower. John.
Thanks, Karen. The UConn women are off to another Final Four, 24th in school history. They've gone now to 16 of the last 17, certainly helped by USC not having their injured star Juju Watkins. The Huskies beat the Trojans 78-64. The UConn star Paige Beckers scored 31. Stanford has named former NFL coach Frank Reich as its coach only for next season. Andrew Luck is the Stanford GM, and he played for Reich in Indianapolis. Dodgers beat the Braves 6-1. LA is 6-0. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm Nathan Hager, and this is Bloomberg.
what caffeinated foodstuff is currently suffering a shortage? What company's new AI model is called QWQ-32B? Prada is in talks to buy which luxury fashion brand for $1.6 billion? Think you know the
Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
The shock is an economic policy uncertainty shock, not a liquidity shock as yet. So I think I'm not surprised that the market is swinging around because, we have been used to a lot of liquidity shocks in the past where, markets take stress and it's very quick and sharp. This is more about, where is the economy going to end up in 6 months or 12 months' time. So in that, with that context, our defensive exposures are focused on, firstly, thinking about will this bond and equity correlation story stay, which is like bonds have been doing still quite well versus equities when they come under pressure. A, will that stay if inflation becomes stickier? And then B, what is the role of, for example, precious and gold, for example, downside protection through options, and then defensive stocks in this environment which are away from tariffs and risks around that. I think that's where our focus is. And then diversification is your friend here. So last 2 years, it has been, diversification had a negative risk premium. But it is now coming back that diversification actually in portfolios can be quite useful attribute to have, and I think that stays in place for the next several months.
How much certainty do you have around what you see in European equities at the moment?
Very important question, Guy, in that sense that, firstly, let's start with who is buying Europe firstly. I think that's important. Firstly, Europeans are buying Europe. We have not seen US buying of Euro happen yet, right? So a lot of flow has been Europeans, investors who have been underweighting Europe because of various reasons over the last few years, maximum sucking
they're taking
capital
money out of the States and putting money, they're putting their money back to work in Europe.
And they are now bringing it back. Just to give you a sense of the numbers, UK exposure to US securities as a percentage of GDP is more than 100% now. 125%. For Switzerland. And these numbers used to be 30% 15 years ago. So a lot of capital went to the US, and I think that's domestic capital coming back. But US capital so far has not entered Europe. So that's important in terms of the next leg of demand. If there is a structural shift in the Europe's outlook beds in.
Control and monitoring technology with Vodafone Business IoT enables life-saving medicine to be delivered safely around the world.
Having a secure infrastructure that you can reliably use globally is a key ingredient for our success.
Live from Sydney, this is Insight with me, Heidi Stroudbots, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, President Trump will announce his reciprocal tariff plan on Wednesday, featuring what he calls country-based levies. Markets are on edge as important details on the duties, including rates and targeted countries, still remain a mystery. And Australia remains particularly vulnerable due to its reliance on commodity exports, and the RBA is expected to weigh tariff impacts in its policy decision coming up this hour. And on the business impact, co-founder and CEO of Akamai Technologies, Tom Leighton, joins us. We'll be asking him about the AI and cloud computing push, whether the hype might be dying down. Straight to our top story. President Trump set to announce his latest tariffs on Wednesday. Trump says he will launch reciprocal tariffs on all countries, but promises he will be kind.
They're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind.
bring up Bloomberg East Asia government editor John Herskowitz for his sort of view. So he's saying that they'll be nicer. What do we see as being the economic hit, not knowing what these tariffs look like?
Sure. We don't actually know what he means by being nice. I mean, with these tariffs, everything is to the last minute. There's bargaining going on. What the exact extent of the tariffs will be, how the duration, that's still up in the air. But Bloomberg Economics did a maximalist approach to what could be in store. And the result is something like a 4% hit to U.S. GDP. Also, we'll have price rises, and the damaged output would be something on the equivalent of about $1 trillion. Now, the tariffs are coming, and that's one way we're going to see the hits. But we have the auto tariffs as well. These are likely to add thousands of dollars to the prices of cars. It comes at a time when consumer confidence is waning in the U.S. with the increased prices for big ticket items, and also inputs like steel and aluminum already hit by tariffs. The price increases are likely to come, and it's going to be quite hard for the U.S. economy and economies around the world.
Not knowing, of course, a great deal of the details, are we seeing governments trying to prepare for this?
Yeah, I think governments have been working on this for some time now. We've had some of these sectoral things like steel and aluminum. We have the auto tariffs, which have been announced, and governments for a long time, whether it's friends like Canada, Mexico, the EU, Japan, South Korea, and foes alike, have been trying to measure the responses. We don't know how they will react specifically to the tariffs that are coming out later this week. But there's just a lot of talk that's going on. We've seen high-level meetings with Japan, South Korea, and China over the past few days. These three economies together are just a little bit smaller than the GDP for the U.S. So they're looking at ways that they can help each other. And we're seeing countries like India and Canada, which had a really severe diplomatic row a few months ago, looking to bring some peace to their dispute as they partner up, trying to find a way to work through the tariffs that are going to be coming in the next day or two.
Where do we see the particular vulnerabilities in Asia? Obviously, you can see the sort of preoccupation and fear with auto tariffs for Japan. And I do also wonder if this opens up sort of an opportunity to really change the structural nature of regional trade if we're seeing some of these flows and markets being redirected.
Yeah, I mean, that's one of the things that people are really taking a close look at, whether we're going to see more cooperation between the biggest partners in the biggest economies in the region, Japan, South Korea, and China. What's going to happen with things like steel exports, things which South Korea and China are very strong on, whether there are also curbs on tech exports to China under the Biden administration to restrict China's growth in certain fields like AI, whether some of these may be reworked to help build the chip industries in Japan and South Korea. Just don't know how it's going to shake out, what the partnerships will be, if there'll be more input for regional trade groups, trade agreements. But those things are under consideration. People are readjusting, recalibrating how trade is going to work in their regions and globally because of what's coming up in the next few days.
Bloomberg East Asia government editor John Herskowitz there as we look ahead to what President Trump has been billing as Liberation Day. We're seeing another pretty volatile session here in Asia. These concerns about the looming tariff rollout from President Trump. Avril Hong joins us now for more. And we've seen that sort of pick up following on the gains in Wall Street. But futures suggest that this is not going to be sort of a sustainable rally.
Indeed. I think whatever turnaround you're seeing is also quite unconvincing, given how the region's benchmark just a day ago hit its lowest level since early February. A number of these gauges that you're seeing in the green today were at or near correction territory. It's really that uncertainty as traders scramble to position for the next couple of days. And even though we're seeing some of this data out of China, signs of promise, including on the ties in manufacturing, a pickup that we're was better than expected, our Bloomberg economics team have already highlighted that this is attributed to seasonal factors. So really not a lot of optimism to go around despite the picture in equities. And flip the board, just to give you a further sense of what we're seeing in U.S. stocks as these futures point lower. If we can take a look at this chart, it will show you as well versus global peers. In the last quarter, it was actually its worst performance since the year 2009. So really not a lot of optimism to go around. Flip the board again. And for further context, amid this risk off, we've been seeing treasuries catch a bit of a safe haven bid. The 10-year now, I think, is holding fairly steady at 4.2. What's interesting as well is, as some of our colleagues on the MLive team have been highlighting, when you consider that versus the Australian bonds, Aussie bonds look relatively cheap to their US peers. I think the cheapest level since the month of November. So maybe hoping out for the RBA to kind of signal a wider door, a path to a rate cut come the month of May. But for now, this is what we're seeing in the Treasury space. Heidi.
Avril, there. Let's take a look further when it comes to these market implications with Howard Chung-Wan, who's a head of Asia Fixed Income at Principal Asset Management. As you point out, these tariffs have kicked in earlier than expected, and in a lot of respects might be steeper than expected too. So, are we seeing sort of the correct reaction at this point when it comes to how investors are passing the implications over the next few years?
Hi. Good morning, Heidi. So I think if we take a step back and we see the type of moves that we're seeing, right, it shouldn't be surprising how hard we're started on, how fast they've kind of gotten on to this. I think that maximalist approach, I think it's very fair. But if we take first principles first, when Besson started on how the administration thought about tariffs. Number one, to take away unfair practices, to increase leverage on negotiations, and to kind of gain revenues. So in our point of view, there could be quite a bit of negotiation that's going to be on the cards. So while we're expecting a Liberation Day tomorrow or on Thursday in Asia time, I think it will be less of an announcement effect, and it will probably be a bit more drawn out as markets try to decipher kind of what happens between the countries.
When it comes to this bid that we've seen for treasuries, and there's obviously been the standout haven bid, that's pulled back a little bit in just the last day or so. Does that theme still continue, though?
Well, I think that there's a function of push and pull, right? Underlying it, I think there is this growth risk that the market is thinking of within the U.S. So just bear in mind, tariffs is definitely negative for sentiment. It's negative. It's literally a tax on consumer. There's no doubt about it. But is it the only reason that can tip the U.S. into a recession? I think it can be a trigger, but it's not entirely so. We've seen forecasts in the U.S. We're kind of drop within the trend area 2 to 2.5. We're dropping it probably 0.5 to 2%. This is within the shooting zone of a potential recession, but not quite yet a recession, and that's what the market is pricing in. And if you ask us, where the Fed's head is, it's going to be reactive. It's going to be behind the curve. It wants to wait what happens with this impact, with this negotiation when the tariffs are actually announced to see what it can do. But down to it, I think it's going to protect the downside. It's going to look at the growth as its focus.
So do you think treasuries and bonds more broadly is going to continue outperforming equities?
Yeah, I think at this stage, if you think about risk assets as a whole, right? Tomorrow we might potentially see a relief rally as we kind of get into it, right? The announcement effect. But when you kind of get that bounce, I think we are more likely to think about sell into the bounce, sell into the risk on if we get a slight few days of stabilization. Because at the end of the day, the markets have that risk. Valuations are still kind of where it is. I think there is still more potential downside in risk. On the bond side of things, We think that, yes, tariffs can be a big risk for the U.S. economy, but underlying growth is already slowing in the U.S. And that keeps us on check on wanting to stay long duration. We like levels as it is. We think the Fed will probably have to do more. We're happy with kind of where the Fed cut is at 3, and that's where we've been pretty much the start of the year.
How do you feel about emerging market credit at this point, then?
I think the thing about tariffs is that there is a different impact between what happens in the U.S. and sort of the rest of the world. Within the U.S., you're going to have the worries about stagflation, clearly. I mean, you're worried about lower growth, higher import prices. That feeds into inflation and what it means for the Fed. But for the rest of the world, very much the focus is on growth. It leaves many of the central banks globally with some room, and they believe that they can ease as long as the dollar kind of stays. It's not going to be an issue, and we're kind of seeing that as the dollar kind of move lower with U.S. risk assets. So it's going to mean more room for central banks globally to ease within the emerging market space. We like local duration, for example. Maybe some of these countries you might want to think about FX hedge positions, but local duration is where we kind of like it. We'll fund intra FX within the region rather than to think across region against the dollar, because it's highly unpredictable how the tariffs are going to pan out. And as a whole, where yields are, dollar yields where they are, we very much still like credit where it is. It's still a very attractive level for income.
What about opportunities in China?
China, I think it's coming from a level where, you know, in the bond market space, both in offshore and onshore, offshore has been pretty tight. I think the high yield space still offers some opportunities. It's a place that a lot of the markets have neglected. You can see some of these new deals that have come out, they've done pretty well. I still feel there's some room to go there relative to other parts of the high yield market. Onshore, I think there's going to be that weight where the market feels a bit better about the reflation story in China. Of course, largely dependent on how hard tariffs are going to hit. But if there is a rise in onshore yields, I think that's the market that you want to buy into. Because longer term, China needs lower rates to kind of move on with the deleveraging story that we have in China that's ongoing.
Yeah, it's interesting that the deleveraging story has sort of come back into the fore, right? Have you been encouraged or optimistic about some of the policy side decisions that have been taken? I think China is clearly moving in his white arc of policy circle, right? It takes a time to kind of move in how it thinks about policy, but it has gotten around to it that growth is going to be very important, especially important in the context of how well the external front has done for China over the past year in 2024, and now it's under threat given what we're going to face tomorrow, right? And what that means is that the focus on the domestic economy is going to increase, right? And this move towards working together with the private sector, engaging the private sector, as we see, and it's not only the domestic business leaders that they have been focused on. Last week, we had international business leaders come to China, and that keenness in trying to engage and make China a place to be again, because they know FDI has been an issue, and that is something China is very focused on. And it cannot be more stark between what we are seeing in China, wanting to be open for business, versus what we are seeing in the US, right? And that stark contrast tells you China is very focused on wanting to get growth back. But in the structural term, issues around property, around the local government sector, vis-a-vis the central government in terms of the mix of revenues and taxes, these are some of the issues that will still take time to resolve. But on first look, if you look at it, it is a stark contrast from what we see in US versus China. Really great to have you with us, Howie Chung Wang, who's from Principal Asset Management there. Morgan Stanley's chief US equity strategist thinks investors should brace for even more disruption from the White House. Mike Wilson told us that President Trump's policy changes so far have all been growth negative.
everybody's looking for like a final piece here. This is gonna take time, you know, and not unlike a lot of the other policies that have come out this year. Like this is what we kind of signed up for, right? I don't think that what the president has done has really been surprising. All of the policy changes so far have been growth negative, and that, you know, we've likened this to a new CEO coming in, right? They want to restructure the company. They're restructuring the company. They're going to kitchen sink it, and then they're going to try to make, you know, their plan work for next year. So this is going to take some time, and you know this level that we're at now is critical from a market standpoint, not so much from the administration standpoint. I think that's also something to acknowledge.
It's also very on brand for Trump to take a maximalist approach in the very beginning. But how messy could it be if he comes in with this maximalist, aggressive approach, and then we have retaliation from trading partners? Well, look, it's the NAFTA. So, like, you know, it's the best alternative to a negotiated agreement, and the BATNA, and that is classic negotiating tactic. You come in and way over here to the right with the hope of kind of settling in the middle. So I don't think that's unusual either. The response from trade partners is that means they're engaging. Okay, so that's how you get people to engage in your discussion. You come out with a big splash. They have to come to the table and negotiations begin. We're not even at the table yet. Okay, so that's why this is going to be very uncertain for a period of time. I think some countries think that they are at the table because they sent a few representatives here the past few weeks, but I agree with you. It really hasn't started. So what do you do if you're an investor? Well, you've done what we've sort of done. You avoid the areas that are going to be most affected. Consumer discretionary goods, and that area has been hit the hardest, so maybe that's getting a little bit extreme. I would say, you know, defensively positioned, high quality, that's been our core portfolio. Now, we've made some trading calls lately that would have gone against that. Some of those worked, some of those didn't work. But I think at this point, you want to be up the quality curve. You want to be in businesses that can kind of mitigate some of these concerns. You have pricing power. You have the ability to kind of move production around. You can take inventory on to kind of buffer this for 60 or 90 days, which we've seen all of those mitigation strategies, something we wrote about in our note today. So those are the kind of companies we want to own in this period of time. I do believe there will be a clearing event at some point this year, but we're not there yet.
That was a Morgan Stanley chief U.S. equity strategist Mike Wilson there speaking with Bloomberg Surveillance. Still ahead this hour, we'll break the RBA's rate decision for you, get the outlook from ANZ. Plus, Akamai Technologies co-founder and CEO Tom Leaton joins us for some exclusive insights into the AI frenzy. Much more ahead. Welcome back. You're watching Insight. Take a look at some of the stories that we're watching this hour. And Bloomberg's learnt that Commerce Secretary Howard Lutnick could withhold promised CHIPS Act grants as he pushes companies to expand their U.S. projects. Sources say Lutnick's goal is to generate tens of billions of additional investment without increasing the size of federal grants. He wants other chip makers to follow TSMC, which recently announced a new $100 billion investment in U.S. plants. The Trump administration is sanctioning 6 Chinese and Hong Kong officials, including the city's Justice Secretary and Police Commissioner. The State Department says the move is over the city's Beijing-imposed national security law and what it calls transnational repression of individuals in the U.S. The Hong Kong government has responded, saying the sanctions expose U.S. barbarity and it won't be intimidated by what it calls despicable behaviour. Well, geopolitical tensions are driving a lot of interest into New Zealand's revamped Golden Visa program. The country's immigration minister told Bloomberg that the visa is attracting red-hot interest from the wealthy in Europe and in the US.
There's certainly been really strong interest from the American market. We had a number of investors who were down here taking a look at New Zealand a couple of months ago, and I spent time with them and they were really excited. And these are exactly the kind of people that we are trying to attract to New Zealand by saying, hey, we're open to the world. They have incredible skill, incredible connections, a huge amount of enthusiasm to help take New Zealand businesses to the world. I mean, we have some amazing startups here in New Zealand and some great local businesses that investors are really interested in helping out. And so that American market has been very, very interested. And I know many of our immigration lawyers and agents have been up in the US in the last couple of weeks. And their feedback to me was that red hot comment that the American market is red hot and very interested in coming to New Zealand.
How do you get the sense that we're seeing these flows into New Zealand perhaps in the future, given this moment in history right now, more geopolitical tensions around the world? Is it the type of immigrants that are trying to come to New Zealand? Is it the type of visas that they're seeking?
Look, you're right about the instability in the world at the moment. There are a lot of people around the world, especially up in Europe and in America and in Asia as well, who are looking for a country that is politically stable, that has incredible people, an abundance of natural resources, and businesses that are worthy of investing in, but also a place that is really safe and secure. But also I would add, still smack bang in the middle of the Asia-Pacific region, and so very connected to the world, but in a really stable part of the world. And so I think that's part of the attraction. But, it's not only that uncertainty around the world, it's also that migrant investors are looking for opportunities. And we have huge opportunities here in New Zealand. I mean, we are the home of Rocket Lab, for example, the second largest company in the world that launches rockets into space. We have amazingly talented people, a can-do attitude, and I think investors are looking for that as well.
Have you sort of done modelling around the short-term and longer-term economic boost that you could see as a result of this program?
We have, and we've certainly looked to the past of what happened in the past. We have tweaked the visa slightly. We are making sure that the settings are such that they are making sure that investors are really looking to that more high risk, directly investing into businesses and managed funds, more so than bonds and equities. So in the past, we did have a lot of people coming in and investing in more passive investments. The way that we've set up this new visa really is to encourage people to come and invest, as I say, directly into those Kiwi startups, Kiwi businesses, but also into managed funds as well. And of course, that has a greater level of impact. So the modelling we've done around the impact of that it has been really important. But it's interesting that the feedback we've had, again, it's just anecdotal because we haven't looked at the applications we've had in yet today. It's only day one. But the anecdotal feedback has been that investors are more interested in that higher risk category, which is much more beneficial for New Zealand. And that's why we set up the visa in such a way that it is a lot more attractive. So you don't have to spend as much time in country in order to get your permanent residence if you're going in via the higher risk. And it is also a lower amount of money as well. So we are initially seeing that there is a lot more interest in that sort of higher risk end, which has a greater benefit to New Zealand.
New Zealand Immigration Minister Erica Stanford speaking to us a little bit earlier. Well, coming up just minutes away, Australia's central bank looks set to hold its key rate, but we'll bring you that RBA decision when it crosses the Bloomberg. This is Bloomberg. Take a look at how we're tracking when it comes to risk assets in Australia. We're just less than a minute away from that RBA decision. We're not expecting any change in that policy stance today, but pretty buoyant day, 0.8% higher. We're seeing pretty much every sector across the board, that leadership across property stocks, utilities, energy, with crude also holding onto the bulk of the gains as well. But of course, we feel a sense of tenuousness when it comes to this recovery rally today. We are getting the RBA decision today, setting that cash rate, leaving it on hold, the cash rate target at 4.1% as expected. And the RBA board is saying that we rely on data and the assessment of risk. They're leaving that unchanged at 4.1% as predicted, certainly here at Bloomberg. The view is certainly that by May we could get a firming of the broader picture, particularly when it comes to some key inflation data, as well as to see how the most recent budget announcement, the tax cuts, as well as potential election cycle spending could play into that inflation picture as well. But at the moment, they're saying that the monetary policy remains restrictive. Underlying inflation is moderating, but the board is cautious about the outlook. They'll be relying on these evolving risks and data points to guide further decision making. What's really been interesting, of course, is some of the data that we've had across the labour market. They acknowledge that that remains tight despite the declines that we saw in February, and they are cautious on the inflation outlook. So as we continue to get that statement trickling in, I want to bring in Adelaide Timbrell, who's a senior economist at ANZ. Adelaide, really great to have you with us. And I thought one of the interesting things that we heard from from Governor Bullock back in February was really pushing against this idea that this is going to be, a typically deep easing cycle. The market hasn't really heeded to that in terms of expectations. Do we expect to see that sentiment kind of being pushed through again in the communications today?
Yes, so, widely expected hold, which is what has occurred. The board did say that monetary policy remains restrictive, which I think gives us some opening to more easing. The ANZ research view is that there will only be one more rate cut at this stage. But when the board says it's cautious about the outlook, as it did in the post-meeting statement, that's basically saying, oh, look, it's not necessary that May is going to be a rate cut. They're still very much trying to highlight that they are data dependent. They've also spoken more about the potential impacts of US trade policy on confidence globally and therefore Australian growth. So talking more about geopolitical uncertainties and announcements from the United States on tariffs, which they have in their post-meeting statement, does create a little bit more dovishness in the overall statement, but they're still remaining very cautious about the outlook and talking about risks on both sides. So welcome data on the inflation front and the domestic side, but not so much globally.
I mean, you mentioned both sides, right, saying inflation could move in either direction, that the tariff announcements are impacting global confidence. And I guess this is a situation where they're facing uncertainties both domestically, but also these external challenges as well. What do you think is going to be sort of the harder force for the RBA to have to deal with, given that some of these themes are clearly plaguing global central banks more broadly?
Look, I think the more difficult themes at the moment for the Reserve Bank is that global piece. Domestically, we are seeing some pretty encouraging data. This inflation is continuing. Consumer spending is rising, but not to a concerning level. And wage pressures, as they say in their post-meeting statement, have eased a little more than expected. On the domestic side, the risks are around, from the Reserve Bank's view, productivity growth and unit labour costs, whereas the risks around the global piece, those what tariffs will do to global confidence as well as those geopolitical uncertainties, they're going to be a lot more difficult and more nuanced to quantify in how they reach Australia, particularly because things like tariffs that could reach Australia in a price way and in a growth way. Now, we think at ANZ and the Reserve Bank seem to be on the same page that growth is probably the bigger risk in Australia and how that's affected by tariffs rather than prices. And that's through the impact of trade policy globally on confidence globally, which hits the Australian dollar, as well as on domestic business conditions.
Adelaide, on the issue of tariffs and this relationship with the US, we did hear from the former Prime Minister Malcolm Turnbull, who, of course, even our programming has been pretty honest about his views on the Trump administration. Take a listen to what he said today.
But my plea to Australian politicians is get off your knees and stand up for Australia. Be as transactional with America as it is with us. And remember, in the imperial capital, they always regard deference as their due. Trying to get into a race of who can do the most sucking up, particularly with Mr. Trump, as I know from direct experience, is not the way to advance your interests or your nation's interests.
Malcolm says that the former PM says that we should be as transactional with the US, not to disregard the alliance, but it should be of a transactional nature. Do you think that's sort of an approach that the leadership should take at this point, regardless of who that leadership is after the election, that gets the best sort of trade outcomes for Australia?
My role is not to take a policy stance. My role is to provide as much information as I can on the economic outlook. So I can't make a comment on what the government should or should not do. What I can say is, for us, when we look at the economic outlook in regards to the US and in regards to tariffs, we're looking more through the impacts on major trading partners rather than any direct tariffs that impact Australia. There's, of course, not a specific Australia tariff at this stage, and I don't consider that to be particularly likely. But there are some, steel and aluminium tariffs, for example, which are global. That's only 0.2% of Australia's goods exports is steel and aluminium to the US. So on a macroeconomic basis, when we think about those direct impacts of trade policy, they're less likely to be important to the Australian economy as the indirect impacts that not just trade policy, but I think that broader geopolitical uncertainty we're seeing, the more that bleeds into domestic business conditions, the more we're going to see a downgrade on growth.
And I think you've spoken about confidence a couple of times in kind of the way that the transmission of trade uncertainty sort of plays out, right? How much permanence do you assign to a deterioration in confidence, in the same way as how much permanence do you kind of see in potentially the breaking down of conventional trade structures and how Australian businesses and policy might be looking at, you know, different trading partners and diverting some of these flows and investments elsewhere?
Look, I think global trade, what we've seen over the last few years is that the global trading does have a pretty incredible ability to find ways to succeed. So I wouldn't consider a permanent drop in business confidence off the back of this uncertainty. I think while we're in this period of transition, while we're seeing trade policy and geopolitical uncertainty evolve in a rapid way, that is something that could downgrade confidence. But I think that will be through the transition period that we see confidence downgraded. Once things settle, business confidence and consumer confidence tends to come right back up again. And consumer confidence in Australia has actually been rising because the domestic fundamentals in the Australian economy are all improving. And in many ways, we actually have a very healthy economy. We've got a very low unemployment rate. We've got anchored consumer inflation expectations. We've got trimmed mean inflation over the 6 months to Q4 2024 in the band, in the Reserve Bank's target band of 2 to 3%. A lot of things in the domestic economy are really characterised by stability. And so we have that to offset some of the potential negative impacts of trade tensions potentially escalating due to some tariff activity elsewhere in the world.
I wanted to also touch on property prices and just sort of the heat that we're starting to see return to the property sector, if it ever left, I guess, but certainly prices that we saw in the latest numbers reaching a fresh high ahead of the election. Do you think this has just been kind of the confidence signalling from the one move from the RBA? Do you expect that to sort of persist?
I think that it would be part of it, that the Reserve Bank has moved rates down, and that provided some confidence to prospective buyers about their mortgage payments. I'd also say that the average downturn of Australian housing property is around the 9 to 10 month range, and that's what we saw for some of those major capital cities. So I think it's also just the end of a pretty average length of a downturn in prices. Housing demand in Australia has exceeded housing supply nationally, and that is something that's going to, all else equal, put upward pressure on prices. So that upward pressure is just coming back a little bit in cities where there was some downward pressure before that. We have strong population growth in Australia that has not at the moment been met by a similar level of strength in construction. We have some construction capacity constraints. All of these things together with a Reserve Bank cut, with wage growth now growing faster than inflation, with tax cuts from the middle of last year and proposed tax cuts for next year, all of these things really help. Probably not just one factor, it's really a mix of a lot of factors.
Adelaide, really great to have you with us. Adelaide Timbrough, who's a senior economist at ANZ. We do have some breaking news just crossing the Bloomberg when it comes to SoftBank spending. They're seeking a record $16.5 billion loan for AI projects in the US. They're looking for this loan to fund these AI investments in the US market. A bridge loan is under discussion with a tenor of about 12 months, and talks with banks, we understand, are in early stages. It could help SoftBank lead a $40 billion funding round in OpenAI. That would, of course, give that $300 billion valuation to OpenAI. We're hearing that this would be the tech investor's largest ever facility denominated solely in US dollars. This is very sort of early stage financing negotiations, but it's really looking at ways to roll out that $500 billion AI infrastructure project in the United States. SoftBank, of course, also at the same time pursuing pretty ambitious projects in both robotics and semiconductors. They've been teaming up with the likes of OpenAI, Oracle Corp, also Abu Dhabi's MGX on the Stargate AI venture, but SoftBank really remaining the main financier for the data center build-out that is promised President Trump. So we could see that being this kind of a major linchpin when it comes to the $40 billion funding round in OpenAI. The previous SoftBank dollar record, for reference, was a $10 billion margin loan back in 2021 that was backed by its shares in Alibaba. Well, coming up next on Insight, our exclusive interview with Akamai's co-founder and CEO, Tom Leighton. We'll be talking about their cloud computing ambitions next.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
Is the TikTok deal, negotiations now, tied to a bigger tariff deal with China?
No, but it could be. I mean, I've used tariffs for lots of different reasons, but I could see, 1 point in tariffs with China, a big country, would be probably worth more than all of TikTok, as valuable as TikTok is. It's big stuff. So there's a great example. That's a great question, actually. I'm a very flexible person. I could use that for that.
President Trump, they're saying it's possible he would counter tariff relief for China in return for its support for a sale of TikTok's U.S. operations. Trump has also said he remains confident that he can find a buyer for TikTok's U.S. business ahead of the Saturday deadline. U.S. tech companies that do business with TikTok are awaiting clarity too on the future of the short video app. Joining us exclusively now is Tom Leighton, who's a co-founder and CEO of Akamai Technologies, which helps TikTok with its content delivery network. It recently revealed that ByteDance is among its largest customers, making up a reported 6% of total revenue. Tom, really great to have you with us. And, I am curious sort of what sort of position you guys are in as you wait for any kind of decision or deal that may or may not come on TikTok, and how that positions your business with all of that uncertainty.
Well, I think we're all looking forward to some kind of qualified divestiture so that TikTok can remain operating in the U.S. and comply with the law.
Is it then, if a deal does go through, just business as usual for you guys?
Well, that would be the goal, that something takes place that satisfies the law of a qualified divestiture, and then operations would continue as normal.
That's the best case scenario for businesses that are sort of entangled in this, right? But I guess, are you gaming out some of the worst case scenarios? What are the legal ramifications potentially if, for your business, if a deal isn't reached by that deadline?
Well, there's a variety of possible outcomes, including an extension. There's more time potentially left that could be made available, and so of course we're prepared for whatever the outcome may be. But we're optimistic that there will be some kind of favorable outcome. I think a lot of people would like to see TikTok remain operating in the U.S.
At the same time, you're exiting the CDN business in China as well, right? Can you talk to us about some of the sort of unique pressures for that market? And, will you have some sort of presence still in the Chinese market through the security business, for example?
Yes, we have large operations for Chinese customers with their global business. So serving Chinese companies that are doing their business, all around the world, and we help them with their delivery, their security, and increasingly their cloud computing. We are going forward working on doing delivery inside of China through our Chinese partners, so that our customers will be able to experience uninterrupted services in China, as we make that transition.
When do you see the pressure when it comes to the core content delivery business start to ease, and what's been sort of driving the pressure in that area?
Well, hopefully we're starting to see it ease now. In the past, there's been several competitors that were selling delivery services below their cost. And, of course, that's not sustainable long term. And I think you've seen over the last couple of years several of the major CDN companies have gone broke or gone out of business. In some cases, we ended up taking and picking up some of the customers of those CDNs. Going forward, I hope to see a little bit more rationality in that marketplace. We're seeing traffic growth pick up a little bit, this year, which is a good sign. So, our goal is over time to really stabilize that business. Of course, we're very careful with our pricing. It's very important for us to make sure that's a very profitable business for us. And we're taking a lot of the proceeds and the cash we generate to invest it in new security capabilities and into our very fast-growing cloud computing business.
The security business has also, which, in addition to picking up the slack from what we've just been talking about, has also been slowing a little bit as well. Do you see that momentum sort of picking up, or what are the structural drivers of that part of the business?
I think our security business is very strong. It's the majority of our revenue, over $2 billion a year. We have market-leading capabilities in stopping DDoS attacks, stopping application layer attacks, protecting user accounts at financial institutions, commerce sites, and so forth. More recently, the leading solutions to provide API security, really important today, and also segmentation services to stop ransomware and data exfiltration attacks. And as we talked about on our recent call with analysts, we're looking forward to double-digit growth in our security business, this year and for the next several years. So I think security is a very strong business for Akamai.
You're coming to us from Singapore, of course, on a broader Asia trip. What are the markets that you're most sort of keenly focused on, and what are you doing in region? What are the priorities?
We're extensively deployed throughout the region. We have 700 points of presence in 200 cities throughout Asia, Pacific, and Japan. We service customers in every major country with our services for delivery, security, and compute. In fact, I would say our customers in this region are among the world's leaders in adopting our new compute services, where we're seeing really excellent growth.
What are, in terms of sort of geographic focus, do you have priorities in the Asian region? Where are you seeing the strongest growth?
We're seeing pretty strong growth throughout Asia, Pacific, and Japan. Japan's our second largest market after the U.S. China, a very large market, and we have some very large customers there, leaders in using our compute services, all the way through Southeast Asia, led by Singapore, and of course ANZ. So it's really strong across the board and our fastest growing geography in the world as a whole.
What does Akamai offer when it comes to the cloud computing business versus, say, Amazon or Microsoft or Google? What's the differentiator here that you see for your business?
Yeah, great question. We offer the same kinds of services as the hyperscalers. Where we differentiate is better performance. And partly we get that because we can support compute instances, support containers in all of our locations. And today we're in 4,000 points of presence globally in over 700 cities. And so by bringing the compute instances, the AI inferencing, closer to the end users, that makes the performance better. The latency is less. The interactions are faster, and that's generally very good for business. And because we have such great experience in moving content around and a great infrastructure for that, our costs are lower. And so we can go to an enterprise and offer better performance because of our better, more distributed platform at a lower price point. And today, pricing is really important when it comes to cloud computing. A lot of major enterprises are seeing their bills rise pretty dramatically. And with Akamai, that doesn't have to happen. Also with Akamai, we don't compete with our customers. And many of our customers find themselves writing very large checks to, in some cases, their leading competitor.
How much confidence do you have as a U.S. company with these operations and growth opportunities in Asia at the moment? Do you think the geopolitical volatility, the Trump administration's policies towards the rest of the world complicate your business outlook?
Well, there are geopolitical tensions, in probably pretty much every geography today, and that's always a complication. Often they're associated with cyber attacks, and given that we have the leading solutions to stop the cyber attacks and defend against them, in some ways that can be a tailwind for our business. But of course, like everybody, we'd like to see an environment where the geopolitical tensions are eased, because I think in general it's better for business without those tensions.
Better for confidence is, I suppose the other concern. But what sort of, I guess, diversifying strategies are you trying to use to be able to at least navigate, the impact of some of that uncertainty?
Well, we're a very global company. We have employees all around the world. We buy our, raw materials, our server components from companies all around the world. And we're always looking to have diverse, supply chains and to minimize, cost or, impact of tariffs or other kinds of changes. So, we're working to do that, and we're in a good position because we are very global in all of our operations and our people and our suppliers.
Tom, really great to have you with us. Tom Leighton, co-founder and CEO at Akamai Technologies. And of course, the forefront for investors globally is really what we're going to get on April 2nd with this reciprocal tariff announcement from the Trump administration. And at the moment, we're seeing a little bit of that recovery rally play out, given just the steepness of the sell-off that we saw in the Monday session. The MSCI Asia Pacific up by just about 0.9%. We're seeing some pretty good gains when it comes to Hong Kong stocks. You can see that sort of nervousness still playing out when it comes to Japan as well, given that we are seeing barely any gains there. Those concerns about the auto tariffs are still very much front and centre. In Australia, we saw the ASX pairing some of those gains just following the RBA decision, as expected to stay on hold at 4.1% for the cash rate target, but now extending those gains to just about 1%. Really quite a bit of leadership there coming through from utilities, from some of the property and energy stocks. Tomorrow on Insight, an exclusive interview with Janus Henderson Investors CEO as global markets brace for President Trump's next tariff salvos. That is it for Insight. This is Bloomberg.
News when you want it with Bloomberg News Now. I'm Karen Moscow. The announcement now a day away. President Trump is promising a Liberation Day of reciprocal tariffs on April 2nd. White House Press Secretary Caroline Leavitt says the president will unveil it in the White House Rose Garden tomorrow afternoon.
It's time for reciprocity, and it's time for a president to take historic change to do what's right for the American people, and that's going to take place on Wednesday.
White House spokeswoman Caroline Leavitt says the duties will be country-based and President Trump will announce sector-based tariffs at a later date. She's not saying what the rates will be or which countries will be targeted, but when asked if there'll be lower rates for products American farmers use, Leavitt said there will be no exemptions. President Trump is dialing back criticism of Vladimir Putin and ramping up pressure on Volodymyr Zelensky in his push for a ceasefire deal in Ukraine.
I think he's going to live up to what he told me, and I think he's going to fulfill his part of the deal. Now, then you have Zelensky, and hopefully he's going to live up. I see he's trying to renegotiate the rare earth.
In Oval Office remarks heard on Bloomberg, Trump accused the Ukrainian president of discussing NATO membership as part of the deal. A draft of Ukraine's revised proposal does discuss its EU bid. Elon Musk is deploying millions of dollars into what has become the most expensive judicial race in U.S. history. Musk is running the same playbook that helped propel Trump to the White House last year in a race to fill an open seat on Wisconsin's Supreme Court. Voters will decide whether to tip the balance of the state's highest court to conservatives, away from the left-leaning judges who currently hold a majority. In Florida, 2 special elections are being held to fill the House seats left open by Republicans Matt Gaetz and Mike Waltz. Republican Jimmy Patronis and Democrat Gay Valamont are running to replace Gaetz in the 1st Congressional District. And in Mike Waltz's 6th District, Republican State Senator Randy Fine is running against Democratic school teacher Josh Weil. In Thailand, it's a race against time to save victims of Friday's 7.7 earthquake in Southeast Asia. The death toll in Myanmar is past 2,700. Relief workers say hospitals in Myanmar are overwhelmed and there's an urgent need for food and clean water. A volcano began erupting in southwestern Iceland today. This just hours after authorities evacuated a nearby community and the Blue Lagoon Spa. Turning to the markets, it was not a good start of the year for the bulls. The S&P 500 fell 4.6% to start the year. The hardest hit was tech stocks. The Nasdaq dropped 8.3%. That's the worst quarter in nearly 3 years. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
I do think a lot of people are building up April 2nd for good reason as a potential turning point, and there's a lot of hope going into that day that the narrative is going to change, or that at least we are going to get some certainty and businesses can start planning, investors can start shifting things around, and that frankly it'll be, just something that establishes the framework so we know what to do.
RBC Capital Markets' Lori Calvasina last month lowered her year-end price target for the S&P 500 to 6,200. That's about a 10% gain from current levels. Big bonuses at Goldman Sachs are under scrutiny this morning. We get more with Bloomberg's John Tucker. John.
Institutional Shareholder Services blasting that $80 million retention bonus for the CEO David Solomon and President John Waldron. The proxy advisor is urging investors to reject the rewards at Goldman's annual meeting. ISS says in a note to clients the bonus awards lack rigorous preset performance criteria, which is particularly concerning for the off-cycle awards with such large values. They accuse the board of poor practice for adding new incentives even before a prior program is finished. In a separate recommendation late last week, Glass Lewis described the latest bonuses as excessive. The Goldman's board defends the award, citing fierce competition for talent. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thank you. Well, 4 civilians are on their way to becoming the first to fly over Earth's polar regions. They blasted off into space in a SpaceX rocket from Florida's Kennedy Space Center.
T-plus 35 seconds into the Fram 2 mission, the first ever human spaceflight mission to cover the poles.
And the mission is historic because it's the first crewed flight over the North and South Poles. The crew includes a Chinese-born Bitcoin entrepreneur, a Norwegian cinematographer, a German robotics expert, and an Australian adventurer. The mission, called Fram 2, is scheduled to last just over 3.5 days. And futures are lower. S&P futures down 0.5% this morning. Dow futures down 0.5% as well. And NASDAQ futures down 0.4%. The 10-year Treasury yield at 4.15%. And that's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Bloomberg News Now.
what caffeinated foodstuff is currently suffering a shortage? What company's new AI model is called QWQ-32B? Prada is in talks to buy which luxury fashion brand for $1.6 billion? Think you know the answers to these questions? If so, play Pointed at Bloomberg.com/pointed. It's the news quiz for risk takers.
ओके 5:30 भी हो गया. मार्केट काफ़ी वॉलेटाइल है. लुक एट द क्रूड ऑयल. सपोर्ट लेने की कोशिश कर रहा था. नेक्स्ट कैंडल वापस ओपन इक्वल टू लो बना दी इसने. लुक एट दिस कैंडल. ये 5:15 की कैंडल है. ओपन इक्वल टू हाई. करंट कैंडल अभी फिलहाल के लिए 5:30 हो रखा है, तो न्यूयॉर्क सेशन की ओपनिंग है. अब हमारे पास सीधा डेटा ही आने वाला है 6:30 पर, सॉरी 7:30 पर, जो इम्पैक्ट करेगा गोल्ड, सिल्वर, क्रूड ऑयल सभी को. थोड़ा बहुत सपोर्ट तो लिया था इसने, थोड़ी बहुत बाइंग ही दिखाई, ज़्यादा नहीं. अब हो जाएगी वापस फाइट. नेचुरल गैस भी बीच में लटक गया, बिल्कुल ना ऊपर ना नीचे, स्टक इन द रेंज. लाइक नहीं रुकनी चाहिए गाइस, लाइक भी करते रहो सभी लोग. सत्या जी, थैंक यू सो मच फॉर ज्वाइनिंग चैनल मेंबरशिप। कोई क्वेश्चन है तो पूछ सकते हैं। ओके, 5:30 की कैंडल हो गई है क्लोज। थोड़ा वॉल्यूम आना चाहिए अब मार्केट में। गोल्ड ऑल टाइम हाई, एनीथिंग ऑन द पेपर्स टू वॉच फॉर गोल्ड? यार देखो, ओवरऑल तो बुलिश ही है मेरे अकॉर्डिंग। कल का वेट करो, कल से पहले तो कुछ ट्रेड करना वैसे ही रिस्की है गोल्ड को, बिकॉज कल क्या होगा वी डोंट नो। कल मतलब कल यूएस टाइम के अकॉर्डिंग परसों। मार्केट फिलहाल के लिए अगर लेवल वॉच आउट रखना चाह रहे हो 15 मिनट टाइम फ्रेम पे फॉर सपोर्ट एंड रेजिस्टेंस। अभी तो साइडवेज है, अभी 2-3 डेटा आने वाले हैं अराउंड 7:30। आई विल सजेस्ट यू हैव टू वेट फॉर 7:30, बट इफ यू वांट टू वेट फॉर द लेवल्स, so as a resistance you can mark this level as a resistance. For support, wait. Okay, for support, this is the first support area. Today's day low is the first support area, already taken the support from there. And another support, दूसरा कोई support नहीं है क्या इसमें? कि एक कल का लो है वो भी एक सपोर्ट है। सारे सपोर्ट ऐसे मल्टीपल टाइम टेस्ट हुए लेवल है, ऐसा नहीं कि पहली बार कोई लेवल टेस्ट हो रहा है। So you can watch these three levels for support and resistance in gold in 15-minute time frame in Forex, okay, not in MCX. These are the levels. बाकी अब डेटा आएगा उसके बाद ही शायद मूव करे मार्केट, मोस्ट प्रॉब्ली। Chart not visible. Now it is visible. Okay, so market, it is between the range right now. अपर लेवल पे एक रेजिस्टेंस से छोटा सा ले सकते हैं यहाँ पर. नीचे सपोर्ट ऑलरेडी ले चुका है, अभी भी है इंटैक्ट जब तक ब्रेक डाउन नहीं होता. उसके ऊपर और कोई लेवल नहीं है, जाएगा तो पिवट का यूज करना. बाकी नीचे देखोगे तो फिर हमारे पास 3082 एंड 3075 ये दोनों सपोर्ट एक साथ बने हुए हैं. और कोई नया सपोर्ट बनेगा तो वी विल सी दैट. बाकी ये बेरिस तो नहीं है अभी भी. 3120 के नीचे ही कहीं बेरिस हो सकता है, कहीं ब्रेकडाउन रीटेस्ट हुआ तो इसके नीचे. उससे ऊपर साइडवेज तो बुलिश ही है. पहले स्टेटमेंट भी आया था लाइक वाइट हाउस की ओर से, उनके ट्रम्प के एडवाइजर हैं उनकी ओर से, कि जो इंपोर्ट आपका होता है यूएस में, कुछ भी इंपोर्ट होता है एनीथिंग, वहाँ पर 20% एक्स्ट्रा ड्यूटी लगेगी. मींस ऑलमोस्ट ऑल इंपोर्ट्स जो रहेंगे यूनाइटेड स्टेट में, जो मतलब वो मंगाता है बाहर से, उस सब पे 20% ड्यूटी. तो बाहर से कुछ भी मंगाएंगे तो उस पर एक्स्ट्रा ड्यूटी लग जाएगी. तो मोस्ट प्रॉब्ली मैनेज सबसे ज़्यादा कोशिश करेंगे कि वहीं मैन्युफैक्चरिंग हो, वही बेस्ट है. लाइक करना ना भूलें जो लोग लाइक नहीं किया है, जिन लोगों ने, वो फटाफट से लाइक कर सकते हैं. एंड जिन लोगों ने कर दिया है वो दूसरी आईडी से कर देना, वो भी काउंट होगा. Hmm, 7:30 का डेटा इंपॉर्टेंट है. 7:30 डेटा इज़ वेरी इंपॉर्टेंट. ये स्पेशली इसमें जॉब ओपनिंग का डेटा इंपॉर्टेंट है, मैन्युफैक्चरिंग पीएमआई के साथ. वो ऑलमोस्ट इक्विटी मार्केट के साथ साथ कमोडिटी मार्केट को इम्पैक्ट करता ही है. गोल्ड सिल्वर के अलावा क्रूड ऑयल पे भी इम्पैक्ट आता है. हाँ, नेचुरल गैस में है ऊपर रेजिस्टेंस, वहाँ से बिल्कुल सेलिंग है. एफईजी है ना, ये क्रूड ऑयल में ध्यान रखना, यहाँ पर ये कोई सपोर्ट नहीं है, एफईजी से ही बाइंग का प्लान लगा रखा है ये। दिस इज द एफईजी। मार्केट एक रेंज के अंदर फंसा हुआ था काफ़ी देर से, यहाँ पर 7 टाइम ऑलरेडी टेस्ट कर चुका था। फाइनली एक साइड की रेंज ब्रेक कर दी है प्राइस ने। अब देखते हैं किसी साइड निकलता है, क्योंकि एफईजी बड़ा इंपॉर्टेंट है, होल्ड नहीं किया तो फिर तो एक गिर जाएगा बिल्कुल पूरा। मार्केट को हायर हाई कंफर्मेशन में रखना है अगर, तो इस तरह से जाना चाहिए। अगर ये नहीं गया तो फिर ये सारे के सारे बायर एक साथ ही निकल जाएंगे, कुछ अगर ये फॉर्मेशन दे दिया मार्केट ने, अगर ये एफईजी होल्ड नहीं होता है। शर्मा जी हेलो, लाइक करो, बिल्कुल लाइक कर सकते हैं।
Congratulations, Mr. President.
Well, he's back.
नेचुरल गैस भी देखो रेजिस्टेंस की ओर पहुंच रहा है, सेलिंग का प्लान रखेंगे वहां से हम।
I'm extremely excited about the opportunities thrown up by the redefining of supply chains in a multipolar economy.
Hong Kong, particularly innovation and technology, and I love areas such as AI, robotics, green tech, as well as biotech.
That consumer element that has changed that's giving us more concern, especially with potentially more tariffs coming.
It's tough. I mean, especially if your market call is tied to anything trade or tariff related, which it almost has to be.
The tariffs are stagflationary.
It's not necessarily about tariffs or actual inflation. It's about inflation expectations.
Once the market understands that this is actually coming through, that uncertainty starts to go away. But that doesn't mean that volatility goes away.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your very, very long week started. For markets too. Anne-Marie, equities are down by 0.9% on the S&P. Mike Wilson joins us a little bit later from Morgan Stanley. The top of his note over the weekend, this week's reciprocal tariff announcement is likely a stepping stone for further negotiations as opposed to a clearing event. Which one is it?
Well, we don't know yet. But if it is going to be a stepping stone for negotiations, that means that uncertainty will be more pervasive in this market for the next few weeks and even months. Something also interesting is happening tomorrow. When President Trump came in, he directed his trade agencies, USTR Ambassador Jameson Greer, to look into trade imbalances. That report is due to the president tomorrow, April 1st. A key question everyone in Washington is talking about is whether or not the administration will make that public or potentially we can get some leaks. So then when April 2nd comes, 24 hours later, a little bit more of understanding of what the base case is that the president is thinking about when it comes to trade.
We've already said it a few times. This week is a massive week for economic data. Concludes on Friday with payrolls. You'll hear from Chairman Powell as well on the very same day. Friday feels like a long, long way away. We've been talking about what these tariffs mean for prices, higher prices. The president over the weekend with these comments on autos that he does not care if prices go up. Here's the quote for you to NBC. I hope they raise their prices because if they do, people are going to be buying American-made cars. Comments from the president over the weekend.
So I think one thing the president is trying to, or the administration wants to direct when it comes to those comments, is not that Americans are going to be paying higher prices for cars or automobiles in general. That is not the message that they want out to the public. But they're leaning on the fact that for foreign cars, he wants Americans to buy American-made cars. The issue is you have American brands that import some of their cars into the United States, especially if you consider Mexico and Canada outside of the U.S.
The forecasts are already changing on Wall Street. Some big moves over at Goldman Sachs. Look at this for a mix. These are the latest calls from Goldman. 3 Fed cuts. PCE at year-end at 3.5%. GDP cut to just 1%. 1% for 2025. David Kostner of Goldman Sachs, who already cut his price target on the S&P 500 in the last month, does so again. New target, 5,700.
And we're only in March. And the issue is right now is that if you're taking your direction from Washington, the policy has been squarely focused on what President Trump can do unilaterally, and that's tariffs. We have yet to get to the end of the year when maybe there's going to be a more holistic approach when it comes to the Trump administration and their proposals. I'm talking about the deregulation and the extension of TCJA and maybe some extra tax cuts.
Let's go through the markets for you. Equity futures right now down by 1% on the S&P 500. A bit into the bond market. Yields lower across the curve. A big hour coming up. Laurie Calvasina of RBC with stocks on a 3-day losing streak. Robert Stockin of Citi as global economies prepare for tariffs. And Sucharita Kadali of Forrester as consumer sentiment plunges. We begin this hour with stocks falling as Wall Street awaits Liberation Day. Laurie Calvasina of RBC writing with the S&P ending the week down more than 9% from the February high. The next few days are once again pivotal pivotal when it comes to the path of the US equity market from here. I'm pleased to say that Laurie joins us now for more. Laurie, good morning. It's good to see you.
Good morning. Thanks for having me.
Let's get to it. I mentioned David Costin. Just to re-clarify that, the target now on the S&P 500 for Goldman on a 12-month return forecast is 5,900, 3-month 5,300. Where are you and the team now?
So a couple of weeks ago, we actually took our number down from 6,600 to 6,200 at year end. Now, that's our base case. We've also been running a bear case, which you can think of as a shadow target. If we break 10% from the high, and it doesn't have to be, 10% on the dot. We went 10.1 at the low. But if we break too far below that, we think our bear case probably kicks in. I will say, in terms of my base case modeling, there's a very wide range of outcomes implied if you look at the 5 different models that we use. And so it's a very quantitative approach. 6,200 is basically the median. My sentiment indicator tells us to all calm down a bit, right? And that is actually one of the median outcomes. It gets you to around 6,200 on the S&P, and it basically looks at the AAII net bull bear indicator, which is down around GFC lows. And typically on a 9-month forward basis, you're up more than 10%, about 10, 11%. Putting that aside, 2 of my more bearish models are actually coming up with similar numbers to Costin's new target. And so that's weighing down that base case forecast. So my GDP modeling and my economists have taken their number down to 1.6 for the year. You typically are down about 3.4% in the equity market in years where that happens. So that gets us south of 5,700. If you look at my valuation modeling, which bakes in higher inflation, weaker 10-year yields coming down a bit, no cuts from the Fed yet, from our team at least, that along with my new earnings number, will get us around 5,750 on the S&P. So there is a wide range of outcomes in here. And as Anne-Marie mentioned, it's early in the year. A lot can happen. And things do tend to feel pretty terrible at the bottom.
A lot can happen this week. Liberation Day on Wednesday, payrolls on Friday. You'll hear from the chairman too. Can you give us a reason to be calm in the face of all of that?
I think the reason to be calm, it just kind of goes back to this is what bottoms feel like. And bottoms do tend to be a process. Now, I will caution you that when you look at those periods when AAII net bulls have been this bad, we tend to get stuck there for a while. We don't necessarily always bounce right back up. I'll tell you one thing, and I forget which sentiment survey it was, and we've had so many of these things. I think the Duke CFO survey showed that the tariff concerns had really increased versus last quarter, but monetary policy concerns were actually pretty low. So I do think, it's nice to hear from the Fed speakers and get their read on things, even when they're saying things are uncertain. I think it actually resonates pretty well with Washington.
How are you thinking about Wednesday? Is it a clearing event, or potentially are we going to have more uncertainty depending on what the president does?
In my mind, it's sort of the battle versus the war. And maybe we get more clarity on this particular tariff battle. But, one of the things my colleague Halima Croft keeps reminding us about is that this is an administration that approaches foreign policy and economic policy in a different way. And there's been more unity and more intersection between those two things than what we've been used to on Wall Street in the past. So I feel like, I'm holding out some hope that we will get some clarity and businesses can start figuring out how to adjust their supply chains. We'll see. But even beyond that, I do think we're in a bit of a new world here, and it's going to continue to be tricky for people to navigate.
If it is an opening salvo, though, and there's going to be negotiations, does that just mean corporate America has to continue to remain on the sidelines? They can't make decisions?
Yeah, I think that's fair. And, I spent some time last week, sort of reading through consumer transcripts, trying to see, what companies are saying about the current environment, and kind of got sucked into a tariff discussion. That's not why I took up the project. But I found that they started talking about their guidance and what's baked in. And, some companies are putting China in, not too many putting in Mexico or Canada, but there's just not really a lot of clarity from the companies on how to even think about this stuff. And so when I look at the rate of upward revisions to S&P 500 EPS forecasts, we're still getting like 40% to the upside. That's unbelievable to me. I think it's because companies haven't really been talking to analysts, and analysts don't really know how to adjust their models yet.
We've had the consumer sentiment numbers. They're dreadful. How much weight should you put on, say, you, Mitch, on Friday? The chairman of the Federal Reserve comes out a number of weeks ago and says he's not putting much weight on it at all. And then the number comes out on Friday and it's even worse. What do you do with those figures?
The thing is, it's not just one survey, right? We're seeing a deterioration now in corporate sentiment. We had 3 different C-suite surveys that came out in the month of March, and they all 3 ticked down. NFIB has moved significantly lower. The Conference Board data has been weak. And they're all showing the same thing, which is that there's concerns starting to emerge on the employment front, both from a bottom-up basis from the consumers who are looking for jobs, and the companies are also signaling a little bit of softening. So if it was just one survey, we could dismiss it as an outlier. Surveys are only as good as the people they actually poll and their methodology issues and that kind of thing. But this is widespread. This isn't just one survey. This is every survey.
The headlines coming from you, Mitch, if you missed them on Friday, are pretty awful. Consumer sentiment at a 2-year low. Long-term inflation expectations, 32-year high. On unemployment, 2/3 expecting unemployment to rise in the year ahead. That anxiety, if that starts to take hold, I imagine people aren't going to spend in the same way they were. So when you look at what's been discounted for the consumer-facing companies, do you think we've discounted enough?
So even on the earnings numbers that are out there, I'm not really seeing anything in my industry modeling that's telling me that I've got a group that's got both, significantly cheap valuations and decent earnings revision trends. I've got a handful of groups that are slightly cheap on earnings that still probably need to come down a lot more. So I don't think you've opened up enough opportunity in that consumer discretionary sector yet. I think it is the right place to look for a rebound. But I just think there's too much confusion about what those earnings estimates actually have to bake in going forward.
What caught my eye as well on Friday was that expectations for high-income consumers also sank. So is any company safe out there?
It's interesting. If you look across the consumer company landscape, they're not really talking too much about high-income consumers at this point in time. I did similar exercise back at the beginning of March, and I found one retailer that said that they were seeing a weakening across income cohorts. But for the most part, we're just seeing comments of general softness. I do think what's interesting is they're not blaming it on the low-income consumer as much as they were in the past, which is probably telling me they don't have a clear read, but something is going on. And look, this is a concerning data point. And I'll tell you, hedge funds in particular, it's been sort of a battle to get them to pay attention to this data because they have, sort of said, look, this is post-election. Democrats are feeling worse. Republicans are feeling better. That was true like 3-4 months ago. If you look at these surveys now, every cohort is coming down. Independents, Republicans, Democrats, there is something that has changed, and it is starting to seep into this sentiment data. And we noticed, particularly in February, the consumer companies were seeing something happen as well.
It's seeping into the market too. Laurie's going to stick with us. Laurie Cavacina of RBC. Equities at the moment near session lows as we kick off a major trading week here stateside. Equity futures down 1% on the S&P. With an update on stories elsewhere this morning with your Bloomberg brief, here's Yahara Hakez. Hey, Yahara.
Hi, John. The head of France's National Rally Party, Marine Le Pen, was convicted of embezzlement by a Paris court and has been banned from running for office. Le Pen and her party were found guilty of diverting millions of euros in EU funds to finance activities related to their domestic agenda. Le Pen denied wrongdoing and claims the prosecution is seeking her political death. Meanwhile, here, President Trump says he expects consumers to move to U.S.-made cars if automakers raise prices in response to 25% tariffs on imported vehicles and parts. The president saying in an interview with NBC News on Saturday that he couldn't care less if car makers hike prices. And the death toll from Myanmar's earthquake is expected to rise from over 1,700. More than 3,400 people are injured and over 300 are still missing following Friday's 7.7 magnitude quake, which was the biggest in a century. The country declared a week of national mourning starting this morning. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate that. More from Yahara later on this hour. Equities lower on the S&P. We're down 1%. Up next on the program, counting down to Liberation Day.
The tariffs will be far more generous than those countries were to us, meaning they will be kinder than those countries were to the United States of America. You'd start with all countries, so let's see what happens.
2 days to go. Up next on the program, Bloomberg's Laura Davidson joins us next, and we'll have more from RBC's Laurie Cavacina from New York City this morning. Good morning.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
So here's a snapshot. 3-day slide on the S&P could become day 4. Equities right now negative by about 1% on the S&P. On the Nasdaq 100, we're down by 1.3. In the bond market, we receive a bid. Yields are lower across the board on a 2-year, 10-year and 30-year. 10-year bond yields down by 5 basis points to 4.1938. Tons of economic data coming up this week. Of course, Liberation.
Consumer element that has changed that's giving us more concern, especially with potentially more tariffs coming.
It's tough. I mean, especially if your market call is tied to anything trade or tariff related, which it almost has to be.
The tariffs are stagflationary.
It's not necessarily about tariffs or actual inflation. It's about inflation expectations.
Once the market understands that this is actually coming through, that uncertainty starts to go away. But that doesn't mean that volatility goes away.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your very, very long week started. Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, firmly focused on Wednesday.
The tariffs will be far more generous than those countries were to us. They ripped us off like no country's ever been ripped off in history. You'd start with all countries, so let's see what happens.
Let's see what happens. The Post reporting the president is pushing to go big on tariffs, calling April 2nd a generational opportunity. As business leaders look for clarity, Politico suggesting even those closest to the president have indicated they're unsure what Trump will do. That uncertainty helping to sink consumer sentiment and sending long-term inflation expectations to a 32-year high. Following a week full of weak survey data this week, investors will be getting a big dose of hard data with payrolls on deck this coming Friday.
Before we get to Friday, Jonathan, it's Liberation Day on Wednesday, and the reporting over the weekend, even the past 24 hours from the Wall Street Journal, really starts to show a shift in mood. Also from what I'm hearing in Washington. Remember, just 2 weeks ago, it was the president might be more lenient. He might be more flexible last week. Someone turned around and said to me, more lenient from what? Maybe a 50% tariff rate that will come down. It looks like he's going to be a little bit more aggressive. The big question is that set in stone, or is that the opening salvo potentially for negotiations down the road?
I think that's a major question for markets too. Anne-Marie, equities are down by 0.9% on the S&P. Mike Wilson joined us a little bit later from Morgan Stanley. The top of his note over the weekend, this week's reciprocal tariff announcement is likely a stepping stone for further negotiations, as opposed to a clearing event. Which one is it?
Well, we don't know yet. But if it is going to be a stepping stone for negotiations, that means that uncertainty will be more pervasive in this market for the next few weeks and even months. Something also interesting is happening tomorrow. When President Trump came in, he directed his trade agencies, USTR Ambassador Jameson Greer, to look into trade imbalances. That report is due to the president tomorrow, April 1st. A key question everyone in Washington is talking about is whether or not the administration will make that public, or potentially we can get some leaks. So then when April 2nd comes, 24 hours later, a little bit more of understanding of what the base case is that the president is thinking about when it comes to trade.
We've already said it a few times. This week is a massive week for economic data. Concludes on Friday with payrolls. You'll hear from Chairman Powell as well on the very same day. Friday feels like a long, long way away. We've been talking about what these tariffs mean for prices, higher prices. The president over the weekend, with these comments on autos, that he does not care if prices go up. Here's the quote for you to NBC. I hope they raise their prices because if they do, people are going to be buying American-made cars. Comments from the president over the weekend.
So I think one thing the president is trying to, or the administration wants to direct when it comes to those comments, is not that Americans are going to be paying higher prices for cars or automobiles in general. That is not the message that they want out to the public. But they're leaning on the fact that for foreign cars, he wants Americans to buy American-made cars. The issue is you have American brands that import some of their cars into the United States, especially if you consider Mexico and Canada outside of the U.S.
The forecasts are already changing on Wall Street. Some big moves over at Goldman Sachs. Look at this for a mix. These are the latest calls from Goldman. 3 Fed cuts. PCE at year-end at 3.5%. GDP cut to just 1% 1% for 2025. David Kostner of Goldman Sachs, who already cut his price target on the S&P 500 in the last month, does so again. New target, 5,700.
And we're only in March. And the issue is right now is that if you're taking your direction from Washington, the policy has been squarely focused on what President Trump can do unilaterally, and that's tariffs. We have yet to get to the end of the year when maybe there's going to be a more holistic approach when it comes to the Trump administration and their proposals. I'm talking about the deregulation and the extension of TCJA and maybe some extra tax cuts.
Let's go through the markets for you. Equity futures right now down by 1% on the S&P 500. A bit into the bond market. Yields lower across the curve. A big hour coming up. Laurie Calvasina of RBC with stocks on a 3-day losing streak. Robert Stockin of Citi as global economies prepare for tariffs. And Sucharita Kadali of Forrester as consumer sentiment plunges. We begin this hour with stocks falling as Wall Street awaits Liberation Day. Laurie Calvasina of RBC writing, with the S&P ending the week down more than 9% from the February high. The next few days are once again pivotal when it comes to the path of the US equity market from here. I'm pleased to say that Laurie joins us now for more. Laurie, good morning. It's good to see you.
Good morning. Thanks for having me.
Let's get to it. I mentioned David Kostner. Just to re-clarify that, the target now on the S&P 500 for Goldman on a 12-month return forecast is 5,900. 3-month, 5,300. Where are you and the team now?
So a couple of weeks ago, we actually took our number down from 6,600 to 6,200 at year end. Now, that's our base case. We've also been running a bear case, which you can think of as a shadow target. If we break 10% from the high, and it doesn't have to be, 10% on the dot. We went 10.1 at the low. But if we break too far below that, we think our bear case probably kicks in. I will say, in terms of my base case modeling, there's a very wide range of outcomes implied if you look at the 5 different models that we use. And so it's a very quantitative approach. 6,200 is basically the median. My sentiment indicator tells us to all calm down a bit, right? And that is actually one of the median outcomes. It gets you to around 6,200 on the S&P, and it basically looks at the AAII net bull bear indicator, which is down around GFC lows. And typically on a 9-month forward basis, you're up more than 10%, about 10, 11%. Putting that aside, 2 of my more bearish models are actually coming up with similar numbers to Kostin's new target. And so that's weighing down that base case forecast. So my GDP modeling and my economists have taken their number down to 1.6 for the year. You typically are down about 3.4% in the equity market in years where that happens. So that gets us south of 5,700. If you look at my valuation modeling, which bakes in higher inflation, weaker 10-year yields coming down a bit, no cuts from the Fed yet, from our team at least, that along with my new earnings number, will get us around 5,750 on the S&P. So there is a wide range of outcomes in here. And as Anne-Marie mentioned, it's early in the year. A lot can happen. And things do tend to feel pretty terrible at the bottom.
A lot can happen this week. Liberation Day on Wednesday, payrolls on Friday. You'll hear from the chairman too. Can you give us a reason to be calm in the face of all of that?
I think the reason to be calm, it just kind of goes back to this is what bottoms feel like. And bottoms do tend to be a process. Now, I will caution you that when you look at those periods when AAII net bulls have been this bad, we tend to get stuck there for a while. We don't necessarily always bounce right back up. I'll tell you one thing, and I forget which sentiment survey it was, and we've had so many of these things. I think the Duke CFO survey showed that the tariff concerns had really increased versus last quarter, but monetary policy concerns were actually pretty low. So I do think, it's nice to hear from the Fed speakers and get their read on things, even when they're saying things are uncertain. I think it actually resonates pretty well with Washington.
How are you thinking about Wednesday? Is it a clearing event, or potentially are we going to have more uncertainty depending on what the president does?
In my mind, it's sort of the battle versus the war. And maybe we get more clarity on this particular tariff battle. But, one of the things my colleague Halima Croft keeps reminding us about is that this is an administration that approaches foreign policy and economic policy in a different way. And there's been more unity and more intersection between those two things than what we've been used to on Wall Street in the past. So I feel like, I'm holding out some hope that we will get some clarity and businesses can start figuring out how to adjust their supply chains. We'll see. But even beyond that, I do think we're in a bit of a new world here, and it's going to continue to be tricky for people to navigate.
If it is an opening salvo, though, and there's going to be negotiations, does that just mean corporate America has to continue to remain on the sidelines? They can't make decisions?
Yeah, I think that's fair. And, I spent some time last week, sort of reading through consumer transcripts, trying to see, what companies are saying about the current environment, and kind of got sucked into a tariff discussion. That's not why I took up the project. But I found that they started talking about their guidance and what's baked in. And, some companies are putting China in, not too many putting in Mexico or Canada, but there's just not really a lot of clarity from the companies on how to even think about this stuff. stuff. And so when I look at the rate of upward revisions to S&P 500 EPS forecasts, we're still getting like 40% to the upside. That's unbelievable to me. I think it's because companies haven't really been talking to analysts, and analysts don't really know how to adjust their models yet.
We've had the consumer sentiment numbers. They're dreadful. How much weight should you put on, say, you, Mitch, on Friday? The chairman of the Federal Reserve comes out a number of weeks ago and says he's not putting much weight on it at all. And then the number comes out on Friday and it's even worse. What do you do with those figures?
The thing is, it's not just one survey, right? We're seeing a deterioration now in corporate sentiment. We had 3 different C-suite surveys that came out in the month of March, and they all 3 ticked down. NFIB has moved significantly lower. The Conference Board data has been weak. And they're all showing the same thing, which is that there's concerns starting to emerge on the employment front, both from a bottom-up basis from the consumers who are looking for jobs, and the companies are also signaling a little bit of softening. So if it was just one survey, we could dismiss it as an outlier. Surveys are only as good as the people they actually poll and their methodology issues and that kind of thing. But this is widespread. This isn't just one survey. This is every survey.
The headlines coming from you, Mitch, if you missed them on Friday, are pretty awful. Consumer sentiment at a 2-year low. Long-term inflation expectations, 32-year high. On unemployment, 2/3 expecting unemployment to rise in the year ahead. That anxiety, if that starts to take hold, I imagine people aren't going to spend in the same way they were. So when you look at what's been discounted for the consumer-facing companies, do you think we've discounted enough?
So even on the earnings numbers that are out there, I'm not really seeing anything in my industry modeling that's telling me that I've got a group that's got both, significantly cheap valuations and decent earnings revision trends. I've got a handful of groups that are slightly cheap on earnings that still probably need to come down a lot more. So I don't think you've opened up enough opportunity in that consumer discretionary sector yet. I think it is the right place to look for a rebound. But I just think there's too much confusion about what those earnings estimates actually have to bake in going forward.
What caught my eye as well on Friday was that expectations for high-income consumers also sank. So is any company safe out there?
It's interesting. If you look across the consumer company landscape, they're not really talking too much about high-income consumers at this point in time. I did similar exercise back at the beginning of March, and I found one retailer that said that they were seeing a weakening across income cohorts. But for the most part, we're just seeing comments of general softness. I do think what's interesting is they're not blaming it on the low-income consumer as much as they were in the past, which is probably telling me they don't have a clear read, but something is going on. And look, this is a concerning data point. And I'll tell you, hedge funds in particular, it's been sort of a battle to get them to pay attention to this data because they have, sort of said, look, this is post-election. Democrats are feeling worse. Republicans are feeling better. That was true like 3-4 months ago. If you look at these surveys now, every cohort is coming down. Independents, Republicans, Democrats, there is something that has changed, and it is starting to seep into this sentiment data. And we noticed, particularly in February, the consumer companies were seeing something happen as well.
It's seeping into the market too. Laurie's going to stick with us. Laurie Calvasina of RBC. Equities at the moment near session lows as we kick off a major trading week here stateside. Equity futures down 1% on the S&P. With an update on stories elsewhere this morning with your Bloomberg brief, here's Yahara Hakes. Hey, Yahara.
Hi, John. The head of France's National Rally Party, Marine Le Pen, was convicted of embezzlement by a Paris court and has been banned from running for office. Le Pen and her party were found guilty of diverting millions of euros in EU funds to finance activities related to their domestic agenda. Le Pen denied wrongdoing and claims the prosecution is seeking her political death. Meanwhile, here, President Trump says he expects consumers to move to U.S.-made cars if automakers raise prices in response to 25% tariffs on imported vehicles and parts. The president saying in an interview with NBC News on Saturday that he couldn't care less if car makers hike prices. And the death toll from Myanmar's earthquake is expected to rise from over 1,700. More than 3,400 people are injured and over 300 are still missing following Friday's 7.7 magnitude quake, which was the biggest in a century. The country declared a week of national mourning starting this morning. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate that. More from Yahara later on this hour. Equities lower on the S&P. We're down 1%. Up next on the program, counting down to Liberation Day.
The tariffs will be far more generous than those countries were to us, meaning they will be kinder than those countries were to the United States of America. You'd start with all countries, so let's see what happens.
2 days to go. Up next on the program, Bloomberg's Laura Davidson joins us next, and we'll have more from RBC's Laurie Calvasina from New York City this morning. Good morning. So here's a snapshot. 3-day slide on the S&P could become day 4. Equities right now negative by about 1% on the S&P. On the Nasdaq 100, we're down by 1.3. In the bond market, we receive a bid. Yields are lower across the board on a 2-year, 10-year and 30-year. 10-year bond yields down by 5 basis points to 4.1938. Tons of economic data coming up this week. Of course, Liberation.
Consumer element that has changed that's giving us more concern, especially with potentially more tariffs coming.
It's tough. I mean, especially if your market call is tied to anything trade or tariff related, which it almost has to be.
The tariffs are stagflationary.
It's not necessarily about tariffs or actual inflation. It's about inflation expectations.
Once the market understands that this is actually coming through, that uncertainty starts to go away. But that doesn't mean that volatility goes away.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your very, very long week started. Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, firmly focused on Wednesday.
The tariffs will be far more generous than those countries were to us. They ripped us off like no country's ever been ripped off in history. You'd start with all countries, so let's see what happens.
Let's see what happens. The Post reporting the president is pushing to go big on tariffs, calling April 2nd a generational opportunity. As business leaders look for clarity, Politico suggesting even those closest to the president have indicated they're unsure what Trump will do. That uncertainty helping to sink consumer sentiment and sending long-term inflation expectations to a 32-year high. Following a week full of weak survey data this week, investors will be getting a big dose of hard data with payrolls on deck this coming Friday.
Before we get to Friday, Jonathan, it's Liberation Day on Wednesday, and the reporting over the weekend, even the past 24 hours from the Wall Street Journal, really starts to show a shift in mood. Also from what I'm hearing in Washington. Remember, just 2 weeks ago, it was the president might be more lenient. He might be more flexible last week. Someone turned around and said to me, more lenient from what? Maybe a 50% tariff rate that will come down. It looks like he's going to be a little bit more aggressive. The big question is that set in stone, or is that the opening salvo potentially for negotiations down the road?
I think that's a major question for markets too. Anne-Marie, equities are down by 0.9% on the S&P. Mike Wilson joined us a little bit later from Morgan Stanley. The top of his note over the weekend, this week's reciprocal tariff announcement is likely a stepping stone for further negotiations as opposed to a clearing event. Which one is it?
Well, we don't know yet. But if it is going to be a stepping stone for negotiations, that means that uncertainty will be more pervasive in this market for the next few weeks and even months. Something also interesting is happening tomorrow. When President Trump came in, he directed his trade agencies, USTR Ambassador Jamieson Greer, to look into trade imbalances. That report is due to the president tomorrow, April 1st. A key question everyone in Washington is talking about is whether or not the administration will make that public or potentially we can get some leaks. So then when April 2nd comes, 24 hours later, a little bit more of an understanding of what the base case is that the president is thinking about when it comes to trade.
We've already said it a few times. This week is a massive week for economic data. Concludes on Friday with payrolls. You'll hear from Chairman Powell as well on the very same day. Friday feels like a long, long way away. We've been talking about what these tariffs mean for prices, higher prices. The president over the weekend with these comments on autos that he does not care if prices go up. Here's the quote for you to NBC. I hope they raise their prices because if they do, people are going to be buying American-made cars. Comments from the president over the weekend.
So I think one thing the president is trying to, or the administration wants to direct when it comes to those comments, is not that Americans are going to be paying higher prices for cars or automobiles in general. That is not the message that they want out to the public. But they're leaning on the fact that for foreign cars, he wants Americans to buy American-made cars. The issue is you have American brands that import some of their cars into the United States, especially if you consider Mexico and Canada outside of the U.S.
The forecasts are already changing on Wall Street. Some big moves over at Goldman Sachs. Look at this for a mix. These are the latest calls from Goldman. 3 Fed cuts. PCE at year-end at 3.5%. GDP cut to just 1%. 1% for 2025. David Kostner of Goldman Sachs, who already cut his price target on the S&P 500 in the last month, does so again. New target, 5,700.
And we're only in March. And the issue is right now is that if you're taking your direction from Washington, the policy has been squarely focused on what President Trump can do unilaterally, and that's tariffs. We have yet to get to the end of the year when maybe there's going to be a more holistic approach when it comes to the Trump administration and their proposals. I'm talking about the deregulation and the extension of TCJA and maybe some extra tax cuts.
Let's go through the markets for you. Equity futures right now down by 1% on the S&P 500. A bit into the bond market. Yields lower across the curve. A big hour coming up. Laurie Calvasina of RBC with stocks on a 3-day losing streak. Robert Stockin of Citi as global economies prepare for tariffs. And Sucharita Kadali of Forrester as consumer sentiment plunges. We begin this hour with stocks falling as Wall Street awaits Liberation Day. Laurie Calvasina of RBC writing with the S&P ending the week down more than 9% from the February high. The next few days are once again pivotal when it comes to the path of the US equity market from here. I'm pleased to say that Laurie joins us now for more. Laurie, good morning. It's good to see you.
Good morning. Thanks for having me.
Let's get to it. I mentioned David Kostner. Just to re-clarify that, the target now on the S&P 500 for Goldman on a 12-month return forecast is 5,900. 3-month, 5,300. Where are you and the team now?
So a couple of weeks ago, we actually took our number down from 6,600 to 6,200 at year end. Now, that's our base case. We've also been running a bear case, which you can think of as a shadow target. If we break 10% from the high, and it doesn't have to be, 10% on the dot. We went 10.1 at the low. But if we break too far below that, we think our bear case probably kicks in. I will say, in terms of my base case modeling, there's a very wide range of outcomes implied if you look at the 5 different models that we use. And so it's a very quantitative approach. 6,200 is basically the median. My sentiment indicator tells us to all calm down a bit, right? And that is actually one of the median outcomes. It gets you to around 6,200 on the S&P, and it basically looks at the AAII net bull bear indicator, which is down around GFC lows. And typically on a 9-month forward basis, you're up more than 10%, about 10, 11%. Putting that aside, 2 of my more bearish models are actually coming up with similar numbers to Kostin's new target. And so that's weighing down that base case forecast. So my GDP modeling and my economists have taken their number down to 1.6 for the year. You typically are down about 3.4% in the equity market in years where that happens. So that gets us south of 5,700. If you look at my valuation modeling, which bakes in higher inflation, weaker 10-year yields coming down a bit, no cuts from the Fed yet, from our team at least, that along with my new earnings number, will get us around 5,750 on the S&P. So there is a wide range of outcomes in here. And as Anne-Marie mentioned, it's early in the year. A lot can happen. And things do tend to feel pretty terrible at the bottom.
A lot can happen this week. Liberation Day on Wednesday, payrolls on Friday. You'll hear from the chairman too. Can you give us a reason to be calm in the face of all of that?
I think the reason to be calm, it just kind of goes back to this is what bottoms feel like. And bottoms do tend to be a process. Now, I will caution you that when you look at those periods when AAII net bulls have been this bad, we tend to get stuck there for a while. We don't necessarily always bounce right back up. I'll tell you one thing, and I forget which sentiment survey it was, and we've had so many of these things. Actually, I think the Duke CFO survey showed that the tariff concerns had really increased versus last quarter, but monetary policy concerns were actually pretty low. So I do think, it's nice to hear from the Fed speakers and get their read on things, even when they're saying things are uncertain. I think it actually resonates pretty well with Washington.
How are you thinking about Wednesday? Is it a clearing event, or potentially are we going to have more uncertainty depending on what the president does?
In my mind, it's sort of the battle versus the war. And maybe we get more clarity on this particular tariff battle. But, one of the things my colleague Halima Croft keeps reminding us about is that this is an administration that approaches foreign policy and economic policy in a different way. And there's been more unity and more intersection between those two things than what we've been used to on Wall Street in the past. So I feel like, I'm holding out some hope that we will get some clarity and businesses can start figuring out how to adjust their supply chains. We'll see. But even beyond that, I do think we're in a bit of a new world here, and it's going to continue to be tricky for people to navigate.
If it is an opening salvo, though, and there's going to be negotiations, does that just mean corporate America has to continue to remain on the sidelines? They can't make decisions?
Yeah, I think that's fair. And, I spent some time last week, sort of reading through consumer transcripts, trying to see, what companies are saying about the current environment, and kind of got sucked into a tariff discussion. That's not why I took up the project. But I found that they started talking about their guidance and what's baked in. And, some companies are putting China in, not too many putting in Mexico or Canada, but there's just not really a lot of clarity from the companies on how to even think about this stuff. stuff. And so when I look at the rate of upward revisions to S&P 500 EPS forecasts, we're still getting like 40% to the upside. That's unbelievable to me. I think it's because companies haven't really been talking to analysts, and analysts don't really know how to adjust their models yet.
We've had the consumer sentiment numbers. They're dreadful. How much weight should you put on, say you, Mitch, on Friday? The chairman of the Federal Reserve comes out a number of weeks ago and says he's not putting much weight on it at all. And then the number comes out on Friday and it's even worse. What do you do with those figures?
The thing is, it's not just one survey, right? We're seeing a deterioration now in corporate sentiment. We had 3 different C-suite surveys that came out in the month of March, and they all 3 ticked down. NFIB has moved significantly lower. The Conference Board data has been weak. And they're all showing the same thing, which is that there's concerns starting to emerge on the employment front, both from a bottom-up basis from the consumers who are looking for jobs, and the companies are also signaling a little bit of softening. So if it was just one survey, you know, we could dismiss it as an outlier. Surveys are only as good as the people they actually poll and their methodology issues and that kind of thing. But this is widespread. This isn't just one survey. This is every survey.
The headlines coming from you, Mitch, if you missed them on Friday, are pretty awful. Consumer sentiment at a 2-year low. Long-term inflation expectations, 32-year high. On unemployment, 2/3 expecting unemployment to rise in the year ahead. That anxiety, if that starts to take hold, I imagine people aren't going to spend in the same way they were. So when you look at what's been discounted for the consumer-facing companies, do you think we've discounted enough?
So even on the earnings numbers that are out there, I'm not really seeing anything in my industry modeling that's telling me that I've got a group that's got both, you know, significantly cheap valuations and decent earnings revision trends. I've got a handful of groups that are slightly cheap on earnings that still probably need to come down a lot more. So I don't think you've opened up enough opportunity in that consumer discretionary sector yet. I think it is the right place to look for a rebound. But I just think there's too much confusion about what those earnings estimates actually have to bake in going forward.
What caught my eye as well on Friday was that expectations for high-income consumers also sank. So is any company safe out there?
You know, it's interesting. If you look across the consumer company landscape, they're not really talking too much about high-income consumers at this point in time. I did similar exercise back at the beginning of March, and I found one retailer that said that they were seeing a weakening across income cohorts. But for the most part, we're just seeing comments of general softness. I do think what's interesting is they're not blaming it on the low-income consumer as much as they were in the past, which is probably telling me they don't have a clear read, but something is going on. And look, this is a concerning data point. I'll tell you, hedge funds in particular, it's been sort of a battle to get them to pay attention to this data because they have, you know, sort of said, look, this is post-election. Democrats are feeling worse. Republicans are feeling better. That was true like 3-4 months ago. If you look at these surveys now, every cohort is coming down. Independents, Republicans, Democrats, there is something that has changed, and it is starting to seep into this sentiment data. And we noticed, particularly in February, the consumer companies were seeing something happen as well.
It's seeping into the market too. Laurie's going to stick with us. Laurie Calvasina of RBC. Equities at the moment near session lows as we kick off a major trading week here stateside. Equity futures down 1% on the S&P. With an update on stories elsewhere this morning with your Bloomberg brief, here's Yahara Hakes. Hey, Yahara.
Hi, John. The head of France's National Rally Party, Marine Le Pen, was convicted of embezzlement by a Paris court and has been banned from running for office. Le Pen and her party were found guilty of diverting millions of euros in EU funds to finance activities related to their domestic agenda. Le Pen denied wrongdoing and claims the prosecution is seeking her political death. Meanwhile, here, President Trump says he expects consumers to move to U.S.-made cars if automakers raise prices in response to 25% tariffs on imported vehicles and parts. The president saying in an interview with NBC News on Saturday that he couldn't care less if car makers hike prices. And the death toll from Myanmar's earthquake is expected to rise from over 1,700. More than 3,400 people are injured and over 300 are still missing following Friday's 7.7 magnitude quake, which was the biggest in a century. The country declared a week of national mourning starting this morning. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate that. More from Yahara later on this hour. Equities lower on the S&P. We're down 1%. Up next on the program, counting down to Liberation Day.
The tariffs will be far more generous than those countries were to us, meaning they will be kinder than those countries were to the United States of America. You'd start with all countries, so let's see what happens.
2 days to go. Up next on the program, Bloomberg's Laura Davidson joins us next, and we'll have more from RBC's Laurie Calvasina from New York City this morning. Good morning. So here's a snapshot. 3-day slide on the S&P could become day 4. Equities right now negative by about 1% on the S&P. On the Nasdaq 100, we're down by 1.3. In the bond market, we receive a bid. Yields are lower across the board on a 2-year, 10-year and 30-year. 10-year bond yields down by 5 basis points to 4.1938. Tons of economic data coming up this week. Of course, Liberation.
Consumer element that has changed that's giving us more concern, especially with potentially more tariffs coming.
It's tough. I mean, especially if your market call is tied to anything trade or tariff related, which it almost has to be.
The tariffs are stagflationary.
It's not necessarily about tariffs or actual inflation. It's about inflation expectations.
Once the market understands that this is actually coming through, that uncertainty starts to go away. But that doesn't mean that volatility goes away.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your very, very long week started. Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, firmly focused on Wednesday.
The tariffs will be far more generous than those countries were to us. They ripped us off like no country's ever been ripped off in history. You'd start with all countries, so let's see what happens.
Let's see what happens. The Post reporting the president is pushing to go big on tariffs, calling April 2nd a generational opportunity. As business leaders look for clarity, Politico suggesting even those closest to the president have indicated they're unsure what Trump will do. That uncertainty helping to sink consumer sentiment and sending long-term inflation expectations to a 32-year high. Following a week full of weak survey data this week, investors will be getting a big dose of hard data with payrolls on deck this coming Friday.
Before we get to Friday, Jonathan, it's Liberation Day on Wednesday, and the reporting over the weekend, even the past 24 hours from the Wall Street Journal, really starts to show a shift in mood. Also from what I'm hearing in Washington. Remember, just 2 weeks ago, it was the president might be more lenient. He might be more flexible last week. Someone turned around and said to me, more lenient from what? Maybe a 50% tariff rate that will come down. It looks like he's going to be a little bit more aggressive. The big question is that set in stone, or is that the opening salvo potentially for negotiations down the road?
I think that's a major question for markets too. Anne-Marie, equities are down by 0.9% on the S&P. Mike Wilson joined us a little bit later from Morgan Stanley. The top of his note over the weekend, this week's reciprocal tariff announcement is likely a stepping stone for further negotiations as opposed to a clearing event. Which one is it?
Well, we don't know yet. But if it is going to be a stepping stone for negotiations, that means that uncertainty will be more pervasive in this market for the next few weeks and even months. Something also interesting is happening tomorrow. When President Trump came in, he directed his trade agencies, USTR Ambassador Jameson Greer, to look into trade imbalances. That report is due to the president tomorrow, April 1st. A key question everyone in Washington is talking about is whether or not the administration will make that public or potentially we can get some leaks. So then when April 2nd comes, 24 hours later, a little bit more of an understanding of what the base case is that the president is thinking about when it comes to trade.
We've already said it a few times. This week is a massive week for economic data. Concludes on Friday with payrolls. You'll hear from Chairman Powell as well on the very same day. Friday feels like a long, long way away. We've been talking about what these tariffs mean for prices, higher prices. The president over the weekend with these comments on autos that he does not care if prices go up. Here's the quote for you to NBC. I hope they raise their prices because if they do, people are going to be buying American-made cars. Comments from the president over the weekend.
So I think one thing the president is trying to, or the administration wants to direct when it comes to those comments, is not that Americans are going to be paying higher prices for cars or automobiles in general. That is not the message that they want out to the public. But they're leaning on the fact that for foreign cars, he wants Americans to buy American-made cars. The issue is you have American brands that import some of their cars into the United States, especially if you consider Mexico and Canada outside of the U.S.
The forecasts are already changing on Wall Street. Some big moves over at Goldman Sachs. Look at this for a mix. These are the latest calls from Goldman. 3 Fed cuts. PCE at year-end at 3.5%. GDP cut to just 1%. 1% for 2025. David Kostner, Goldman Sachs, who already cut his price target on the S&P 500 in the last month, does so again. New target, 5,700.
And we're only in March. And the issue is right now is that if you're taking your direction from Washington, the policy has been squarely focused on what President Trump can do unilaterally, and that's tariffs. We have yet to get to the end of the year when maybe there's going to be a more holistic approach when it comes to the Trump administration and their proposals. I'm talking about the deregulation and the extension of TCJA and maybe some extra tax cuts.
Let's go through the markets for you. Equity futures right now down by 1% on the S&P 500. A bit into the bond market. Yields lower across the curve. A big hour coming up. Laurie Calvasina of RBC with stocks on a 3-day losing streak. Robert Sockin of Citi as global economies prepare for tariffs. And Sucharita Kadali of Forrester as consumer sentiment plunges. We begin this hour with stocks falling as Wall Street awaits Liberation Day. Laurie Calvasina of RBC writing with the S&P ending the week down more than 9% from the February high. The next few days are once again pivotal when it comes to the path of the US equity market from here. I'm pleased to say that Laurie joins us now for more. Laurie, good morning. It's good to see you.
Good morning. Thanks for having me.
Let's get to it. I mentioned David Kostner. Just to re-clarify that, the target now on the S&P 500 for Goldman on a 12-month return forecast is 5,900. 3-month, 5,300. Where are you and the team now?
So a couple of weeks ago, we actually took our number down from 6,600 to 6,200 at year end. Now, that's our base case. We've also been running a bear case, which you can think of as a shadow target. If we break 10% from the high, and it doesn't have to be, 10% on the dot. We went 10.1 at the low. But if we break too far below that, we think our bear case probably kicks in. I will say, in terms of my base case modeling, there's a very wide range of outcomes implied if you look at the 5 different models that we use. And so it's a very quantitative approach. 6,200 is basically the median. My sentiment indicator tells us to all calm down a bit, right? And that is actually one of the median outcomes. It gets you to around 6,200 on the S&P, and it basically looks at the AAII net bull bear indicator, which is down around GFC lows. And typically on a 9-month forward basis, you're up more than 10%, about 10, 11%. Putting that aside, 2 of my more bearish models are actually coming up with similar numbers to Kostin's new target. And so that's weighing down that base case forecast. So my GDP modeling and my economists have taken their number down to 1.6 for the year. You typically are down about 3.4% in the equity market in years where that happens. So that gets us south of 5,700. If you look at my valuation modeling, which bakes in higher inflation, weaker 10-year yields coming down a bit, no cuts from the Fed yet, from our team at least, that along with my new earnings number, will get us around 5,750 on the S&P. So there is a wide range of outcomes in here. And as Anne-Marie mentioned, it's early in the year. A lot can happen, and things do tend to feel pretty terrible at the bottom.
A lot can happen this week. Liberation Day on Wednesday, payrolls on Friday. You'll hear from the chairman too. Can you give us a reason to be calm in the face of all of that?
I think the reason to be calm, it just kind of goes back to this is what bottoms feel like, and bottoms do tend to be a process. Now, I will caution you that when you look at those periods when AAII net bulls have been this bad, we tend to get stuck there for a while. We don't necessarily always bounce right back up. I'll tell you one thing, and I forget which sentiment survey it was, and we've had so many of these things. It's actually, I think, the Duke CFO survey.
अब आ रही होगी voice, I hope so. Now voice is good. So as I said, US market open होने वाला है 7 PM पर. उसके बाद 7:15 7:30 पे डेटा है. गोल्ड और सिल्वर को और क्रूड ऑयल को भी इम्पैक्ट करेंगे डेटा सारे के सारे. 7:30 तक थोड़ा सा कॉशियस रहना. क्रूड ऑयल में जिन लोगों ने बाई किया अपना एसएल कॉस्ट पे रख लो. वी डोंट नो 7 PM पे अब किस तरह से मूव करेगा ये क्रूड ऑयल. हो सकता है बुलिश कैंडल बन जाए, अच्छी बात है. नहीं बनती नीचे आता है तो फिर कॉस्ट टू कॉस्ट निकलना पड़ेगा. बाकी नेचुरल गैस सपोर्ट पे है. 2 सपोर्ट पास में बने हुए हैं. थोड़ा सा वेट करना यूएस मार्केट का, तब फिर बाई करना, ठीक है, क्योंकि एसएल थोड़ा सा बड़ा बन जाएगा. दोनों सपोर्ट को चाहो तो मर्ज भी कर सकते हो. थोड़ा नीचे आके प्राइस हो जाए तो बढ़िया रहेगा. क्रूड में अपना एसएल ट्रेल जरूर कर लें कॉस्ट पे. बाकी गोल्ड सिल्वर को भी इम्पैक्ट करेगा, इसका ध्यान भी रखना, ठीक है. लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया। 4 मिनट और हैं, ओनली 4 मिनट लेफ्ट इन यूएस मार्केट ओपनिंग। ओके गाइस, यूएस मार्केट ओपन। यूएस मार्केट हो गया ओपन। लेट्स सी कितना मूव आता है। लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया। 7 to 7:30 थोड़ी वॉलेटिलिटी बढ़नी चाहिए। 7 PM पे अभी यूएस मार्केट ओपन हुआ है। 7:15 पे मैन्युफैक्चरिंग पीएमआई का फाइनल डेटा आएगा। 7:30 पे जॉब ओपनिंग और आईएसएम मैन्युफैक्चरिंग का डेटा आएगा, विच इज़ बोथ आर इंपॉर्टेंट डेटा ऑब्वियसली फॉर टुडे। लेट्स सी किस तरह से इम्पैक्ट करता है। क्रूड ऑयल पे इम्पैक्ट होगा ऑब्वियसली है। क्रूड ऑयल भी इम्पैक्ट करेगा डेफिनेटली। $341.2। क्रूड में तो कुछ भी मोमेंटम नहीं हो रहा है, स्लो ही है मूव। दैट इज अराउंड 336। हाँ वो भी सेम ही है। बाकी देखो नेचुरल गैस में भी जो टारगेट जोन है वो इतना ही है, ज़्यादा बड़ा नहीं है। अप्रॉक्सीमेटली इतना ही रखेंगे, नीचे आने दो थोड़ा सा। इक्वल भी चलेगा शायद, आई थिंक राइट। 350। हाँ इक्वल है, चलेगा। सरमाया के परते गिरा के होता। थोड़ा सा नेचुरल गैस बेरिस साइड पे ऐसा लग रहा है, जब तक अब वापस 354 के ऊपर सस्टेन नहीं करता। ये याद रखना, इसमें नेचुरल गैस में नीचे भी एक सपोर्ट है, दोनों सपोर्ट पास पास बने हुए हैं, तो थोड़ा ध्यान से। हो सकता है यहाँ पर ना रुके, नीचे आ जाए, तो ज़्यादा बड़ा एसएल नहीं ले सकते। क्रूड ऑयल में रीटेस्ट पेंडिंग है नीचे। रीटेस्ट किस चीज़ का? कहाँ, ये 6000 की बात कर रहे हो क्या यहाँ पे? इस एरिया की बात तो नहीं कर रहे हो? अगर बाइंग में हो तो अपना हाफ प्रॉफिट बुक करके ट्रेल कर लो, या फिर एटलीस्ट हाफ प्रॉफिट बुक करके एसएल कॉस्ट पर रखे रहो। अब 7 PM टू 7:30 वैसे भी वॉलेटिलिटी बढ़ने वाली है। 7:30 के बाद थोड़ा सा समझ में आएगा मार्केट कहाँ मूव करने के मूड में है। कल को देख के थोड़ा सा आज रुक रहे हैं ट्रेडर्स, या फिर वेट करते जा रहे हैं। और नीचे वाले लेवल की बात कर रहे हो ना? हाँ ये भी है, बढ़िया रहेगा ऐसे आ जाए लाइक ये। कैसा है बताओ, यहाँ से गिर जाए ना, मजा ही आ जाएगा। क्योंकि अभी बीच का लेवल भी काम का नहीं है, क्योंकि इसको ऑलरेडी इसका ब्रेकआउट हो चुका है ऊपर। इसको कंसिडर मत करना अभी लेवल को, ठीक है? इसको हम कंसिडर नहीं कर रहे हैं अभी। इसके ऊपर कैंडल यहाँ क्लोज हो गई थी ऑलरेडी, ये वाली, तो इसका एज अ रेजिस्टेंस मत कंसिडर कर देना फिर से। ऐसा होना कोई न्यूज आए, यहाँ विक बनाए और गिर जाए, और फिर यहाँ से बाइंग आ जाए, ऐसे मोस्ट प्रेफरेबल लेवल होंगे ये। एटलीस्ट 7:30 तक करता क्या है मार्केट। कुछ करता भी है या फिर नहीं। लग रहा है एफईजी जाने नहीं देगा इसके ऊपर है। एक छोटा सा एफईजी बना के बैठ गया यहाँ पर प्राइस। क्रूड ऑयल में अपना हाफ प्रॉफिट बुक कर लेना, ठीक है गाइस। हाफ प्रॉफिट बुक करके ट्रेल करना रिमेनिंग क्वांटिटी, डोंट टेक द रिस्क। रिमेनिंग क्वांटिटी का एसएल जाता है अगर ट्रेलिंग एसएल का तो निकल जाना, कोई बात नहीं। 6205। इसको छोड़ दे तो क्रूड ऑयल ने कोई बड़ा मूव दिया भी नहीं है आज। थर्टी थ्री लाइक्स हो चुके हैं, कमॉन लाइक करते रहो सभी लोग।
Semiconductor demand is rapidly growing, but producing a chip takes up to 26 weeks. Manufacturers must deploy foolproof inspection solutions while matching quality with speed. Enter Omron's VTX series, an advanced system which significantly reduces inspection time while maintaining accuracy. The result? Greater yield improvement for the semiconductor industry.
We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Paul Allen with Rebecca Choon-Wilkins.
Good morning. Our top stories today. Investors enduring another volatile session as worries swirl around the looming reciprocal tariff rollout. US shares closing out their worst quarter compared to the rest of the world since 2009. President Trump says he's not worried about his trade war potentially pushing allies towards China, arguing tariffs could actually help traditional US trading partners.
Nasdaq का सपोर्ट रेजिस्टेंस देख लेते हैं. US 100 को अगर मैं देखूं, मेरे अकॉर्डिंग अभी 730 का वेट कर लो. डेटा भी है एक 730 पे. अभी 715 वाला डेटा तो रिलीज होने वाला है. 730 का भी एक डेटा है. बाकी अगर सपोर्ट रेजिस्टेंस अभी देखोगे फिलहाल के लिए, देखो कल का हाई ही एक लेवल है एज अ रेजिस्टेंस. वो भी एग्जैक्ट रेजिस्टेंस नहीं है. पता नहीं क्यों लिया इसने रेजिस्टेंस यहाँ पर. एग्जैक्ट तो है नहीं है, बिल्कुल भी नहीं है. 19,300 वाला जो लेवल है, दैट इज अ रेजिस्टेंस. मुझे लग रहा है दूसरा चार्ट देखना पड़ेगा. इसमें एग्जैक्ट क्लियर नहीं है लेवल. हो सकता है किसी और ब्रोकर में बने हो. इसने लगाए तो हैं वहां पर रिजेक्शन के साथ. तो बेटर लेवल मेरे अकॉर्डिंग 19,400 से 19,410 के बीच में मिल जाएगा आपको. अच्छा लेवल है. उसको एज अ रेजिस्टेंस मान सकते हो. बाकी 19,310 310 320 भी लिया है इसने रेजिस्टेंस. वैसे है नहीं वो जितना मैं देख पा रहा हूँ. 15 मिनट टाइम फ्रेम पे कल लिया था इसने यहाँ से रिजेक्शन. 19,300 कह रहा हूँ. बाकी नीचे सपोर्ट अगर देखोगे 15 मिनट टाइम फ्रेम पर. ओके देखो डेटा आ गया. डेटा आपका पॉजिटिव है डॉलर के लिए, नेगेटिव गोल्ड और सिल्वर के लिए. फाइनल मैन्युफैक्चरिंग पीएमआई का. अब 730 का डेटा देखते हैं. ऐसा मैन्युफैक्चरिंग पीएमआई और जॉब ओपनिंग का डेटा है. बाकी क्रूड ऑयल भी निकल गया है, ऑलमोस्ट टारगेट जोन पर है. पूरा प्रॉफिट बुक कर लेंगे यहाँ पर, वेट मत करना. बाकी यहाँ पर एक सेलिंग का प्लान रहेगा. कैंडल ध्यान रखना, ओपन इक्वल टू लो पे सेल मत करना, ठीक है, चाहे कैंडल कितनी स्ट्रॉन्ग वहाँ पर आए. पूरा प्रॉफिट बुक करके यहाँ पर निकलेंगे, फिर देखते हैं. हाँ ये थोड़ा ठीक ठाक ट्रेड था. ये दो ट्रेड ही थोड़े प्रॉपर बने हैं रेंज के बाहर. बाकी इस एफजी को अब रिमूव कर देना, इसकी ज़रूरत नहीं है. ठीक है. नीचे जहाँ तक सपोर्ट की बात है तो ये एक छोटा सा सपोर्ट मार्केट के पास. आज का लो 19,000 150 के अराउंड एक सपोर्ट है, ठीक है। बाकी वो ब्रेक डाउन तभी माना जाएगा जब 19,110 के नीचे कैंडल क्लोज होगी। तो डे लो एक सपोर्ट था, वहीं से कल भी सपोर्ट लिया था, आज अभी पहली कैंडल का लो भी वहीं बनाया हुआ है। ऊपर रेजिस्टेंस मैंने बता दिया 19,400 420, दैट इज़ अ गुड रेजिस्टेंस एरिया, उसको मार्क करके रख सकते हो। वहाँ से एक सेलिंग का प्लान रखा जा सकता है। वहाँ से अभी तक सेलिंग आई नहीं है मार्केट में, तो मेरे अकॉर्डिंग स्ट्रांग है वो। बाकी उसका एसएल आपका अपर साइड पे 19,460 का रहेगा, इतना तो रखना ही पड़ेगा। तो ये दो लेवल है एज अ सपोर्ट रेजिस्टेंस। बाकी 19,313 के आसपास कल रुका था मार्केट, मुझे नहीं पता क्यों रुका था, मेरे अकॉर्डिंग तो ये रेजिस्टेंस वैसे है नहीं, बट रुका जरूर था। तो फिलहाल के लिए ये दो लेवल ही हैं। नैस्डैक में ऊपर यहाँ पर एक रेजिस्टेंस और ये सपोर्ट था, वो कल ले लिया था, आज भी वहीं पर लिया है। बाकी यहाँ पर भी रुका है कल, प्राइस वैसे रुकने को, ये पता नहीं क्यों रुका है, इसका कुछ लॉजिक मुझे समझ में नहीं आ रहा। वहाँ पर एक एफईजी है, रेजिस्टेंस तो नहीं है। बाकी अगर इसके नीचे अब निकलता है, क्योंकि दो बार सपोर्ट ले चुका है, ऊपर रेजिस्टेंस अच्छा है, सेलिंग जरूर कर सकते हैं वहाँ से। कैंडल का ध्यान रखना, ओपन इक्वल टू लो पे सेल मत करना बस। बाकी नीचे देखोगे इस लेवल के, अगर 19,110 के नीचे प्राइस ब्रेकडाउन कर देता है, ब्रेकडाउन रिटेस्ट, तब फिर आप एक्सपेक्ट कर सकते हो कि प्राइस नीचे के जो बाकी लेवल है उनको टेस्ट करने जाए। जिनमें से एक लेवल 19,000 भी था, बट परसों 31st को, कल मतलब, वो टेस्ट कर चुका है। तो इसके नीचे जो नेक्स्ट लेवल रहेगा वो थोड़ा ज़्यादा इम्पोर्टेंट है, उसको ज़्यादा इम्पोर्टेंट कंसिडर करना, विच इज़ 18,940। ठीक है, तो इसमें जो नीचे वाला लेवल रहेगा वो और स्ट्रांग हो जाएगा, बिकॉज वहाँ पर प्राइस अगर इसको ब्रेक डाउन करने में सक्सेसफुल रहा तो फिर यही सपोर्ट बनता है प्राइस के पास। बाकी अभी 730 वाला डेटा, जॉब ओपनिंग का डेटा बड़ी कैंडल बना सकता है, ध्यान रखना। 730 इज़ वेरी इंपॉर्टेंट कैंडल इन टुडेज पॉइंट ऑफ व्यू, अगर देखोगे आज के पॉइंट ऑफ व्यू से। लाइक नहीं रुकने चाहिए गाइस। बाकी जिनको हो चुका है प्रॉफिट अवॉइड करना, ठीक है, अननेसेसरी रिस्क लेने से। बाकी क्रूड ऑयल में निकलना, ऊपर से एक सेलिंग का प्लान रहेगा। एंड नीचे जो टारगेट रहेगा हमारा वो 6,120, 6,100 एंड देन 6,020 एंड 5,990, ये मल्टीपल टारगेट रहेंगे यहाँ पर, ठीक है। जब यहाँ से सेलिंग अगर प्लान करोगे तो ये समथिंग पहला टारगेट, दूसरा टारगेट और तीसरा चौथा टारगेट, ये कुछ रहेगा। बाकी इस एफईजी को रिमूव कर सकते हैं, ज़रूरत नहीं है। 730 का डेटा इंपॉर्टेंट है, उसका भी ध्यान रखिए ज़रा, कहीं कैंडल में उड़ ना जाए प्राइस बिल्कुल ही। फिफ्टी फाइव पीपल आर वॉचिंग, लाइक करते रहो गाइस, रुकना नहीं है लाइक करने में।
let's not forget, is the immigration supply shock. Suddenly, there is a big collapse in labor supply in the United States, which is stagflationary by itself. And then, separately, you also have the tariff supply shock. I'm not prepared to go so far as to say we are in stagflation.
We're half an hour from the open in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Paul Allen with Rebecca Choon-Wilkins.
Good morning. Our top stories today. Investors enduring another volatile session as worries swirl around the looming reciprocal tariff rollout. US shares closing out their worst quarter compared to the rest of the world since 2009. President Trump says he's not worried about his trade war potentially pushing allies towards China, arguing tariffs could actually help traditional U.S. trading partners. And the U.S. sanctions more Hong Kong officials, including the Justice Minister, in what the city government calls despicable behavior. Good morning. You're watching The China Show. Very happy Tuesday to you. A quick look at market action now, and Bloomberg's Avril Hong is standing by for us.
Yeah, Rebecca, I mean, I'm running out of ways to say tariff uncertainty, right? But that's really what the overhang for markets is as we tick down to April 2nd. I think that is the continued heavy weight for equities. And even though we saw a late session rebound in U.S. hours, U.S. futures are pointing to yet more declines. And don't forget, this was their worst quarter versus global peers since 2009. For the dollar, it was their worst start to a year since 2017. So keep that in mind, even as we see a slight bounce in some of these Asian equities. We do have a central bank decision as well out of Australia. Does the tariff uncertainty and the impact on potentially inflation constrain the path of central banks, not just G10s, but emerging Asia as well? You're seeing the yield on the Australian 10-year at 4.41. Now flip the board, because it's not just about April 2nd. 24 hours before that, don't forget, we also have a review of the U.S. Phase 1 trade deal with China. So that continued uncertainty, and some of these U.S. futures were pointing lower. We're seeing a bit of the opposite when it comes to China. We also had the likes of Morgan Stanley, interestingly, saying that given the reciprocal tariffs on a relative basis potentially affecting economies more outside of China, they're saying to add on to offshore China stocks. So keep that in mind. We're seeing the currency holding out relatively stable, 7.265 there against the greenback. Paul.
All right, thanks, Avril. Well, President Trump, of course, set to unveil country-based tariffs from Wednesday, and he told reporters that he'll launch reciprocal tariffs on all countries, but he promised he'd be kind to them.
They're reciprocal. So whatever they charge us, we charge them, but we're being nicer than they were. The numbers will be lower than what they've been charging us, and in some cases maybe substantially lower, but we sort of have a world obligation perhaps. But we're going to be very nice. Relatively speaking, we're going to be very kind.
All right, Bloomberg senior editor Derek Wallbank joins us now. So, Derek, President Trump there saying he'll be nice, he'll be kind, but what exactly does that mean in practical terms, particularly, say, for automakers?
Well, Paul, I'm not sure that I can tell you exactly what number the word kind translates into, but the White House has been very clear that as much as it thinks that the U.S.'s trading partners, particularly its 15 largest trading partners, have been ripping it off for the last many years, Trump has said that whatever that calculation comes to, his total reciprocal tariffs will not meet that amount, at least initially. We are not seeing plans right now for something that would meet the most maximal of what had been his threats, a sort of line-by-line tariff on every single thing that comes through. But instead, this looks like it's going to be a little bit more general. Trump has been clear that he says that this is going to start with all countries, not just some of them. But at the same point, there should be some ways for countries to be able to use this as the start of a negotiation, to be able to sort of work from there. At the same time, you mentioned mentioned autos. Autos are one of the many sectors that are trying to figure out ways to find carve-outs, to find ways to avoid having retaliation or to limit the scope of that retaliation. We've certainly seen that from sectoral sides. We've also started seeing that from some of Trump's allies. I'm thinking particularly of some of the farm states who remember when Trump had to go give some amount of help to farmers in his first term who are sitting there looking at this next action in his second term, wondering what help might come their way should there be retaliation against American agriculture. Because keep in mind, what we've heard from a lot of countries, even though we don't really have a great sense of where retaliation may come or how quick it may come or in what ways, we have started to see early on in this second term that countries have been looking to target their retaliation specific to Trump states and to Trump voters. There are many ways to do that. Agriculture is one. Trying to take Kentucky bourbon off the shelf is another one. You know, we're going to see a lot of those sorts of ways, but it does look like countries are looking to see how they can maybe target this to maybe inflict maximal pain as and when they do decide to retaliate.
Derek, I mean, the other deadline that we're watching here, particularly when it comes to China, is this review, this 2-month review of the Phase 1 deal that happened, of course, during President Trump's first term in office. What are we expecting to learn from that review, and how is it going to be used? I understand it's unlikely that we see that in full, for example, coming through this week.
Yeah, well, Rebecca, I really want to get hands on it and see it. But as you quite rightly note, I don't know that we're going to be able to get that. Maybe we will. Maybe we won't. Maybe we'll get it described to us in vague terms. But this is going to be a review of whether or not the U.S. sees China as meeting its obligations. Now, there is, if you sort of look at different ways of tallying this up and where, you know, who's to say what the U.S. will do, but different ways of tallying this up, you would see that China maybe hasn't quite imported all of the things that they have said that they would. I saw one number that suggested somewhere in the 60s percentile wise. But there are a lot of things that are sort of sidelined to the U.S.-China relationship when we would be talking about the potential for a maybe next deal, for maybe future negotiations. This is certainly one of those things. Others of those things would be TikTok would be right at the start of any of those lists. Also, the Li Ka-shing deals with regards to Panama and port infrastructure and things of that nature. There are many different things that could be sort of either individually or together brought round as context for starting some of those conversations, which very much have not started, but could be brought in together should the Trump administration want to bring them in together. Because look, you and I have been covering this for a very long time, right? And one of the things that we've noted with Trump and with China is that the main thing is the main thing, sure, but there's also any number of these ancillary items that happen to be coming around that could play into those. And whether or not China has been keeping to the terms of that first deal, certainly in the U.S.'s eyes, certainly in Trump's eyes, would be absolutely material for any sort of future conversation.
Yeah, I think that's right, question. Like, we've sort of been looking very closely also all these potential wild cards that are sort of surrounding this that could be used as leverage or various forms of negotiation as we head into a potential deal between the US and China. That's Bloomberg senior editor Derek Wallbank. And keeping on this theme, of course, about tariffs that we're expecting to come through, the really sort of fundamental way in which Trump is reshaping global supply chains and trade patterns. Let's bring in Ajay Rajadex, global chairman of research at Barclays. You recently did adjust quite significantly your assessment of the base case for what happens with tariffs.
That's right.
What are you now expecting, and what's the sort of logic behind that?
So coming into the year, we were expecting 30% tariffs on all Chinese goods and about 5% on the rest of the year, rest of the U.S. imports. It wasn't terribly scientific, but if you remember, during the election cycle, the president kept calling for 10% blanket and 60% on China. So we basically split the difference, took half of that. And then we realized a month and a half into this term that the administration was going to be considerably more aggressive than we expected. So at this point, we are putting in 30% on China, still roughly where we are right now, but an average of over 10% on the rest of the world. That means the average tariff on all U.S. imports now, Rebecca, rises to 15%, which is pretty significant. I mean, remember, coming into the year, we were at 2% tariffs on all U.S. imports. That 2 has now gone up 8-fold.
That is a pretty significant from where you were, but it's still a ways below, for example, 25% on Canada and Mexico. So if we see that at that upper end, the worst case scenario, how is that affecting what you're currently forecasting for global growth and for US growth?
We're going to end up being too optimistic, and we are not especially optimistic to begin with, right. But you're absolutely right. There are two problems here. One is there are tariffs and there are tariffs. Not all tariffs are created equal. And think about it. 3 months ago, did you think, I didn't certainly, that one of the first targets of the administration would be Canada? The fact of the matter is Detroit and Ontario, for 80 years, since 1945, have been tied at the hip. A car part goes back and forth 6 times, ends up in a US-made car, which is why no one thought that Mexico and Canada would end up being targeted. And that impact economically will be more significant. But the absolute numbers also, you're very, very right. If the president says there are sectoral tariffs on autos, for example, 25%, that adds to the tariffs that are reciprocal. So if tomorrow, for example, we say 15% tariffs on Europe, that means there are 40% tariffs on European cars. Right. That's enough to send that region into a recession also. This is a big, big deal.
Ajay, you just described the theoretical car park crossing the US-Canadian border up to 6 times. I mean, President Trump said policing this is going to be easy. I mean, that's one question. But secondly, how can it not be inflationary?
It is not going to be easy. I mean, the administration as much as acknowledged it. So if you remember, when we put on the auto tariffs, we put $275 billion of direct finished auto imports. That gets a straight 25% tariff. And then there's $270 billion of auto parts. But of that, half come from Canada and Mexico. And on those, there is a stay, because they need to figure out how much is U.S. content, U.S. value added. And I think that stay might continue indefinitely. It is not going to be easy. Now, as far as your second question goes, on the inflation side, prices rise. There's just no way around it. You don't suspend the laws of economics. Now, perhaps, if I were being charitable on this front, it's a one-time price rise. So it doesn't mean that it continues into 2026, 27, and so on. So in that sense, it's a one-time rise in the price level. But this year, inflation is going to rise if tariffs rise. There's no question around it. We are putting in about 3.5, 3.6% on core CPI by the end of 2026-25, much higher than we thought 3 months ago.
So a one-time price rise, and how about the hit to growth? And I'm really asking here about stagflation risk. What's your view on that?
So there are 2 supply shocks hitting the U.S. economy simultaneously. Supply shocks are stagflationary. They push down growth, they push up unemployment, and they push up inflation. The first one, let's not forget, is the immigration supply shock. Suddenly, there is a big collapse in labor supply in the United States, which is stagflationary by itself. And then, separately, you also have the tariff supply shock. I'm not prepared to go so far as to say we are in stagflation. But this year, even in our baseline, which like Rebecca said, is not as negative on tariffs as it could be, we still have growth barely positive, and we have inflation about 3%. That is reasonably stagflationary, yes.
I mean, Ajay, let's dig deeper into that and what this means for the US economy. We were not talking about a recession in the way we were even just a month or 2 ago. Yeah. How have you reassessed that? I know it's not your base case, but what are you thinking?
It's not my base case, but push me hard enough and I can be convinced. Okay. There's 3 or 4 things that have all happened simultaneously. The first, and I know we keep talking about it ad nauseum, but policy uncertainty is a thing. I mean, take the first week of March, for example, right? On Tuesday of that week, we pushed 25% tariffs on Mexico and Canada. Wednesday, we take autos away. Thursday, we take all USMCA away. Friday, we say there might be reciprocal tariffs coming that day. If you're a business in the United States, you have a supplier, a customer, either in Mexico, Canada, the EU, or China, very, very likely. you just don't know what to do. You're completely frozen for a while. And if enough people do that, then that starts to stall economic activity. And then that brings me to the U.S. consumer. The U.S. consumer has been the bulwark, I would argue, of the global economy, not just the U.S. economy. China runs a current account surplus. The European Union runs a current account surplus. The U.S. runs a massive current account deficit. And it's thanks to the U.S. consumer. But savings rates are very, very low. Now, there's reasons why they are low. There's lots of excess savings. U.S. household wealth has gone up a lot. But you get this steady noise of job cuts in the government sector, tariff uncertainty, actual price rises, equities pulling back. It's not that hard to see the savings rate rise, say, a couple of points. 70% of the economy is consumption. The savings rate goes up a couple of points. Consumption goes down a couple of points. And that's a 150 bp hit to growth right there. That's your recession.
And it's, I mean, you're describing that there has to be this sort of series of shocks in order to see that follow through for the U.S. economy. But it is plausible, to your point.
Yes, and I would say some of those shocks have already happened. The soft data, the sentiment surveys for consumers have absolutely cratered. Now, the hard data has still not followed, and maybe it won't, but the magnitude of the decline, how gloomy consumers feel, I would be very, very surprised if consumption doesn't pull back at least quite a bit, if not to the point where you get a recession. So some shocks have happened.
All right, Ajay Rajadiksha from Barclays is going to be staying with us, and tariffs also going to be the focus of our conversation later on with Duke Kunshan University Executive Vice Chancellor John Quelch going to be joining us. We'll ask him how Beijing might react to those U.S. duties. And we are counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. This is The China Show.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends.
Get ahead of them. And so many more.
Let's take a look at how China futures are tracking at the moment. Looks like we're heading for a soft open on the mainland. We've got Hong Kong futures in modestly positive territory. You might see at the bottom of your screen there as well the reference rate for the yuan that just dropped a few moments ago, coming in 7.1775. Not a lot of change from the previous day, but again, somewhat firmer than was being anticipated. The offshore yuan there, 726.85. Rebecca.
Thanks, Paul. And we're still joined by Ajay Rajadek's Global Chairman of Research at Barclays with us here this morning. And we were just talking about tariffs, the roll through and impact that we see in the US, how ugly it could get. I want to ask also about Asia.
Sure.
Where are the biggest pain points? And I guess how ugly does it get in this part of the world?
So I think one pain point would be Greater China, so not just China. But remember the 2018 tariffs, Rebecca. Now, one of the frustrations of the Trump administration is how that impact was diffused away. Yeah. Because China started trade deflection, started routing things through Vietnam, Bangladesh, Mexico, and so on. And the actual tariff hit was very, very little. And they are trying to prevent that. But if they prevent that, then they do start to hurt countries where that trade is being routed to. And most of that is Greater China. India, I think, is a little more isolated. In many ways, it's an economy like the United States. It's more services heavy. It'll get hit, don't get me wrong. Right now, for example, as you know, there's the 6% tax that India tends to impose on ads for digital advertising and that they're trying to get rid of because they're saying, look, we know it hurts US big tech. We are trying to do what we can. So the country seems nervous about US tariffs. But if you ask me to pick one or two areas in this part of the world which will be a little better than others of the big economies, India would be it.
What about the potential offset if we are able to see Asian countries finally not necessarily doing trade deals, but some kind of agreements? I'm thinking, for example, we just had the conversation between Japan, South Korea and China.
Sure.
That's been a deal that's been in the offing for years.
Yes. That helps, but it doesn't help enough. The fact of the matter is that most of these big economies, with the exception of the United States, they all run trades surpluses. Someone has to run the trade deficit on the other side. And that tends to be almost exclusively the United States for the most part. So if that, and the Chinese have ramped up on manufacturing on the electric vehicle side, for example, right? I don't know who takes up the slack if the US is saying, no mas, our borders are closed. So I think these trade deals are useful. Maybe they're indicative of other countries saying, look, we'll band together to come up with reciprocal tariffs on the US if we are hurt badly. But what is the direction we are going in this global trade war? There's just no positives here from an economic standpoint that I can find.
Yeah, AJ, if there's no one around to take up the slack from the excess capacity, what does it mean for China? I mean, we've seen China recapitalize its banks. It's getting ready to withstand a trade war. But how well is the Chinese economy, the Chinese consumer, betting in for the long haul here?
So China, Paul, seems to be an economy in two halves. The technology side is really doing very, very well. I'm not talking just about the DeepSeek breakthrough or the 7nm breakthrough or the BYD 5-minute charging. I'm also talking about the speed with which machine learning seems to be propagating through individual parts of the economy. Hangzhou, for example, right, is you have these 6 dragons. There's very many impressive things going on. The problem is the real economy on the other side. This is still an economy that is struggling with deflation. Headline inflation is still 0 to 5.5% for the last 2.5 to 3 years. The household sector, like you said, just got a $20 trillion asset price shock, largely because of housing, not because of equities. And it seems to be slowly slipping into this, I don't want to call it a spiral, but things are not improving enough on the real economy side. If I looked at HSCI Tech, right, and then I looked at the real economy, I wouldn't necessarily guess that they are part of the same country. And I think they are going to have to do more stimulus. Now, so far, their approach has been reactive, not proactive. We do not expect that to change. So as a result, we've been below consensus on China growth for the last 2 years. We are still below consensus for 2025. Things won't fall off a cliff, but our economic activity indicators suggest this is not an economy that will grow at the 5% target.
All right, Ajay Rajadiksha, Global Chairman of Research at Barclays, thank you so much for joining us. We do have plenty more ahead. This is Bloomberg.
Good morning.
Okay, we're just a few minutes away
from the
show.
Oh, sorry,
yes,
Paul.
Waiting on that open in Hong Kong. Yeah, well, it's looking like a positive start to the day in Hong Kong. We got trading underway in about 3.5 minutes, 4.5 minutes, 3.5. Anyway, better by 0.4%. Looks like it's going to be a positive day for tech as well. But of course, casting a long shadow over everything, Liberation Day in the US. So we just heard from the Treasury Secretary Scott Bessent a little bit earlier on. Those tariffs are going to be announced 3 p.m. Eastern Time on Wednesday in the Rose Garden, no less. So we might expect a little bit of pomp and ceremony, Rebecca.
And a couple of stocks that we are eyeing here as well in focus for today. China property. We did, of course, have results from Vanke coming in. Vanke reporting its first annual loss since 1991. We're very focused there in terms of what we see for potential restructuring support that comes through on the government side, as well as, of course, an eye on property earnings, which are coming through, many of which this week. Stay with us. You're watching The China Show. Good morning and welcome back. You're watching The China Show. We're counting down to the open of markets. It does look like perhaps we are starting to see a little bit of positive momentum returning in the Hang Seng up in the early goings. Of course, about 0.4%. We did have quite a steep loss yesterday, 1.3%, the worst day in about a week for that index, Paul.
Yeah, it's still uncertainty reigns. I mean, nobody could really predict what's going to happen, right, Rebecca? We've got some pretty positive gains today, but as we count down to Liberation Day in the US, 3 p.m. Eastern Wednesday on the White House Rose Garden, look, we've got President Trump saying he's going to be very nice. What does that even mean? We just don't know. So some modest gains at the moment, but all we can say for sure is it's not going to be a dull week, is it? Avril Hong standing by with a look at markets. Avril.
Yeah, not dull at all. I mean, look at how the mainland stocks are shaping up. We're seeing some gains, interestingly enough. That tariff overhang to kind of cut through some of the noise. I think Bloomberg Economics actually had a really good note about what severe would constitute, what lenient would constitute. So maybe worth raking through some of that as well. But in the meantime, it's looking pretty flat. Take a look at how we're shaping out for Hong Kong, because we did get that note from Morgan Stanley saying to add offshore Chinese stocks. Maybe that these external, outside of China economies might fare a little bit better amid the reciprocal tariff overhang. And then we are, of course, trying to rake through some of the clues for China's economic recovery. And in terms of that, we did get that factory activity on the official front just a day ago looking quite positive. We're taking down to some private survey data, the Tyson manufacturing later in the hour. But flip the board, because we also get a sense of that from the property sector as new home sales fell. And then keep in mind as well that for China Vanke, this property developer that's been trying to engage in an overhaul, reported its first annual loss since it IPO'd in 1991. And this is what we're seeing in the stock. Flip the board again. We have another EV maker in focus, XPeng, and it managed to kind of exceed or meet at least its delivery targets for this quarter, just based on what we're getting from the month of March. I think 93,000 thereabouts is the target for this quarter. But don't forget, many of these Chinese EV makers are seeing their market share in Europe especially under pressure. Rebecca.
Thanks, Avril. We also heard from President Trump earlier about the impact of tariffs. Paul alluded to it a little bit earlier in the show. Let's just take a listen.
Are you concerned that this move, the tariffs this week, could push some of the United States' closest allies to work with China?
No, I'm not worried about it. I'm not worried about it, yeah.
Mr. President, can I ask you
I think they have a chance of doing better, actually, with the tariffs. It can actually help them in a certain way. And I think a lot of them will drop their tariffs because, they've been unfairly tariffing the United States for years.
Let's get some insights now from our next guest. John Quelch is Executive Vice Chancellor of Duke Kunshan University. I mean, you, like all of us, have kind of been glued on the tariff story. We're now sort of getting a somewhat whiplash in messaging. How do you think Beijing is viewing all of this?
I think Beijing has a lot of experience from Trump 1.0. Beijing is always very deliberate and proportionate in its response. I think this time round you're going to see a similar relatively calming and non-emotional reaction, but I do believe this time round that China has probably done more to have pre-discussions with other Asian countries regarding coordinated response to what may be tariffs that are imposed on multiple countries simultaneously. Up to now, China has not really been the focal point, at least in the media. We've been hearing about Canada, Mexico, but already China has had to bear 2 10% tariff increases, and many Chinese manufacturers are no longer able to pass on or are no longer able to absorb these kind of increases in cost in their own manufacturing operations. They've reached the limits in many cases of the efficiencies that they can extract in their own business operations, and therefore any extra tariffs that are imposed are really going to be very difficult to share or absorb, and that means that the full extent of the tariff would be passed through to U.S. distributors and consumers.
To your point there that China hasn't necessarily been the focal point, and that has surprised some. We were just talking with Barclays, head of research there, surprisingly seeing that, of course, Canada was hit first, Mexico. Where are the countries that you are seeing the most vulnerability or the most pain? And I suppose, is there a secondary or tertiary effect of that through back to China?
Certainly. So the so-called Dirty 15, which I think might be renamed the Dirty Dozen, these are the countries that have the highest trade surpluses with the U.S., of course include many Asian countries, Japan, South Korea, Taiwan, Vietnam, as well as Canada, Mexico, and China being the big three, along with the European Union. So I think that it was interesting that Canada and Mexico were included early on, which in a sense shows that President Trump not targeting China specifically, but rather as he has said, going across the board to try and extract reciprocity and, as he sees it, fairness from these trade arrangements.
Of course, John, running a trade surplus with the US doesn't necessarily, well, help you. Look, let's take the case of Australia, for example, in which the role is reversed. Australia is one of the rare countries where it imports more from the US than the US buys from Australia. That hasn't saved the country. Do you think there could be other surprising countries included on that list when we get it on Wednesday?
Well, the countries that running surpluses include the Netherlands, the UK, Australia, United Arab Emirates, a few others that I may have left out. These countries are likely to be the countries that are treated nicely, to use President Trump's expression, which you quoted earlier. I think that when you look at the number of tariffs that actually have to be reviewed for this reciprocity analysis, by one estimate, there are 2.5 million individual product country tariffs that are under review if this review is comprehensive. Very hard to believe that that level of review can be conducted efficiently in the 30-day or 60-day period. And accordingly, it strikes me that we are going to see a little bit of a sledgehammer approach as opposed to a precision targeting approach. But the sledgehammer approach may create shock and awe in the media, but there may be exemption opportunities that are in the fine print associated with the public pronouncements. So I think we're going to have to wait and see what the fine print is, and each country is going to have to analyze its own situation before being able to intelligently respond.
What do you feel the impact's going to be here for U.S. consumers? Because how much of the cost of tariffs can U.S. businesses that rely on imports realistically eat without passing them on?
Yes, as I said previously, I think the companies that import a lot from China, such as Walmart, have been quite keen on sharing the burden with their suppliers through the distribution chain to minimize the impact on consumer prices in the U.S. But we may have reached the end of the road in that regard if there are additional tariffs on China manufacturers. And that means, of course, higher inflation, but it also means that consumers have the option of deferring purchases or switching to purchases that may be a little bit more expensive from other countries as substitutes. All of this cannot be healthy for economic growth, as many commentators have indicated previously on your show.
It's not just a question, though, of Chinese manufacturers struggling, John, to take on the cost, that extra cost of tariffs, and then therefore having to pass it on. There's also this issue that in this period of uncertainty, companies just simply aren't able to make decisions. And we are seeing some higher rates of corporate failures, especially among smaller, medium-sized enterprises struggling on how to sort of forward plan. What kind of mood are you reading on the ground in China? To what extent is there sort of anxiety over the ability to sort of just tread water while we wait for that really critical concrete detail that you're mentioning?
The margins in many of these enterprises are already at razor-thin levels. And remember that these are largely manufacturing enterprises. They do not have brand marketing power, so they're really subject to the vagaries of pricing in the market. I think that it's very difficult for local governments, except in some of the more prosperous areas, to buttress their manufacturing capabilities. And so, you know, there isn't much that can be done other than to pivot, maybe withdraw a little bit from the market and cut down the size of the operation, and then wait for an opportunity to rebuild. It's going to be very tough for some of these small and medium-sized enterprises in China, as it is, by the way, in the United States, where many small businesses have been built on the back of reliable China supply chain. And if that supply chain is now going to be even more expensive than it has been in terms of the delivered goods, that's going to be a big blow to many small and medium enterprises in the U.S.
I mean, to your point, you're also sort of at the coalface of people-to-people exchanges in your role at Duke Kunshan. You have historically been quite optimistic about seeing some of that return through. I wonder if you're seeing any impact, though, when it comes to some of the policies and these sort of anecdotal stories about immigration difficulties at the U.S. border that people, even with legal visas, are facing. Are you seeing that translate into anxiety and hesitancy on the China side to continue to travel to the U.S. and exchange and kind of go for jobs, work, visits, and so on?
So in our own broader academic community, I don't feel that we have seen much, if any, evidence of that. But where I think there is an issue is many Chinese students, of course, go to the United States for higher education with a view to having an opportunity upon graduation to work in the United States for a year or, in some cases, up to 3 years, depending upon what subjects they're studying. If it's STEM, they get to stay a little bit longer. Now, what we're seeing and hearing anecdotally is that it's much harder for Chinese students graduating, however brilliant they are, to secure employment in the U.S., and that's because the companies potentially hiring them aren't feeling certain that if they prove themselves, they'll be able to keep those employees for the long term. So the uncertainty around visas, even though there has not been any particular new measure associated with visa availability, but the uncertainty around visas is giving some, I think, pause as to whether or not they should go to the U.S. to take graduate study, or whether or not they should divert to Australia or the U.K. or Canada as alternatives. So that's where I think we are in terms of China inbound student interest in the U.S.
All right, John Quelch of Duke Kunshan University, thank you so much for joining us with your insights today. Okay, if April 2nd was going to be a big day, April 4 is going to be a big day too. We've just heard that South Korea is going to be ruling on President Yoon's impeachment on the 4th of April. This is according to a report from Yonhap. So that ruling due 11 a.m. April 4. So that will be a big day for markets in Korea and perhaps elsewhere as well. Plenty more to come. This is Bloomberg.
Good morning and welcome back. You're watching the China Show. We do have some numbers now coming through. That's the Tyson PMI that we've been watching for this morning for the month of March. So March Tyson manufacturing came in at 51.2, higher than the estimate, which was at 50.6. And just noting that we did, of course, also have factory activity coming in yesterday. We saw a beat there. China factory activity expanded at the fastest pace in about a year in March, Paul.
All right, let us take you live now, where we're going to have SpaceX about to blast off Crew Dragon there on the launch pad at Kennedy Space Center in Florida, all set to depart for, well, it's going to be a first, Rebecca. This is the 6th crewed commercial mission that SpaceX has done. They've done 11 to the International Space Station for NASA, but this is a crewed commercial mission, and it will be the first to fly over Earth's polar region. So this is called the FRAM-2 mission. There's 4 astronauts on board, all on their first space flights. Leading that is Chun Wang. He's a 42-year-old entrepreneur and adventurer. So he's chartered this mission with SpaceX aboard the Dragon Resilience spacecraft. Let's listen to this countdown.
5, 4, 3, 2, 1, ignition, and liftoff. Copy, 1 Alpha. Vehicle pitching downrange. Stage 1 propulsion is nominal.
T plus 35 seconds into the FRAM-2 mission, the first ever human spaceflight mission to cover the poles.
And we are throttling down the engines on the
SpaceX also, of course, played a role, Paul, when it came to those NASA astronauts that were stuck on and spent about 9 months on the International Space Station.
Max Q, and there's Max Q.
Yeah, that's right. And we heard from Butch Wilmore recently, giving his first interview after returning. He says he backs the Boeing Starliner capsule, and he says the company is also completely committed to fixing the issues on that. He says they're going to make it work. Boeing's committed, and NASA's committed as well. But that whole episode really just underscores how difficult space flight is. We watch these liftoffs now from SpaceX's Falcon 9 with just... well, they're like a bus schedule now, aren't they? They're so regular, we take them for granted. But we have to remember, when SpaceX was first testing the Falcon 9 system, it exploded all the time. There were multiple failures, but now just look at how reliable it is. The booster that's flying today, Booster 1085, that is its 6th flight into space, and the Dragon capsule on top carrying those 4 crew members. This is the 4th flight for this capsule, Rebecca.
Yeah, thanks, Paul. Anyway, we'll keep an eye.
सैफा हक जी, मैंने डेटा ऑलरेडी टेलीग्राम में शेयर कर दिया था वहाँ पे 7:30 वाला भी शेयर कर दिया ऑलरेडी. ठीक है, डेटा मैं टेलीग्राम पे शेयर कर देता हूँ, वहाँ पर देख लिया करो. जॉब ओपनिंग का जो डेटा था और ISM मैन्युफैक्चरिंग PMI का डेटा था, दोनों ही मैंने टेलीग्राम पे अपडेट कर दिया था. दोनों ही मिक्स डेटा थे. मैन्युफैक्चरिंग PMI और जॉब ओपनिंग का डेटा नेगेटिव फॉर डॉलर, पॉजिटिव फॉर गोल्ड एंड सिल्वर. अब और कोई डेटा इंपॉर्टेंट है नहीं. कल काफ़ी इंपॉर्टेंट डे रहेगा, तो कल ध्यान रखना. ADP नॉन फार्म एम्प्लॉयमेंट चेंज का डेटा है, क्रूड ऑयल की इन्वेंट्री, और फिर रात को प्रेसिडेंट ट्रम्प स्पीच देंगे, टैरिफ लगाएंगे. किस पे कितना लगता है डोंट नो. वहाँ पर मार्केट एक फिर से रिएक्शन दे सकता है. 8+ OPEC member making voluntary oil output plans to meet on Thursday. ये भी शेयर कर दी थी न्यूज़ फिलहाल के लिए. ये न्यूज़ भी वैसे होने को पॉजिटिव ही है, बट मार्केट ने ऊपर रेजिस्टेंस है, वहाँ से रिजेक्शन लिया है. India China should strengthen ties in Dragon Elephant Tango. Xi Jinping to President Draupadi Murmu. Wow. लाइक करते रहो गाइस, 44 लाइक्स पे रुकना नहीं है. Don't forget to like the stream, subscribe the channel. क्रूड ऑयल बाइंग में कॉन्फिडेंस नहीं आ रहा, नीचे से बाई कर लेना. वैसे वो जो ये ओपेक प्लस वाली जो न्यूज़ थी बहुत पॉजिटिव ही थी, जहाँ पर ओपेक प्लस ने ये कहा गया था कि दे वी आर एक्सपेक्टिंग कि जो करंट ऑयल प्रोडक्शन है वो उतना ही रहेगा, उसमें थोड़ा बहुत इंक्रीज वो करेंगे, कम नहीं होने वाला. से थोड़ा थोड़ा करके ये इंक्रीज करेंगे ऑयल प्रोडक्शन का. तो अगर ऑयल प्रोड्यूस ज़्यादा करते रहते हैं, धीरे धीरे भी ग्रेजुअली भी बढ़ाते हैं और इंक्रीज करते रहते हैं, तो प्रोडक्शन अगर बढ़ गया मतलब सप्लाई बहुत बढ़ा दी धीरे धीरे, लेकिन डिमांड अगर कम हो गई मान लो, इसके चांसेस हैं, या फिर उतनी भी ही रही, तो सिंपल सा सप्लाई और डिमांड का कॉन्सेप्ट जुड़ जाएगा. सप्लाई बहुत है, डिमांड उतनी ही है या फिर कम हो जाए टैरिफ की वजह से. बाकी क्रूड ऑयल में बायर्स तो निकल गए होंगे, बायर्स का एक अच्छा ट्रेड मिला था, वहां से सेल किया है, नहीं किया तो फिर से कर देना, कोई सुनिए. ठीक है, ये टारगेट रहेगा. बाकी अगर ये ब्रेक करता है 6088 तो फिर और नीचे का देखेंगे. बाकी नेचुरल गैस थोड़ा बहुत ही मूव किया है, यहाँ पर ज़्यादा मूव कर नहीं पाया है ये. लेट्स सी यहाँ पर रुकता है या फिर इसके नीचे वाले लेवल को हिट करने आता है, विच इज़ 334. यहाँ पर नहीं रुका तो फिर नेक्स्ट सपोर्ट यहाँ मिलेगा मार्केट को. थोड़ा सा बेरिश साइड पे है, जब तक प्राइस 354 के ऊपर सस्टेन्ड नहीं करता है. सस्टेन करना बड़ा ज़रूरी है. $6,000 तक गिरा क्रूड ऑयल को. 6,000 तक गिराने के लिए मार्केट को ऊपर से रिजेक्शन अच्छा मिलना चाहिए, तभी जा पाएगा. कल देखते हैं इंडियन मार्केट कैसे मूव करता है. इंडियन मार्केट भी तो इम्पोर्टेंट रहेगा कल के लिए. अर्निंग पे पता चला साइडवेज हो गया. डोंट फॉरगेट टू लाइक द स्ट्रीम गाइस, कम ऑन लाइक करते रहो, रुकना नहीं है.
Into markets now, we'll bring in Stephanie Lung, CIO at digital wealth platform Stashaway. Stephanie, good morning. Thanks for joining us.
Thank you for having me.
Let's start on the US story. We are Liberation Day coming up tomorrow, perhaps sort of Liberation Week. It feels like this is every day. Is this the end of the US exceptionalism narrative?
Yeah, I mean, obviously there's a lot of kind of focus on what Donald Trump is going to say on Wednesday. And I think probably the most used word recently has been uncertainty. And if you kind of look at the U.S. policy uncertainty index, indeed, it is back at heights that are close to like 2008. So there is indeed a lot of uncertainty in the U.S. policy. And I think if you look at the reciprocal tariff, what Donald Trump has said is that, I mean, U.S. has been kind of on the negative side in terms of the fairness about like all these trades and tariffs, etc. And he's going to raise it to levels that are imposed by other countries. Now, of course, if you look at just the tariffs themselves, it's not that much. However, there's a lot of leeway in terms of how you interpret the non-tariff taxes. For example, VAT in European Union, that's something that Donald Trump has talked about. And if he actually goes after those, there's a lot of room as to, I mean, how much he can raise the tariffs. So we'll find out on Wednesday, I guess. At the same time, markets are tanking, and a lot of people have asked about, so is there a Trump put? Is there a Fed put? I mean, where is that on the S&P? And I think from what we've observed so far, S&P has corrected 10%. Trump has clearly said that, I mean, he's not watching the stock market. The next one, perhaps
API की इन्वेंट्री प्राइस को इफेक्ट करती है क्या? नहीं, सिर्फ API की इन्वेंट्री तो नहीं करती, बट हाँ API की इन्वेंट्री, क्योंकि वो गवर्नमेंट का डेटा नहीं होता, वो प्राइवेट डेटा होता है. API की जो इन्वेंट्री आती है दैट इज़ प्राइवेट डेटा. तो उसके बेसिस पे थोड़ा सा आप एक तरह से कह सकते हो, अपना एक आइडिया लगा सकते हो, क्योंकि जब एक्चुअल डेटा आता है क्रूड ऑयल की इन्वेंट्री का, तो उसमें सब मिक्स होता है, गवर्नमेंट प्लस प्राइवेट. जो API का डेटा होता है ये ओनली प्राइवेट को लेके चलता है, इसमें गवर्नमेंट डेटा इंक्लूड नहीं होता. और गवर्नमेंट सबसे बड़ी बायर या सेलर होती है प्रोडक्शन और कंजम्पशन और क्रूड ऑयल परचेज करने के मामले में. तो वो डेटा बहुत हैवी होता है, तो वो थोड़ा ज़्यादा इम्पैक्ट करता है.
How are you sort of positioning your portfolio?
News when you want it with Bloomberg News Now. I'm Nathan Hager. Stocks are falling a day before President Trump's tariff announcement. Let's get right to the numbers. The S&P 500 right now is down 0.9%. The Dow Jones Industrial Average is lower by about 1.1%, and the Nasdaq Composite is on the decline by 0.7%. All this as investors wait for President Trump's announcement set for tomorrow afternoon in the Rose Garden. The Washington Post is reporting White House aides have drafted a plan that would impose about a 20% tariff rate on most imports into the U.S. More on that from Bloomberg News Global Trade Editor Brendan Murray.
The situation is still fluid, and President Trump likely won't make up his mind until tomorrow. He'll have all day today to look over all the research that his aides have provided him. But a 20% tariff on most U.S. imports would be a pretty important milestone in the global economy.
Let's Bloomberg's Brendan Murray reporting, and if it does happen that way, former Fed Vice Chair Richard Clarida says it would be a maximalist approach on tariffs, but he doesn't think that means the Fed would step in.
I think Jay Powell at the March meeting, at least to me, signaled they're happy to basically sit on the sidelines. I don't see them acting preemptively to cut rates because they may be worried about a downturn. And so what that means is that it will take tangible data of a slowdown in payrolls, maybe a big pop in unemployment. So I see the Fed on the sidelines until the macro data really turns. Richard
Clarida, now global economic advisor at PIMCO, was a guest on Bloomberg Surveillance. We did get some fresh economic data. The Institute for Supply Management's gauge of factory activity is down for the first time this year, and it's now in contraction territory. Bloomberg's Michael McKee has the numbers.
49 even. Last month was 50.3, and the expectation was for 49.5. New orders fall to 45.2 from 48.6. Employment falls to 44.7 from 47.6, and prices paid jumps to 69.4 from 62.4, a big jump in terms of what might be coming down the road in inflation.
That's Bloomberg's Michael McKee, and we also got figures on job openings from the Labor Department. They fell more than expected in February to 7.57 million. Job cuts are arriving at the Department of Health and Human Services. A memo seen by Bloomberg News shows top regulators in drug and tobacco safety were among those laid off in notices that went out around 5 o'clock this morning. Sources tell us offices involved in sexually transmitted diseases, global health, and birth defects also saw the axe. Affected employees, we're told, were locked out of HHS computer systems immediately, meaning their work was effectively halted. Democratic Senator Cory Booker's been pulling an all-nighter to protest President Trump's policies.
I'm here because I said at the beginning, some 9 hours ago, that I was going to stand here because what is going on in America is not normal.
Senator Booker did promise to hold the Senate floor for as long as he could stand in a talking-style filibuster. He's been getting some relief this morning from some of his Democratic colleagues who've stepped in to ask him questions. This is an election day in 2 key states. Voters in Wisconsin are choosing a state Supreme Court justice in a race that Elon Musk has poured tens of millions of dollars into. In Florida, Republicans are defending 2 House seats left open by Matt Gaetz and Mike Waltz. Bloomberg's Derek Wallbank has more.
Both of these are reliably Republican races. We're talking 2-to-1 wins by those Republican candidates in the November election. But now, 5 months later, there are some whispers among Republican allies of the president that maybe the Daytona area seat that Waltz once held is not as secure as it could be. There was some suggestions even that the Republican candidate might have been trailing in some private polls. We'll see how this goes. This is a very Republican seat.
And Bloomberg's Derek Wallbank reports even a narrow win for Republicans, and one of those seats could be a warning to President Trump. Back on Wall Street, Newsmax is acting like the newest meme stock. Right now, the shares are up 100%. The conservative media outlet surged by 735% in its trading debut yesterday. And Roblox shares are higher by about 1%. The video game platform is partnering with Google on ads, offering in-game perks to players who watch them for up to 30 seconds. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
What caffeinated foodstuff is currently suffering a shortage? What company's new AI model is called QWQ 532B. Prada is in talks to buy which luxury fashion brand for $1.6 billion? Think you know the answers to these questions? If so, play Pointed at Bloomberg.com/pointed. It's the news quiz for risk takers.
Today, markets are on tenterhooks as the world awaits Trump's tariffs.
Uncertainty looms over the FDA as its top vaccine official is forced out.
France's Marine Le Pen vows to appeal after being barred from a presidential run.
Plus, what the proposed Republican budget cuts would mean in one rural California town. It's Tuesday, April 1st. This is Reuters World News, bringing you everything you need to know from the front lines in 10 minutes every weekday. I'm Jonah Green in New York.
And I'm Carmel Crimmins in Dublin. US President Donald Trump is set to unveil a massive tariff plan tomorrow in what he's been dubbing Liberation Day. The president says tariffs would essentially cover all countries, stoking fears a global trade war could lead to recession. Kristalina Georgieva, the managing director of the International Monetary Fund, told Reuters the fund doesn't see recession on the horizon. But she warned the longer uncertainty persists, the worse the economic hit.
The sooner there is more clarity, the better.
On Monday, the Trump administration released an encyclopedic list of foreign countries' policies and regulations it regards as trade barriers. But it's unclear how the 397-page report will impact Trump's tariff plans. White House reporter Jarrett Renshaw is in Washington, D.C.
We don't know what we're going to see. We've heard tariffs on all countries. We've heard senior aides say I'm much more limited, 10 to 15 countries. The dirty 15, as one senior aide said, the ones with the biggest tariffs on U.S. goods. So the market's taking a wait-and-see approach. There seems to be different song every day in terms of kind of what to expect.
China has launched military exercises around Taiwan, as Beijing calls the Taiwanese president a parasite. The Army, Navy and Rocket Force exercises intended as a warning against the island's independence aspirations. Taiwan has sent warships in response to China's Navy approaching its coast. In Myanmar, earthquake survivors don't have enough food or shelter. Aid groups arriving in the worst-hit areas say the need for clean water and sanitation is urgent. Friday's 7.7 magnitude earthquake killed more than 2,700 people.
The U.S. has deported more alleged Venezuelan and MS-13 gang members to El Salvador. The ACLU has challenged previous deportations, citing a lack of due process. The Trump administration says it is reviewing $9 billion in federal contracts and grants awarded to Harvard University. It's part of a crackdown on what the White House says is anti-Semitism on college campuses. And if you want to know more about this crackdown, check out our weekend podcast. We'll put a link in today's description. Shares of U.S. drug makers are down after reports that the Food and Drug Administration's top vaccine official, Peter Marks, has been forced to resign. Moderna tumbled over 12%. Marks's departure adds to uncertainty in the pharma and biotech sector, which faces concerns that U.S. President Donald Trump's tariffs could include drugs, which have traditionally been excluded. Global Health editor Michelle Gershberg is looking at why the FDA shakeup is rattling investors.
Well, there are a number of layers to this. We've seen plans for big layoffs at the major health agencies that regulate drugs and medical devices and food. There's the question looming this week of whether or not there will be tariffs that also affect pharmaceutical products, and that would be a big blow to the pharma industry's profits. And now this new move is the kind of forced ouster of the top vaccine official at the FDA, Peter Marks, creates new concerns. So Marks was a key figure in the development of the COVID-19 vaccine. He also oversees a department that deals with biotech drugs, gene therapies, really cutting edge medicines. And that's, a big piece of the biotech sector. And the companies that are most, deeply embedded in that sector are some of the names that are getting hurt the hardest on Wall Street.
Is this an indication of what else the industry is worried about going forward?
Marx's exit is a very powerful example of the kind of disruption that's happening within the FDA. The question, really looms over the agency of how is that going to affect the day-to-day job, the day-to-day business of keeping America's drug supply safe, making sure there are no shortages, making sure the food supply is safe. These are all, big question marks for how that's going to work going forward.
That's a big deal. That's a very big deal. I know all about it, and a lot of people thought she wasn't going to be convicted of anything, and I don't know if it means conviction, but she was banned for running for 5 years, and she's the leading candidate. That sounds like this country.
President Trump reacting to far-right leader Marine Le Pen's conviction for embezzlement and ban on running in France's 2027 presidential election. In a primetime TV interview on TF1, Le Pen told viewers that she's innocent and plans to file an appeal. The National Rally Party leader is one of the most prominent figures of the European far right and is a frontrunner in polls to succeed French President Emmanuel Macron. Our France and Benelux bureau chief, Richard Locke, is following the reaction.
You cannot underestimate what a political earthquake this is for France. Marine Le Pen has changed the face of her party. She has broadened its support across the entire country, essentially. And she was a genuine contender in the 2027 presidential election. It's not impossible that she runs in that vote. She will file an appeal. It's not impossible that that appeal is heard and concluded before the election in the spring of 2027. But as things stand, right here, right now, she's barred from running.
What's the reaction over there?
So reactions have been, I suppose, pretty mixed across the political spectrum and through the electorate as well. Some people are saying, we've seen this before from other politicians, maybe she's no different. Others are saying she was the woman we wanted to vote for. Now we don't have that opportunity. Her far-right National Rally Party officials clearly see the hand of a politically motivated judiciary here. So there is a sentiment out there amongst some, in particular on the far right, that this is the action of an establishment sort of determined to keep her from power.
Harry, can you please give me action plan in Nasdaq? I am in buying. When should I close? Please advise in thanks. Nasdaq में आपने बाई किया तो टारगेट होने वाला है, बुक कर सकते हो. 19,400 इज द टारगेट. 350 हिट कर चुका है. हाफ प्रॉफिट बुक करके ट्रेल कर लो, क्योंकि एक पुल बैक भी इसमें पेंडिंग है. अभी एक पुल बैक और आएगा अराउंड 19,200 के अराउंड. एक पुल बैक अभी पेंडिंग है. वो आना चाहिए। 19,400 का टारगेट है, आप प्रॉफिट होकर के ट्रेल कर लो, वापस पुल बैक आता है 19,200 180 के बीच में, वापस बाई कर लेना। ये टारगेट हो गया आपका ऑलरेडी। बाकी ऊपर फिर रेजिस्टेंस है, अगर सेलिंग का प्लान करना चाह रहे हो तो सेलिंग भी कर सकते हो रेजिस्टेंस जोन से, ठीक है, वो भी एक अच्छा आइडिया है। रेजिस्टेंस जोन से सेलिंग भी प्लान कर सकते हो। अगर बाइंग में हो तो फिर प्रॉफिट बुकिंग का मैंने बता ही दिया आपको कब करनी है। बाकी हाफ प्रॉफिट बुक तो कर ही लो एंड देन ट्रेल। अगर ज़्यादा ही लॉट है, कम क्वांटिटी है तो पूरा भी कर सकते हो। बाकी देखते हैं फाइनल टारगेट तक आता है या फिर नहीं। अभी टाइम है लेवल पे एग्जैक्टली हिट होने पे, बट बिकॉज कंटिन्यूसली 4-5 कैंडल बना के चला गया है तो थोड़ा पुल बैक आना चाहिए लॉजिकली, ठीक है। आप प्रॉफिट बुक करके ट्रेल कर लो। जब फिर पूरा प्रॉफिट बुक करना चाहता है तो वापस ऑप्शन मिल जाएगा। ऊपर रेजिस्टेंस जोन है, वहाँ से 19,500 के अराउंड सेल प्लान कर सकते हो वापस। कैंडल का ध्यान रखना, ओपन इक्वल टू लो पे मत करना सेल। नैस्डैक पे नहीं करते सर, मैं नहीं करता नैस्डैक पे। मैं यूएस इंडाइसेस को ट्रेड नहीं करता, वो इंडिया से एक्चुअली डायरेक्ट ब्रोकर में अलाउ नहीं है, उसके लिए फॉरेक्स ब्रोकर ही चाहिए। तो आई एम नॉट टेकिंग एनी ट्रेड इन यूएस मार्केट, मेनली कॉमोडिटी एंड निफ्टी, बैंक निफ्टी एंड ऑप्शन सेलिंग एंड फ्यूचर मोस्ट 70 to 80% टाइम्स। लाइक करते रहो गाइस, रुकना नहीं है लाइक करने में। जिन लोगों ने लाइक नहीं किया है फटाफट से लाइक करते रहो एंड डोंट फॉरगेट टू सब्सक्राइब द चैनल, शेयर विथ योर फ्रेंड्स एंड फैमिली मेंबर्स एज वेल।
Florida is holding a pair of special elections today to fill 2 House seats vacated by Trump's cabinet picks. Republicans are expected to easily recapture these seats. But the party's budget cut proposals could become a liability for the GOP as it tries to hold its narrow majority in the House. In California's 22nd congressional district, a rural area in the Central Valley with a Republican representative, those cuts would have a big impact.
I don't know what I would eat because I rely on that to expect to eat for the month.
That's Echantis McDonald. She's a food stamp recipient, as is Stevie Moore.
They are helping us and helping our kids and helping us be able to feed our children when we don't have jobs right now.
Food and agriculture reporter Renee Hickman recently traveled to this district. So, Renee, what kind of area is this, and how important are these benefits to the people who live there?
Well, it's agriculturally very rich. A huge proportion of the nation's fruits and vegetables come from there. Vineyards, there's orchards, there's cattle ranches. But, alongside that agricultural wealth, there are very high rates of poverty, especially among people who work on those very farms. Despite the fact that it grows a huge amount of the food that we eat in this country, there's really high levels of food insecurity. And there are, medical facilities that really depend on Medicaid. So I've been told by people who run some of the largest hospital systems in the area that there are facilities that are at risk of closure in these rural communities if these cuts end up going through. And I've also heard from people at food pantries who don't know how they're going to keep up with the additional demand if these cuts to SNAP are made.
And for today's recommended read, Readjusting to Life Back on Earth.
Went to bed. Felt good. Lay down on a bed for the first time in 9 months was pretty awesome. I crashed until the next day, and then just trying to get up and trying to move around and understand gravity.
After 9 months stranded in space, Find out how NASA astronaut Sunny Williams is doing. There's a link to the story in the pod description.
For more on any of the stories from today, check out Reuters.com or the Reuters app. Make sure to follow us on your favorite podcast player. We'll be back tomorrow with our daily headline show.
मार्केट भी बिल्कुल साइडवेज हो गया, कुछ मोमेंटम ही नहीं हो रहा अब तो, ना क्रूड में ना नेचुरल गैस में। 9 मिनट EMA I am following once it break down the exit in Nasdaq 1 minute chart now. ओके अब इसमें मैं क्या कह सकता हूँ, इसमें कुछ कमेंट नहीं करता। देखो अगर आपकी अपनी कोई स्ट्रैटेजी है, अगर वो काम कर रही है तो फिर कोई प्रॉब्लम नहीं है, फिर उसी को फॉलो करो, ठीक है। क्योंकि ऐसा होता है ना, कई लोग क्या करते हैं, जैसे मैं कुछ बता रहा हूँ, हो सकता है कुछ लोगों को अच्छा लगे, कुछ लोगों को ना लगे, राइट। तो इसका मतलब ये नहीं कि मेरी स्ट्रैटेजी सबसे बेस्ट है, ऐसा कुछ नहीं होता, ठीक है। सब SL भी जाते हैं, टारगेट भी हिट होते हैं, एवरीथिंग इज हैपन। बात मेन क्या आती है, दो चीज़ों पर आके अटक जाती है। नंबर 1, आपका रिस्क रिवॉर्ड ठीक होना चाहिए जो भी आप ट्रेड लो, और दूसरा जो आप स्ट्रैटेजी ट्रेड कर रहे हो, कुछ भी कर रहे हो, सपोर्ट रेजिस्टेंस, इंडिकेटर, चार्ट पैटर्न, कैंडलस्टिक पैटर्न, व्हाटएवर, उसके बारे में आपको सब कुछ पता होना चाहिए। उस स्ट्रैटेजी के बारे में, उसका एंट्री कहाँ पर होगा, SL कितना रखा जाता है, टारगेट क्या रहता है, वो सब कुछ आपको पहले से पता होना चाहिए। ऐसा ना हो कि आपने स्ट्रैटेजी तो बना ली लेकिन उसके एग्जीक्यूशन में आपको थोड़ा सा कन्फ्यूजन है, क्योंकि जब तक कन्फ्यूजन है वहाँ माइंड डिस्ट्रैक्ट होगा तो फिर अननेसेसरी ट्रेड होंगे, रिवेंज ट्रेडिंग होगी, फोमो आएगा लॉस होने पे। तो अगर स्ट्रैटेजी है, काम कर रही है, फिर उसमें कुछ सोचने की बात ही नहीं है, ठीक है। एवरी स्ट्रैटेजी वर्क इन द मार्केट, ठीक है, एवरी स्ट्रैटेजी। 10 लोग भी ट्रेड कर रहे हैं तो हर कोई अपना अपना सेटअप लेके ही बैठा हुआ है, वो ट्रेड कर रहा है। हर कोई एक ही सेटअप से अगर ट्रेड करता फिर तो हर किसी को प्रॉफिट होता, राइट। किसी के सेटअप के अकॉर्डिंग कहीं पर बाइंग बन रही होगी तो उसी सेटअप के उसी लेवल पे किसी के सेटअप के अकॉर्डिंग सेलिंग बन रही होगी। दैट इज द ब्यूटी ऑफ द गेम। ट्रेडिंग का ये तो सबसे अच्छा रूल है। सेम लेवल पे किसी के सेटअप से बाइंग बनती है तो किसी के सेटअप से सेलिंग बनती है, इसलिए तो ट्रेडिंग हो पाती है। नहीं तो मार्केट में एक ही लेवल पर सबको पता होता है यहीं से बाइंग करनी है तो सब कोई बाई कर रहे होते हैं, कोई सेल ही ना करे, फिर मार्केट में होगा क्या, मोमेंटम ही नहीं होगा, अपर सर्किट लग जाएगा। सो दैट इज अ सिंपल रूल। लाइक कर दो गाइस, 45-50 लाइक्स, देन 100 लाइक्स का टारगेट रहेगा। डोंट फॉरगेट टू लाइक दिस स्ट्रीम, कम ऑन। बाकी कल क्रूशियल डे है, ध्यान रखना कल इवनिंग पे। और क्योंकि US में जो 2 अप्रैल होगा वो कल रात को होगा, एक तरह से कह सकते हो इंडियन टाइम के अकॉर्डिंग थोड़ा सा, तो हमारी कमोडिटी मार्केट में इम्पैक्ट इवनिंग पे पड़ेगा डेफिनेटली। अप्रैल 2 डिसाइडिंग डे।
Semiconductor demand is rapidly growing, but producing a chip takes up to 26 weeks. Manufacturers must deploy foolproof inspection solutions while matching quality with speed. Enter Omron's VTX series, an advanced system which significantly reduces inspection time while maintaining accuracy. The result? Greater yield improvement for the semiconductor industry.
I mean, look, we know that Donald Trump is announcing these reciprocal tariffs, but actually the extent of his levies remains unclear.
Yeah, exactly. So it sounds very generous, the president saying he's going to show leniency, but reciprocal is just a euphemism for higher. America's biggest trading partners are going to see higher tariffs imposed on their goods imported into the U.S. Donald Trump has been complaining about the U.S.'s unfair trade relationships dating back to the 1980s, and that culminates tomorrow in a Rose Garden ceremony where he's going to settle some of those scores.
I mean, when he says he's promising to be kind, Roz, what exactly does he mean?
Well, that is the question. I mean, even if he announces tariffs that are not, it's not a blanket percent, but it's actually like depending on your country or whatever. I mean, as Brendan was saying, it's still increasing tariffs, and in some cases, potentially stacking tariffs upon tariffs upon tariffs. So these add on to other tariffs that are already in place or announced recently. And so you're getting a very complex soup here in terms of tariffs on certain goods, and that's a lot for countries to absorb and deal with and work out how to navigate. I mean, obviously he's got competing demands in himself in a way in all of this. He wants to show he's raising money, even though this is really more sort of an issue for US consumers who are paying more versus revenue raising. He needs to show some room to negotiate because he always wants to negotiate going forward. So this is the starting point perhaps for changes, but also he needs to show that he's being tough. So he's got all those competing demands. So where kind fits into that is a bit hard to know.
Yeah, and for market participants, I know there's a lot of noise and you have to, move away from that. But actually, what does the president want to achieve at the end of the day, Hugh? And will it be inflationary?
And that's the critical question about the objectives that are being targeted. If you go back to February when the first announcements were made on Canada and Mexico, this was about immigration, this was about drugs crossing the US border. In other words, it was about foreign policy goals, and therefore quite quickly we could get to the point where a deal could be struck, tariffs walked back, and markets were quite happy at the time to dismiss tariff headlines as a negotiating position and really bluster. What's changed in the past couple of months is the objectives that are being cited. So as Ros mentioned now, you have a broader goal to reshore manufacturing, you have the consideration around raising revenues, potentially in order to fund tax cuts later this year. And I think the most challenging thing for investors is that some of those goals are contradictory, right? You can't reshore manufacturing and raise lots of revenues, and therefore it's unclear how much of what we're going to hear tomorrow is a first negotiating stance or actually a tariff that's going to persist well into the latter part of this year, because your macro impact differs a lot.
But so, Hugh, what do you think the North Star is? I know, there's a lot of talk again about the Mar-a-Lago Accord, which we talked about yesterday on TV. At the end of the day, does President Trump look at a lower dollar, or does he want a lower dollar, or what will be his, measure of success?
So a lower dollar and lower 10-year bond yields seem to be the two key areas of focus for this administration. Now, obviously, the extent to which you can do that without challenging the long-term growth prospects for the economy is a bit of a conundrum. But from my perspective, I think two things are clear about the US. This, A, clearly weighs on growth, and we're seeing that already in the CapEx intention surveys in particular, and B, it puts upward pressure on inflation. Now, the extent to which those two move is obviously the key challenge, but this is where you take Friday's labour market report, it becomes really significant, because for the Fed, at the moment, they don't know the difference between this growth and inflation shock, and it's likely the labour market data that would move them off the sidelines.
And then, Brendan, you have industries basically trying to carve out, their special kind of moratorium, U.S. car makers seeking concession for auto tariffs.
Yeah, exactly. So the auto tariffs for fully made cars kick in on Thursday, but for parts, there's another month of a lag for those to kick in. So the automakers are looking at both of those and saying we can absorb some of it, but all of it we can't absorb. They import components from all over the world, basically South Asia, North Africa, and so they're trying to make the case to the president that, look, if you don't give us an exclusion on some of this, then they're going to be job losses, they're going to be profit reductions, and really it's going to work counter to what you're aiming to do.
Yeah, and Ross, I mean, this is not an economic tool only, right? This is also a political tool. So could there be U-turns? Is there anything that leaders are now trying to do to soften the blow, or are they holding strong?
Well, we see a lot of leaders wanting to have direct conversations with the US, thinking maybe if they can just get in the room with Donald Trump or some of his senior officials, you get the right official, you get the right ear, and maybe you get some special treatment for yourself, be it Australia, the UK, the EU, or countries in Asia. But you also see the tough messaging coming, which is the EU even this morning saying, we're ready. If you come for us with reciprocal tariffs, we will come for you. I mean, the interesting thing is they're not necessarily retaliating straight away. They are giving themselves a bit more space, which seems to be a slightly different tactic, perhaps adopting the Mexico model of just sitting a bit quietly and letting Trump stew a bit before they respond. But so that seems to be one way that they're acting. But obviously, they're all trying to carve stuff out for themselves alongside key companies. I mean, Brendan just mentioned the auto sector. So you have a staggered approach. They have built that latency in where you get, first of all, it's entire cars and then it will be parts. And so, again, Trump always leaving room to negotiate and to change his mind because, again, that's how he operates, be it whether he's looking at these things through a foreign policy lens and using tariffs as a political tool there or as an economic and market one.
Yeah, I mean, the other concern, and this took a lot of people by surprise, is that, you know, there's a lot of U.S. chip giants now that are in limbo because of what we heard from Howard Lutnick pushing for bigger investments back home. Again, what does it mean for the industry, or in general, is there a question about U.S. exceptionalism that markets have to grapple with now, not wait 6-8 months?
It's absolutely a question for now. And you think where we started from at the beginning of this year, a very broad crude consensus was that the U.S. administration was going to be brilliant for the U.S. economy and terrible for everywhere else, quite simply put. And so what we're seeing so far this year is question marks on both sides of that. You're seeing the exceptionalism of the U.S. growth story clearly called into question at the same time as you're seeing actually a much stronger than expected policy response coming from other regions. And so when you look at how markets are moving, if the next leg of this is to start to put more pressure on the tech sector, that should be another factor that supports this rotation into international markets.
Yeah, but will it also play off, I guess, countries against each other? Is that part of, if you do a lot of uncertainty and make sure that leaders are kind of competing to grab your attention, then it makes it where it's, everyone's worse off?
Well, that's what he's also very good at doing. We can see that even in Europe. So you've got Emmanuel Macron, the French leader, trying to build on his personal relationship with Donald Trump. We obviously saw that the leader of Finland really hit it off with Trump recently because they play golf together and managed to get a deal for icebreakers out of it for Finland. So they are all negotiating their own corner. The challenge for Brussels when it comes to the EU is to get that kind of European unity to hold everybody to hold the line, because each country in Europe is impacted differently by tariffs. So it's not as though one's better off, they're not all worse off or better off at the same. So they have a vested interest. If you're, obviously car makers in Germany, that's a real concern. And so you can see each leader is going to be trying to get the most advantageous thing for themselves, even if in theory they're negotiating as a bloc.
Investors should take advantage of new emerging technologies to access new markets, build new businesses, and invest in different asset classes.
We're really excited about robotics, and Chinese companies are looking so compelling, it's time to revisit them.
Welcome to Bloomberg ETF IQ. I'm Katie Greifeld. Scarlet Fu is off today, so let's get at the biggest stories right now in the nearly $15 trillion global ETF industry. And we start with U.S. stock markets under pressure. The sell-off lessening a little bit relative to this morning, but investor fears remain for President Trump's next tariff rollout expected on Wednesday. And amid all the market volatility this year, emerging markets actually have outperformed the S&P 500. Life and Liberty's Perth Toll joins us in just a moment to discuss. And BlackRock projects that outcome ETFs will triple to $650 billion in assets by 2030, just as AQR comes out swinging against buffer strategies. We'll dig into that debate, all of that and more coming up. But first, Eric Balchunas from Bloomberg Intelligence. He's here with us now. He's looking at the flows. Eric, what do you got?
Thank you, Katie. I figured, it's the end of the quarter today. Well, let's look at the quarterly flows. We normally look at the weekly flows. There was some S&P 500 rebalancing that made the weekly numbers a little wonky. But anyway, it's a good time to reflect on the year. So far, $34 billion into VU. What can you say? That puts it on pace to blow away last year's record of $100 billion, which blew away the year before $50 billion. So VU just in a league of its own. IVV, $21 billion. I think some of this is tax related. So we're looking, it's still seeing inflows, but not quite as big. Now, SGov, this is treasuries, right? So people are, they're buying beta. They're still buying stocks, but they are buying treasuries too, and look, a little gold. So there's a little protection going on for sure. But VTI is the total market, and this is another S&P. So you've got basically 4 U.S. stock ETFs in the top 5. No Europe or international. More on that in a minute. Let's go in the outflows. SPY is the top here. So that you say, well, that's a little bearish, perhaps, but that's a lot of tax loss harvesting money that came out in January. SPY also sees migrants go over to the IVV and VU ETFs for lower fees. This is a growth fund. This is probably BlackRock's models. Money out of energy, a little money out of government. Interesting. Some treasuries. That's the full curve there. Some people may be picking their battles on the curve. But let's look at the full quarter. And I want to break it down by geographic focus here, which really is fascinating because my colleague Andre Yap made this. This is looking at U.S. equity ETFs, $138 billion for the year, right? And here's international. So despite all you've heard about outperformance and U.S., lagging, everybody's still investing in it. $138 billion blows away the quarterly record for flows. That's how much money has gone in. So it's not just people keeping up. They're actually going above and beyond. It could be people rebalancing into the U.S. and buying the dip. And look at international. It's actually down. So really, nobody is really biting on the headlines that are saying international is the place to be, at least for now, Katie. A couple more months of this, we'll see.
Yeah, we'll see. Though I will note that the European Stock 600 index had a record quarter of outperformance relative to the S&P 500, but U.S. investors, they just don't care. Eric, thank you. Let's keep the conversation going now with Perth Toll. She is founder of Life and Liberty Indexes. And Perth, we're all counting down to Liberation Day. That is what President Trump is calling this Wednesday when we finally get more details on his tariff plans. I want to couch this conversation in FRDM. This is, of course, is your Freedom 100 Emerging Market ETF. And the way you weight countries is really interesting. You use basically economic freedom metrics to decide your allocations. And I'm wondering how you factor in tariffs to those portfolio decisions.
Yeah, thanks, Katie. So basically, we do use both personal and economic freedom metrics in determining our country scores in the emerging markets. This is especially important because emerging markets are full of autocracies, countries coming out of autocracies, and some have very bad personal and economic freedom kind of policies. So with economic freedoms, there's things like taxation, rule of law, business regulations, and freedom to trade internationally as well as sound money. But in freedom to trade internationally, there's 9 variables that we look at, including things like tariffs, non-tariff trade barriers, and freedom of people and goods to move across borders. So all of those things factor together as part of the 86 variables into our country weighting methodology.
So I want to talk about how your portfolio could potentially be affected. I take a look at your top holdings here. I see Samsung, for example, then I see some chip makers, TSMC being among the largest of your holdings. I mean, do you try to tariff-proof the portfolio, or how do you stay true to your methodology while also trying to maybe protect the portfolio?
Yeah, so because it's a passive index portfolio, we don't try to tariff-proof it or make any changes due to everyday news on the tariffs. But we try to be in the countries that have the best, freest trade policies, best rule of law. So countries that have stronger institutions and stronger protections for trade, whether it's IP protections or investor protections or just freedom of movement. And so, the companies that have been affected in our portfolio are TSMC, Samsung, Foxconn, Hyundai. Hyundai just pledged $21 billion investment in the U.S., including a steel plant in Louisiana. Foxconn has pledged moved over $16 billion in operations out of China into other countries since 2018, along with other Apple suppliers. And TSMC pledged an additional $100 billion investment in Arizona. So there's a lot of trade that's moving out of our portfolio companies into other countries, a lot of it coming to the U.S. And, Hyundai's CEO just came out and said the best way for us to position ourselves in this environment is to basically localize in the U.S. But the best way, I think, for investors to protect themselves in this environment is to invest for the rebound. After everything is said and done, all the tariffs have quieted down. The countries that have the best trade policies are going to be the ones that benefit from this.
So let's talk about that a little bit, because I'll see online, they'll be like, tariffs are awful, this is killing us, please stop. Then the counter is, hey, look, there's tariffs. Like, the U.S. didn't invent the tariff, okay? There's tariffs all over the place all the time. Can you talk a little bit about which countries have tariffs currently? Do you think...
Guys, crude oil को देखोगे तो sideways ही है, natural gas भी बहुत slow ही move कर रहा है. जो प्रेसिडेंट ट्रम्प हैं, उनकी जो स्पीच होने वाली है कल शाम को इंडियन टाइम के अकॉर्डिंग, ठीक है, शाम को ही होगी वो. तो उसका एक इम्पैक्ट मार्केट में देखने के लिए मिलेगा कल. तो अभी के लिए लगभग 4 PM उसका टाइम है. 4 PM यूएस मार्केट के अकॉर्डिंग, ठीक है. इंडियन मार्केट के अकॉर्डिंग थोड़ा टाइम पता नहीं, देखना पड़ेगा कितना है, बट रात को ही होगा शायद, लेट नाइट. लेट्स सी क्रूड ऑयल कुछ करता भी है आज या फिर नहीं. स्टक हो गया, 1 घंटे से मोमेंटम ही नहीं है. नैस्डैक में सेलिंग स्टार्ट कर दी है. नैस्डैक में सेलिंग करनी है, थोड़ा वेट कर लो मेरे अकॉर्डिंग. तो वैसे एक पुल बैक तो आना है, अभी पेंडिंग है. पुल बैक के लिए करी है तो अलग बात है. रेजिस्टेंस थोड़ा सा ऊपर और है, एग्जैक्ट रेजिस्टेंस को हिट नहीं किया.
Because there's a lot of autocracies there, and there's a lot of things going on that maybe clients don't want to be a part of, like Russia back in, when it was in the index, and China these days. But there's a way to invest in that we're providing that gets around that by basically being in the freer countries, the countries that have better personal and economic freedom protections. Personal freedoms like terrorism, trafficking, torture, freedom of media expression, civil freedom, political freedoms, and then the economic freedoms like the freedom to trade internationally, sound monetary policy, and stable currencies. So all of these things added together make the Freedom 100 strategy kind of a safer way to invest in emerging markets that maybe will be less scary to investors.
Well, let's talk about year-to-date performance a little bit, because FRDM, you're up about 7.6% on a total return basis, obviously handily outperforming the S&P 500. But then you take a look at FXI, which is the iShares China large cap ETF, up about 17.5%. To be fair, it hasn't seen that type of performance in a while. But Eric just asked the good question. I mean, how is it selling EM? Is it more challenging to sell ex-China right now? Because, again, outperformance, you mentioned Poland, you mentioned Chile, but what's top of investors' minds, it feels like, is Europe and is China.
Yeah, so ex-China this year, I think, is actually either negative or flat. So we are very different from the ex-China strategy, where it's arbitrarily excluding China out of the market cap-weighted indices. We're not arbitrarily excluding any country. We're just freedom weighting. So the higher the freedom in a country, the higher its weight. And by doing that, we have higher weights to Chile and Poland, both countries that are very overweight in our strategy, but very underweight in cap-weighted strategies. And due to that, we have outperformed EEM, IEMG, VWO, and all the basically broad market funds that have a lot of China in there.
So FRDM, I remember when you were just an index. You came on like 6 years ago.
That's right.
You're almost $1 billion. Congratulations.
Thank you.
Usually when an indie gets $1 billion, they start thinking sequel. And so do you have any sequels planned?
We do. We have some things that may round out the suite for us that our clients have been asking for, especially in this this global trade war environment. They're saying, hey, maybe it's time to apply this strategy to other asset classes. So yes, we are looking at sequels.
All right, so watch this space. It sounds like hopefully we'll be talking again very soon. Yes. Our big thanks to Perth Toll of Life and Liberty Indexes. Now, coming up, the world's largest asset manager is betting big on a growing breed of derivatives-powered ETFs, even as critics like AQR speak out. We'll discuss the debate next. This is ETF IQ on Bloomberg. Welcome to Bloomberg ETF IQ. I'm Katie Greifeld. Scarlet Fu is off today, so let's get to the biggest stories right now in the nearly $15 trillion global ETF industry. And we start with you.
Semiconductor demand is rapidly growing, but producing a chip takes up to 26 weeks. Manufacturers must deploy foolproof inspection solutions while matching quality with speed. Enter Omron's VTX series, an advanced system which significantly reduces inspection time while maintaining accuracy. The result? Greater yield improvement for the semiconductor industry.
Welcome to Bloomberg Markets. I'm Scarlet Fu. Investors keeping a big eye on D.C. with tariffs, Trump, and the possible confirmation of a new SEC chair all in the headlines. In just a moment, we'll be speaking with the CEO of Robinhood, Vlad Tenev, about trading, his company's push into banking services, and his thoughts on the SEC. First, though, let's show you the price action across markets. We're looking at an S&P 500 in the red, just barely, about down 0.2%. Stocks erase losses, and then they've come right back down again, rolling over here. Auto stocks, we can see a big turnaround here, up now more than 3%. Initially, they were under pressure after President Trump announced the 25% tariffs, but they have turned around now and are now gaining by almost 3%. We're also looking at yields come down on the 2-year by 1 basis point to 4% even. That reflects buying. However, traders are avoiding longer dated treasuries. And gold at another record high, gaining 1 1/3% to $30.93, so just below that $3,100 level. Now let's highlight a couple of individual equity movers, and we want to bring in Isabel Lee for those. Hi, Isabel.
Hey, Scarlett. We're looking at U.S. automakers. It's red across the screen, from Ford to General Motors to Stellantis, and they're down after President Donald Trump hit automakers with imports of 25% starting next week. So analysts are saying that Ford and General Motors are set to see the biggest impacts. Stellantis and Tesla, though, are both in a better position. And if implemented, the tariffs will apply to all imported passenger vehicles and light trucks, and the levies will only apply to non-U.S. shares of the vehicles. And up next, we're looking at AMD. We have the stock being downgraded by Jefferies from buy to hold. AMD is falling further behind NVIDIA in its technological capabilities. That's according to Jefferies. And this is a fact that could continue to put pressure on the stock. We have Jefferies adding that AMD has considerable ground to cover before their products can compete. And last, we have 23andMe. So this is the bankrupt genetic testing firm. It's edging up by nearly 60% just today, Scarlett, and it has been given the permission to sell their customers' medical and ancestry data. So this is why investors are cheering the move, because this is considered the most valuable asset in their insolvency case. A bankruptcy judge has set a deadline of May 7 for definitive offers, and a final hearing is set on June 17. So the sale of sensitive data has, of course, sparked anxieties among customers, but for now, investors are cheering the move. Back to you, Scarlett.
Absolutely. A lot of people are rushing to cancel their 23andMe accounts. I just want to make a quick correction. I mentioned the auto companies as a group are higher. That is mainly because of Tesla, which is up 4.4%. Ford and GM, as well as Aptiv, which is an auto parts maker, are down on the day. But again, Tesla overwhelming the gains or the losses in those other stocks. All right, let's get back to our main story right now, which is about President Trump's pick to lead the SEC. Paul Atkins, he is currently taking questions from lawmakers on Capitol Hill. He did speak about his stance on the current state of regulation. Take a listen.
So this is a pivotal moment for our economy.
Entrepreneurs, businesses, and individuals here at home and across the globe are eager to invest in America now that President Trump is at the helm. Yet the current regulatory environment for our financial system inhibits investment and often punishes success. Unclear, overly politicized, complicated, and burdensome regulations are stifling capital formation, while American investors are flooded with disclosures that do the opposite of helping them understand the true risks of an investment.
For more on today's hearing and the future of the SEC under Trump, under Paul Atkins, let's bring in now Nathan Dean of Bloomberg Intelligence. Nathan, Paul Atkins is a known quantity. He's a former SEC commissioner, yet there are a lot of questions being raised nonetheless in his confirmation hearing. For instance, conflicts of interest, his involvement with FTX. Tell us a little bit about the context of today's hearing.
Yeah, so on one hand, if you're a company that's regulated by the SEC like Robinhood or Coinbase, you're going to like what Commissioner Atkins was saying, regulatory clarity. He's going to bring the SEC into an era where there's not a lot of gotcha violations, especially for those in the crypto space. But you pointed out other things that are pressuring the SEC. Senator Kennedy of Louisiana went after Commissioner Atkins in asking him to essentially investigate Sam Bankman-Fried's parents in Stanford University. So Commissioner Atkins, if he's confirmed, which we think he will be, is going to have to navigate all this. But for what it means for the investment community is you're going to get regulatory clarity and you're going to get, essentially a lower enforcement risk as the SEC moves into other areas.
All right. Can we get a little more detailed about regulatory clarity and lower enforcement risk? What specifically is the investing industry, investing community expecting from an SEC under Paul Atkins?
Yeah, so I think there's three themes. The first is crypto. He's going to bring crypto rules to the industry. Now, note, he only has authority over securities, so Congress does need to come in and pass a bill for the commodity aspect like Bitcoin. The second thing is capital formation. Think if you're in a private fund industry or private credit, he's going to try and change things to allow investors to get more access to the private credit industry. And third is market structure. Back when they created market structure, the equity market structure regulations back in 2005, he had an issue with it, and he actually voiced his opposition to it. So if you're in a continental exchange or the New York Stock Exchange or NASDAQ, he may start tinkering with that in a couple of years. But overwhelmingly, he follows what's known as principles-based regulation, so that if you're a firm trying to comply, you don't have to cross the T's or dot the I's. You just have to meet the principle of the rule, and that allows additional flexibility and more innovation for companies.
All right, good stuff. Thank you so much, Nathan Dean of Bloomberg Intelligence. Thank you so much for setting that up for us. Now, Robinhood has had some challenges with the SEC, with the company saying the regulator's most recent investigation into its crypto division closed shortly after the Trump administration took office. Today, the platform is moving beyond crypto and into banking, launching checking and savings accounts for its Gold subscribers. I'm pleased to say joining us now is Robinhood CEO Vlad Tenev, along with Bloomberg's Sonali Basak, our expert on all things crypto. Vlad, I want to start with the SEC here, because as you heard from Nathan Dean, those in the crypto industry are pretty pleased, probably, with Paul Atkins becoming chair of the SEC once he is confirmed. I'm curious to start off with your take, your assessment of how much interim chair Mark Ueda has done to enable Atkins to hit the ground running once he is confirmed.
I think we're very optimistic about Paul Atkins. I think he has the right mindset. The U.S. needs to be a leader in this important new burgeoning industry, and we really like what we're hearing. And I think on an interim basis, the SEC has actually done more than I think in the past 4 years, certainly, although admittedly that's not a very high bar to provide clarity, clarifying that, for example, meme coins are not securities, as well as clarity that they've provided on staking, unregistered staking has been very helpful. So that's a start. We also need clarity on stablecoin, and having stablecoin clarity will further U.S. dollar dominance, particularly overseas. And with market structure, which I know the previous guest just spoke about, market structure is also critical, because if we can pave a path towards tokenization of securities, that ensures dominance of U.S. assets and also U.S. companies overseas. So tokenization, accredited investor relaxation, because the accredited investor rules need a complete rethink. I think those are things that we look forward to working with the incoming administration and Chair Atkins upon confirmation. I think those are two big priorities for continued dominance of the U.S. financial system globally.
You know, I'm glad you brought up meme coins in particular. I think we've talked about this a bunch in the past, but the proliferation of meme coins you've seen and the precipice of relaxing listing standards across different exchanges, do you worry that this might go too far? At what point are you even looking for the SEC to step in and say, this is what the barrier is?
Yeah, I think there's two ways to look at it. One is, obviously, there's a huge proliferation of different types of coins. The barrier to creating a coin has dropped tremendously, where someone can just go on their computer and immediately create something that has access to global liquidity and trades quite a bit. But there's a positive to that. There's an immense amount of power in that, because juxtapose it with the immense difficulty in a company going public. You have to pay tens of millions of dollars in fees. It takes several months. It's so complex and burdensome that companies aren't even doing it anymore. I mean, you have to be at tens of billions, maybe hundreds of billions of valuation before it starts making sense. So I think this technology provides an alternative. And if you compare it to traditional capital formation, there's definitely advantages. And I think that's what happens. That's why it's so important to have a comprehensive securities market structure framework for crypto assets, so that we can tap into that.
What's incredible, too, is just in the last 24 hours, we here at Bloomberg have reported that OpenAI is close to finalizing a $40 billion fundraiser that would value the company at $300 billion. It would be the largest of all time. This is not open to retail investors. To your point on accreditation rules, how drastically do you think that they could change under the new SEC chair such that more Americans would have better access to younger companies before they become $300 billion companies?
Yeah, I mean, you wouldn't be surprised to hear that. I think they need a total reboot. I think it should be much more self-certification. I think platforms like Robinhood's should obviously be required to clearly communicate the risks and put different types of companies into different buckets and make that clear to customers. But at the end of the day, I think it's silly that, you know, those companies are deemed too risky for non-accredited retail investors, effectively shutting out over 80% of the investor base from a company like OpenAI or SpaceX.
So, Vlad, I want to ask you about 24/7 trading. The NASDAQ is planning to launch that later on in 2026. You already offer a 24-hour market in some products. How much can you expand on that with NASDAQ and other exchanges moving over to a 24/7 kind of trading policy?
Yeah, I mean, we're really happy to see the major exchanges integrating and supporting 24-hour markets. I think they've been reluctant to do so just because there's operational complexity. And so Robinhood has taken on a lot of that complexity on behalf of our customers to make it easy to stitch together different market sessions so that you have that round-the-clock trading experience. And I think we have to go beyond that. I mean, markets still are, U.S. equity markets aren't open on Saturdays or holidays, for instance. And I think we have to work to resolve that. So the big exchanges coming in is a big step forward. It unlocks greater liquidity. It makes it easier for more participants to come in who don't have the capabilities to easily do what we've done in terms of making the technology available. And I think it's part of a progression. It ends in 24/7. I mean, this is like the last vestige of brick and mortar finance in trading. And I think eventually it'll be completely digital, like the crypto industry. Right. I think that's where it's all heading.
All right, Robinhood CEO Vlad Tenev is staying with us. But before we go to break, just a quick mention here that the U.S. is set to seek control of all investment in Ukraine, and in doing so, squeezing out Europe. This deal would reportedly grant the U.S. right of first offer on investments, control over a reconstruction investment fund, and first claim on profits transferred into the fund as well. This could, of course, have big implications for the country of Ukraine's bid for EU membership as well. We'll have more details when we come back. This is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Jay Williams.
I want to be an owner one day.
Billie Jean King.
Learn the business.
Paul Rabel.
Don't chase trends. Get ahead of them.
And so many more.
This is Bloomberg Markets. I'm Scarlett Fu. Robinhood is entering the banking sector. The trading platform said today it will be rolling out checking and savings accounts this year, as well as a wealth management service to its gold subscribers. The CEO of Robinhood, Vlad Tenev, is still with us. And Vlad, this idea of offering wealth management services to your customers, how much of this is about replacing your customers' existing bank accounts to be their new bank?
It's really about giving you the power of a financial team through Robinhood across your entire financial journey. So Robinhood Banking gives you what we believe to be the highest quality, almost private banking-like experience in digital form to our customers. So that one's very exciting. Robinhood Cortex, which is basically your research assistant, powered by AI that can help you with your self-directed trading and investing needs. And then Robinhood Strategies, which we think is going to be the best digital advice offering on the market. And so we have banking, we've got self-directed, we've got digital advice, and also with the Trade PMR acquisition, we're going to offer customers who want in-person advice with an actual advisor, that offering as well.
But,
so it's really wherever you are in the journey, Robinhood should help you manage your finances with the best experience and the lowest possible costs.
How competitive do you plan to be on rates? We've seen you come out with products before like margin accounts, and you've been quite competitive. Are you looking to offer better rates than the current banking rivals out there on checking and savings? Are you looking to beat the likes of a Marcus, for example?
Yeah, we announced yesterday at our gold event that on the banking side, we're going to be very competitive on rates. You'll get the same 4% APY that Robinhood offers through our cash sweep product in savings accounts, which is 9 times the national average. So that product's very, very, it's done quite well, and we're going to bring that same rate to banking. The rate on the digital advice Robinhood Strategies offering is also very innovative, because not only is it a low 0.25% of assets under management, but we cap that at $250 per year. So let's say you have, $1 million managed with Robinhood Strategies, you're still paying only $250 a year. If you have 10 million, it's also capped at that amount. So for a digital advice offering, you're getting the same service, even if you're managing 10 times as much money. So why are you paying 10 times as much at other places? So we're fundamentally breaking that model for digital advice.
Vlad, how far are you going to go in terms of offering services to your customers? Are you going to offer conventional loans at some point? Could we see, I don't know, let's just say personal loans, mortgages at some point from Robinhood?
Yeah, so right now with the Robinhood credit card, which in my opinion is the best credit card on the market, 3% cash back on all categories, that lets you have essentially a credit card loan that we administer. And that's the most complex type of loan because the velocity of it is fast. It's a frequent use case product. So that kind of gets us in there. If you think about these other products, whether it be a personal loan or a mortgage, those are less frequent. So from a product experience standpoint, it's actually much less complex for us to offer that in the future. Credit card is the most difficult, and we're tackling that first. We're focused on that. It's going incredibly well. We announced that we're going to double the number of customers that the credit card is rolled out to in the next week, and that's going to be in advance of dramatically accelerating the rollout this year. So we're definitely moving in that direction.
Vlad, we don't have a lot of time here. We have less than a minute, but I do want to ask a question just quickly on stablecoin really quickly. You were talking about how this 24/7 trading phenomenon you expect to expand in a pretty meaningful way, but the way that it's done at Robinhood is by using stablecoin. And there's also separate legislation being passed in Congress on the brink of it to allow stablecoins to be more usable across the financial industry. Do you think this is going to become more commonplace practice?
I think so, yeah. I think that it's a good first step for crypto legislation in Congress because generally everyone agrees that we should have stable coins and that they're good for the country, for the local companies, and the crypto industry. But it's not going to be enough. I think we need comprehensive market structure legislation coming in quickly thereafter because there's so many things that are not stipulated with the stablecoin bill. You still need to figure out how to pay interest, pay yield to stablecoin holders, and that's not really stipulated. And of course, securities, being able to tokenize securities is the largest opportunity, the one that I think is going to be most important for us to get legislation on.
Got it. All right, Vlad Tenev, thank you so much. Vlad Tenev is CEO of Robinhood.
Thanks for having me.
And we also want to thank Bloomberg's Sonali Basak. Coming up, we're going to talk about Doge and its adventures in the Social Security Administration. That's next. President Trump's nominee to lead the Social Security Administration went before lawmakers this week, just days after the agency's acting head threatened to shut down the office. Nominee Frank Bisignano told a Senate committee that he will improve access for beneficiaries. Now, under Elon Musk, Doge caused a stir when it gained access to Social Security data. We want to bring in now Ernie Tedeschi. He is Director of Economics at Yale University's Budget Lab. Ernie, what does Doge getting involved in Social Security tell you about how the program may or may not change over the next 4 years?
Not a whole lot. I mean, Doge can really only affect the customer service side of Social Security. The main threat facing Social Security is obviously on the benefits side. Social Security is going to be insolvent in 2035. And the only way to solve that problem is by either cutting benefits or raising revenues, which Doge can't control.
Okay, so what are the options that the government can make, aside from those two that you outlined? I mean, raising the retirement age, changing COLA, increasing the taxable minimum. How much do any of those move the needle here?
Yeah, I mean, each of those options would probably close about a fifth of the gap that we need to be able to make Social Security solvent in the long run. So they're all very helpful. I think it's going to take a combination of things on both the spending and the revenue side to be able to close that gap. One thing that is being talked about that's not going to help a lot is privatization. Now, there are ways to do privatization well and ways to do it poorly, but privatization is a classic investment trade-off. It increases risk and it increases return. And at the end of the day, it really only closes about 5 to 10% of that funding gap. So it's not really a big fiscal solution to Social Security.
Okay, so it also just kind of tweaks around the edges. Nevertheless, with privatization, you say it needs to be done thoughtfully. What are the single biggest considerations if you're going to go down that road?
I think prioritizing retirees and taxpayers. Look, there may be ways of structuring privatization to get better returns in service of retirees. I think that's a noble goal. But we have to make sure that we protect those savings